and people are investing around it.
That's what our clients are positioning, and you can think about it in two ways. A, it's if earnings growth in real terms that starts to come off and it's being eaten away by inflation, or from a corporate investment point of view, or from equity performance point of view, if companies are worried about US consumers starting to unwind a bit, then they have to absorb some
upper end consumers
through them. No, it's on the food production side, consumer staples.
Consumer staples seems like an odd thing to be doing in that sense, as much as
that suggests more stress.
You would have thought that
margins, So it might be just potential margin stress coming through. Again, that's not totally in sync with the macro data that we're seeing right now, but it feels like where clients, where they have limited resources or they want to deploy their allocations, certainly much more skewed towards the investment side, the CapEx side, rather than consumer side.
Nice to see you, Jeff. Great to see you stopping by. Jeffrey Yu joining us, Senior Market Strategist, joining us from BNY. Core 6 looks a little bit like this morning. You have in the middle, defence stocks doing quite well, chip stocks doing quite well. You got food companies to the right-hand side actually kind of holding their ground this morning. Pharma's a little off. Luxury's a little off as well. LVMH is down a touch this morning. Maybe that's a little bit of a drag on the CAC Carrot. But staying in the kind of clothing space, let's turn our attention to what is happening with Inditex. That stock certainly having a very solid morning. Chloe Melly has more.
Good morning, Guy. Yeah, Inditex is doing very, very well this morning. We're up more than 7% after it reported very strong earnings. It said that sales had accelerated very strongly in November, and so this confirmed the kind of resilience for that Spanish retailer that owns Zara, despite weakening consumer sentiment that other peers within that retailing sector had already flagged. And so this reassured investors that had been a little bit worried about some lackluster performance from Inditex lately. Moving on to Stellantis, which is up this morning as well, quite strongly, also more than 7%, and that is on the back of two things. So first of all, an upgrade from UBS analysts, and then second of all, a plan by the Trump administration to undo some fuel efficiency standards that were put in place under the Biden administration, and that was with the argument of that this is standards that drive up the cost of cars, and so we are seeing Stellantis benefiting from those two things this morning. Moving on to AI-related stocks, and they are up. We are seeing green across the board this morning. That is some read across from the very upbeat, bullish commentary on AI demand that we had from Marvel over in the US, and that is reassuring investors that maybe this AI bubble is not about to pop just yet, and therefore we are seeing some positive movements, especially for ASM this morning. That is up 3.8%. And finally, Smiths, the engineering group listed in the UK, is up this morning about 2.5% after agreeing to sell its Smiths detection unit to CVC for an enterprise value of £2 billion. This is a unit that makes airport scanners, those airport scanners where you don't have to take out your liquids. And so this sale is being received very well by the market as part of a broader strategy revamp for that group as it refocuses on its industrial operations instead.
Chloe, thank you. Chloe Melly with a look at some of those stocks on the move, ending with that asset sale at Smiths Group coming up on the programme. Good-looking sales figures from Zara owner Inditex. We'll bring you all the details behind those numbers. Luxury stocks selling off, though. A broker update, perhaps, an analyst update, perhaps, the cause of that. More on this sector next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Welcome back. You're watching The Opening Trade. We're 18 minutes into a session which is being driven, I would argue, by a lot of single stocks out there. There's actually some really interesting corporate news that is worth focusing on. You've got Airbus on the move. You've got Sainsbury on the move. You've got Inditex on the move. Let's talk about Inditex because it's certainly having a meaningful impact on the Spanish market. I've seen the word reassuring being used a lot this morning in some of the stories that we're writing about this stock. I'm not sure it goes quite far enough, reassuring. These are really good numbers, as Anna was pointing out a little bit earlier on. November sales accelerating, resilience in the weakening consumer sentiment story that others are not exhibiting. You look at what is happening maybe over the road at other retailers at the moment, and they're not seeing this. So why is Zara able to deliver? Why is Inditex able to deliver? Well, let's try and answer that question. Bloomberg opinion columnist Andrea Felsted joins us around the table. These are good.
They are, and it's really incredible given that we had quite unhelpful weather in various parts of the world through the autumn. Plus, particularly in the US, there is a sense that the consumer, particularly the lower to middle income consumer, has slowed. So Inditex has really bucked that trend, and the reason they have done that is we know they're very reactive to fashion cycles. They can get the right products for the right trends, the right weather at the right time, but also they have been moving up market as we've talked about, and I think that has given them a whole new customer base. They're filling that white space left by the luxury brands. It's acceptable to go high-low, maybe buy a high-end handbag, other pieces from Zara. That is the way we dress now, and that is helpful.
So high-low is working for them, then,
Definitely.
Andrea, rather than... Because when I saw those headlines around them trying to move into a higher price bracket, I wondered whether the Inditex consumer would take that. But you say it's attracting other consumers.
Yes, because, luxury brands have priced out a whole, section of their customer base, and they are looking to other parts of the market. It's why Ralph Lauren's doing well. Names like Cézanne and Zara and Massimo Dutti is capturing that.
What is 2026 going to look like for the retail space? What trends am I watching? What impact is the kind of the macro consumer picture going to have? Who's well positioned going into 2026?
Well, I think Zara is well positioned. I think the luxury names are going to be very interesting. We're a year into all the designer changes. We had a lot of designer changes last year. That's all going to be, all those new products are going to be hitting stores early next year, first quarter of next year. We're going to see how the consumer reacts. There's a lot of hope that China is starting to pick up again. There's a question mark over the US. The US consumer, the top-end US consumer has been very strong, but we are up against some tough comparables after the election. Plus, we've had those wobbles with Bitcoin, a bit of wobble over the stock market. The other thing I was hearing yesterday is there's a bit of hope for all the US consumers. They might get a bit of boost from the tax bill, a bit of tax money.
Well, we love to draw links between the Bitcoin story and luxury spending. That's great fun. But I want to ask you about luxury, actually, Angela, because it is the worst performing sector, it seems, this morning, or certainly consumer products and services is worst, and within that, the worst performer is caring. And there's been a downgrade from one analyst, but this is a stock you were saying in the break that's come a long way.
Exactly. Had the new CEO, Luca de Meo, started in September, and he's really hit the ground running. He's renegotiated the Valentino deal. He's delayed that. He's sold the beauty business. He's done various executive reshuffles. He's done the easy stuff. The share price has reacted. I think investors are asking, how much further can this go? Because he's got the really difficult thing to do, turning around Gucci. We had Demna's little sneak peek of Demna's vision. We get the full one next year. We don't know if that's going to be enough, whether it's going to resonate with consumers. I think that uncertainty is going to last until we get a feel for Gucci either way.
Okay, Andrea, thank you very much. Bloomberg opinion columnist Andrea Felsted with the latest on the luxury names and high street retail. Let's move on from that to the banking sector, where we have some news flow to cover. HSBC down 1% in the UK listing, but this is a sort of a longer term story, perhaps. HSBC has appointed Brendan Nelson as its new chair, or its next chair, replacing financier Mark Tucker, who has led Europe's largest lender for much of the last decade. He takes the reins as CEO. George El-Hedary pushes through a massive overhaul of HSBC that's seen the bank reorganise into 4 new divisions. Let's get some perspective on what this means. Our managing editor for EMEA Finance, Tom Metcalf, joins us on set right now. So what does this mean? Good morning, Tom. What does this mean that they've chosen this person to lead the business from the chairmanship perspective?
Yeah, I think it's very much a safe pair of hands. It's kind of a reversion to what they traditionally did prior to Mark Tucker, which is look internally. I think safe pair of hands is a great way of explaining it. They went out, they looked at external candidates. There's a few things here. A, just a sense that none of those external candidates had, perhaps everything they were looking for. And B, for such a big behemoth as HSBC, it probably makes a lot of sense to look internally, somebody who can immediately jump on, and perhaps it reflects that dynamic of, you've got George El-Hedary as this very high-profile, dynamic CEO, and perhaps now the sort of dynamic they're looking for between the chairman and CEO is a chairman who, perhaps takes a bit more of a low-profile back seat compared to a Mark Tucker, who was famously hands-on.
Is he an interim permanent chairman?
I like that. Well, exactly. He's the interim chairman. He's become the permanent chairman. But, yeah, the big question is how long for, right? He's 75, 76. And I think yesterday, actually, El-Hedary said something along those lines that, he certainly wouldn't be looking, Brendan Nelson this is, to sort of be in the seat for as long as Mark Tucker, who was there for 8, 9 years.
So the search continues?
I think
is this a sign that they haven't found the right person, basically? They had this search, they couldn't find the right person, they've got an interim, they need somebody in the chair, let's make it permanent, but we'll carry on looking. Is that how I should read this?
Yeah, I certainly think kind of in the medium term, probably give a year, maybe 2 for sort of El-Hedary to make his mark. They'll see where, geopolitics are going, they'll see where the bank is going, and then, yes, naturally you would think that's a great time for the board, perhaps with a little bit more time than they had in this process, to really do an extensive search, perhaps without that pressure of who's it going to be, Mark Tucker's left the building, where is the permanent replacement?
We'll watch this space. We'll continue to watch this space. It's not over yet. Tom Metcalf, Bloomberg Managing Editor for EMEA Finance. Thank you very much indeed. Let's turn to another stock that we are watching this morning, Airbus. The European playmaker cutting its 2025 delivery target after discovering production glitches with its best-selling 320 family of jets. What they've done this morning is come out and basically updated the market on what, A, the delivery numbers are going to be, which have been cut. They were always going to be a bit of a stretch, but they've now been cut. And reiterated financial guidance, which I think is what the market is latching onto a little bit this morning, and as a result of which what we've got is the stock rising on the back of that. So we've got new delivery targets. Now remember, Airbus gets paid when it delivers airplanes, so delivering airplanes is kind of quite important, and making the year-end targets kind of quite important. But they need to fix this issue, and they need to get on top of this issue, so they're kind of maybe just downgrading expectations into year-end.
Yes, and do we think maybe the market thought it could have been worse, either on the financial guidance or the numbers of aircraft delivery? Yeah.
I think just knowing. I think the problem was we had this air pocket where we found out about this briefing last week. That got broken early on in the week. Airbus has then effectively been in a period where it has had to sort of get its numbers back together again and then come out and rebrief the market on what is therefore going to happen. So we've had this kind of interim period where, as you say, the market's gone, don't know what's going to happen here, mark the stock down an awful lot, and now we have something to work off. So at least now the market has some stability in terms of its expectations.
We know the two important things: how many of these are still not in delivery to clients, and how many of these will be delayed in their delivery.
But I think there was but I think there is a lesson in this in as much as communication. This briefing happened, and it doesn't appear as if Airbus was ready to brief on the back of it. It briefed its customers, but wasn't ready to brief the market. And I think there was a gap there. Anyway, don't underestimate the changes at hand in 2026. That's the message from CaixaBank's chief economist, Enric Fernandez. He is going to be joining us shortly. That conversation coming up. This is Bloomberg.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back. This is the opening trade, 30 minutes into Wednesday's session. Let's have a look at where we are across these European equity markets. The DAX is up 0.3%. The Stoxx Europe is up by 0.2%. We've actually got some outperformance, yes, in the DAX, but also in the Spanish market. The IBEX doing pretty well this morning. The Inditex numbers delivering pretty strongly for the Spanish market, so that's an area of focus. Airbus had been a weight on the CAC 40 in earlier sessions, but not so this morning, and so that one is pretty flat. The FTSE 100 lags a little bit this morning. That's the broad picture across these markets. There are some big picture themes to focus on, Guy, but there are also some individual stock stories.
Absolutely. Let's peel the onion and figure out what is happening just below the surface of the index story. This is the stock 600. Really look at this, really finely balanced. 296 stocks up, 281 down. This is a market that is pulling in two different directions, but the two sides are cancelling themselves out. Volume's a little light, but not very light. It's been lighter earlier on this week, so volume's coming back a little bit relative to the recent story, though. Obviously, it's an average, so it's a moving target. Look at this, Inditex. Anna was mentioning it. Look at what is happening with Inditex. That stock is way outperforming expectations this morning and is up by 6.46%, 6.5%. That is driving the IBEX this morning very nicely. ASML is also having a big impact. The chip story, front and center. We saw it out of the US session yesterday, fed into the Asian session, now it's feeding into the European session. So the chip sector is up. Roche has also been climbing over the last few days and continues to do so this morning. So the pharma space back in the front foot as well. It's up by 1.3%. Let's talk about the other side of the coin. HSBC down by 0.8%. We have a new chair at HSBC. It's the interim chair. Feels like a kind of permanent interim chair. I think probably HSBC is going to take a little while longer to figure out who its next chair on the longer term basis is going to be. LVMH is giving back a little bit of ground this morning. So while we've got Inditex up, we've got the upper end luxury story down a bit, and Allianz, the insurance sector, down by 0.9% as well. But it's fascinating to see what is happening at the upper end of the market this morning. Chips. The retail story really driving the picture forward for Europe this morning. A little bit of tailwind coming through from the US yesterday. That's beginning to fade, but it's a balanced picture, Anna, in Europe this morning.
Yes, let's have a look at some of the other news flow we need to keep across this morning then, Guy. President Trump says he plans to announce his selection to lead the Federal Reserve early next year. Trump made the comments during a cabinet meeting where he later teased National Economic Council Director Kevin Hassett as his possible choice. Amazon's cloud unit has raced to get the latest version of its AI chip to market, renewing efforts to sell hardware capable of rivaling products from NVIDIA and Google. The move comes as another AI giant, OpenAI, is reportedly redirecting internal resources to speed up improvements in ChatGPT, declaring a, quote, code red situation that will delay work on other initiatives. And the Kremlin says Vladimir Putin held, quote, very useful talks with the United States envoys Steve Witkoff and Jared Kushner, though the sides failed to reach agreement on a plan to end Russia's war in Ukraine. Those talks came just before the NATO foreign ministers meeting, which is set to discuss the alliance's support for Ukraine, which is underway right now, Guy, in Brussels.
Absolutely. And what impact is that going to have on the outlook for Europe next year? Peace in Europe, peace in Ukraine could have a meaningful impact in terms of the economic outlook. Enric Fernandez, Chief Economist at CaixaBank, joining us around the table to discuss what 2026 could look like. Good morning.
Good morning, Guy. Thanks for having me.
Nice to see you. So we get a peace deal. How does that change the outlook for Europe next year?
The way we think about it is that it can be both a positive supply and demand shock. Supply shock in positive terms because of downward pressures on energy prices. We have already seen that on natural gas prices coming down along the curve, so even for future prices. And then positive demand shock, not only for the impact that it has on the macro from lower energy prices, but for all the reconstruction efforts that have to be put in place in Ukraine. But we have to see the details of that agreement to see to what extent trade restrictions are lifted and to what extent the reconstruction effort moves ahead, at what pace. And we'll see, because if part of the territory that needs to be rebuilt stays in the hands of Russia, there's less room for...
Is the impact greatest the closer I get to Ukraine? I.e., is Central Eastern Europe going to feel the biggest impact and it just fades kind of progressively the further away you get from the front line?
Yeah, I think so. That's the case. I mean, for the euro area as a whole, I think this is positive in terms of growth. It lowers a little bit inflation. It strengthens the euro. It may put some pressure up on long-term interest rates. But I think we're talking about marginal effects.
But if you're Poland, if those kinds of countries that are right there, like how big an effect how big an effect could we be seeing?
Definitely bigger than countries that are farther away from Ukraine. But overall, I think it's a small effect. Yes, true, higher the closer you are to Ukraine.
Okay.
Germany especially as well.
Yes. Let me ask you about your outlook then, Enric, for 2026. And one of the big things we keep talking about, of course, is AI. And you draw our attention to the role that AI could play. And one of the big questions that you have around AI is the extent of capital investment it's going to create, how it's going to drive up productivity, and whether that will be enough to offset all the negatives we're dealing with around demographics and economic fragmentation. So what's your answer to that really important question?
I think that the answer depends on whether we're talking about the short term or the longer term. Over the short term, we are seeing a clear impact on activity, especially in the US. AI investments are sustaining economic activity over there, and that's what explains, I think, to a large extent, that the US is going to grow by about 2% this year. Over the longer term, I think that there's much more uncertainty on what's going to be the impact in terms of productivity growth and what's going to be the timing of that impact. I think that there's this law which may hold up true this time again, which is we tend to overestimate the impact over the short term and underestimate the impact over the longer term.
Yes. And I mean, this could have an impact in the longer term in lots of ways. One area that you flagged to us before our conversation that I've also been reading about elsewhere is what does this do to the tax base for Western countries? What does this do to the fiscal landscape? I mean, are we going to be talking more about taxing capital and less about taxing income? Is that going to be the effect of AI?
Well, it depends on what's going to be the impact on employment, and we don't know that. And actually, you have two different Nobel Prizes saying completely different things. Some saying this is going to have a large impact, may have a large impact on employment over the next 10 years, and others saying it's going to have a negligible impact because some new occupations will come, because the productivity gains will increase incomes, and that will also help create employment and offset those occupations that may disappear as a result of AI. So we'll see.
Are we going to get more nervous about government debt in 2026? Should we be getting more nervous about government debt in 2026?
I think that it depends on the country you're talking about.
Sure, but in aggregate?
Yes, in aggregate, yes, because I think you have several hot spots, the US, the UK, France, where that's an issue that needs to be fixed. And either you see progress on that front, or some people may gonna get nervous. I think that by itself, I don't see a fiscal crisis exploding. But the question is, if there's another shock, then people will start focusing more on that.
Okay, so let's talk about another shock. So you get a financial shock. Is there the capacity, given where debt levels are, to do more QE, to do more fiscal financing? What are the shock absorbers looking like right now from a government perspective? If we do, I don't know what the next shock could be, but there's going to be one at some point. And I'm wondering what our ability to manage that shock is going to be as the situation evolves and we get more and more debt being piled on.
Yeah, definitely. And we are all crossing our fingers that shock takes a while to show up, because we need to rebuild some of the fiscal space, for instance, to be able to react to a situation like that. Although I think that if things really turn sour, there would be room to respond. Not as much as we had during COVID, but there would be some room. And on the monetary policy front, I think that there's always more room, especially if the shock is a deflationary shock. And you were talking about the financial shock, and that would be a deflationary shock.
Okay, so more room on the monetary policy side. On the fiscal side, Enric, I mean, where would the area of concern be? We talked a lot about France on this programme and vulnerability there. People don't talk about Germany as being vulnerable on a fiscal level, but the government seems to be suddenly a little less stable than it was, and people worried about that coalition. And a lot of the heavy lifting is being done by Germany right now on the fiscal agenda for Europe.
Yeah, and I think that's good news overall. I think that Germany can afford to have a fiscal deficit of 4%, which is probably what we're going to see next year. And I think it's very important that that fiscal stimulus goes forward. Actually, there was some doubt in Germany whether they should go as far as that 4%. And I think it's good for them to do that. They have the room to do it. and I think that can help sustain economic growth in the euro area.
So in terms of, what do you think are going to be the big levers next year? As you look at the landscape over the next year, what are your models kind of hinge around next year?
Yeah, let's focus, for instance, on in the US and the euro area. I think for the US, there's a continuation of this AI investment boom that we are seeing, and that's going to continue contributing to sustain the economy.
Does Trump need to keep the economy going into the midterms? Is that what next year is going to be about in the United States?
Yes, that too, and also lower rates from the Fed. I think we're going to see the Fed delivering on those rates. Yes, we'll see whether that happens in December or January. I think that the odds that the market is putting right now on the December cut, which are close to 100%, seem high to me. I think it's going to be a closer call. But I think that the direction is clear. We are moving to rates around 3% next year in the US, and that's good for the US. In Europe, I think that we're going to sustain favorable economic conditions with stable interest rates, and that's good for the economy. Those level of interest rates are good for the economy, and we're going to see a stronger Germany, and that's good, growing at more than 1% next year compared to almost zero this year. And also labor markets. And Spain, very well. It's doing very well. I think that this year it's going to grow about 3%. I think we can sustain a positive growth differential vis-a-vis the euro area. Next year, there's going to be growth closer to 2%, but there are strong forces there sustaining that overperformance.
Rick, thank you very much. Thanks for joining us, Enric Fernandez, Chief Economist over at CaixaBank. Coming up on the programme, we'll talk to Fatih Birol, who's the Executive Director of the International Energy Agency, as the EU reaches a deal to phase out the use of Russian gas. That's next. This is Bloomberg.
Younger people today are not as happy as their parents were. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in a climb. That's the climate of happiness that's been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new mini book is about. It's about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home, make sure that people don't interact socially, and that was catastrophic for happiness.
From the world of of politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Welcome back. This is the opening trade. We are 45 minutes into our session this Wednesday, the 3rd of December. European equity markets on the front foot. We have the DAX substantially higher, the IBEX actually really substantially higher this morning, and also the AEX. So we have some chip news sending us higher. We have some retail news sending us higher. Those are the areas of focus in this morning's markets. Let's quickly check what's going on with gas prices. This is the Dutch benchmark contract, and you can see that it is down by just shy of 1%. We're near 20-month lows on this gas price. The move in European natural gas futures comes as the European Union has struck a deal to phase out Russian gas faster than originally planned, aiming to sever ties with its once primary energy supplier. Let's get the view now of Fatih Birol, the Executive Director of the International Energy Agency, who joins us right now. Fatih Birol, very good to have you with us. Thank you for being with us on this programme. I wonder how material this news is from Europe. I mean, we've seen progress already to date in excluding Russian energy from European markets, but this goes even further. How material, how substantial is this news from Europe?
I think this is a historic day for Europe and for global energy markets. Russia has been the #1 energy supplier of Europe over half a decade. I should say, in fact, half a century, since 50 years. And natural gas was the pivotal fuel of Russia sending energy to Europe, to Germany, to France, the entire Europe. And until recently, about half of the European gas demand was met by Russian gas. And now, today, European countries have decided to stop buying Russian gas as of 2027. As such, it is a historic day for Europe, for Europe's energy independence.
So a historic day. Another historic day would be if we saw, Fatih, end of war in Ukraine. We're not there yet, but if we do see that, what happens to Russian energy? Is it shut out of Europe forever, or is this still under review? I appreciate this is a political judgment as well.
Yeah, it's a political judgment, but when I look at it from the energy security point of view, my golden rule #1 for energy security is diversification. The concentration that Europe has exercised with Russia on energy imports was very dangerous. And today, in this geopolitical context the world is in, European countries going back to Russian energy, in my view, would be a mistake. And in my view, Russia being the major energy supplier in Europe, that saga is gone. That chapter is closed. The parenthesis that has been opened 50 years ago is closed today, and in my view, forever.
Yeah, forever.
In my view, forever. Yes. As long as yeah.
There is an argument that says that it's very easy for Russia to still export a lot of energy, hydrocarbons, into Europe, that is a path of least resistance. And as a result of which, Europe, which is starved of cheap energy at the moment, may find that decision hard to ignore. How certain are you that this is forever?
I am not certain at all, but it is my advice to one shouldn't repeat the mistake the European countries that they have done in the last few decades. And when we look at the markets today, gas markets is much different than it was 50 years ago, because as IEA has predicted, as of 2026, there will be a huge amount of LNG, liquefied natural gas, coming to markets from US, from Canada, from Qatar, from Australia. The markets will turn, the gas markets will turn from the markets of sellers to the markets of buyers. There will be a lot of gas in the market, and then in that context, when there's a lot of flexible gas in the markets, Europe going back to Russia, in my view, leave the political side, just from the energy security side, it is not a good decision in my view.
What does that mean in terms, though, of Europe's efforts to decarbonise? There's been a lot made of the fact that at the moment energy in Europe is expensive, and one of the reasons why it's expensive is that there's been a huge effort to decarbonise. Do you think gas will make that harder? A cheaper gas will make it harder for Europe to continue that push?
So when I look at the Europe's in the short and the medium term energy future, I see that first of all the renewable energies are growing very fast. Between the Russia's invasion of Ukraine, when we have the major energy crisis to today, in 3 years of time, renewable energies increased by 40%. Huge increase. We have never seen such a big increase, mainly solar, but also wind others. Then some countries thought to phase out nuclear power, such as Belgium, where I am now. They changed their view. And they, not only the Belgium, but Sweden, Poland, France, they pushed the nuclear power. And we will use also natural gas in Europe, but this time it will come mainly from LNG and from Norway. And the fact that I mentioned a lot of gas coming to markets will put downward pressure on the prices. Europe will still be not as having a cheap gas as maybe United States, but or other parts of the world, but the gap will narrow down as a result of lower natural gas prices.
Do we need to worry about Europe replacing a reliance on Russia with a reliance on the United States, Qatar, other Middle Eastern suppliers of energy, Fatih, or because of the dynamics you describe, the energy coming from Norway and renewable sources, is that not a problem?
I think regardless of the country, just having an over-reliance on one single country in energy is always a risky business. And the energy world, this over-reliance can turn into major vulnerabilities overnight. So it is my humble advice is diversify as much as possible. From which countries you get the energy. Of course, having good relationships with the partners who are reliable is important, but diversification is the name of the game, in my view, both in terms of getting the imports from which countries, but also in terms of technologies, in terms of gas, in terms of renewables, in terms of nuclear power. And we shouldn't also forget that the reliance on critical minerals on one single country is a challenge itself as well.
Great to catch up. Thanks for the input. Always appreciate your thoughts. Fatih Birol, Executive Director at the International Energy Agency, joining us as we see Europe blocking Russian imports. Let's talk about what else is coming out for the rest of the day. NATO foreign ministers are meeting in Brussels. We've brought you what we've been getting from there so far this morning. Euro area composite PMI data coming through a little bit later on. Macron in China, we're looking forward to that as well. ADP employment data out of the United States. I think we've got some services ISM data also to think about as well. What are we going to be watching for the rest of the session? What's on Valerie Titel's mind? She has returned.
I have returned, and the data today is for the month of November, so it's no longer a backlog. backlog. This is up-to-date information from ADP on the labor market, and ISM Services, as you mentioned, comes after a weak manufacturing print on Monday. Now, we do have to wait to the third week of December to really finish up this backlog for this November data, but the ADP today, I think, could be of key interest, not only to markets, but for the Fed, who meets next week to decide on interest rates. The market is pricing in a 90% chance that they do go ahead and cut, but it is a fractious Fed with many dissents seeming to be on the cards if they go ahead and make that cut. Perhaps today's data could shift some of their minds if we see some more weakness in the labor market.
What's the Treasury's conversation that we have not dedicated enough time to talking about, Valerie?
Well, look, it was very interesting, the price action that happened earlier this week. We had that sell-off in JGBs, and it really impacted global bond markets. And I think that's getting a lot of people wondering about what 2026 has in store. We actually had a note out from BlackRock talking about their 2026 view. They're underweight the long end. They see a risk that term premium could come back in the long end. And that is not based on Japan. It's based on this AI CapEx spending boom. So again, this AI trade is becoming more and more related to not only the credit markets, but also the treasury markets.
At the long end, though, that's interesting.
Yeah, supply and demand, right? The more corporates issuing bonds, the more governments issuing bonds. Supply and demand really does weigh more on long end, where term premium is more the name of the game versus Fed policy at the front end. So again, this is a big debate right now, whether we should be worried about this spending, whether it's going to add pressure, or perhaps we should be more worried about inflation and that remaining sticky. Those are the two kind of arguments that are out there in the Treasury market today.
Valerie, thank you very much. Valerie Teitel, not enough Valerie Teitel on the show today. We'll rectify that tomorrow.
It's been away. Thanksgiving has been happening.
No, I just meant the last 2 hours.
Yeah.
Oh, yeah, we'll give her
agree.
Thanksgiving. She's allowed Thanksgiving holiday. Right, Kevin Hassett is the latest guest on the David Rubenstein Show. You can catch that tonight, 6 p.m. London time. Really interesting to get his insights then as to where he sees Fed policy. We'll see what David Rubenstein decides to ask him about. That is it for the opening trade. The pulse is up next. European equity markets, a slightly more positive picture than maybe we've been anticipating. Earnings stories lifting sentiment a little bit.
Inditex is the story. It's the standout story of the morning, isn't it? Lifting the Spanish market, having a really big impact there. So that's been a fascinating story to watch, blowing past expectations. What does that tell us maybe about the global consumer? Anyway, we'll carry on the conversation. The Pulse is up next. Hope you enjoy the show. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at
at how we're faring when it comes to Asian markets.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Russia describes talks with the U.S. as very useful, but there's still no deal to end the war in Ukraine. NATO foreign ministers meet to discuss unfreezing Russian assets to fund Ukraine. HSBC unexpectedly appoints interim chair Brendan Nelson to the role permanently after a month-long search. Plus, Airbus trims its delivery target for the year after a potential problem with body panels mean hundreds of aircraft need to be inspected. So happy Wednesday, everyone. A lot of people would say it's topple day, so we're halfway through the week. It's going to be a busy week as we get into the holidays for data from the U.S. Look, across the board, what we're looking at is S&P futures getting some 0.2%. The U.S. 10-year yield, always a great benchmark. We'll have our expert looking at bond yields across the board as we get into 2026. For the moment, it's at 4.0730. Euro dollar 116.47. Again, treasuries seem to be firming a little bit. If you look at dollar dipping ahead of this ADP research report expected to show a deterioration in private sector employment growth, and that would reinforce some of the views that the labor market is cooling. That, of course, would have an impact on the Fed. Let's get on to also the European markets map to give you a sense of some of the earnings that we're looking at. Now, Inditex seems to be lifting the IBEX. We'll have our Andrea Fausted the full roundup of what Inditex can and will do next. The CAC 40 gaining 0.1%, the DAX 0.3% higher. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the Kremlin says talks between Vladimir Putin and U.S. envoys Steve Witkoff and Jared Kushner were very useful, despite both sides failing to reach an agreement on a plan to end Russia's war. Meanwhile, Ukraine's President Volodymyr Zelensky says he's ready to meet with U.S. counterparts if there's any sign of clear progress.
We are waiting for the results in America-Russia negotiations, today's results. And I will react according to the results. If I feel that we can count on real, specific dialogue, not just words, with some result, we will meet. And he's very welcome to Ukraine, but I'm not sure that they are up on this way, this day, they're ready to come, but who knows?
Well, let's bring in Bloomberg's Chief Europe correspondent, Oliver Crook. Ollie, what are your takeaways from these Russia-U.S. talks?
Yeah, Francine, it's hard to really get a sense of what the talks actually accomplished after those 5 hours that were spent in Moscow by Steve Witkoff, Jared Kushner, and Vladimir Putin, those discussions that ranged for many, many hours yesterday. And all we've really got was a bit of a readout from the Russian side, from which they said that the talks were constructive, they were very informative, but they failed to reach a compromise on some of the critical issues, including those territory swaps and those discussions around the front line of the battlefield and where the fighting would be paused, and whether or not there would be some exchange of territory. That, of course, is one of the thorniest issues that we understand from all the foreign ministers that we've spoken to, and that there is still a lot of work left to be done, both for Moscow and Washington. I think the takeaway here, Francine, is that we began this sort of diplomatic process about a week and a half ago when that 28-point plan first emerged, and things were really trying to move from the Trump administration's perspective at warp speed. We are now closer to diplomatic speed in terms of where the progress is on these discussions. This is a process that began in Geneva, then moved to Florida, then to Moscow. The question is, where will those next talks be held and at what level, which will give us an indication of how much progress has been made thus far.
Yeah, foreign ministers are also meeting at NATO to discuss the alliance's support for Ukraine. So what's the latest, Ollie?
Yeah, so I spoke to a number of foreign ministers as they were filing into this building a little bit earlier today, and I think that for many of them, they're still also in the dark in terms of what is actually included in this 19-point plan ever since it was amended from that original 28-point plan. That original 28-point plan really prompted a great deal of alert here for the NATO countries from part of the alliance, because there were a number of provisions within that 28-point plan that were not just related to Russia, not just related to Ukraine, but actually would impose restrictions on NATO in terms of their own enlargement, not just by including Ukraine, but also including other countries. So that was a major issue and a major concern for these NATO countries. And many of the European leaders who saw that proposal for the very first time, speaking to some of the foreign ministers as they walked in, I think the most critical issue, the one in which the Europeans could try to get a seat at the table and produce the most leverage, is on this issue of frozen assets. Have a listen to what the Lithuanian foreign minister told me just about an hour ago.
Time is ticking away, and this is obvious. We have now only 2 weeks to make a decision till European Council, and I'm really optimistic that we will make it. Otherwise, I will be really big pessimist, because we do not have the alternatives for finances for Ukraine. And this solution that was provided as the concept from European Commission is a good one. Now we are waiting for the legal proposal, and it should be coming out in these days, in upcoming days. And I have the hope that it will push forward the process.
So some urgency there from the Lithuanian foreign minister in terms of the Europeans getting their act together and moving on those Russian assets. We should say we heard from the Belgian foreign minister as he was walking in. And remember, Belgium has really been the big hurdle to this, saying that the legal proposals that the Commission has put forward so far are not sufficient for the Belgians to sign on to moving on those Russian frozen assets. And Francine, I think that the sort of last thing that we're focusing on here at the NATO foreign ministers meeting is a conspicuous absence. Marco Rubio not in attendance here, not going to be able to brief these ministers who are eager to get an update on how negotiations are going with Russia.
Ollie, thanks so much. A lot going on, of course, that I know you'll stay on top of. Bloomberg's chief Europe correspondent, Oliver Croak. Now, traders raising bets that the Fed will cut rates after President Trump hinted again that Kevin Hassett is a front-runner to replace Jay Powell as Fed chair. Well, we're now joined by Henrietta Packman, senior portfolio manager at Allspring Global Investments. Henrietta, thank you so much for being here today. When you look at, first of all, what's expected of the Fed, I know there's a number of data that we're expecting in the coming days and weeks. Is it a cut in December and then again in the new year?
I think if you look at expectations at the moment, yes, the markets are expecting cuts coming forward, and I think that is also encouraged by the news on the Fed chair and what we've seen there. So. The way we're looking at it on the short end is that cuts are expected, but we'll see what that means for further up the curve in terms of maturities.
Henrietta, overall, you're expecting sticky inflation across the board.
And that I think is a challenge at the moment. We are sort of seeing actually resilient growth in the US, and we are seeing sticky inflation. So I think that is what complicates the job of the Fed at the moment in terms of expectations. And so we'll have to see how that evolves. I think it was really interesting to hear the potential new chair of the Fed sort of saying that inflation has momentum. And I think that'll be interesting to sort of see how that guides his views going forward.
So, Henrietta, if you boil it down to some of your central message to bond investors, how do you construct your portfolio? Where do you want to be invested in?
So at the moment, the real focus is maintaining income in the portfolios and a degree of diversification. If you look across the board, obviously spreads are pretty tight, reflective of the positive environment and the sort of strong fundamentals actually that we're seeing from the companies that we invest in. Opportunities again, if you look more broadly in the securitized space, so looking to capture those and looking at it internationally and sort of more looking at global diversification as well in the mix of the portfolios from a fixed income perspective.
So when you look at sector allocation, what looks good at the moment?
I'm not sure I would go so far as saying that what looks good. given where spread levels are. I think what is interesting, and I think what investors are particularly looking to fixed income for, is the level of yields that is available. I think that again sort of plays into our theme from an income perspective, and that's what we're looking to sort of have in the portfolio. We're not necessarily looking to stretch in terms of credit quality at this point in time, precisely for the sort of spread comments that I just mentioned.
You're right. I should ask what looks like less bad, but what looks interesting. Henrietta, give me a sense, the last, I guess, 10 days, what really drove a lot of anxiety in bonds is what happened in Japan and what happened in the UK. And there does seem to be an understanding that they're responding to investor demand to boost short-term borrowing. And we've seen that from both countries. How does that dynamic shift in 2026?
I think the sort of long end of the curve is an interesting area, and we are expecting volatility there. Obviously, that will depend on the sort of supply patterns that we have. So really interesting to see certain geographies looking to issue on the sort of more medium or short end of the spectrum. Potentially not wanting to pay up for the sort of yield levels that we're seeing on the longer end. That is something that's obviously understandable. However, it's a bit of a dangerous game to play. You don't want to sort of shorten your reinvestment profile too much from a sovereign perspective, particularly in this kind of environment where deficits and the sort of supply of treasuries globally is likely to be pretty high.
Henrietta, thank you so much for joining us. Henrietta Packman, their Senior Portfolio Manager at Allspring Global Investments. Now, we are looking at live pictures of the presidential plane of the French president just arriving in Beijing. We know that this will be an extremely high-stakes meeting for Emmanuel Macron, who will lobby his Chinese counterpart this week to try and avert tariffs on dairy and pork exports to China. Now, according to a couple of French officials, we do have a delegation, I think, on that République Française plane with the president. France has also resolved some of the outstanding trade disagreements with China, but tariffs on dairy and pork seem to be those that are still at risk and will focus on French discussions in China. Then they will talk most probably about everything that's been happening also in terms of global stability, not only the Trump administration, but also Ukraine. Earlier this year, we know that Beijing had imposed some preliminary duties on European brandies, that French producers then won a partial reprieve after Remy, but also LVMH's Moët Hennessy and Pernod Ricard committed to keeping their prices above minimum levels. So again, it's ongoing negotiations. This extremely high stakes for President Macron, who also sees himself as a little bit of a champion for Europe. Coming up, we're joined by Tim Adams, president of the Institute of International Finance. We'll discuss stress tests, capital requirements, but also the outlook in general for the finance sector. That's next, and this is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
For me, I think that being director of the National Economic Council is my dream job. And if the president asks me to be Fed chair, then I'll do it. But if I'm not Fed chair, don't be disappointed for me, because I love the job that I have right now.
Well, the U.S. National Economic Council Director Kevin Hassett speaking with the Carlyle co-founder and co-chairman David Rubenstein. And you can watch more of that interview on the David Rubenstein Show on Bloomberg TV tonight at 6 p.m. London time. Now, HSBC has appointed Brendan Nelson as its next chair, replacing Mark Tucker, who led Europe's largest lender for for much of the last decade. Nelson has been serving as interim group chair since October, and his appointment follows a month-long search. Well, with us now is Bloomberg's managing editor for EMEA Finance, Tom Metcalf. Tom, I mean, this was kind of unexpected. So why did HSBC go down this route?
Yeah, well, they've gone down the insider route. I think some of the analysts are saying this is very much a safe pair of hands. I think the most interesting thing is sort of just how public the process was, as you no doubt expect with an HSBC. But they did go through this whole roll call of external candidates, and look, they're looking for someone with Asian experience, banking experience, and ideally someone who knows HSBC. So I think ultimately the board, having really done an extensive search, swung back down towards the internal candidate, which in part reflects just what a demanding role this is. You know, loads of travel. Yep. Being a UK board, it's extremely, or not as well paid as, say, it would be in the US. So, you know, for those in the run-in, it's actually quite a tough sell.
So, Tom, what kind of a chairman will he be? Is the chairman very hands-on, or is the chairman kind of there in case the CEO messes up?
Well, I think under Mark Tucker, is famously hands-on. I suspect there'll be a very different culture and certainly dynamic with the CEO, Georges El-Hedary. So I suspect, he'll step back a bit, maybe be a bit more low profile, let Georges El-Hedary kind of, be the front person, as it were. But this is someone who's super competent, got all the sort of sense of the operations. So I can definitely see why the board ultimately went for this. And one last interesting point, Brendan Nelson is 76, so it's unlikely he'll be in place for as long as a Mark Tucker was. It was 8-9 years. So that adds another dynamic in the year ahead.
So I mean, geopolitics, I imagine, will be left, right, and centre. But what will his tenure be focused on?
I think, making sure the ship is stable. There's a lot of changes going on under the CEO, and probably effectively just making sure that, HSBC kind of does navigate those things with as little sort of ruction as possible, because it's such a difficult position that bank in particular is in. It's got Beijing, it's got Washington, and then it's listed in London. So one of the most demanding jobs in finance. Hats off to HSBC for finding their man.
Yeah, and good luck to them. Tom, Thank you for joining us. Tom Metcalf, Bloomberg Managing Editor for EMEA Finance. Now, the Bank of England cut its estimate for how much capital British banks need for the first time in a decade. The central bank promised to consult on rule changes next year, and the move potentially paves the way for higher lending and bigger buybacks. Well, let's discuss all of this with Tim Adams. He's President and Chief Executive of the Institute of International Finance. Tim, so good to speak to you.
Thanks for having me back. Always
this is
great to be here.
We were just talking about HSBC. I mean, first of all, for me, it's very different what the U.S. is doing under the Treasury Secretary and some of the regulation there, and the way the EU is going. What are you feeling in the U.S.? What are banks telling you?
Well, the U.S. is leading on modernization of regulation. Mickey Bowman, the vice chair, is leading this effort, but Scott Bessent's certainly involved, Jay Powell, and they're taking a wholesale look at the regulatory framework affecting banks and non-bank institutions. And I think that we can do a better job in terms of releasing capital and promoting growth and capital formation. And I applaud the effort.
But, Tim, is the U.S. just far and away the most progressive, or are they just talking at the moment?
Far and away the most progressive. They're leading the convoy. I think the UK sent a pretty clear signal yesterday that they don't want to be left behind. Yeah. And the EU is trying to figure it out. I think we'll see more out of the EU in next year.
So the EU is lagging If it's lagging, why is it lagging?
Well, it's just the structure of the EU, and they're just much more cautious, less of a risk-taking environment. But I think they understand what most advanced economies understand. We need economic growth, we need higher productivity, and we need private sector capital formation. Banks and capital markets are crucial to that.
Tim, I know we're basically your pit stop on the way to the Middle East, right?
Yeah.
How's the Middle East doing?
Great. Well, they probably could use higher oil prices, but the place is booming. I mean, off to the UAE, Saudi Arabia is certainly doing well, enormous demographics, but they also want to reinvent their economies away from hydrocarbons, and we're seeing that in terms of AI and data centers.
When you look at banking in general, and I hear this from all corners of the world, is that because we're redesigning capitalism with maybe more fragmentation, the banks will suffer. So the banks, will they service different clients? So is it winner takes all for the U.S. banks, and the rest have to scramble to see how prominent they are in Asia, for example?
Well, I think that we're all scrambling. The world is being rewired in a post-Trump world, right? And so we see new relationships, new alliances, new capital flows. The ASEAN economy interacting with the Gulf economy, China in Africa, Canada looking for new markets. So this is just a rewiring of the global economy, and capital flows will mirror that.
But you've said that this week's package from the BOE mean they don't want to be left behind. I mean, does the requirement to cut capital actually go far enough?
Well, we'd love to see more, but I think it was an important indication of where the bank wants to go and where this administration wants to go. The chancellor's also been very pro-growth oriented. Like to have seen more last week, but I get it. But I think it's an important signal that the bank understands that capital is crucial, releasing capital is crucial to economic growth and higher productivity.
What about ring fencing? Again, there's a lot maybe that this country could do to be on par or not too far behind the U.S. Is that fair?
I think it's fair. I don't think they're there yet. I think we have what we have, but I think what we saw yesterday, both the stress test and the approach to releasing capital, was an important first step. I think it's a fundamental shift in the thinking of the Bank of England.
Crypto.
Yeah.
What do you do with crypto at the moment? So if you look at, the Basel Committee, it's, changing some of their standards of how banks should be treating any crypto they own. Do your members want them to loosen it?
They do. They wanted to focus less on technology and just risk across different asset classes and different kinds of technology. I think the Basel Committee will consider it. What we are seeing is an explosion in the use of stablecoins. The U.S. is certainly supporting that via the Genius Act, which I think is just becoming the beginning of what we'll see as maybe a $2 or $3 trillion market, stablecoins. But digital assets and digital currencies are here to stay.
What do you think crypto? I mean, we look at Bitcoin because it's the most famous, quite a lot. I don't know whether it's tracking other asset classes, so it's becoming more normal, or because of volatility, you don't know exactly what it is, and it could be dangerous for a lot of the banks.
Right. Well, I think it's a speculative asset, and we've seen just the wild price swings. But I think we need to think about digital assets and currencies more broadly as a new form of technology, tokenization of deposits, tokenization of assets. That's the 21st century finance.
Tim, talk to me a little bit about private credit or private markets.
Yeah. Well, the Bank of England has been leading on that, and Andrew Bailey specifically in terms of looking at potential risk profiles out of private credit. And I think we'll see more this week announced from the bank in bringing in a number of institutions to do a long-term study of the risk profile. They've grown enormously, maybe a $2 trillion asset class with enormous exposure to the banks. So I think it requires additional study.
What, a study or a regulation?
Well, I think first we just need facts. We don't have facts, right? There's enormous opacity in terms of the black box nature. So I think once we have the facts, and I think Governor Bailey's trying to get those facts, we'll know what to do from there.
But is there a danger that if the UK starts it alone, then everything will just move elsewhere?
Well, it's possible. We always see risk arbitrage occurring. But wearing his hat as chairman of the Financial Stability Board, I think the governor has the capacity to have a broad reach, and I think others around the world are interested in seeing what this produces.
Tim, what's your biggest concern about the U.S.? I know we talk, on this show we talk day in, day out about AI valuations and whether it's systemic and whether it could actually take down a bank. Because of their exposure to it, or is there anything that we don't worry about that you worry about?
I don't worry so much about AI. Look, every C-suite I visit is investing heavily in AI for their own firm, for their industry, for economic growth. I think it truly is a transformative technology. Will it continue on a linear path? Probably not. We'll see bumps along the way, but I do think it is transformative. I worry about the U.S. as just the U.S. consumer. The low-end consumers, working-class Americans, are really stretched. There's an affordability issue, and we're reliant on high-income consumers that are reliant on the stock market. So I think there's a vulnerability in the U.S. consumer.
Is there anything that what banks or policymakers can do now to temper this, I guess what would be the outcome of a K-shaped recovery that goes bust?
Yeah, well, they are provisioning. We're late in the credit cycle, but everyone gets that. So I think everyone's in a very cautious mood. Well, I hope that I'm wrong in terms of the consumer, but there are ways that the administration could pursue certain policies that might be helpful to consumers. But I think the banks in the U.S. are prepared for a turn in the credit cycle whenever that happens.
I know the IMF does great events. You had Treasury Secretary Bessent also speaking at the last one at the IMF. What will you focus on in the next 12 months?
Well, continuation, saying the transformative events that are occurring in terms of AI, digital transformation, quantum computing, private credit, and just this rewiring of the global financial system, new alliances, new relationships. I don't know what the new equilibrium looks like, but I think we're prepared for a world in which the U.S. economy is no longer the buyer of last resort. And then we got to figure out China.
So interesting. Tim, thank you so much, as ever, for joining us. Tim Adams, President and Chief Executive of the Institute of International Finance. Now, some other stories making news today, and a plan to overhaul Germany's state pension system is in doubt after a test vote by lawmakers in Chancellor Friedrich Merz's Conservative caucus. Well, sources say among the 208 members of Merz's bloc in the lower house, at least 10 voted against the law in the non-binding ballot. It's understood about 3 or 4 abstained. As Merz's ruling coalition with the Social Democrats only has a majority of 12, it could fail to get the bill through in a formal Bundestag vote, potentially triggering a full-blown government crisis. Now, BMW is pressing the European Union to formally adopt a trade deal with the U.S. that would give the German car maker respite from ongoing tariff pressures. Now, tariffs imposed by the U.S. and EU have weighed on the luxury car makers' earnings, with German peers Mercedes-Benz and Porsche also getting hit. The U.S. is BMW's second biggest overseas market. And China has condemned the U.K. for again delaying a decision on whether it can open a new embassy in London. Beijing wants to build what would be the largest embassy in Europe on the site of the old Royal Mint, close to the City of London. A decision had been due in October, but that was pushed to this month amid a scandal over alleged Chinese espionage. A decision will now be made on January 20th. Now, coming up, we'll discuss European capital markets with the chief executive of the Athens Stock Exchange. That's next. We're also getting live pictures of the French President Emmanuel Macron just arriving in Beijing. Quite a lot going on today, but this is 3 days of a state visit of Emmanuel Macron. What he has to do is get some deals, especially when it comes to pork tariffs. You can see Brigitte Macron there with her husband, the French president, just arriving in Beijing, and then he has a full booked schedule to try and get the Chinese on side after they taxed, for example, some of the spirits, but then they found an agreement in the last couple of months. So on the agenda, it's geopolitics from Mr. Macron, it's trade, and also how to get a better deal for European companies. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation. Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Russia describes talks with the U.S. as very useful, but there's still no deal to end the war in Ukraine. The NATO foreign ministers meet to discuss unfreezing Russian assets to fund Kyiv. HSBC unexpectedly appoints the interim chair, Brendan Nelson, to the role permanently after a months-long search. Plus, Airbus trims its delivery target for the year after a potential problem with body panels. That means hundreds of aircraft need to be inspected. Now, there have been calls from across Europe for a pan-European stock exchange that would make it easier for investors and for companies to access capital. Now, in a step towards this, Euronext recently acquired the Athens Stock Exchange, and as Greece emerges from a decade-long debt crisis, the deal is seen as a chance to reestablish the Greek markets on the global stage and attract more international investment to try and grow the economy. Well, I'm delighted to be joined now by Yanos Kontopoulos, Chief Executive of the Athens Stock Exchange. It's so great to have you in London.
Same here.
Congratulations on the deal.
Thank you.
When you look about, the European Stock Exchange, I mean, this is an idea that's been floating around by European leaders. I don't know whether it gets anywhere, but what are the actual benefits of that?
Well, I think the main concept is to basically create a single liquidity pool, which is probably the most important dimension for a market, to basically deal with technological requirements. So you have good advanced technology that you're able to, share the cost across a bigger pool, and ultimately is about global visibility, right? So it's the U.S. and then, we need to have Europe as strong as possible.
Is there a danger that some of the, smaller local stocks would feel left out if there was a capital that would center around Europe?
Well, if you have a large enough market, then you have also the other side, which is the investors, developing a certain attitude against, larger stocks, smaller stocks. So if the pool is large enough, even smaller companies can actually do better.
Talk to me about IPOs in Greece. What are you doing to make it more attractive? And do you see, good things in the pipeline?
Yes, it has been a pretty good year. Healthy raising of capital, good pipeline of IPOs. I think in the last 3 years, we managed actually to resuscitate the market, and that I think has made a huge difference. And the advent of Euronext, I think, if anything, raises the branding of the market itself. And I think everything else equal, it increases the probability that more firms will be coming in. So that's the plan.
How did you manage to revive the market? Is it through some of the initiatives actually in Greece at the Athens Stock Exchange, or is it that there was just such dryness for such a long time that people then wanted to do something?
I think it's a combination. If you remember about a couple of years ago, you had asked me, when are we going to have a large IPO?
Yeah.
And the moment we had the Athens International Airport, I think that solved a number of different questions out there in terms of whether the market is liquid enough. And that, I think, was a paramount moment. The fact that returns have been exceptional in the last 4 years in Greece has also contributed. Lots of work from the team at Athens in terms of taking advantage of the very good macro picture in Greece, because Greece has differentiated itself from Europe and even the global economy and the group of emerging markets. So that all has helped. It's just a matter of putting the work and making sure that, you stand out.
But there's so many companies that want to, either become private or stay private. And that's really changed in the last, 4 to 5 years.
Yeah.
Does that just accelerate?
Well, there are fads, there are cycles, and then there are macro cycles. So there are going to be factors that are going to make it potentially harder to continue on that path. And also, I think there is, a quest right now, especially in Europe, for scale. And that scale is very hard to do it in private markets, truly. You really need the power of public markets to do it. And that's the bet, I think, for Europe as a whole.
Do you think a lot of companies are scaling up? This is, one of the single kind of fixable issues that people talk about, is that the U.S. just scales so much quicker than then they become first mover advantage.
Of course, but, there are smart ways to do it. There are always gaps. And the question is, there's got to be some political willingness in this to deal with the details, and some of the details is, different legal frameworks and so on and so forth. Having a large platform like Euronext expanding also helps. But ultimately, we need to make up our minds. We are the largest provider of savings to the U.S. over the last 10 years. It's not Asia. It used to be Asia 10 years ago, but the last decade is Europe. So we need to think about ourselves a bit. My money is on Ms. Albuquerque, the European Commissioner. I think she's pretty decided to move things around.
Okay, I like that. I mean, then there's the questions of capital markets union. And do we get that in our lifetime?
Absolutely.
Really?
Yes, absolutely.
I've been asking for the last 15 years.
I don't think we have a choice. Honestly, I don't think we have a choice. And I think just the mere fact that people at the political level are discussing it with a lot more intensity than before will make a difference. But now is the moment. We have a chance.
Janos, talk to me a little bit about the process of being acquired by Euronext. Was it an easy decision?
Well, good thing it was not my decision. It was the decision of the shareholders. And I think it was, there's always a moment for things. You can never predict this. But at the end of the day, I think this is a market that stood out. It has, I think, a lot of prospects in the coming years, exactly because of some of the elements of catching up, but not just catching up, but actually redefining yourself. So I think that the combination of having this opportunity of getting into the Central European stage sooner or later would have happened, and the moment was now.
I mean, I know you've lived in London for many years, and we talk about, London as a financial center. Is it working? Is it not working? There's a lot of data points that say, look, it's not working as well as it could or should have been.
Yeah.
Does that mean that the whole of Europe loses to the U.S.?
No, I think, again, there's a little bit of reset. If you think about it now, and lots of people don't know that, Euronext is basically trading in terms of volumes and in terms of capitalization is now double the size of London. So that was not in the cards for a long while. So, you need to run with the momentum, and then ultimately you need to create that sort of maybe expanded union. We'll find out.
But you think we'll have an expanded union?
Look, if we get to the European side actually formulating in a much bigger fashion, I think the next step is actually easy.
When you're looking at sectors, where do you think a lot of the IPOs or even bullish sentiment will come from for you?
Look, the most interesting, I guess, concentration right now of interest is in the defense side and also on the technology side. But as we all know, these are very hard things to predict. And I think we should go with where the good companies are. You need those type of companies that stand out, because those are going to capture the imagination of the investors.
What do they ask you when, it does seem that the markets or certain parts of the markets, I'm thinking about AI, is really priced to perfection. When a chief executive, you discuss with them IPOing or some of their options, do they worry about the moment in the cycle we're at?
Well, I tell them it's all about competing for a vision. And I tell them that your future capitalization in the market is whatever the price is going to be on our market tape, plus the present value of the stories you're going to be sharing with your investors. So what you need to do is you need to do that heavy lifting, that inspired storytelling, and you're going to be fine. Forget about the noise. There's always going to be something out there. Focus on the story.
Janos, thank you so much. Great to speak to you, actually. Janos Kontopoulos there, Chief Executive of the Athens Stock Exchange. Now, in other corporate news, Airbus has cut its full-year delivery target after problems with its best-selling A320 jets. The plane maker says it expects to hand 790 planes to customers this year, down from its previous target of 820. So let's bring our aviation and transport reporter, Danny Lee. Danny, how bad is this for Airbus?
I mean, this is a small cut and a small winding back of expectations of what it can deliver by the end of the year. And in many respects, the market investors feel this is a bit more realistic. Maybe that's why Airbus's share price is a little bit higher today, up around 2% or so. But at the end of the day, this caps off this delivery guidance caps off a very terrible week so far for Airbus. Started off at the back end of last week with concerns over software, this global recall that affected many airlines, and now this quality issue that's now affecting several hundred aircraft. At the end of the day, this can help Airbus, have a little bit of breathing space to look and assess as it, tries to ramp up more broadly its production into the years ahead. So I think for investors, this is a good moment to just have a bit of reality check.
So do you see any upside for Boeing from this?
Well, Boeing has its own positive momentum, but I think it's hard to see in the short term how any manufacturer can capitalize on the kind of near-term struggles that Airbus is going through. Frankly, we only have the options of Boeing or Airbus realistically that supply this commercial aviation market. But at the end of the day, I think for Boeing, who has seen off its own troubles, both Boeing and Airbus, they're very acutely aware of their supply chain concerns and the difficulties in the market and the complaints of customers if they don't get this right. That I think for the aviation industry at large, they're just acutely aware of the things that could go wrong and how they are all trying to get things right.
Danny, thank you so much. Bloomberg's aviation and transport reporter, Danny Lee, there with the very latest, of course, on this story that I feel like we'll have a lot more to talk about. Now, there have been concerns that Inditex, the owner of Zara, has been losing steam, but sales have risen at the world's biggest listed clothing retailer, unlike the slowdown hitting many of its peers. Well, joining us now for more is Bloomberg's opinion columnist, Andrea Felstedt. She's also one of my favorite guests in this holiday season because we talk about Black Friday and some of the things that you can get good deals and, more importantly, what Gen Z wants, which just makes us feel cool. Andrea, thank you so much for joining us. So, these are very strong numbers when actually there's many concerns about the world economy and many concerns for retailers.
Exactly, and Zara's second biggest market is actually the US, and we've seen from a succession of companies that the US consumer, particularly the middle to lower income consumer, has weakened. So to deliver this, and also there was some unfavourable weather in some parts of the world, to deliver this is really quite impressive.
Yeah, but so, Andrea, I mean, what's the point of, Zara, and, just anecdotally, there are a lot of people that we know that shop at Zara because they have this, middle, it's priced well, but it's a little bit slightly more elevated than some of the, is it like a sweet spot?
It's definitely a sweet spot. Zara have been Inditex, particularly Zara, have been very smart in taking the selection up market. They still offer the entry-level goods, but they've elevated the range. So there are higher price point coats, jackets, real leather and suede bags, that type of thing. And they're really tapping into that sweet spot because as the luxury brands have moved up market, they've disenfranchised a lot of those, particularly what we call aspirational consumers. They're comfortable, but they're not super wealthy. The luxury brands, the handbags, have really become out of reach. So Zara is managing to appeal to those customers.
Overall, what's the outlook for retail and fashion? And I was speaking to someone who was saying actually maybe we should focus more on the resale because it's also like this, the vintage items that could come back. I don't know whether that is changing.
It definitely resale has become more popular, and it's for the same reason because the luxury brands have put the prices up so much. So consumers who still want a piece of that brand look to the resale market to maybe buy them at a little bit more reasonable price. And one of the trends that's really helpful that's emerging is actually not to have a really pristine luxury good, to have something that looks a little bit beaten up, distressed, that really plays into the hands of resale.
Okay, thank you so much, Andrea. As always, I love your pieces. I know you talked just a couple of days ago about how the younger folk prefer Cartier to Rolex. Now, Bloomberg's opinion columnist, Andrea Felstedt. Now, Amazon's cloud unit is releasing its latest artificial intelligence chip today as it renews efforts to sell hardware capable of rivaling products from NVIDIA and Google. The accelerator, called Trainium 3, is a key element of Amazon's strategy to stand out in AI. Now, Amazon Web Services is the largest seller of rented computing power and data storage, but it has so far struggled to replicate that dominance among leading developers of AI tools. And the credit risk gauge on Oracle debt has closed at the highest level since the financial crisis. It comes after a flood of bond sales from tech giants amplified concerns that a bubble is forming in the artificial intelligence industry. Oracle has effectively sold tens of billions of dollars of bonds in recent months, though through note sales in its own name and via projects that it is backing. Now, Bloomberg has learned that Comcast is looking to merge its NBC Universal division with Warner Brothers Discovery after making a renewed offer for part of the company. Sources say Comcast aims to create a larger entertainment entity by combining the NBC networks, its film and TV studios, with theme parks at Warner Brothers. Coming up, we'll discuss the careful balancing act that the French president must perform as he begins a 3-day visit to China. That's next, and this is Bloomberg. From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix here in London. Now, the European Union has reached a deal to phase out Russian gas faster than originally planned, a move that aims to finally sever ties between the bloc and its once primary energy supplier. The head of the International Energy Agency has described the decision as historic.
I think this is a historic day. Until recently, about half of the European gas demand was met by Russian gas. And now, today, European countries have decided to stop buying Russian gas as of 2027. As such, it is a historic day for Europe, for Europe's energy independence.
That was the International Energy Agency Executive Director Fatih Birol speaking exclusively to Bloomberg. Now, talks between the U.S. and Russia failed to reach an agreement on a plan to end the war in Ukraine. Meanwhile, EU ministers are meeting at NATO headquarters to discuss their next steps. And a Bloomberg opinion piece out this week argues that the EU is actually not capable of becoming a geopolitical player to hold its own against Russia, China, and the U.S. Well, the author is Bloomberg's international affairs columnist Mark Champion, and he joins us now. Mark, first of all, congratulations on some really thought-out pieces. This is kind of the story of the moment, trying to figure out what happens amongst all of these power players. Where does the EU fit into this, and why do you think they haven't been able to just have a greater voice?
Yeah, I mean, so in the past, they would have been because the Americans would have drawn them in. And so they would have been part of the conversation. The Americans would have wanted to keep them on side. Joe Biden would have, Obama would have, and would have wanted to kind of present a unified front. The Trump administration just isn't interested. And therefore, Europe has to really, push its way to the table. It really doesn't have the means to do it. Ultimately, in this kind of diplomacy, with the return of geopolitics, then ultimately you have to have the threat of hard power to be taken really seriously by a country that is your opponent, like Russia. Yeah. The EU doesn't have it.
Does Russia and does Vladimir Putin want a deal? And actually, does he want? I mean, if he wants to keep all the territories, is this? Are these talks just smoke and mirrors?
No, I think they're very useful to Putin. It's the Americans who came to the Russians, with this round of talks. It's been very useful. It headed off some momentum that looked like might have been building for Trump out of frustration to do something more with sanctions, to talk about sending Tomahawk weapons to Ukraine that might be able to reach further into Russia and hit some of the missile-producing factories and so on. That's now off the table. So this is useful for the Russians. If they can get the Americans to drive through, their list of demands, they will certainly take that. But it's a win-win in a sense because, as Putin sort of made clear, this is a way also for him to try and divide the Americans from the Europeans, to present the Europeans as the problem, the obstacle to peace. And then, also the Ukrainians. If the Americans, sort of take that bait, then they will start putting more pressure on the Ukrainians, which takes the form of taking things away. They've already taken away the provision of paid-for weapons. They would then start taking away the ability to buy weapons at all via Europe, or they can also take away ultimately intelligence sharing, which would be catastrophic for the Ukrainians. So they're in a very, very hard place, the Ukrainians, and for the Russians, they're sitting quite nicely. Yeah. They win either way.
What do you think happens next? Are we going to have some kind of peace agreement, or there's also so much pressure at times to hold elections in Ukraine? What does that mean for Volodymyr Zelensky?
Yeah, so I think those are two kind of separate questions. The first one, I think we're a little ways away from a summit between Trump and Putin where they declare a deal. It's hard to see whether, again, the Americans will be walked back and will kind of, walk away for a while, or whether they will this time simply try to sort of plow through and really apply pressure to the Ukrainians. It's very painful and create a sort of crisis in the alliance. I'm not quite sure, which way it will go this time. And on the elections issue, until now, it's really been just a Russian ploy. If you could get forced elections during a war in Ukraine at a time when they really, logistically it wouldn't be possible, where it's just another way of creating weakness inside Ukraine. Now, after all the corruption issues, the Ukrainian, the president's office kind of falling apart in any case as he gets rid of even his top aide, you can see a more useful role for elections or even for a crowning, an anointing of a replacement to Zelensky to see the way through to elections after the war is over.
So many interesting angles that we're, of course, keeping very close eye on. Mark, thank you, as always, Bloomberg opinion columnist Mark Champion. Now, the French President Emmanuel Macron is beginning a 3-day state visit to China with the issue of Taiwan expected to take center stage. Let's get more on what to expect with our chief Asia correspondent, Rosalind Matheson. Ros, some careful treading for President Macron to do then.
Well, that's right. Actually, a lot of careful treading for Macron to do. He's just arrived in China because he's got a variety of sensitive issues here. Obviously, the tensions between Japan and China over Taiwan, the recent comments made by the Japanese Prime Minister. China seems keen to try and enlist Macron somehow in that, in their efforts to isolate Japan. So Macron really doesn't want to see tensions increasing between China and Japan, but also he doesn't want to be caught in the middle and having to make a lot of statements about where he sees Taiwan. So there's that issue. There's also the issue, of course, of Russia's war in Ukraine, and Macron, they're very much representing the Ukraine perspective and how Europe sees this and wanting to push China to use its own leverage against Russia economically. So will China listen to that one? So there's a delicate dance also. And of course, obviously the third leg of this is business, trade, investment, and that relationship, not just between China and France, but China and Europe has been very fraught. And so can they come away with this with any kind of understandings around trade? And both have a lot of strong interest going into these conversations as a result.
So, Ros, what are both sides actually hoping to achieve?
Well, one thing that France very much wants to achieve out of this, and they are taking a lot of CEOs as a result, is Macron wants to push China not to go towards tariffing imports of pork and dairy. This, of course, would be retaliation for the tariffs that the EU put on Chinese electric vehicles last year. They seem to have solved cognac as an issue around that, but there's still in the ether the possibility that China might decide to put tariffs on agriculture. So again, that's pork and dairy, and that would be quite important for the French agriculture industry. So obviously Macron wants to press that point. He's taking some CEOs, including Danone, obviously, as a result. Separately, he's taking those CEOs to get some business deals done. China wants to get some business deals done. They want to come out of these conversations with some meetings, with some deals in the can, so they've got both that incentive. And for China, one question, of course, is do they dangle critical minerals, rare earths? Because, of course, Europe, like everybody else, needs critical minerals, and China has a lot of them. So does China bring that into the conversation just to show in a way that it does still have that leverage over the EU?
Ros, what do you think? I mean, do we know about the two leaders getting along? A lot of this diplomacy is actually if you also like each other and find common ground.
Well, that's right. And they have had their ups and their downs. And of course, Macron was really taking much of the hard line on behalf of the EU for a while on trade with China. But the last time they met, they did seem to actually manage to get on okay. And they do have that level of, history and rapport that's there. And so, as you say, that personal relationship does very much matter. We've seen it very much be the case, obviously, also when it comes to Xi Jinping and Donald Trump, the US president. They've managed to get deals done when they're both in the room together. And another leader for whom it might matter pretty soon is the UK Prime Minister, Keir Starmer, because there are reports just coming out that Keir Starmer might be making his way to China at the end of January as well. And he too would be facing a lot of delicate issues if or when he does so. And again, that relationship between Keir Starmer and Xi Jinping is much less solid than perhaps some of the rapport that we might see on display in the next couple of days between the French president and the Chinese leader.
Ros, thank you so much. As always, Bloomberg's Chief Asia Correspondent, Ros Matheson. Up next, it's a Bloomberg Brief, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The aim here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Still are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoin?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Waiting game. Stocks struggling a little for momentum as investors await ADP and PMI data releases. Consumer insights. Earnings from Macy's and Dollar Tree on deck as we enter the holiday shopping season again. And talks continue. Russia says peace talks with the U.S. were, quote, very useful. The EU reaches a deal to phase out Russian gas by the end of next year. So let's take a look at these markets. We are seeing futures pointed a little higher. We also eked out some gains yesterday. The S&P 500 was up about 0.25% at the end of the session. Much better for the Nasdaq 100. It was up more than 0.8%. Marvell said it was getting repeat orders, and that seems to have allayed some AI concerns for now. And then Bitcoin staged a little bit of a rebound. We're still trading around the 93,000 or slightly under it mark, and that seems to have added at least some buoyancy to this market. Let's take a look at the bond universe, though, because we can now firmly say that the steepener trade is back in play. Look at that, 30-year yield at 4.74, while the 10-year yield a little bit lower at 4.0788, and the 2-year yield 3.4978. President Trump seems to have almost confirmed that Kevin Hassett is his pick for the next Fed chair. He says he will announce early next year. Didn't move the market that much, but we have an idea of what's going on there at the Fed. So let's have a look now at some individual pre-market movers. Over to London, and she's back. Valerie Titel, good morning.
Good morning, Bonnie. Let's start with a check on some stocks after earnings. Let's start with American Eagle, up nearly 13% in pre-market trade after they lifted their full-year sales guidance and also posted a beat in net revenue. And Bonnie, this marks a really steep turnaround for the apparel company, who pulled their guidance only just back in May on a apparel write-down. Now, look, American Eagle has surged over 100% since that May pulling of their guidance. So that comes alongside these really big celebrity tie-ups that have made some flashy headlines. Travis Kelce and Sydney Sweeney being two of those celebrities. Moving on to the AI trade, let's talk about Marvell Technologies. They make chips used in AI infrastructure. The stock is up just shy of 10% as the CEO has said some pretty upbeat things when it comes to data center revenue. They see full year guidance for next year. Their data center revenue boosted by as much as 25%. Their custom chip design unit has seen some repeat customers come back with some pretty large orders. Lastly, let's end in the cryptocurrency sphere. Some of these crypto-linked stocks are seeing a lot of volatility. One of them is American Bitcoin. This is the Bitcoin miner backed by Trump's son, Eric Trump. Now, this currency, or this stock, slid around 50% in the session yesterday. Bonnie, it's rebounding alongside crypto rebounding this morning, up 11.5%. Bonnie?
Valerie, thank you so much. Valerie Teitel there in London. And coming up this hour, we're going to speak to Kamakshya Trivedi of Goldman Sachs on the dollar as we look ahead to the private jobs data later this morning. But first, HSBC has appointed Brendan Nelson its next chair. Nelson replaces Mark Tucker, who led Europe's largest lender for much of the last decade. Nelson has been serving as interim group chair since October, and his appointment follows a months-long search. Joining us with the latest now is Bloomberg's managing editor for EMEA Finance, Tom Metcalf. Tom, thank you so much. So, Tom, you know, Tucker had been pretty hands-on at HSBC. Do we think Nelson will have the same amount of clout, given that Tucker had appointed 3 of the last 4 CEOs?
Yeah, exactly. No, every indication is going to be a very different dynamic between HSBC's chair and CEO. So Brendan Nelson, true insider, very well known among UK boardrooms, perhaps a bit less known in Asia and the US. But, you know, so far his style is much more, you know, understated, low-key, and the sense I have is that he'll very much be letting George El-Hedary, the CEO, kind of continue this, you know, strategy of overhauling the bank and very much be sort of a support more in the background, whereas Mark Tucker, over those 8-9 years of his tenure, was extremely involved, as you said, you know, kind of went through 3-4 CEOs, and sort of very much the sense was it was Mark Tucker's bank. I think this is probably a sign that next few years it will be very much George El-Hedary's show.
Yeah, absolutely. Tell us a little bit about this reorganization, because it's now, you know, undergone a massive overhaul, 4 new divisions. Obviously, Asia is extremely important to it. It also has this US-China fragility to handle. So what kind of a job is in front of the bank?
Yeah, it's you know, midway through this in some sense, you know, massive restructuring already gone through under El-Hedary, and you know, every week, every month sort of does bring sort of further tweaks. So I don't think the job is finished yet. And yeah, for Brendan Nelson, it is still a mammoth job. You know, as chair, you've got to be making sure the bank is really navigating that very delicate position it holds. You know, right? It's London listed, huge operations in the US, huge operations in Asia, and it's just sort of vital that, you know, the HSBC managed to navigate what are very complicated geopolitical shoals. And I'd argue this is one of the hardest jobs in banking, which is why, broadly speaking, the analyst reaction, while, you know, Brendan Nelson isn't sort of this high-profile, perhaps super dynamic pick, a lot of people are relieved they've gone for someone who really knows HSBC inside out and at least doesn't have to learn that piece on the fly as chairman.
And that does seem to have factored in, because we know that HSBC struggled with external candidates. It wasn't able to find one, even though it seems to have interviewed plenty of contenders. What does that say about the process, Tom?
Yeah, absolutely. You know, a very public process, and sort of the names that got thrown out there included George Osborne, former chancellor here, various sort of high-profile financiers. But it does seem, again, from the outside, that they really struggled to, you know, find that external candidate who ticks all that boxes. Obviously, looking for someone with diplomatic experience, but also banking experience, and ideally someone who is super familiar in Asia and the UK. So ultimately, it looks like just. And it's also quite a hard sell for some people, because this is a, you know, very demanding job, lots of travel, and being a UK-listed company, it doesn't necessarily come with the pay packet you might see in the US. So all that put together, they kind of did go for the insider option. And, you know, the big question for me is, you know, you had Mark Tucker in this role for 8-9 years. Brendan Nelson is 76. It's highly unlikely he'll be in that for as long as Mark Tucker, at least. So it's probably more of a almost interim permanent replacement, and perhaps in a few years' time we'll be talking about a new HSBC chair.
Yes, indeed. Tom, thank you so much. That is Bloomberg's Tom Metcalf there. And another setback for Airbus. The plane maker has cut its 2025 aircraft delivery target to 790 planes. That's down from the previous target of 820. This after it discovered production glitches on its best-selling A320 jet that require additional checks. Joining us with the latest now is Bloomberg's managing editor for Space and Aviation, Benedict Kamel. So, Benny, we spoke yesterday and it was about one glitch, and now we have another glitch. How much of it was a surprise to find this, and was it because of the software glitch that this was even found?
Well, the software glitch and the panel glitch, if you want to call it that, are unrelated. But what it speaks to is a bigger sort of problem at Airbus. They have issues with their planes, and particularly the A320 airliner. And as a result, as you said, today they revised their delivery target for the year. The original plan was to hand over 820 aircraft, and they've now revised that down to 790. So that's 30 aircraft less. The stock actually going up, which you would think is sort of somewhat counterintuitive on bad news, but they maintained their financial goals for the year. And I think a lot of people had seen this coming. This has not been a good week for Airbus, as you said. We had the software issues over the weekend. Then we had these panels that they discovered that require additional checks. So as this trickled out, I think a lot of people in the market were bracing for the revision that we then saw this morning.
Yeah, we were speaking with Tony Fernandez of AirAsia, who's a big orderer of these airplanes, and he was saying, look, with the competition out there, it's very possible that quality control can drop. Is that a fair statement? Was this a quality control issue, Benny?
Well, it certainly is a quality control issue when you find panels that sort of are out of spec. You could say the system worked because Airbus was able to find this. They've instituted the right countermeasures, and they are taking things slowly to make sure that this is all fixed. So in some ways, they are not taking this lightly, and they are willing to take some pain as a result by revising their targets. But at the same time, the bigger question will be, is Airbus and is the industry moving too quickly? These are two companies, Airbus and Boeing, that are increasing the production rate of their aircraft each year. They're producing more of them, and at some point the industry will find areas of strain. It will probably be on the supplier side. A lot of these companies are sort of small mom and pop shops that don't have the financial and the sort of production wherewithal to meet these higher demands. So that's something that Airbus and Boeing are acutely aware of. At some point, the supply chain will become more brittle and might even snap. And what we saw this week is an indicator of that happening.
And apparently Airbus has been building these gliders, planes without engines, precisely because it can't get its hands on some of these parts. Benny, thank you so much for all of the context. That is Bloomberg's Benedict Kamel. Now to other top stories trending on the terminal this morning. Republicans averted an upset in a special U.S. House election in Tennessee, a relief to President Donald Trump and his congressional allies. Trump-backed candidate Matt Van Epps led by about a 9-point margin with more than 95% of the vote counted. Trump won the district in 2024 by roughly 22 percentage points. President Donald Trump signed into law a measure requiring the U.S. State Department to review guidelines for the country's engagement with Taiwan. This comes after a call in which his Chinese counterpart, Xi Jinping, reiterated that unification is a critical issue for China. China considers the self-governed democracy of Taiwan part of its territory. Swiss inflation stalled in November with consumer price growth at 0 compared with a year ago, driven by lower prices for energy and fuels as well as imported products. The outcome raises the prospect that the Swiss National Bank's prediction of a pickup in inflation in the current quarter to an average of 0.4% will fail to materialize. Coming up, the SEC blocks some funds' plans to introduce high-leveraged ETFs. More on that story next. This is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg Brief. I'm Bonnie Quinn in New York. And in the United States, the SEC has issued a warning to some firms planning to introduce more high-leveraged ETF funds. For more on this story, Henry Jim of Bloomberg Intelligence joins us now. It's such an interesting development, Henry, because these double and sometimes triple leveraged ETFs have proliferated in recent times. You can buy them on single stocks, from NVIDIA to Tesla. There's several on CoreWeave. MicroStrategy has several related to it as well. How do they work and why are they so dangerous?
Well, hi, Bonnie. Thanks for inviting me. They work. These ETFs actually hold options, so they're not using. They're not options ETFs. They actually hold options. That's how they really work, and it's on a daily basis, so they reset every day.
And the SEC is concerned about the amount of risk and says that basically it may not be reflected. You know, it may actually be going over the threshold for the risk that these funds should be allowed to have. Now, what does that say about the amount of risk on these funds' books and also the risk a retailer investor is getting involved in if they buy into these funds?
Well, obviously, it magnifies the risk substantially, even if they are daily, maybe especially if they are daily. And the SEC rule, I think it's 18F4 that they quote, especially it says that anything above shouldn't be above 200% of the value at risk on a daily basis.
And we're just showing some of the firms that got letters. Now, there are already a plethora of these ETFs out there. So what happens? The SEC is objecting to new ones, but will it allow the ones that are in place to just stand?
For the ones that are already there, I'm not sure, but for the ones that are still in filing, I counted on my own database, there's about 450 in filing, and it's not just those 3 firms. This is across a lot of firms. I don't think that these will really go through, to be honest. But the ones that are already in place, it's going to be hard for them to really shut them down at this point.
Yeah, exactly. I mean, they deteriorate over time from what I understand as well, but that's not the objective of them. Is that right, Henry?
No, the objective is to provide daily leverage for investors and traders. So it's not for long-term investors. So the daily falling in value is not important to these traders, no.
Exactly. Okay, so not really a retail product, although I'm sure some retail traders have been dipping their toe in. Henry, thank you so much. That is Henry Jim of Bloomberg Intelligence. Coming up, Russia describes talks with the US as, quote, very useful, but there's still no deal to end the war in Ukraine. More next. This is Bloomberg.
climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are gonna kill everybody. So we gotta figure this out. And we're not gonna do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Financial Times is reporting Anthropic has hired West Coast IPO law firm Wilson Sonsini to begin work on one of the largest IPOs ever. That IPO could come next year. The FT says the company is not close to picking its underwriters, but has had preliminary and informal talks with big investment banks. Next up, the New York Times is leading with President Trump unleashing a xenophobic tirade against Somali immigrants. The president calling Somalis, quote, garbage he doesn't want in the country. The commentary came at the end of a cabinet meeting during which, the Times reports, the president sometimes appeared to be fighting sleep. And finally, the Wall Street Journal reported the controversy engulfing Defense Secretary Pete Hegseth was a long time coming. The Journal says Hegseth has been involved in a decades-long quest to rewrite the rules of engagement, arguing, for example, for American troops to have more freedom to operate without the threat of courts-martial. The Journal notes the Defense Department's Law of War manual makes clear the deliberate killing of a shipwrecked crew would be unlawful. And those are your front page news stories today. Michael and Susan Dell donated more than $6 billion even for American children for Trump accounts.
On July 4th, or I think 5th, actually, because the 4th is a holiday of next year, every parent will be able to claim the account for their child that's 18 and under. And originally, those accounts will be, held in custody by a custody bank, and then eventually you'll be able to choose your bank or your, brokerage that, holds the account for you, and it's the property of the child.
What banks, what asset managements have you been talking to? How do you think, from an infrastructure perspective, this would work, Michael?
Right. I have not been having the conversations with the banks. I actually, a number of them have told me that they're interested in being the banks to hold these accounts. I think it'll be, all the major banks, and, the parents will be able to choose whichever their favorite bank or, stock brokerage is.
What's so interesting is this has bipartisan support, as we understand, from letters being written just yesterday, asking Cory Booker as well as Ted Cruz, asking those to come alongside you for corporates to invest alongside.
That's right. I spoke with Senator Booker last night about this. I spoke with Senator Cruz about this earlier today. And there is completely bipartisan support for this idea. It's not a political initiative. This is about investing in children, and we think that's the smartest investment that we can make.
Michael, why do you think it wasn't picked up earlier than this? Since 2021, shout out to Brad Gerstner, is almost his idea, this initiative. Why did it take this administration this time?
Well, it's a great question. Brad did tell me about this in 2021. We talked to the prior administration about it. I think it's hard to get legislative action like this done, but now it's the law. And so here we are. And so we have a great opportunity for the future to build on this platform.
Michael Dell there on a $6 billion donation to fund Trump accounts for children. Let's turn to Ukraine now. Talks continuing in Brussels, and let's have a listen to Secretary of State Marco Rubio, who spoke on Fox News after the meeting with the Kremlin.
In 10 years, Ukraine's GDP could be larger than Russia's. These are the kinds of things. Stop the war, make sure they never get invaded or attacked again, protect Ukraine's longstanding and long-term sovereignty and independence so that they don't become a puppet state. They're actually independent and sovereign, and allow their economy not just to recover, but to prosper and turn it into a story of prosperity. That's what we're trying to achieve here.
And foreign ministers meeting at the NATO headquarters to discuss the alliance's support for Ukraine today. Joining us live now from Brussels is Bloomberg's Oliver Crook. So we're getting little snippets. We got word from the Kremlin, Ollie, that there were useful talks. We had those comments from Rubio. Where are we at with these talks?
Yeah, I think that it's very difficult to get an assessment of how well those talks went for those 5 hours that were spent discussing in Moscow between Steve Witkoff, the special envoy, Jared Kushner, the president's son-in-law, who's also been working as a sort of diplomatic liaison on a number of different issues, and of course Vladimir Putin. We've really heard basically that readout from the Kremlin that said these were constructive talks, that they're going to continue to engage, but basically that a lot of work is still left to do in Moscow and to do in Washington. You heard it there also from Marco Rubio, who's really sort of talking about a much broader architecture than just a quick ceasefire deal. He wants to see something that is durable, that ensures Ukrainian sovereignty and independence, but then, of course, obviously brings the war to a close. It is very difficult to assess now where we are in that living document, that 19-point plan, how close the two sides are. Of course, Marco Rubio speaking there, he is a conspicuous absence here at the NATO headquarters. He was supposed to be here. Usually the U.S. Secretary of State is at these meetings. These European leaders and foreign ministers are really going to want to have a brief in terms of how close they are, because again, initially the Trump administration a week and a half ago wanted to go warp speed. It seems now we're going more diplomatic speed.
All right, Ollie, we do have to leave it there, but you are outside NATO headquarters. NATO foreign ministers are meeting today, and we'll get the latest from you on that in a little bit. That's our chief Europe correspondent, Bloomberg's Oliver Crook. Let's take a look at these markets now. After a choppy session in tight ranges for the S&P yesterday, we are seeing futures pointed higher there. Same for the NASDAQ, although it was a better day for the NASDAQ 100. Just a couple of sectors were lower. Utilities, for example, one of them, and it rose more than 0.8%. We're seeing a little weight to the US dollar index, some strength for the yen today, and the 10-year yield at 4.08. We'll speak about all this with Kamakshia Trivedi of Goldman Sachs next. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Waiting game. Stocks struggling for momentum as investors await ADP and PMI data releases today. Consumer Insight. Earnings from Macy's and Dollar Tree on deck as we continue the holiday shopping season. And talks continue. Russia says peace talks with the U.S. were, quote, very useful. The EU reaches a deal to phase out Russian gas by the end of next year. So let's take a look at these markets. We do have futures pointed higher, so perhaps it's going to be a better session today. It was very choppy yesterday. It looked like it was going to be a negative session, and then the S&P ended up about 0.25%. Pretty tight ranges for that index. Less tight for the NASDAQ 100. It was up more than 8% at the end of the session. Then we had Marvell saying it was winning repeat orders, and that's quelled some AI fears. And Bitcoin as well, staging a bit of a rebound. Sid Verma of our MLive team saying it is rebound without a real belief now, though. He says that strategy saying it was raising a dollar reserve was helpful for liquidity, but sobering for ideology. Let's take a look at the bond sphere, because we definitely are still seeing that steepener happening, with the 2-year yield still below 350 and the 30-year yield hanging out there at 474. Some movement in Japan, of course, today as well. It looks more likely that the BOJ will hike, and that is providing some strength for the Japanese yen. Well, let's get to individual stocks to watch now. Over to London and to Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with a check after earnings. American Eagle raising their full-year sales guidance and also posting a beat in net revenue. We're seeing those shares surge nearly 13% in the pre-market. American Eagle has really been on a tear, Vani. It's up 100% in the last 6 months. These celebrity tie-ups, these splashy ad campaigns have really paid off for the likes of Travis Kelce and Sydney Sweeney. So positivity for American Eagle. We're also seeing positivity when it comes to the AI trade. As you mentioned, Marvell Technologies, the CEO, saying some quite optimistic things about their guidance when it comes to data center revenue. Their full year 2026 guidance was boosted by 25% when it comes to data centers. We're seeing Marvell Technology up around 10% in the pre-market. Now, they make chips mostly for infrastructure, and they also announced an acquisition of Celestial AI, paying around $3 billion for it to help their push into AI infrastructure. Lastly, let's end in the cryptocurrency sphere. We are seeing a rebound in Bitcoin for a second day in a row now. We're also seeing a rebound when it comes to American Bitcoin. This is a Bitcoin miner that is backed by the son of the U.S. President, Eric Trump. It's up 8.6% in pre-market trade after sliding 50% in the session yesterday. Bonnie?
Yeah, volatility galore in that one. Valerie, thank you so much. That is Valerie Teitel there. Well, we're a couple of hours away from the ADP data. Goldman Sachs' Kamakshya Trivedi weighing in on the impact of the jobs numbers on the dollar, writing, quote, as the U.S. data backlog is slowly cleared, it will reveal a softer run rate for the economy, particularly the labor market, that will clear the way for more policy easing and a weaker dollar from here to the end of the year. Kamakshi Trivedi is Chief FX and Emerging Market Strategist at Goldman Sachs, and he joins us now. Kamakshi, in recent days, particularly since the market took a turn in pricing, we've seen guests be a little less concerned about the labor market than they had been before this data blackout. You are still concerned about the labor market. Explain why.
Good morning, and thanks for having me. Yes, I think that, what you have seen in the data lull is that some of the second-tier data indicators, also some of the private sector indicators, have still indicated a tentative signal that the layoff rate is beginning to pick up. And I think that's important because what you had going into the shutdown was a labor market where you didn't see a lot of hiring, but there was not that much concern around firing. And I think what I am looking to see in the upcoming reports is whether those tentative indications that layoffs and the layoff rate is beginning to pick up is actually something that is borne out or substantiated in the full set of payrolls and household survey data that we get. I think that's the key thing to watch.
So you say that this is going to lead to dollar weakness, Kamakshi. The administration won't be too pleased about that. Is there something that can be done?
Look, I think that the dollar weakness is a function of the fact that, our view that, the U.S. economy and markets are less exceptional than they have been in the past. And as a result of that, the dollar no longer warrants its very rich valuation. We've already seen that valuation erode to a significant extent, so far this year. We think there is more to go in that. And that's just a reflection of the fact that we think the Fed is going to be easing policy more in December, again next year. That's something I think that is consistent with some of the views that the administration has expressed. And on the other hand, we don't have quite as much easing priced into the rest of the major G10 markets, with the exception of the UK. So it's really the US where we are seeing this combination of somewhat softer data and more significant, deeper policy easing, which we think will keep the dollar on the back foot.
And of course, I imagine that if Kevin Hassett were to be the next Fed chair, that wouldn't change your thesis in the slightest. It would add weight to it, in fact.
Yeah, I think it's one of the additional reasons why the skew to rates in the U.S. might be, more towards deeper cuts rather than the other side of the distribution. I think that there are a number of forces pushing in that direction, the weakness in the economy, the fact that, you might also see some of the worst tariff impacts on inflation pass into the rearview mirror as you go through, the early part of next year. And a reshaped Fed might add to that impulse in direction of weaker rates and a softer dollar.
I want to ask you about the yen, because we saw a little bit of relief today. Obviously, it's back below 156, but I mean, that's still pretty weak for the Japanese yen. What happens if we get this hike in December?
Yeah, I think that is probably one of the things that is actually pushing the BOJ towards a potential hike in December. Remember, they were looking for two things to feel comfortable about hiking. One was that the U.S. economy, while it was slowing as a result of the sort of, aftermath of Liberation Day, but was not really going into a tailspin of any kind. That's definitely been confirmed in the last couple of quarters. And the other thing they wanted to get confirmation was that you had a self-sustaining wage growth trend. And you're beginning to see some early indication that that may be playing out too. So I think those are the things that are pushing the BOJ to consider hiking in December. We've had a call for them to go in January for a long time, but I think they probably are feeling comfortable enough. And I think that's important because, we've seen the yen weakness, as you said. It's weakened considerably further after the new prime minister. And, a weak yen is not popular in Japan either. And so I think you're going to see some pushback, both from the administration, but also from the BOJ against, an excessive amount of yen weakening from current levels.
Kamakshi, I have to ask you about your favorite currency pairs at the moment. Is there any way to play this global sort of upturn in events? So we have, tariffs going on in certain countries and, getting lowered in other countries and so on. How do you play a scenario like that through the FX space?
Right, look, it's hard. I mean, as you were saying, you're seeing not just that it's going on against certain countries and going off against other countries, it's also within countries there are certain goods being exempted, certain ones not. So I think that those are hard trends to play out from a macro standpoint. But I think I'd say one of our highest conviction views related to this is we think that the CNY, the Chinese renminbi, is a currency that's going to continue to appreciate on a sustained basis. What's happened there is exactly in line with what you're saying. You had these kind of very high levels of tariffs threatened early on. There's now a détente. You have some more reasonable trade outcomes. And the Chinese currency is very undervalued in our metrics. As long as you have this combination of, good trade relations and very significant growth in Chinese exports that you are seeing, I think policy authorities there will be willing to let the CNY appreciate on a gradual but sustained basis. It's making new year-to-date lows every week. We've seen that this week as well. I think that trend has a lot further to run in FX markets.
And beyond FX, just in terms of your EM strategy, part of the portfolio, is China investable these days? I mean, we saw this huge run-up for the stock market. Is there more to go, or would you be getting a little bit trepidatious right now?
No, I think there is more to go. I think that, certainly, China also provides, exposure to some of those high-tech industries that have been doing well in global stock markets across the world. So I think there's definitely more to go there in the domestic equity market. As I mentioned, I think the currency is on a more, stronger trajectory as well. We think that's likely to continue as well. And that's an important ballast or support for the broader emerging market universe. It's kind of hard for EM as a whole, particularly EM equities, to do well if China is not doing well. So I think that's important. I think there's also opportunities on the local rates market side in emerging markets, but that is more amongst the higher yielding countries, places where the rate cut cycle will get going, hasn't really got going. Brazil is the most obvious example. I think there's a lot of potential both in Brazilian equities and bond markets going into next year.
Fascinating. And you're not concerned about the geopolitical trends between the US and Brazil?
Again, another place where, it is certainly a concern. I think these risks are going to ebb and flow. I don't think you can ever take your eye off the ball there. But on the margin, things have become a little bit better, if anything. You've seen more exemptions for a lot of Brazilian goods, particularly agricultural goods, as, the focus of the administration has pivoted onto something like affordability. And so I think you're reaching, again, like with China, a more reasonable set of trade outcomes that should allow the domestic policy authorities to focus on domestic cycle and that, where you're seeing inflation come down, you have, 5%, even less than that, 4 to 5% inflation, 15% rates. I think there's a big room for rate cutting cycle there.
All right, some very, very interesting comments to parse there. Kamakshia, thank you so much for joining us. That is Kamakshia Trivedi of Goldman Sachs. Now, to other top stories trending on the terminal this morning. Republicans averted an upset in a special U.S. House election in Tennessee, a relief to President Donald Trump and his congressional allies. Trump-backed candidate Matt Van Epps led by about a 9-point margin with more than 95% of the vote counted. Trump won the district in 2024 by roughly 22 percentage points. HSBC has appointed Brendan Nelson as its next chair, replacing Mark Tucker, who led Europe's largest lender for much of the last decade. Nelson has been serving as interim group chair since October. His appointment follows a months-long search. Binance has named co-founder Yi He as co-CEO, the biggest change to its top leadership since co-founder CZ steps down. The appointment comes after President pardoned CZ, who resigned in November 2023, following a guilty plea to anti-money laundering and sanctions violations. Analysts have said the pardon could make it easier for Binance to consolidate its U.S. operations. Coming up, the SEC is warning on high-leveraged ETFs. That's next. This is Bloomberg.
coming to you live from Kuala Lumpur. The whole world is
The
here.
APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
Not a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. And in the United States, the SEC has now issued a warning to some firms planning to introduce high-leveraged ETF funds. For more, Henry Jim of Bloomberg Intelligence joins us now. There are plenty of these types of funds out there, Henry. Why is the SEC so concerned all of a sudden?
I think the SEC concerned with the flurry of filings that we've seen in the past couple of months of 3 times, actually 5 times leverage ETFs, which go beyond what currently exists in the market.
Oh my gosh, we already have double and triple leveraged ETFs on single names, even on commodities as well. How do they work and why is there so much risk involved?
Well, the ETFs work by investing either in, they invest in derivatives, either options, futures, or more likely swaps. They hold swaps, and every time they get money, they increase the position and exposure to the leverage position of the underlying asset.
And the SEC is concerned the risk exposures exceed SEC limits, but that also means the retail investor, if they take part, is exposed to that too, right?
Yes, absolutely, because when you invest in the ETF, you get what the ETF is exposed to. And indeed, the retail investor, although it's not a big participation in these ETFs, maybe, but if they should be, they have a lot of risk that they're undertaking on a daily basis.
Yeah, exactly. Now, the ones that have been applied for, as you say, some of them are, 5 times leverage, et cetera, et cetera. But, of the ones that are already in existence, is the SEC concerned about those at all? And will there be any action taken on the ones that are already up and running?
Well, the ones that are up and running, I think the maximum they have are 3 times leverage, and these have been grandfathered in for quite a while. But the SEC always has the option of revisiting these strategies in the future. What I can say though is for the ones that are already filed, these are probably, they will either have to be amended, so they extend the deadline. So they were supposed to go, I think, effective next week, or they will just more likely have to withdraw them.
It'll be a fascinating time to watch the SEC and its action against these ETFs or potential ETFs. Henry Jim of Bloomberg Intelligence, thank you for joining. President Trump has signed a bill that requires the State Department to review guidelines for the United States' engagement with Taiwan. The Chinese Foreign Ministry spokesman responded, saying the U.S. should, quote, handle the Taiwan issue with utmost caution. I should mention that this is something that happens at least every 5 years. It has to be done. Joining us now from Taipei is Bloomberg's Samson Ellis. So, Samson, as I say, this has to be done, but is there some extra significance to this new bill?
Well, on the surface, this looks like little more than a procedural measure from the US government. If you look at the wording of the bill, as you just mentioned, it requires the US government to review how it interacts with the government in Taiwan, plus look for ways to remove self-imposed limitations on that interaction and do that every 5 years. But it certainly is a major display of support for Taiwan, and the fact that it passed the House of Representatives and the Senate unanimously just underscores exactly how deep the support for Taiwan is in the US. And it does recall a move way back in the last few days of the first Trump term in 2021, when the Trump administration made a surprise move by removing many of the self-imposed decades-old limitations on how the US interacts with Taiwan. For example, requiring diplomatic and military officials to get written permission before traveling to Taiwan, or even restrictions on where the US could meet with Taiwanese officials. And obviously, if you step back, you know, the broader context of this is that Taiwan is at the center of something of a spat in this part of the world between China and Japan, where China's continuing to rail against comments made by Japanese Prime Minister Sanae Takaichi last month that were China to attempt to invade Taiwan, that could potentially pose an existential threat to Japan.
Yes.
But while that dispute is more about Taiwan rather than involving Taiwan, this latest move from Washington has certainly been welcomed in Taiwan.
All right, Samson, thank you so much. That is Bloomberg's Samson Ellis in Taipei. Shifting focus to earnings now, shares of the owner of Zara, Inditex, surging as sales accelerated in November, highlighting its resilience in the face of weakening consumer sentiment that's hitting many of its peers. Bloomberg opinion columnist Andrea Felstead joins us with the latest. So obviously we've seen, you know, individual retailers from Inditex to American Eagle to, you know, Abercrombie do extraordinarily well because they're just capturing a moment. Is that what it is, Andrea, or is there more to that story?
Consumers are very choosy. So to do well, you have to be very reasonably priced, or you have to be very good. That's why we've seen Inditex do well, we've seen Ralph Lauren do well, we're seeing Tapestry do well. You've got to have something that is resonating with the consumer, that is really encouraging them to buy.
Now, we get Macy's and Dollar Tree before the bell here in the United States, so two very different consumers potentially, although, you know, you never know these days. What do we anticipate hearing?
Well, I think it'd be very interesting to see what they say about the consumer. Obviously, Macy's, through Bloomingdale's, has exposure to that higher-end shopper, probably benefiting from Saks' woes. And at the other end, Kohl's also struggling, helping the lower-end consumer. So it will be really interesting to see what they say about that higher-end consumer and also that middle to lower-end consumer, which is coming under pressure.
And then Dollar Tree, of course, you know, we know that consumer, and given the amount of talk about the bifurcated consumption economy, do we expect that Dollar Tree will see strength for good reasons or negative reasons?
Well, it's very interesting because usually when, you know, particularly the middle income consumer comes under pressure, they trade down. So it's going to be really interesting to see if those consumers are trading down to the dollar stores or they're just stopping spending, full stop.
Yeah, exactly. Well, a couple of earnings for us to parse a little bit later on anyway, Andrea. Thank you so much. That is Bloomberg's Andrea Felstead. Coming up, we're going to get you set up for your trading day. More earnings on deck and that jobs data as well. This is Bloomberg.
the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now, a look at what's ahead for your Wednesday trading session. We do still have earnings, Macy's and Dollar Tree results coming before the bell. Plus, a little data, ADP employment data at 8:15 Eastern, and that's followed by PMI data at 9:45. Perhaps a little less of interest, it's a little staler. Salesforce earnings then out after the market close. So let's take a look at some of the earnings movers that we've seen. American Eagle jumping almost 13% higher now following a sales beat and a guidance boost. Now, Marvell Technology also higher. It was lower after earnings came out, even though it beat and raised, and it gave some good comments about AI and repeat customers because it's acquiring Celestial, right? So that had the stock lower, but certainly in the pre-market up about 10% on that beat. Another one that beat and raised was CrowdStrike. It raised its guidance as well for next year, cited resilient demand for its AI-enabled cybersecurity products. That said, investors were probably looking for a bit more of a beat and a raise because, you know, insatiable appetites and all that. Let's take a look at the macro movers because the environment is set up for a positive start for S&P futures, though I must point out we are off our session highs. The S&P was up about 0.25% yesterday. Little weight to the dollar index. The 10-year yield in focus as that steepener trade seems to be back on everyone's radar. It's at 407.88. And then let's take a look at gold and Bitcoin because Bitcoin's rebound definitely injected some enthusiasm into the market. And we're still trading around $93,000. Maybe a little bit of relief there. Gold down about 0.1%, but we're still hanging out around the $4,200 mark. And I just wanted to point to Europe gas futures because, of course, Europe has now accelerated its timetable for getting out of Russian gas imports. It's now going to be completely phased out of that by the end of next year. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
There has been a shift in sentiment overall, and you're starting to see some deterioration in some of the key themes.
The most important compass is the equity market itself. Micro supporting macro. There is room to broaden out.
We actually see going into 2026 a very optimistic scenario playing out.
These are very robust markets. There's a lot of activity going on right now.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. Futures building just slightly on yesterday's narrow gains as President Trump teases Kevin Hassett is the next potential Fed chair. Traders gaming out the health of the U.S. consumer. Earnings on deck from Dollar Tree and Macy's later this hour. And markets looking forward to ADP's jobs report as well as ISM services data later in the next couple of hours. Because guess what? We don't have anything else, so that's the reason why. Happy ADP Wednesday, because that's what we're left with.
We continuously been tracking ADP, private payrolls, which for everyone else was always just an additional nugget to have when it comes to the entire scope of data. But how much has this now actually driven the conversation? Because for months we've had a government shutdown, essential workers were not there to collect the data. And in some ways, the Fed is going to be relying on this second-tier data as they head into their meeting, because when it comes to first-tier data like Friday's PCE, it is going to be incredibly stale.
Yeah, although a lot of people are wondering how much any Fed officials are actually going to change their minds, how much they've already decided what exactly they're going to do. And essentially right now you're looking at Fed funds futures pricing in a 98% chance of a Fed rate cut. So a real question here about whether this is more market signaling, about whether it is a mistake to do so, and whether inflation really is potentially picking up steam next year.
I think it just means that the press conference is going to be that much more challenging for Jay Powell. He cannot say we are data dependent, which is why we made this decision. They could talk about a lot of data out there, but they can't say we are data dependent on what they would consider the gold standard of that data. You brought it up yesterday. Is it basically going to be a hawkish cut? Because what's more interesting is less so this December meeting, but how the Fed is positioning for 2026, especially given the fact that the president says early next year they will be deciding and making his announcement on who's going to be leading the Federal Reserve.
What's up with the wink, wink, nod, nod? You know, potential Fed chairs in this room that's down to 1. I'm not going to make the announcement until early next year.
So it feels like the timeline keeps shifting. We thought we were going to get a Fed announcement. First it was the fall, then it was Christmas, now it's the new year. I think the president is trying to give himself maximum flexibility. He is leaning into Kevin Hassett, though, in the public. That's our reporting had that. The Wall Street Journal reporting has that this morning as well, also saying that finalists were supposed to come in for meetings starting today with the vice president. They've been canceled. They said it's because of the vice president's schedule, or is it because the president really has made a decision? But if he did, then why not just announce it? Why keep just teasing it and teasing it? I think he wants most options on the table, maximum flexibility, And I don't think that signals it is just a done deal yet, even if Kevin Hassett clearly is the front runner.
Neil Dutta over at Renaissance Macro keeps sending out notes, and I think it's an astute point, saying that the longer this drags on, the more likely it is that Scott Bessent will ultimately be the person who gets selected, despite the fact that he doesn't really want it. Right now, what we're looking at coming up in the next 3 hours and for the day ahead, we've got, of course, earnings coming out from Dollar Tree and Macy's, a real read on the consumer as we parse through what companies are saying. We have ADP coming out at 8:15. At 10 a.m. Eastern, we get ISM Services. Watch for the prices paid component and aftermarket. We get results from Salesforce, among others. Right now, in the markets, you are seeing a little bit of a lift, building on what we saw yesterday, although really narrow gains focused on the big tech stocks, up just 0.1% on the S&P futures. You do see 10-year yields quiet this morning after inflecting upward, 4.08% rounded up, and really quiet over in the currency space, 116.57 on the euro-dollar cross. Coming up this hour, Lori Heinel of State Street. The stocks look for a year-end rally. Andrew Bishop of Signum Global on the push for peace between Russia and Ukraine, and Alex Jekov of BNP Paribas on the case for U.S. growth to reaccelerate. We begin this hour with stocks edging higher as traders await earnings, data, the little that we get. Laura Heinel of State Street writing this. Earnings continue to support higher prices, and we see signs of a broadening out to more cyclical sectors and small caps. Lori joins us now. Lori, thank you so much for being with us. I just want to start on how much this whole call of a rotation out of big tech is predicated on Fed rate cuts.
Well, first of all,
Lori, I think that we need to reestablish a connection with you. And while we do that, we're looking right now at the potential for a broadening out, in part because people are expecting there to be some sort of easier Fed activity, which is the reason why I think people were looking so much at Kevin Hassett. The idea that you could have your cake and eat it too. You could have reaccelerating U.S. growth at the same time that you potentially have enough disinflation for the Fed to cut aggressively.
If you have someone like Kevin Hassett, he is going to be a person that is going to be pushing the idea that the Fed should continue those rate cuts well into 2026. The issue is right now, the Fed is deeply divided. Tons of reporting about this, and they've come out and said it before the blackout period. There are those that are concerned about inflation. And the fact is, if you have individuals on the Fed that are hawks, even if Kevin Hassett is leading the Fed and wants easier monetary policy, it's a deliberative body, which is why John Carney's Breitbart has a piece out talking about the fact that maybe the administration is going to think about this differently because they are leaning into the fact that it's a deliberative body and they don't know yet if Jay Powell is going to lead his post. And they're talking about a shadow Fed chair being Jay Powell.
But we're talking so much about the Federal Reserve, but a lot of people are talking about how the Fed has really lost control over monetary policy in terms of how quickly it really gets directed into the economy. The transmission mechanism has gotten somewhat diluted. One thing that hasn't gotten diluted is fiscal. And this is why I was focused on the cabinet meeting yesterday with President Trump talking about potentially reducing some of the mileage constraints on cars. I know that there's an announcement today with some auto executives and President Trump, a real question around cost of living concerns and how much that's going to filter into whatever initiatives we could potentially see early next year.
Well, cost of living concerns top of mind for the administration. A lot of the questions the reporters were asking the president was about affordability, and they continuously blamed the Biden administration. But at some point, you have to own this economy, and that's going to show up in the midterms elections. We even saw it last night in the Tennessee special election. The margin, the Republicans still won, but after they spent a lot more money, had to pay a lot more attention because they were concerned of a Democratic win in a very red district. So clearly this is top of mind for them, which is why the president is talking about maybe $2,000 checks going out. Obviously, it would have to get through Congress, but they're going to want to lean into that fiscal impulse.
Let's pick up on this idea of the fiscal versus the disinflation that a lot of people are banking on to get those Fed rate cuts. Let's bring back Lori Heinel of State Street. I apologize for the technical disruption. Lori, I'm curious your take on this broadening out trade based on the idea that the Fed could cut rates, paired with the idea that we could potentially get more inflation from some of the cost of living measures coming from the administration.
Well, first of all, we do think that the Fed should cut again here in December, and we think that they will. And we actually think that 2026 is going to see a few more cuts. And you have to look at this in the context of a sort of post-COVID recovery and then a slowing growth environment generally. We do think that those additional cuts are going to be necessary to propel the economy forward.
At this point, why do you say that, given the fact that for the most part, earnings have been pretty solid? We've seen a lot of positivity when it comes to what corporate executives are expecting next year. And a lot of economists do expect a reacceleration early in 2026, in part because of the tax rebates.
Well, certainly earnings have continued to surprise, and it's been a little bit more concentrated, obviously, in the big tech, but we are expecting some broadening out. But part of that is consumer fatigue, and so the need for interest rates to go a little bit lower to support consumers. You also are starting to see CapEx rely more on funding, and so funding costs going lower will be stimulative as well. So again, it's not a dire situation here at all. We're certainly not forecasting recession for next year. And we do see a lot of vibrancy and a lot of pockets, but there are also pockets of weakness and vulnerability. And so why not take out that insurance policy?
Lori, are you concerned at all, though, about inflation? Lisa is right to point out what's going to be a fiscal impulse of 2026. On top of that, the administration is considering $2,000 checks going out to consumers.
Look, we always have to be a little worried about inflation, but from where we stand, there are still a lot of things that are counter to that. You still see productivity gains coming from AI, some vulnerability in labor markets, some vulnerability in consumers. We're not seeing the wage price spiral factor through here. So yes, there could be a little bit of an uptick in inflation early next year, as you say, as we get some of these one big beautiful bill things coming through. But we're not worried about inflation as an intractable force right now.
There still are members, though, in the Federal Reserve who find it unnerving to accept 3%, not getting close to their goal of 2%. You think they should continue cutting, but do you think they actually will in 2026?
So we think what's going to happen is they'll do the December cut, and then they're likely take a pause. And you've talked earlier on the show about the idea that the data is still a bit sparse here. So they'll have a bit of air cover, if you will, to delay something early in next year. But we ultimately think that with a slowing global economic environment and with vulnerable consumers and some fractures in the labor market, they're going to be in a position of cutting again next year.
How much, Lori, is this also a bet that ultimately is leveraged to the AI trade continuing in terms of both valuations as well as hopes and dreams of better efficiency and productivity going forward?
Look, we think that the AI trade, if you will, is a once-in-a-generation kind of shift. I mean, these are technologies that are going to really drive productivity, that are going to drive efficiency and effectiveness, but it's going to be a winners and losers game. So right now, we're still seeing a lot of the big names benefit from this, and ultimately how corporate America and global corporations deploy AI is going to be really where the rubber meets the road. So this is a very long-term trade. We think the companies that can adopt these kinds of technologies for innovation and for efficiency gain are going to win.
Lori Heidel of State Street, thank you so much for being with us this morning. I was struck by this idea of efficiency and productivity, Anne-Marie, and how much people are banking on AI to transform the landscape. Jared Kaplan, who is the chief scientist over at Anthropic, came out in a recent interview and said that he believes that AI systems will be capable of doing most white-collar work in 2 to 3 years, a potential game changer. A lot of people are trying to wrap their heads around.
Anthropic has been talking about this. All these entry-level white-collar jobs are absolutely going to be decimated, not just in the future, in the near term, 2, 3, 4 years. This is why individuals like Steve Bannon have been concerned about the big tech companies, what's going on with AI. 2 weeks ago, I heard Elon Musk speak at the U.S. Saudi Investment Forum, and he talked about how work will be, quote, optional in the next 10 to 20 years because of what is going on in humanoids, in these robots, and also in AI development.
Elon Musk targeting your laundry, Anthropic targeting your desk job. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. French President Emmanuel Macron begins a 3-day visit to China. Ahead of the trip, Beijing has been seeking support from France in its dispute with Japan over Taiwan's status. The two leaders will also discuss trade, with Macron pushing the EU to deploy its toughest tools in response to Chinese restrictions on rare earth supply. Meanwhile, President Donald Trump says he plans to announce his pick for Fed chair early next year. During a cabinet meeting yesterday, the president teased White House National Economic Council Director Kevin Hassett as his possible choice. And Comcast is looking to merge its NBC Universal division with Warner Brothers Discovery after making a renewed offer for part of the company. Sources telling us here at Bloomberg that Comcast is aiming to create a larger entertainment entity by combining the NBC TV network, its film and TV studios, and theme parks with Warner Brothers. That's your Bloomberg Brief, Lisa.
can't keep track of all the different media deals that are coming through the floor over the past couple of days. Thank you so much, Yahira. Up next, coming to the negotiating table.
Our people are over in Russia right now to see if we can get it settled. Not an easy situation, let me tell you. What a mess. Think of it, mostly young people. 27,000 people died between Russia and Ukraine last month. What a shame.
Andrew Bishop of Signum joining us next. This is Bloomberg Surveillance.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Trying to rally. I think that's the best way to put it. Right now we're building on yesterday's gains, but just. And yesterday's gains were not exactly broad-based. Less than half, fewer than half of all S&P 500 companies posted higher closes yesterday than the prior trading session. Today you're up about 0.1% on S&P futures. You are seeing a bit of a bid into bonds as maybe offering some comfort with 10-year yields lower to 4.07%, down by a basis point. And a focus here on copper, surging to a new record high, up almost 2%. A real question around why. This is the biggest increase that we've seen in the orders that are being withdrawn from the London Metal Exchange warehouses going back to 2013. Anne-Marie, it sort of highlights, yes, maybe oil isn't seeing the bid that a lot of people think, but it's the other commodities that are essential in a lot of the modern day economy.
Well, base metals, especially copper, used, as you say, essential. If you want to build data centers, you're going to need a lot of copper. But also, a cloud around copper has been whether or not Trump is going to pull the trigger when it comes to tariffs. And a decision he said he might come back to it would be in 2026. So a lot of traders are trying to front load and get ahead of a potential import tariff on copper or some levels of copper, whether or not it's absolutely raw or if it's refined copper. They're trying to get ahead of it, and that could be why you're seeing some of these more speculative bets going into year end.
Yeah, definitely a geopolitical story as people take a look at what the copper resources, where they are placed, and how they exactly are being accounted for elsewhere in geopolitics. Under surveillance this morning, coming to the negotiating table.
We're trying to get that settled. I've settled 8 wars. This would be the 9th, and our people are over in Russia right now to see if we can get it settled. Not an easy situation, let me tell you. What a mess. It's a war that never would have happened if I were president. Think of it, mostly young people. 27,000 people died between Russia and Ukraine last month. What a shame.
Here's the latest. Negotiations between the U.S. and Russia failing to yield a peace deal over the war in Ukraine, but the Kremlin describing the talks as constructive and informative and saying work will continue. Joining us now is Bloomberg's Oliver Crook, joining us from NATO's headquarters. Foreign ministers are set to meet to discuss what we have heard. Ollie, what's the latest, given the fact that there still are some big sticking points, 3 in particular, that seem unpassable right now between the U.S. and Russia?
After 5 hours of those negotiations that we had in Moscow yesterday, led by Steve Witkoff, Jared Kushner also in the room, and Vladimir Putin, it's very difficult to ascertain really what progress was made. As you were mentioning a little bit earlier, we did get a readout from the sort of Russian side of the meeting. That is where most of the information has come from, and as you can imagine, it's been pretty sparse, though the sort of takeaway, it seems to be, is that there's still actually quite a bit of work to be done, both in Moscow and in Washington, that according to the Russians. And again, that sort of changes the sort of speed at which we were expecting these negotiations to take place. You'll remember about 2 weeks ago when that 28-point plan first dropped from the U.S. side of the equation, which of course got a lot of attention here in Europe because it seemed to have been really tilted in the favor of the Russians. Now down to that 19-point plan, there has not been a great deal of transparency about what those 19 points still are that are still being negotiated. There's not been a lot of briefings to a number of the ministers and foreign ministers that I've spoken to in terms of actually getting transparency into what are in those discussions. So I think what we're going to be watching for, a process that began in Geneva, went then to Florida, then to Moscow. We'll see where the next set of conversations will be and at what level they will be, which will give us some sort of indication of how much progress has been made. Again, the sort of speed at which this began was at warp speed. We're now going more towards diplomatic speed.
Ali, just quickly here, what are the foreign ministers in Europe willing to do should the plan not necessarily be to their liking?
Well, this is exactly the problem. And I asked the Canadian foreign minister this yesterday in the sense that if, Trump has come to the table with a plan before, it has failed before, and then the U.S. walked away for a while. If the U.S. walks away at this point, what is the architecture? Is there a coalition of the willing architecture? Is there a European architecture? And I think the answer is that really there is only plan A, and that is the Trump plan. I don't think everybody is going to be greatly pleased with it necessarily, but everybody is sort of conscious of the fact that this is the train that's leaving the station, and they need to be on board. So this is a very awkward position, as you can imagine, for foreign ministers here in Europe who have to support a plan that they don't really know the contents of.
Ali Crook, thank you so much for that. That's Bloomberg's Ali Crook reporting from NATO's headquarters. Right now, Andrew Bishop of Signum Global keeping his base case that these talks won't yield a ceasefire, as they haven't so far, writing Russia has more to gain from holding talks with the U.S., Ukraine, and Europe in order to see how much concessions it can extract from them rather than terminate dialogue prematurely. Andrew joins us now. Andrew, do you get a sense of what the sort of leading force is in the U.S. administration? Is it the Marco Rubio side of things, or is it the Steve Witkoff side?
So it's interesting because most people would assume it's Witkoff, but I would say that the reason the Kremlin didn't jump at the offer that was made to them last night is probably because Marco Rubio actually successfully allowed the Ukrainians to push back on this Russian demand for preemptive pullback from the Donbass, right? So Russia wants the Ukrainians to vacate the remaining parts of the Donbass in eastern Ukraine that it still occupies. And it seems that that's not the offer that Witkoff and Kushner came to Moscow with. So I would say Rubio really has the upper hand right now. The question is how long that can last.
Well, when you look at personnel dictating policy, can you explain Jared Kushner's role in all of this?
So if I'm being very honest, beyond the usual, he was involved in the Gaza deal and there's an attempt to replicate it, I think the reason Kushner was there last night is because President Trump wanted to hear two versions of how the meeting went, not just Witkoff's. I think it's as simple as that.
Interesting. So President Trump really wants two representatives when it comes to these meetings in Russia. Andrew, can you offer some sort of timeline you think we could potentially see contours of a deal in terms of Russia coming to the table in earnest?
So I would strike the earnest part immediately because I don't think that'll ever happen. And it's not because I'm particularly, anti-Russian or anything like that. It just has to do with leverage, right? Russia has absolute leverage in this situation, at least in the short to medium term, and therefore doesn't really have an incentive to be anything other than cynical and transactional, right? Now, answering your question on the timeline per se, My best guess would be that we now are in a period of constant negotiations. So whereas, as Ali mentioned, in the past, these attempts would sort of, there would be a burst of diplomatic activity for a week or two, and then there would be a disappearance of totally, any progress for 3-4 months. I think now we're going to be in a constant back and forth of essentially Russia trying to extract maximal concessions, including at the diplomatic table in parallel with fighting. And that could last 6, 8, 9 months. It doesn't necessarily deliver a deal, but what I am saying is if a deal is to happen, it won't be before then.
What does happen, and Oliver mentioned this, really the unknown, but in your view, what would happen if the United States walks away? Because Trump is getting so frustrated because there is no deal in sight.
So I'd say two things on that. The first is I don't think Trump is going to walk away. He might say he's going to walk away, which he has done on a number of occasions, but I don't think he's actually going to pull U.S. military and intelligence support. And there's a very simple reason for that, which is that it does not look good for Trump if Russia wins this war. If the war ends with a very pro-Russian, deal that is favorable to Russia, that does look good for Trump because Trump sort of, brokered that deal, even though it's pro-Russian. But if there's no deal and Russia just wins outright, that looks bad for Trump because it looks like he's not in control of the process and Russia essentially bested him. So I don't think Trump is going to walk away. The second thing I would say, and I'll be brief, is I think the bigger issue here is not actually European money or American weapons. The bigger issue is, of course, human personnel and manpower in Ukraine, and that's not something that's dependent on foreign support.
Andrew, just quickly here, what did you make of reports yesterday that Vladimir Putin came out and said that if Europe does attack Russia in any capacity or in its defense of Ukraine, that it would be ready to fight Europe and potentially would win? How seriously did you take those threats?
In the near term, not seriously at all, mostly because President Putin is very focused on Ukraine and doesn't really have additional bandwidth to take on Europe or anyone else. In the longer term, I do think that it's fair to say that Russia's post-Ukraine war plan is to build up military capabilities such that it would be able to fight a war against Europe. That doesn't necessarily mean they'll pull the trigger, but I think it's not paranoia to think that they want to be in a position to be ready to do that.
Andrew Bishop of Signum, thank you so much for the latest on these ongoing negotiations. 5 hours, Emery. I think what he said to your question, I thought it was a good question. I thought it was a really interesting answer about why Steve Witkoff, but more importantly, Jared Kushner, were both sent to this meeting.
Steve Witkoff, this was his 6th meeting in Russia with Vladimir Putin, and not that he comes back empty-handed, Putin has not been willing to move an inch, and you saw that with the original peace plan that was very much in favor of what Russia wants to see from this. And I thought it was interesting, too, not so much that maybe Trump was looking for Jared's input, but he wanted Jared's readout on what he took away as Putin sat there with his top advisors.
The geopolitics very much dominant. Also, the domestic, a real question around any kind of additional stimulus to address cost of living concerns coming from the White House. A question of what this does to the budget. Coming up next, Maya McGuinness of the Committee for a Responsible Federal Budget on the risks to the deficit in 2026. This is Bloomberg.
Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Say it's been a choppy start to the last month of the year. Yes, we did get gains yesterday. They were not widespread. Only about 213 of the S&P 500 names gained yesterday, even though they did eke out at least a positive return. Today, we're building on that positive return across the board, but tepid at best, up 0.2% on the S&P. NASDAQ futures down, actually underperforming, up only 0.1%. The Russell 2000 doing better, up 1/3%, possibly on more bets that there will be rate cuts in the near future, seeing 2s, 10s, and 30s. Yields lower as people price in a potential Kevin Hassett Federal Reserve, down about a basis point on the 2- and 10-year denomination, 4.07% on that 10-year. Real focus on commodities right now. Copper in particular surging to a new record high. Indications that requests to withdraw some of the assets from the London Metal Exchange warehouses surged by the most since 2013, possibly on request from Taiwan and South Korea. A real question here about hoarding ahead of a wave of industrial work. And that, to me, is really catching my attention.
And Mercuria, one of these massive commodity trading houses, says this is the real deal when it comes to the top, when it comes to bullish on copper. He says because all of it right now, everyone is trying to front load into the United States. It is a real physical story in terms of the AI data center build out potentially, but also the fact that President Trump did say he's going to revisit potentially tariffs on copper in 2026 or end of 2025. Everyone's trying to get ahead of it.
That's the reason why you're seeing some significant price moves 3 hours away from the cash open. Here are your morning movers with Danny Berger. Danny.
Hey, Lisa, some earnings to work through this morning, starting with Marvell Technologies, up 11%. In the conference call, they said that they expect that their AI deliveries will increase 25% in the next year. They also confirmed that they are indeed doing some M&A, over $3 billion purchase of Celestial AI, something we'd reported on yesterday. So again, those shares up 11%. Elsewhere, CrowdStrike also reporting, for them it was a beat and a raise, saying that they expect a record quarter driven by both their AI tools and the threat of AI. It is a cybersecurity company, but you'll notice shares are down 1.7%. Some of the analysts, including those at Stephens, saying that it was a conservative outlook. So yes, it was good, but not good enough. Finally, ending things with American Eagle, their earnings. What a turnaround for this company. It was just in May that American Eagle was dropping their outlook, saying that they had built up inventories, that they had a lot of discounts. What a difference a Sydney Sweeney and a Travis Kelce makes. Because of all those celebrity endorsements and the marketing campaign that they have gone on, it is a beat and a raise for American Eagle. Shares are up almost 13% in the pre-market, Lisa.
Thank you so much, Danny. I wonder how much it just is Sydney Sweeney that is lifting those shares. Let's go to our fashion correspondent.
It's a new face. Martha Stewart has an ad as well with American Eagle.
Don't think that they're exactly
and
parallel figures.
She wraps a beautiful gift in denim with a gorgeous bow. She's very talented.
All about advertising. On our radar this morning, AI startup Anthropic reportedly hiring lawyers, laying the groundwork for an initial public offering as soon as next year. This, according to the Financial Times. Anthropic is also seeking funding that could boost its valuation beyond $300 billion, building on what we heard yesterday from Jim Zelter over at Apollo, the need to finance expectations of almost $8 trillion trillion of funding needs for some of the data centers and providers into 2030 as people look to the potential build out. Who is going to finance it? Is it going to be the equity holders? Is it going to be the public debt markets? Or is it going to be private asset managers who are financing in all sorts of ways?
Well, I think for a lot of these companies, it might be all of the above. When I read this story, obviously we know Anthropic at some point was going to work towards an IPO, but it does feel like they are hitting the ground running and really trying to get everything done next year to be out of the gate in 2026. I was just thinking OpenAI must really feel that they are under immense pressure. On one side, it's making sure that Google's new Gemini does not surpass them, even though they have this now code red alert. At the same time, other individuals, startups like Anthropic, might be getting ahead of them when it comes to doing the IPO process. So you could see the AI arms race and the competition really building.
And you could also see how much private companies are as big as public ones and could become the new biggest public ones as soon as they come to market. Meanwhile, Comcast making a renewed offer to merge NBC Universal with Warner Brothers Discovery. Sources telling us here at Bloomberg, the proposal aims at combining NBC's assets with Warner Brothers content, notably using HBO Max to boost the Peacock streaming service. I feel like this is just a mishmash of media names, which is essentially what the cards are being flipped around with each day. It sort of seems like a choose your own adventure on this front.
Yeah, it's hard to keep track of, so I absolutely hope at some point Warner Brothers closes the bids and said we're going to make a decision. But this is another renewed offer. Everyone keeps coming back this week with sweetened deals, whether or not it was Netflix yesterday, today it's Comcast, of course, obviously Paramount, Larry Ellison, Apollo will be financing some of that. They are in the mix. What's also interesting is what each one wants from these assets. Some actually are interested in more than just some of the prime real estate when it comes to Warner Brothers, and they want more of the catalog and more of the scope. So what actually ends up shaking out is going to be incredibly interesting, and then what gets through the regulatory hurdle in Washington, D.C. will be the next question.
And we will be tracking every iteration of it. Meanwhile, President Donald Trump teasing NEC Director Kevin Hassett as his possible choice for the next Fed chair.
I guess a potential Fed chair is here too. I don't know. Are we allowed to say that? Potential. He's a respected person, that I can tell you. Thank you, Kevin.
The president saying he plans to announce his selection to lead the Federal Reserve early in the new year, possibly this giving rise to bets that the Fed is going to cut rates more aggressively, which has fed into this expectation of a bigger deficit and potentially what's going to be happening on both the monetary side of things and the fiscal side of things, which is the reason why we are looking at the fiscal deficit. President Trump once again suggesting that tariff revenue could replace federal income taxes and reduce the national debt. Maya McGinnis of the Committee for Responsible Federal Budget writing, despite all of the promises made on deficit reduction in 2025, we're heading into 2026 with a little to show as far as fiscal improvements. Maya can join us now. Maya, thank you so much for being with us. I want to start with what you make of the recent discussions of the IEEPA case in front of the Supreme Court of potential companies clawing back some of the revenues that they paid to the United States. Are you taking that seriously as a potential hit to revenues that otherwise have been penciled in?
Absolutely. I think everybody should be taking seriously the potential that there's going to be major shifts on what happens with the tariff revenue, both going forward and potentially if some of that money has to be paid back. Listen, I have no legal expertise at all, but having talked to many people, I'm less concerned that people are going to have to pay it back, which would be immensely disruptive to companies and distortive to the sense that you can make negotiations on foreign policy and economic policy. But I do think it's likely that they will find that those tariffs are illegal in their present structure. The tariffs are projected to raise about $2.5 trillion over the next decade and reduce the debt by as much as $3 trillion because of interest savings. This would be a huge hit to the fiscal picture, which is already in deep, deep trouble. So I think one of the big questions is if we do find that that tariff revenue doesn't remain in place, and let's be honest, it's unlikely to remain in place in the current structure no matter what, because the president enjoys changing those tariffs around. But if they are pulled back and unable to go as planned, we should be thinking about a smarter, more efficient, more pro-growth revenue approach that would replace them so we wouldn't lose all of that money and make the deficit even worse.
Maya, when it comes to potentially what can get done by the end of the year, what are you hearing and what do you think it's going to do to the fiscal picture if there is an extension of the Obamacare health credits, the enhanced ones?
This was a really interesting part of the discussion about how to open the government. which was the big ask was that we extend the subsidies for Obama health care, and that would have, all told, cost $350 billion. You'll notice there was not a single discussion of how we might offset those costs. So again, here's another plan that would increase the deficit. We're not going to see them extended permanently, and so the cost will be less because it will only be for a few years. There is some chance that this will happen for 1 or 2 years before the end of this year, but I think it's likely, it seems as though the momentum for getting this done is starting to slow down. But to your point, no matter what happens at the end of this year, we'll either see nothing, which will just keep a very bad fiscal picture in place, or there is a possibility that there'll be a trade and a worsening of the fiscal picture. Let's extend those subsidies. And it's no comment on the policy. They might be a smart policy, but nobody's talking about how to offset them. But there might be a trade where you extend them unpaid for other policies that are also unpaid for, which is often what happens in that Christmas tree fiscal rush at the end of the calendar year.
Well, when it comes to these enhanced subsidies, this was at, as you mentioned, the heart of the government shutdown. Have you seen any impact that is going to be long-term of the government shutdown on the fiscal health of the United States?
The government shutdown itself will not have an overall massive fiscal impact. There is a slowing in spending during that period and a small hit on GDP, usually which is made up in the following months. So we usually just see a shift of growth and overall effects, fiscal effects from the shutdown. What it does do is causes us to be a laughingstock around the world when our government can't keep the lights on. Really, it is a punchline, and it is a huge sign of an inability to govern at the most basic level. And it presents weaknesses and sort of a distraction from the bigger issues that are going on around the globe right now. So I think any country that's not aligned with the U.S. looks at us and says they can't get their act together, and our allies are a little bit concerned too. So I would say it has far more kind of global foreign policy ramifications than it does on the actual bottom line, which is more of a shift of when money is spent. There'll be small savings in the short term, but they'll be pushed out into the subsequent months.
Maya, a lot of people have said, look, this could have been said for a long time. We've had an irresponsible fiscal budget deficit for quite a while. It has gotten worse, but right now markets are not freaking out. In fact, we have a whole host of different projections for 2026 coming out of Wall Street, expecting a bias to lower yields by the end of next year, even on the longer denominations. Why do you think the market hasn't been particularly concerned, even with everything that you're laying out?
Yeah, I mean, this is a long-term challenge, the fiscal situation, because it's not in the U.S. about, oh, we might have a fiscal crisis in the immediate short term, because we are the reserve currency, because countries around the world and savers domestically want U.S. treasuries. There are lots of reasons that rates don't pop up immediately. What it is a slowing kind of erosion of our role in the world and faith in the U.S. And so that when there is kind of a moment of reckoning, it will be so much harder to fix. We will have 10 trillion, 20 trillion more in debt than we would have if we had gotten ahead of the problem. That's one big issue. The second issue I would say is markets aren't the best predictors of when things turn bad. There's a lot of kind of frothy optimism that comes out of markets, momentum that's built in it, and it's almost like a bubble. Most people understand the fiscal fundamentals of the U.S. are nothing short of terrible. But that doesn't mean there isn't money to be made in the short term as long as things kind of continue with the momentum they currently have. And when it comes to time, people don't want to pull money out of the market or make abrupt changes too quickly. So there's a refusal to acknowledge that the fundamentals are bad and hope that kind of the top line numbers will continue to look good for as long as possible.
Maya McGinnis of the Committee for a Responsible Federal Budget, thank you so much for being with us. We did get earnings from Dollar Tree just moments ago, coming out with a real mixed picture here. On one hand, beating in third quarter comp sales versus some of the estimates, also seeing just in general adjusted earnings per share for the full year in a range sort of slightly above where they previously had seen it. However, pointing to the fact that this is because people are buying bigger ticket items, but fewer of them. The number of actual items sold lower, even though you are seeing the prices paid, Emory, picking up.
And what's so interesting about this, I love this, an all-time record Halloween season. So everyone's going out and spending, I guess, on the holidays. Maybe this is foreshadowing what we could see around Christmas time. But you look at results like this and you say, is this good because it shows people are spending? Or is it bad because it's showing that people are spending at places where it's much cheaper and where you can get deals? Are more individuals, I know John hates this word, but are more individuals being choiceful and trading down from those high-end consumers, which is what we heard a lot this year, and especially the last quarter from Walmart?
Yeah, this is the reason why people are watching these earnings so closely. In about 10 minutes' time, we get Macy's coming out right now. Let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. The Kremlin said Vladimir Putin held, quote, very useful talks with U.S. envoys Steve Witkoff and Jared Kushner, though they failed to reach a plan to end Russia's war in Ukraine. A Kremlin aide said a meeting between Putin and President Donald Trump will depend on what progress is being made, with both sides expressing willingness to continue working. Meanwhile, HSBC appointed a new chair, Europe's largest lender, picking Brendan Nelson to replace Mark Tucker, who's led the bank for much of the last decade. Nelson has been serving as interim group chair since October. His appointment follows a months-long search that considered both internal and external candidates. And Tesla's China factory shipments rose for only the third time this year amid a global sales slump. The EV maker shipped about 86,000 vehicles from its Shanghai plant in November, up 10% from a year ago. It was the second highest monthly total this year, behind September. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. Maybe giving a sense to Michael Burry. Hey, listen, watch what we're doing. Up next, growth in the new year.
I think next year is going to be a fantastic year. Taxes, deregulation, energy certainty. Not only are we going to have great growth, but it's going to be low inflationary growth.
Alexander Jekoff of BNP Paribas joining us next. This is Bloomberg Surveillance.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Asia is at the forefront of some of the world's biggest stories. I'm Shevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute news
news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Good morning, welcome back. What we're seeing very much is just tepid gains pretty much across the board after yesterday's tepid gain on the heels of just a couple of winners. Right now up 0.2% on the S&P, and underperformance today from the NASDAQ with futures only up 0.1%. A real question of whether they can be the driver. And small caps, the broadening out trade really hinging on the idea of rate cuts, 2s, 10s, and 30s. That getting baked in, a 98% chance now that the Fed is going to cut rates at their meeting next week. A question of a Kevin Hassett Fed down almost 1 basis point for 2-year yields to under 3.5%. 10-year yields down almost 2 basis points. Under surveillance this morning, growth in the new year.
I think next year is going to be a fantastic year. Taxes, deregulation, energy certainty. We're going to have growth. We've had 2 4% quarters before the Schumer shutdown. We're going to go back to that. So not only are we going to have great growth, but it's going to be low inflationary growth. And stock market obviously is following, but next year is going to be the year for Main Street as all this kicks in.
Here's the latest. The White House making the case for a return to 4% growth in the new year. Alex Chekhov of BNP Paribas noting risks could undermine the dollar despite that view coming from the White House, saying we think U.S. growth is more likely to reaccelerate than to go into a downturn. It is nuanced. Alex joins us now for more. Alex, good morning. Thank you so much for being with us. We hear these calls for potential outperformance in U.S. growth. Right now we're seeing the weakening trend accelerate in the dollar once again, with the Bloomberg Dollar Spot Index reaching now the lowest going back to October. Do you think that that is going to continue?
Good morning. Thanks for having me on again. FX is a relative asset class, so it's very much about relative growth. And where we think we'll see the biggest surprise next year, even though there's upside risk to U.S. growth, is in Europe. So we think European growth or Eurozone growth next year can print at 1.5%. The market's closer to 1%. That translates to the euro through the growth or sentiment channel more so than the rates channel, because of course we think the ECB will be on hold next year and not hiking until 2027. So there is, as you say, a nuanced view, but we think euro dollar can end the year next year at 120.
You've actually taken that lower, though, from 122 that you originally thought. Look, we're parsing hairs here in a certain way. At the same time, it highlights how difficult this backdrop really is. Is it a rate differential story? Is it a growth story? Is it a question around fiscal deficits? I mean, at what point do you understand the main inputs to the FX channels right now?
That's exactly right, Lisa. We've taken it lower because there's slightly more reacceleration risk in the US, but at the same time, I think a better way of thinking about the positive euro growth outlook is euro crosses. Euro sterling, euro yen, although they are high, we think are still cheap. So those crosses can continue to appreciate, not least because the stories in the UK and Japan are far less good than in Europe.
What are you most looking at, though, when it comes to the U.S. dollar in the United States? Is it what's going on in the Supreme Court and we're waiting that decision on IEEPA, or is it the fact that the president is hinting towards who's going to be the next Fed chair, who likely is going to have a dovish impulse? What matters the most for you?
I think both of those factors that you bring up are really important. The way in which the FX market is trading, say, the new Fed chair or the IEEPA case, is I think it wants to position for it or only trade it ex post rather than ex ante. So the market is waiting for these factors to play out before trading them. And both of those factors that you mentioned there, I would argue, are bearish dollars. So the IEEPA case, if tariffs are effectively ruled illegal, then the dollar should weaken and the curve should steepen because you get less fiscal revenue. And on the Fed chair side, if we do get a more dovish Fed chair, that probably also doesn't bode well for the dollar. But again, the market needs to see it. The proof is in the pudding before trading it.
How short term is that, though? Because the administration has other avenues at their hands to enact tariffs.
And let's talk about those other avenues. Let's say they go with Section 232 related products, then I think what happens is the composition of tariff changes, even if the effective tariff rate might be similar, and that hurts certain countries more than others. One currency pair that we're focused on in particular in this regard, and where most pain should be felt, according to our analysis, is Canada. So we think dollar CAD can rise towards 143, and the tariff composition is a big part of that view.
I'm kind of shocked that we haven't mentioned artificial intelligence yet, because ultimately a lot of people say that the reacceleration story in the United States is completely predicated on the ongoing optimism around artificial intelligence, the idea of increased productivity that allows the Fed to cut rates, that also allows some sort of growth backdrop on the heels of fiscal. I just wonder how much a positive U.S. story is a positive AI story, both from a valuation standpoint as well as from adoption.
I think it's a key question, especially as it relates to FX this year. We've seen decent equity inflows into the U.S., and so the way we think about this is the past 10 years or so, a lot of the equity holdings or the foreign investor equity holdings have been driven by valuation changes. So it's been passive accumulation. This year it's been much more active, exactly as you point out. What that does, we think, is it creates a vulnerability for the dollar. Because if there is an AI bubble and it were to burst, and this is not our base case, that we think would prove bearish for the dollar, because now the active accumulation has been so large and these investors have a break even somewhere. So.
Wait, hold on a second. This is actually really important. So you're saying a risk-off move in global markets on the heels of some sort of skepticism around artificial intelligence would lead to both risk assets declining and potentially a significant downdraft in the valuation of the dollar.
In the case of Eurodollar, yes. In the case of other currencies like high beta, then we're a bit more balanced. But Eurodollar, we think, can head higher as equities come off. And if you think about it, that's what we saw in April. And we think this is the primary reason why European investors increased their hedge ratios at the time. They lost money both on their equity and on their dollar position. So the dollar no longer acted as the natural hedge to otherwise risk-on portfolios. So should we see a move lower in the S&P, which is not what we expect, then we think, if anything, risks to our Eurodollar forecasts are to the upside.
This is really interesting. Alex Chekhov, thank you so much for being with us. Alex Chekhov of BNP Paribas. It is AI's world. We're just living in it, which is the reason why we're tracking stories like Anthropic and the potential IPO, which is a reason why we're watching Oracle's credit default swap surge to the highest level since 2009. And the questions of whether this is just winners and losers getting parsed out, or whether this is a bigger shift afoot in the whole discussion of around AI valuations.
I think people are getting nervous. The IBM CEO was talking about, you look at these CapEx numbers, it does not make sense in terms of the profit they think you can get from the AI data centers. Oracle, when you look at what's happening in terms of their rising costs of the default protections, it's on record, isn't it? You have individuals starting to say, now this is really starting to not just fears of an AI bubble, you're starting to maybe see some signals of concern that reminds a lot of individuals of what went on with the dot-com bust.
On the flip side, it might just be another head fake ahead of further gains next year. Right now, we are getting more earnings coming out of the retailers. We did get Dollar Tree, now we're getting Macy's, beating pretty much across the board. Total revenue for the third quarter at $4.9 billion versus the estimate of $4.75 billion, talking about a pretty robust shopping season for the holiday. They also talk about the better than expected tariff ramifications. Those shares surging 5.7% in pre-market trading. We'll have more on that coming up next. Also, Dana Doria of Envestnet Solutions, Terry Haynes of Pangea Policy, former Kansas City Fed President Thomas Honig, and Winnie Caesar of Credit Sites. This is Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
So I know from owning a sports team that owning one team takes a lot of energy and time.
Tell me about it, yeah.
So you decided after you bought the Washington Spirits to buy some other soccer teams. So you bought stakes in a team in England, is that right?
Yes. I bought a team called London City Lionesses, and that is the only one of the two teams in the entire, potentially Great Britain, that are independent. 99% of the teams in Europe are part of the men's team. But this is one of the only two teams that was independent.
So now you have two soccer teams, one in England and one in the United States. So I would think for most people that might be enough, but you decide to buy a team in France as well?
Yes. Olympique Lyonnais Féminin is actually the best women's team in the history of women's football. In terms of how many trophies the team has won, they are the 8 times champions of the Pan-European League. And I can't even count how many times they won the French domestic league, the most successful team. I want to professionalize women's sports, right? I don't want people to think that somehow women's sports is a charity or a corporate DEI project. This is a legitimate entertainment product, and it is a business.
We're coming to you live from Kuala Lumpur. The whole world is
The
here.
APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Amin, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
This U.S. economy has been amazingly resilient.
I think the U.S. economy is not as strong as people have recently come to believe.
We're not expecting inflation to be creeping higher over the coming months.
We have to make sure that we're attentive to that labor market.
The labor market is weakening, but it's still doing okay.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Futures gaining as investors game out a potential Fed Chair Kevin Hassett, with President Trump saying he'd make the announcement early next year, although he's already made up his mind. Markets focusing on ADP jobs and ISM services indicators, with government data still derailed by the government shutdown. And AI credit worries hanging around as a gauge of Oracle's credit risk surges to the highest since 2009. Despite the lift in markets, those fears, Anne-Marie, still very much present.
Very much present as we head into 2026, and the market is trying to understand what is going to be the driving force, potentially what is the catalyst for the next lift. Obviously, some clear hurdles ahead they want to clear. ADP today, because we don't have non-farm payrolls. I find it interesting. Prior 42,000, now the survey is only looking for 10,000 when it comes to the ADP report. I don't know if this changes the risks the Fed's taking on next week, because they pretty much maybe have made their decision, but what happens for 2026, given the fact that so many different changes are going to be digested through the economy when it comes to tariffs, the one big beautiful bill, and then of course, who is going to lead the Fed? And when the president talks about Kevin Hassett, this is what gives me pause. He says, I guess a potential Fed chair. I guess a potential. It doesn't exactly exude a ton of confidence that he really feels like this is his pick.
And it feels like he's dragging it out, maybe to give something to discuss about how Fed Chair Jay Powell is the part of the problem. Right now, in terms of what we're hearing from corporate America, we did just get earnings from Macy's as well as Dollar Tree. And a real question here going forward about what the signal is. Right now, it's not that negative. And we're going to talk about that more in just a minute. But AMH, it seems like corporate America is adapting and adjusting to tariffs and is adapting and adjusting to a more choiceful, or whatever word, picky, consumer base.
They may be more choiceful, but they're still going out and they're spending. Our third quarter sales were the strongest in 13 quarters. That's what the Macy's CEO said. They also talked about how the fact that they are able to mitigate tariffs and they're able to make cost cuts and contributions, and at the same time still able to offer products at what seems to be decent price, at least to get people in the doors. I also wonder, and I have to read through some more of this, how much was driven as well from the higher end consumer because they own Bloomingdale's. And was this potentially what's helping them lift some of their profit?
And maybe this is partly what's lifting markets right now, an optimism continuing to mount that we will see a bit of reacceleration as companies do adapt and adjust. We talk more about Macy's and Dollar Tree in just a second. In markets, you do see futures inflecting higher pretty much across the board, but not exactly a screaming endorsement. Up just 0.1% on the S&P. NASDAQ futures almost flat at this point. The Russell 2000 getting a bit up 1/3% on the back of some gains in the bond space. 2s, 10s, and 30s. Yields lower pretty much across the board, but not significantly so. 10-year, although seeing that decline accelerate now, down 2 basis points to 4.06%. And a focus this morning on copper, with prices surging to record highs on the heels of some renewed orders coming out of warehouses on the London's Metal Exchange. Coming up this hour, we've got Dana Doria of InvestNet Solutions. As equities continue to bounce, Terry Haynes of Pangea Policy as President Trump claims tariffs will cover tax refunds, and former Kansas City Fed President Thomas Honig as the Fed chair search tightens. We begin this hour with retail earnings. Macy's just reporting better than expected results for the third quarter. Dollar Tree, meanwhile, boosting its full-year earnings guidance, beating average estimates. Joining us now, I'm pleased to say, is Bloomberg's Amanda Mull. Amanda, thank you so much for being with us.
Thank you so much for having me.
So what's the takeaway? Is this a good consumer? Is this a bad consumer? Is it just sort of meh?
Well, I think that what we see is the American consumer is like holding pretty strong in a way that earlier this year we didn't necessarily expect them to hold. It looks like, you know, pretty much across the board, with some exceptions, but retailers have been able to find ways to mitigate tariff impact. They've been able to find efficiencies in their supply chains or with their suppliers. The consumer, while things are holding, they are still going to shop. They still need Christmas gifts. They still need, you know, everyday essentials, and they are looking for opportunities to save money. They're looking for deals. They're looking to switch down in certain product categories, but they are still out there spending, especially while asset prices hold.
How much is this a story of inflation rather than actual increased sales? And I say this because Dollar Tree in particular saw the average price go up 4.5%, significantly outpacing the total volume of sales. Is this an inflation story first and foremost?
I think that there is like a really huge inflation element to this, because you can't really strip that out of the fact that, like, oh, if a retailer is up 2% and inflation is up 4.5%, well, like, did they actually sell more things? And the answer is probably no. But you have a consumer that is like hanging in there and paying those higher prices enough to keep the retail sector pretty stable.
We just heard from Macy's. Is this the middle to low-end consumer shopping at Macy's, or is the higher-end consumer spending a ton of money at Bluemercury and their skincare products and maybe going over to Bloomingdale's and shopping on some more luxurious items?
I think it's probably a combination of the two. At the high end of the market, we see the wealthy consumer being really resilient to a lot of price pressures and still continuing to spend. They are disproportionately affected by asset prices, which are continuing to hold steady and increase in certain areas. So you see them still continuing to spend. And then at the lower end, you get middle income consumers switching down. So by positioning Macy's over the past few years as like a value destination, I think they've probably benefited from that positioning in this particular instance, because somebody who might have, you know, spent at like other mall retailers, or maybe like, well, they've got a great deal at Macy's, maybe we switch some spending to there.
At this point, going forward, do you think that this sounds like an optimistic bunch of retail executives, or are they overall pretty cautious about the road ahead in 2026?
I think they're a little bit cautious, but I think that there's some green shoots sort of like poking through, because I think that most of them are in a better spot than they were, or that they expected themselves to be 6 months ago. So I think that some of them have a little bit of trepidation about how much that can hold if inflation continues to increase, but I think right now they're really pleased with how things are going.
Amanda Mull, thank you so much for being with us. Let's do it again at some point. Amanda Mull of Bloomberg. Here's a view from Wall Street. Stocks inching higher as risk sentiment appears to be improving. Dana Doria of InvestNet Solutions writing, the current bout of market difficulty doesn't presage a bear market. It's better to see wild buying tamed now than to witness a major bubble develop. Dana joins us now for more. Dana, thank you so much for being with us. This to me really is the question. Is this a healthy sell-off, or is this a sign, especially with what we're seeing, for example, coming out of Oracle CDS, a sign that there really are some significant worries that are developing?
Well, I think there have always been significant worries. I think the market has, kind of plowed ahead throughout the course of the year in spite of what we all know, one of the major headwinds, of course, being just valuations being so high. Another major headwind being that it's a pretty narrow story that's kind of driving all of this, right? It's this AI story. And narrow only in the sense that we don't know yet when AI is going to pay off. We don't really know yet, other than paying off for the NVIDIAs of the world and kind of the producers, if you will, but when will it actually pay off for the rest of the economy? And so, transformative technologies that, of course, are good bets in a long-term sense, don't necessarily pay off in the short term at all, and it's really hard to see how that's going to disperse throughout the economy. So all being said, I think the market has kind of gone through all of that and pushed hard ahead throughout the course of the year in spite of some of these existing concerns. And so, yes, to see a little bit of a pullback, to see some consideration around, hey, there's a lot of concentration here. This whole CapEx AI, cycle is sort of a little bit circuitous, and maybe we should back off a little, I think is normal and kind of to be expected, and maybe probably even a little under what it could be.
So Dana, going forward, what's going to get people to reverse that skepticism, to actually come in and buy again, even though valuations, yes, they've come off, still are pretty elevated?
Well, certainly you've got the Fed rate cut. I mean, I think everybody, what you're seeing even in the markets now, a little bit of tepid kind of recovery a little is based on that, right? It's based on the bad news is good news kind of storyline, where we're still going to see some softness in employment. That softness in employment will be enough that the Fed will actually cut rates in December as expected. My view is and has been that they will cut, regardless of kind of some of the rhetoric and ups and downs that we've seen in the futures market. I think a cut is coming. I think there's enough concern about the soft patch in the economy that they will do that. I think some of what they've said is an assertion of independence and, don't get ahead of yourselves kind of thing. But at the end of the day, they will cut. And so I think that will be good. And I think it will be good for areas of the market that we want to see, kind of do better, such as small caps, more interest rate sensitive areas in the market, where if you want breadth in the market, which we do, right? We want to get beyond this large cap tech only type of a trade. We want to see those areas of the market that maybe are more reliant on capital markets be able to come back more. So, I think a Fed rate cut is the right thing, and I think we'll get it. And I think that is what the market is seeing right now.
Is a cut in December enough, though, for that broadening out you're talking about, or is the Fed going to have to continue this into 2026?
Yeah, no, I do think you're right. I think the cut in December, of course, will make everyone happy. Perhaps we'll have our Santa Claus rally, but you're absolutely right. I think we will need to continue to see at least some cutting in the new year. I also think, though, 2026, I don't have a negative outlook, right? I mean, as we go into the next year, I think we do have a situation where you've got stimulus coming. You still do have what I think is a good storyline around AI and CapEx. I don't think it's going anywhere. I mean, look at the bond markets and the interest that these companies have in, getting credit for some of these purchases. There's credit awash for their needs. And so I think there's a lot still there. I don't think we're ready to sort of back off on where the market can be in 2026, but I think we just want to see more breadth.
We're going to get ADP report today. We're going to get PCE. It's very stale on Friday. We're not getting jobs data from the U.S. government until after the Fed meets. Does it unnerve you that we're going into the end of the year with really a fog out of the data story?
For sure. And I think it unnerves the Fed, and I think that's why you're seeing such pushback. And really what's going on with the Fed that's super interesting, of course, is that you're getting a lot of different types of feedback. You're not seeing sort of this monolith in how they talk about things. Different Fed governors have very different viewpoints, and it tells you something, right? It tells you they're not kidding when they say they're they're very data dependent. The Fed is very data dependent, and they look to that data and they really make their decisions, and they try to make the decisions, notwithstanding all the politics surrounding it. I really do think they try to make those decisions as dispassionately as they can. And so when the data is missing, which to your point, it very much is and has been now for a bit, it makes it harder for them to do their jobs. It makes it harder for them to feel confident because, of course, what happens, right, if we do lower rates too quickly and there is a rebound in inflation? I mean, nothing would sort of be a worse occurrence, I think, for this Fed in particular, given the 9% inflation that we got to a couple of years ago. For the Fed to let inflation rebound in any kind of big way would be a huge fail. And so I think it's real, the concerns and consideration. Like I say, net, I think we will get it. but I do think it's problematic to not have the data to support what you're trying to do. I mean, you're running an entire economy here, right? You're running interest rates and monetary policy for, just the benefit not only of people in the stock market, but of everybody sort of living with affordability issues and everything else that we've been talking about. So 100% not having data is a serious issue.
Dana Dioria of Investment Solutions, thank you so much for being with us this morning. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Macy's shares are trading lower now, down nearly 2%, though the largest department store chain in the U.S. did report earnings that beat Wall Street estimates, and it raised its guidance for the rest of the fiscal year. Macy's CEO saying the company is well positioned as it enters the holiday season, calling third quarter sales the strongest in 13 quarters. Meanwhile, Dollar Tree shares are rising nearly 1% in the pre-market. The discount retailer reporting third quarter comp store sales that beat estimates and boosting its full year EPS forecast. The strength is a sign the discount retailer is capturing more spending from stretched shoppers. And the search for Malaysia Airlines Flight 370 is set to restart this month after it mysteriously disappeared 11 years ago. Texas-based marine robotics company Ocean Infinity is set to begin a 55-day deep-sea search for the aircraft on December 30th. In 2014, the Beijing-bound flight disappeared around 90 seconds after leaving Malaysian airspace. That's Bloomberg Brief. Lisa.
Thank you so much, Yahaira. Up next, getting ready for a refund.
Next year is projected to be the largest tax refund season ever, and we're going to be giving back refunds out of the tariffs because we've taken in literally trillions of dollars.
Terry Haynes of Pangea Policy joining us next to talk about those fiscal impulses that we could be getting in early 2026. This is Bloomberg Surveillance. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Well, that lift that we saw earlier this morning continuing to fade as the session does grow older. Futures just barely up 0.2% on the S&P. Dollar weakness this morning, 116.64 on the euro dollar cross, but the Bloomberg dollar spot index falling to its weakest level going back to October. 10-year yields continuing to fall down 3 basis points at this point to 4.06% from 4.11 not that long ago, and crude getting a little bit of a lift as commodities in general see the demand picture increase on the physical world. Under surveillance this morning, getting ready for a refund.
Next year is projected to be the largest tax refund season ever, and we're going to be giving back refunds out of the tariffs because we've taken in literally trillions of dollars, and we're going to be giving a nice dividend to the people. I believe that at some point in the not-too-distant future, you won't even have income tax to pay, because the money we're taking in is so great, whether you get rid of it or just keep it around for fun, but you won't be paying income tax.
Here's the latest. President Trump claiming his sweeping global tariffs have already brought in trillions of dollars. Bloomberg estimates that $195 billion in tariff revenues for fiscal year 2025. Bloomberg's Lauren Dusensky joins us now from Washington. Lauren, how much is President Trump speaking to the ongoing criticism, frankly, that people have been saying in terms of cost of living concerns? That is very much front and foremost for a lot of individuals at a time where he's talking about giving rebates to individuals from the tariffs that have been such a hallmark of his policies.
Certainly, the affordability push and conversation. Obviously, it really came up with Zohran Mamdani's win in the New York mayoral primary. But, President Trump is trying to talk about making things affordable for Americans, whether it was the cost of eggs, grocery prices, et cetera. With the tariff promise and using that revenue to help address costs that Americans are seeing, I think it's a little bit more pie in the sky. When President Trump talks about tariffs, he has promised a number of things already, that the revenues can be used to pay down the national debt, that it can be used to give dividends to people. And then now also this income tax proposal. I just ran some quick numbers, and in fiscal year 2024, individual income tax payments were $2.4 trillion. Obviously, President Trump said that it's going to take a while to get to the point where Americans may not have to pay income taxes. But based off our own Bloomberg estimates of $195 billion in tariff revenue, the math isn't quite mathing. The other thing I think that we have to remember when we're talking about tariffs and any promises that this administration is making in terms of the revenue from those tariffs is that we have something really big hanging over all of our heads, which is the Supreme Court. The Supreme Court is ruling on the legality of these tariffs, and there is the chance that depending on how the court rules, the administration may have to pay back some of their income from these tariffs. So that also might complicate this ability to send money back to the American consumer.
Lauren Dusensky of Bloomberg, thank you so much for that. Joining us to continue the conversation is Terry Haynes of Pangea Policy. Terry, it seems like the administration is trying to thread a needle here, talking about how tariffs have brought in revenues and also addressed cost of living issues. What do you expect to hear from the administration in terms of either the $2,000 checks or potential auto-specific policies coming out later today?
Well, I think they've got a variety of ways that they can address this, and you got to remember that for Trump's core audience of kind of followers in red states and even those people who were purple states who pulled the lever for him, they're trying to show sensitivity. They're trying to show the ability to solve things, and whatever they can make work in the next few months, likely on a new reconciliation bill, they'll do. Any good politician is a painter, and I think of Trump quite a lot as Jackson Pollock, kind of splashing the paint cans here and there and trying to make art out of it. So, I wouldn't take any particular approach to the bank, but what I would take to the bank is the idea that they will provide some sort of relief. I mean, he's been quite serious about that. A lot of people poo-pooed him in 2025. He doesn't really want tax on tips or this, that, and the other, and damn if it didn't happen.
Are they feeling the pressure, especially given what happened last night in Tennessee? Terry, I know the Republican ended up winning, but they had to go out, spend a ton of money, a ton of time to make sure the Republican got over the line in a state that Trump won by 22 points.
Well, I think that's an entirely legitimate question. I think the Trump people are trying to front run the issue, frankly. Instead of as other presidents have done, kind of wringing their hands for months and trying to figure out what to do and then coming up with some precise policy. I think what they're trying to do is much more flood the zone style. Number one. Number two, on Tennessee, I don't know. My advice to markets is don't believe the hype from either side. Democrats went in there and spent a ton and, couldn't come that close to winning, with not a great candidate. They'll call that a win, but largely because the superstructure of politics, is one where the embedded people will always say, it's never over, so we're never losing, right? We're always winning in some way or another. And they'll continue that. But the mistake anybody would make is that the slapdash Republican performance in this special, is a harbinger of what happens in 2026. I don't buy it. They're going to have to out-organize everybody in every district to win in 2026. They know that, and they'll proceed from that assumption.
So let's talk about a more timely issue for 2026. The president says he's going to make his Fed chair announcement in early 2026. The date keeps getting pushed back. And the way he spoke about Kevin Hassett yesterday, he said, I guess a potential Fed chair is in this room. Doesn't exactly exude a ton of confidence, does it, Terry? How are you reading this?
I read it as you don't have to make a decision until you do. He's obviously interested. He's got Hassett right there. He wants to keep Hassett on side, appreciate his loyalty, all those things. Hassett is of course, an absolute serious candidate, but I think there's a variety of reasons why, if you're Trump, you don't have to make up your mind. Firstly, you're going to be kind of stepping on whatever the Fed does. You can't really affect the Fed rate decision in December, so why try it? Not only that, right after the Fed decision, you're going to come up against basically a 2-week United States holiday in which people won't be paying very much attention. Much better to come at this fresh in the new year and start taking credit for whatever it is that the new Fed does at the very same time that, as Scott Bessent said the other day, 2026 is low inflationary growth, and they want to take advantage of the turbocharging of the economy at just as the time as they think it turns positive.
Terry Haynes of Pangea Policy, thank you so much for this. Clearly, this is going to be an ongoing issue. It's part of the reason why we're going to hear some announcement from the auto executives later today. And yesterday, we heard from President Trump that he's talking about reducing some of the emissions standards in order to lower costs there.
Basically, the fuel emission standards that came into the Biden administration, he wants to get rid of those. You saw him really take a hammer to what the Biden administration had to do in the auto sector, whether it's fuel emissions, whether it's deregulation, whether it's going on with USMCA, and that's been a potential difficulty for these auto industry, but also the biggest has to be the EV subsidies. Those have come to an end, which is why you are seeing an EV glut really in the United States.
Which again goes to this question of how much can this administration do to lower the cost of living or potentially provide cash infusions early next year? And what does that do when it comes to the inflation backdrop? Coming up next, we're going to be speaking with former Kansas City Fed President Thomas Hoenig as the Fed chair short list narrows and as people try to game in that inflation concern alongside some of the concerns about the labor market. Plus, Danny Berger with your Morning Movers checking on retailers Macy's and Dollar Tree after the latest results. Split returns in terms of how the market is treating these results. From New York, this is Bloomberg Surveillance.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
It has been a choppy start to the last month of the year. Yesterday, we did eke out gains. This morning, we're trying to build on those, up 0.2% on the S&P. On the NASDAQ, falling a little bit behind and led really by the Russell 2000 futures, up about 1/3% on the backs of a rally into the bond space. Yields lower and continuing to decline throughout the morning. 10-year yields down now, solid 3 basis points to 4.05%. Meanwhile, dollar weakness mounting. The weakest dollar, a Bloomberg dollar spot, going back to October, with euro dollar climbing to close to 117, 116.68, 2 hours away from the open. Here is your morning movers with Danny Berger. Danny.
Hey, Lisa, it's a choose your own adventure for the retailers this morning. Macy's now plunging down 5% originally when they reported earnings. The read was it was a good one. It was a beat and a raise, but this is a company that has been working through a turnaround. So is that turnaround good enough? Those shares down 5 1/3%. So not great for Macy's, but good for Dollar Tree, the discount retailer where most of their products are $2 or less. For them, it was a beat and a raise. Of course, the read on this is what's good for Dollar Tree. Is it good for the economy? Those shares are trading higher by 1.3%. So those are the retailers. We also had American Eagle. They beat too. We also had some tech earnings yesterday after the bell. That includes Marvel Technologies. For them, it was also a beat, but key investors honing in on the fact they said that their data center business would grow 25% next year. They also announced some M&A, Celestial AI. They do a different type of transmission through photons rather than electric transmission for AI data centers. So those shares up 9 1/3%, Lisa.
Thank you so much, Danny. What we are seeing in terms of the commentary from some of these retailers, interesting. Our third quarter sales were the strongest in 13 quarters. You pointed to that earlier from the Macy's CEO. A sense of optimism despite some of the caution.
And I think Amanda nailed it. Macy's right now, at least what's working to their favor, they have those middle, maybe a little bit more of lower income consumers going out, finding deals at Macy's, but they're able to get the high-end consumer, I mean, Bluemercury off the charts, Bloomingdale's. They're seeing really good, robust numbers at these stores because the higher end consumers who have a lot of money tied up in the stock market, asset prices, they are going out and still maintaining the kind of shopping that we have seen from this level of income.
Yeah, Macy's shares up 34% so far year to date, so declines might just be on the heels of some of the outperformance we've seen so far. Under a radar this morning, Amazon releasing its latest AI chip, Trainium 3. Amazon claims it can power AI models more cheaply and efficiently than NVIDIA's, but the chip lacks the deep software libraries that help customers get NVIDIA's graphics processing units up and running fast. This goes to the whole GPU versus TPU debate that has been taking hold in markets, the idea of how much you can create a cheaper chip that can more efficiently run basic processes, not necessarily, video games, which is essentially where NVIDIA sprouted out from.
If I was Jensen Huang, I think this would make me incredibly nervous. They want to rival NVIDIA, but at a better price point. If that's the case, then a lot more people can get access to this chip, and it's going to be incredibly competitive for this market and for NVIDIA. And you have to think, maybe it's not going to be Jensen Huang that's going to be the new first buddy traveling around the President of the United States. It's going to be the head of Amazon Web Services, which Ed Ludlow spoke to. in Vegas, and they're looking at doing this at a very quick timeline.
Well, I'm sure AWS would love that, but I don't know how quickly that's going to happen given NVIDIA's dominance. It does highlight, though, also how much every tech company needs to get some sort of edge in this race for not only artificial intelligence software, but also the hardware. And the idea that, Alphabet really was surging on the heels of their new chip. This is the new race. How do you upend some of the NVIDIA demand at a time where the prices paid for these chips has been prohibitive for a number of potential clients, which is the reason why you're seeing them extend financing to them.
And that's what makes it so concerning. What if all these prices drop at one point? Then you have to see potentially some of the air coming out of that bubble. NVIDIA, though, pledging to release a new chip every single year. Amazon wants to keep up with that pace. Next year is going to be super competitive when it comes to these AI players.
Let the poaching games begin in terms of trying to get professionals. Meanwhile, the Trump administration is planning to unveil a proposal to weaken auto fuel efficiency standards set under President Biden. CEOs from major automakers, including Ford, GM, and Stellantis, are set to attend the White House announcement later today. And as we were talking about earlier, and Danny mentioned, Macy's shares are dipping after posting better than expected results for the third quarter and boosting its full year and earnings guidance. Meanwhile, Dollar Tree reporting third quarter comp sales that beat estimates, and it also boosted its full year EPS forecast. A tepid read, but a more optimistic one on the consumer, which is what the Fed is going to be grappling with in the absence of any other data. The Wall Street Journal reporting that the Trump administration has canceled a series of Fed chair interviews as President Donald Trump zeroes in on his pick. The president now offering praise to one of the top contenders.
I guess a potential Fed chair is here too. I don't know. Are we allowed to say that? Potential. He's a respected person, that I can tell you. Thank you, Kevin.
The presidential praise only boosting bets that White House NEC Director Kevin Hassett will be the next Federal Reserve Chair. Former Kansas City Fed President Thomas Honig joins us now for more. Thomas, what do you think of this sort of bachelor-style race for the next Fed Chair? Do you think that it has framed it correctly in terms of what's at stake?
Well, I think it's been framed well as far as this is a big deal, and they better pick well. and the five candidates they originally had were all qualified. Hassett is coming out as the top runner, but I don't know if that's a trial balloon. They want to test it or not. That's all has to be decided. Kevin's certainly qualified, and if he were chosen, I can tell you the world will be watching his or whomever is chosen's first speech with great intensity because there's so much at stake going forward with the Fed changing, lots of call for reform. Who's going to lead that? It's going to be on everyone's mind. So it's a big deal.
A big question is not just how much influence the Fed has over the front end of the yield curve, but really what they can do for the 10-year and the 30-year, given the fact that there has been a focus on home affordability and mortgage rates. What are you watching for to understand what tools they could potentially deploy to lower 10-year yields, not just the very front end?
Well, they always have the choice of trying to manage the yield curve through their monetary operations by which government securities they buy and the pressure they put on there. However, one of the issues is, should they be doing that? Should they be pulling away, let the market take it? They do monetary policy and focus on the short end, treasury yields, and let the market take care of itself. That'll be a big debate, I think, within the Fed, whomever the new chairman is, because it is so important. Financial conditions overall are easing. The Fed is part of that, and that will be as much influence on the 10-year as trying to manage that yield curve, which I think will create uncertainty as much as it will help mortgages. So they have some big choices to make ahead.
Has monetary policy ever been this confusing during your tenure in terms of both the dual mandate of Fed in terms of inflation as well as the labor market? And also the transmission mechanism. Are financial conditions easy or are they tight?
Well, things are confusing, and you can see that within the debate within the FOMC itself. Doves, hawks seeming to be really at odds right now. So now, have I seen it like that before? I've seen it similar to that before, and it is tough. And they've got this dual mandate, and they're going to argue about it. But inflation's 3%. That's way above their target. But they're worried about employment, and I've heard, and they will say it, I'm just as sure as I'm sitting here, should we make this cut as an insurance policy to make sure the economy moves forward? That's all going to be in next week's meeting. I'm confident of that.
When it comes to potentially a Kevin Hassett chair, do you think it would harden the views of the hawks on the committee because he is so close to the president?
Not, well, maybe, given the diversity on that committee right now, they could harden, but I think basically they want to get the right balance in the policy mechanism. So they'll be willing to discuss it and I think come to conclusions. I think it'll really depend on how whoever leads. If Kevin, how careful they are in terms of making their points, how they lead the system towards consensus. That is an art. And if he's good at it, they'll come to consensus. If not, you'll see this split continue. Because I think that the difference between inflationary goals and the employment goals will continue to haunt them going forward.
Do you think it's peculiar that current Fed Chair Jay Powell hasn't announced whether or not he's going to give up his governorship when he leaves the chair post?
I think, yeah, I would be surprised if he stayed on. It's possible, but it would be surprised. But it wouldn't be at his advantage to announce one way or the other. So he's just keeping his mouth quiet because it would do nothing but I think confuse things even further. So he's playing out his term as chairman. That's what matters to him. And he'll make that decision whether to stay on much later, but I would be very surprised if he stayed on.
We've been talking all morning about potential cost of living concerns and fiscal stimulus that could be coming from the White House earlier next year. And I just wonder how that factors into any potential decision by the Federal Reserve. Would that be something that could be inflationary, or would that be so small as to be negligible to those discussions?
Well, I think the Fed should be looking ahead to that issue because it's small in some ways, but the national spending of over $7 trillion versus the revenues coming in just over $5 trillion, that's a huge deficit. That's a huge new issuance of debt to fund that, and that's going to affect the economy, and it's going to affect how monetary policy, how effective it is going forward, and they're going to be under a lot of pressures to make sure that the interest rates don't rise if the debt continues to mount and there's not the demand for it that they would otherwise want. So that's going to be facing the Fed. I'm a little disappointed that at least the Fed itself isn't publicly recognizing that as a challenge that they have to be ready for, because it will be a big challenge going forward.
Do you think that the reason why they're not is because there has been this political pressure, and this would only reignite some of that pressure and potential accusations of being politically motivated?
I think political pressure is part of it. Why engage in a fight if you can avoid it? But at the same time, they're going to have to face it at some point because the debt is continuing to grow. It is a challenge that the Fed will have to deal with. And remember, they're in the middle of, they're past the middle now of changing policy frameworks to this ample reserve system, and they try to figure out what is the right number for ample reserves. They got that going on. There'll be pressure to bring that ample reserve number up. So they're confusing times, but difficult times for sure for the FOMC.
Do you think there has been a weakness in terms of Fed independence?
Like
if they're not willing to come out and say something that you think is so obvious because of political pressure, does that show that on the margins, at minimum, there has been some weakness?
Weakness is, sensitivity is the right word, because look, the Fed has been under political pressure almost since the start. But in modern times, we all know the history of the Fed's Nixon years, the Johnson efforts, and so forth. That hasn't changed. And so they're trying to be careful. They don't want to get into a fight before they need to. And I think that's part of it. Although political pressure is part of their thinking. There's no question about that. It has to be. They are in the middle of a political series here, and they have to play in that arena.
Well, global central bankers are going to be gathering today in New York, which is part of the reason why I know that you are here, and we're very glad that you are here to talk about some of these difficult, thorny issues. Thomas Honig, thank you so much for being with us, the former Kansas City president of the Federal Reserve. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. President Trump suggesting the Pentagon will soon begin targeting drug cartels with strikes on land in Venezuela and beyond. This follows a campaign that has largely focused on alleged trafficking vessels in the Caribbean and Eastern Pacific. Trump has previously said he wants to widen U.S. military attacks against cartels that have fueled a deadly opioid crisis. Meanwhile, Airbus has cut its aircraft delivery target for this year due to ongoing panel issues with its best-selling jet. However, shares for the jet maker are up in Paris trading after the company maintained its main financial targets for the year. This is the second straight year that Airbus has been forced to cut back its delivery goal. And AI startup Anthropic is joining the race to go public. According to the Financial Times, the maker of the Claude chatbot has picked a law firm to prepare for an IPO as soon as next year. The offering could be one of the largest ever, with a private funding round valuing the company at more than $300 billion. OpenAI is also believed to be preparing for an eventual IPO. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Up next, funding that AI data center boom.
The 5 to 7 trillion that's expected to be needed to fund the data center and infrastructure capex of the next 5 to 7 years. These are some of the greatest companies we've ever seen. You're willing to take on much longer duration risk if they are the tenant counterparty.
Caesar of Credit Sites joins us next as the credit markets are poised for a data center transformation. This is Bloomberg Surveillance.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Potentially, we could see a second day of gains. Right now, futures inflecting upward pretty much across the board, led, interestingly, by the Russell 2000 futures. They're up at 0.3%. S&P now actually climbing near session highs in pre-market trading, up 0.3%. As we see a lift in terms of bond prices, yields lower. This, to me, really interesting on the heels of Kevin Hassett potentially becoming the Fed chair and getting the nod from President Trump early next year. 10-year yields now under 4.06%. And the dollar weakness, keep watching this. If the Fed is going to be aggressively easing, how much does that fuel a dollar weakening story heading into next year? What we have seen is the weakest Bloomberg dollar spot index going back to the end of October. If this continues, which pairs are really going to see the lift on the other side? Under surveillance this morning, funding the AI data center boom.
The 5 to 7 trillion that's expected to be needed to fund the data center and infrastructure capex of the next 5 to 7 years. That's been the zip code of the numbers being bandied around. These are some of the greatest companies we've ever seen. You're willing to take on much longer duration risk if they are the tenant counterparty.
Here's the latest. Big tech bond issuance surging as the sector looks to finance its AI needs. Winnie Caesar of CreditSights writing, we expect credit metrics to weaken as releveraging and AI-focused CapEx accelerates. Winnie, I'm so pleased to say, joins us here in studio. Winnie, thank you so much for being here. Let's just start with just how much risk is building, especially as we were talking earlier, Oracle CDS, the credit default swaps widening to some of the most expensive that we've seen going back to 2009. Do you see a heightening risk really taking hold?
Yeah, Lisa, thanks for having me this morning. We do see a heightening risk taking hold because when we have an expected surge in new issue supply, investors kind of anticipate that and prepare for it, and they start to get a little bit pickier in the primary market and what they're going to buy and what they're going to perhaps push back on a little bit for pricing. And if we have kind of a holistic scrutiny of these AI funding deals, then we do have a cost of capital kind of concern. Not to say that it's going to, really spiral and be challenging, but perhaps a little bit more challenging than what issuers are expecting right now, just given how strong primary markets have really been for the past 2 years at this point.
I just wonder at what point this becomes the private debt market's issue and not the public debt market, because only the best and the brightest are going to the public market, but everybody else is going to private markets for the most part. How much are we actually seeing in terms of distress under the hood?
Yeah, so I think distress under the hood is really tricky right now. And so much of what is going into the private debt market associated with the AI infrastructure build out is actually within securitized products. It's investment grade rated. So it's not necessarily the kind of cuspier direct lending type private debt that a lot of times we talk about when we're concerned about what's going on in the private credit market. But taking a broader step back, just thinking about the sheer amount that needs to be funded over the next 5 years, it is a lot, and it's going to need to come not just in the private debt market, but also in the public debt markets as well. And I think that taking a step back and trying to anticipate, how much supply is really going to be coming is something that investors should need to do, and also expect, what does that mean for credit metrics? What does that mean for ratings momentum? We've had a lot of positivity over the past few years, and it does seem like we're probably going to stall out on that.
So this, to me, is the interesting aspect. Everyone's been talking about this and saying that you're going to see this credit weakening. You're going to see a real kind of pushback from investors. You're seeing spreads tighten. You're seeing credit markets rally. You're seeing people say this is the sweet spot because if you want income, guess what? You get it. And right here you can clip these coupons. So why has the market been so sanguine about these risks, given that everyone's been talking about them quite a bit?
Yeah, I think that is part of the big technical picture, where the past 2 years have been defined by very strong inflows into fixed income, including U.S. corporate credit. Now, we've had a few little bobbles this year with April, and then more recently within the leveraged finance markets, we've seen some kind of retail pushback in terms of fund flows. But overall, the yield buyers are still very much present, and that's both U.S.-based investors and also investors based outside of the U.S. And so that very strong bid for duration, for yield, for fixed income has been there. Now, are those people really focused on the spread component, though? That's, I think, a more of an open question. And if you start to see a little bit of that ratings momentum, that fundamental momentum slow down, then that's when things get to be a little bit more challenging overall.
We might have moved on from COVID, but COVID ever maturities, you talk about in your note, they're going to be coming to maturity in the next year, 2, 3 years. Does that create some challenges for 2026?
Yeah, I think when you look at the term structure of maturities, especially for the investment grade market, it is quite heavy for the next few years, almost $1 trillion a year in maturities. And then we add on the net new issue supply needs associated with project finance, CapEx, some M&A. That results in a pretty hefty number that needs to come through the IG market. Now, LevFin is actually in much better shape from a maturity perspective, with high yield and broadly syndicated loan maturity walls really not peaking until 2028. So there's a good amount of time there. Also, private credit maturity walls don't really peak until 2028 as well. So I would say definitely focus on that IG kind of net supply. And what that sometimes means for spreads is this kind of technical overhang.
So when it comes to next year, Lisa talked about Oracle, what's going on in the CDS market. Do you think it mirrors some challenges we saw during the dot-com bubble?
I think that a lot of people are trying to make that link for sure. And anytime you have a big kind of technological innovation, a lot of spending, really any kind of secular expansion, there is going to be some sort of overbuild in terms of the infrastructure. We saw that with the telecom and the dot-com bubble. We saw that with energy in the kind of post-GFC era. And getting that timing right is really tricky. But I think that we all know there is some sort of efficiency gains associated with technological progress, or at least that there's supposed to be. And that often results in an infrastructure build that is a little bit too much. Now, I think in the near term, capacity constraints are still capacity constraints. Like, we can kind of safely say there's still not enough data center infrastructure to process everything that we want to process right now. But going further out than that, it does become a little bit more of an open question.
Will rate cuts push more people to invest in this, even if they don't necessarily want to?
I think it depends on why we're cutting rates. If the Fed is just kind of slowly and gradually normalizing policy, trying to be a little bit less restrictive, say a cut here, a cut there, that's going to continue to benefit risk assets and push people into credit, into equities, into pretty much anything where they can find yield and return. Now, if the Fed is actually kind of back up against a wall because the labor market has hit the skids a little bit more than anticipated, then that, I think, is going to result in more of a cashing up and actually be quite good for long duration treasuries, which is where we kind of land right now. We have more concerns around the economic fundamental side of things rather than the Fed being able to kind of proactively and gradually ease rates.
Winnie Caesar, wonderful to see you, and we'll have to continue that conversation another time about the concerns in the fundamental economy. Winnie Caesar of Credit Sites. A read on the fundamental economy in just about 20 minutes time, as we do get ADP and the jobs report, a key indicator at this point, because we are not getting non-farm payrolls, we did not get JOLTS, and we haven't gotten a slew of other inflation reads. So the reason why people are focusing on ADP and ISM services, this is what we got.
ADP might end up meaning market moving today. It might end up being important for the Fed next week. I just love how the government shutdown has made you almost an ADP true believer, something you care about. It's taken second, maybe third tier data, put it right up there to the gold standard. And this week, the Bloomberg survey says they're only looking for 10,000 when it comes to the ADP report.
Yeah, look, the fact that we've got an estimate and people are putting that out gives you a sense, especially given the dearth of other data. Coming up next hour, Matt Stuckey of Northwestern Mutual, incoming Priceline CEO Bridget Zimmerman as AI transforms the business model. Michael Green of Simplify Asset Management on a really compelling viral post that he had out there, and Mike Kontopoulos of RB Advisors as we look to a big year of issuance in 2026. From New York, good morning.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know. What he doing? Because I never watched the movies. You know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, Doesn't make any sense. Then we started Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
There has been a shift in sentiment overall, and you're starting to see some deterioration in some of the key themes.
The most important compass is the equity market itself. Micro supporting macro. There is room to broaden out.
We actually see going into 2026 a very optimistic scenario playing out.
These are very robust markets. There's a lot of activity going on right now.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Futures gaining with traders awaiting ADP jobs data in the absence of non-farm payrolls. Markets pricing in more aggressive Fed rate cuts with the prospect of Kevin Hassett as the next Fed chair. And an early look from retailers painting a tepid picture of the consumer. Macy's and Dollar Tree cautiously optimistic. Macy's posting the best quarter in 13 quarters with new leadership. Those shares still losing some steam this morning after a pretty robust year of gains, Anne-Marie.
Pretty robust year of gains. Maybe individuals are just taking some of that money off the table. This was a very good quarter for them. The best, as the CEO was saying, in a number. Dollar Tree I find really interesting because they're doing well. And is that a good sign or bad sign for the economy? Does it show that more people are trading down to try to find deals because they are struggling? At the end of the day, though, the consumer is still going out and spending. You've been bringing up a great point. How much, though, we've seen from Black Friday, Cyber Monday, the continuation of Cyber Monday that's still harassing us in our emails all week, how much of that boost is because of inflation and just the fact that things are costing a lot more?
And that's the reason why people are focusing on the fact that Dollar Tree saw the total sales price increase more than the actual volume sold. What we have from the Macy's chair and CEO, Tony Spring, the new CEO, there are price increases. The consumer is seeking out and finding what they want. In some cases, they're buying our best brands and showing no resistance to price. This has been the big question. Would customers absorb some of the price increases, whether it's on the heels of tariffs or whether it's on the heels of just higher goods valuations for some of these companies? A real question of what the Federal Reserve does with this. Because if you are seeing consumers absorbing the price in the absence of CPI data, how much conviction can the Fed have, not necessarily just to cut next week, but with ongoing rate cuts next year, even with new leadership.
Well, Mohamed Al-Arian said this during the Biden administration. Listen to what the CEOs are saying. Listen to what corporate America is telling you about the health of the consumer. That matters ever more so now when we are still somewhat in a data desert. We're getting data, but it is so stale, doesn't even matter. And how much is it going to impact the Fed when they meet next week?
What you are seeing right now is a bit more optimism after the sell-off that we saw to end 2025, at least for the first half of November. This morning, you are seeing those gains continue to build up 0.3% for the S&P, really led right now by the Russell 2000 on the heels of a rally into the bond space, down to almost 3 basis points on the 10-year to 4.06%. Dollar weakness, watch this space, given the fact that the Fed is poised for an easing cycle and the potential for Fed Chair Kevin Hassett to take the helm early next year. Coming up this hour, Matt Stuckey of Northwestern Mutual with stocks edging higher. The incoming CEO of Priceline, Bridget Zimmerman, on what AI means for the future of travel, and Michael Green of Simplify Asset Management on the affordability crisis impacting so many Americans. We begin this hour with stocks looking to maintain momentum just 1 week out from the Fed's decision. And Matt Stuckey of Northwestern Mutual writing this: an expectation of further rate cuts is increasing investor sentiment that the economy can broaden out away from just the impressive growth that mega cap tech has somewhat exclusively delivered. Matt joins us now. Matt, thank you so much for being with us. This seems to be the theme. And I just want to start with the fact that we don't have a lot of data. So how do you get a sense that we're going to get that ongoing reacceleration that so many people are hoping for, that's kind of a necessary ingredient for this broadening out?
Well, good morning. Thanks for having me back. Look, I mean, I think in the absence of government data, a lot of investors are really just focusing on company fundamentals. We just got out of a pretty strong earnings season in the third quarter. And to your earlier point about kind of the small cap indices rocketing higher, I think you look at earnings revisions there and kind of use that as major kind of input in the investment decision-making process. You know, since the end of April and the early parts of May, you've seen the blended forward 12-month earnings expectations for the S&P small cap index kind of lead the market higher in terms of kind of fundamental growth, you know, rising double digits between then and now. And so you're looking for a broadening out and, you know, reasons to get optimistic towards that asset class, or kind of how the economy is behaving from an earnings potential in corporate America. You know, look no further than what's really driving revisions higher is in the small cap space right now.
Is there a contradiction right now between expectations for a Fed rate cut on weakness in the underlying economy and profit expectations that are increasing in corporate America?
You know, I think the two are linked. So, you know, you have labor markets that are you know, softening, and you know what's interesting about that is it is allowing the Fed to get more comfortable about favoring the labor side of the mandate over the inflation side of the mandate. And if you're looking at kind of what's the most sensitive to changes in interest rate policy, it is the smaller companies, the more cyclical companies. And so as long as labor kind of stays in a softening trend that doesn't lead to outright contraction or a nonlinear progression higher in the unemployment rate, you know, that's a good kind of backdrop for small caps recovering or the economy broadening out in areas like housing and areas like manufacturing and transportation that have kind of been in a rolling recession the last 2.5 years. Those areas to start to pick up as we look in 2026 are somewhat you know, reliant on the Federal Reserve continuing to cut from here.
Matt, we've been here before, though. We were here this time basically last year. We've had a lot of false starts. What makes you think that this is really going to put the impetus on places like housing, like manufacturing, to have basically a revamp?
Yeah, we have had a few false starts, and they've always kind of coincided the last couple of years with investors getting excited about the Federal Reserve cutting rates. I think kind of what's different about this episode versus what we've seen the last couple of years is that the last couple of years, you haven't seen a follow-through in terms of earnings expectations rising. It's been a multiple expansion that's lasted a couple of months, and then it comes right back down as, you know, the growth just simply doesn't follow through. This has been a more sustained move higher in earnings expectations that includes things like manufacturing and housing, like you were talking about. And you're even seeing in the housing specifically, mortgage applications rise about 50% from the trough levels that we've seen. And so, you know, it's still well off, you know, the highs that we saw during the peak of housing in 2021, but an improvement nonetheless. And I think the trend really matters as it relates to markets here.
Are you looking at what the president is talking about when it comes to who might potentially lead the next Fed iteration of the Fed, a new mandate when it comes to the broadening out?
I think that's an interesting conversation. We haven't had an announcement yet. Certainly, there's been a couple of front runners that have been discussed in market circles. But if we're looking at kind of policy, from here, we do think that the overall kind of Fed policy of inflation and employment being the major drivers of decision making in terms of how the Fed is making policy are likely to be intact as we think about the next chair that's in place, albeit maybe with a little bit different of an input process in terms of how they're making decisions, whether they're more data dependent versus forecast dependent in terms of how they're making monetary policy decisions.
Matt, how concerned are you that there isn't really any gold standard data? We're about to get ADP in just about 7 minutes time. This is going to be the payrolls data that we get because we're not getting non-farm payrolls on Friday. We're going to be looking at ISM services, potentially the prices paid component at 10 a.m. Eastern today, with a real focus after the Macy's CEO is saying that they're able to pass along the prices to consumers, that they are absorbing price increases. What is your compass right now, given the fact that a lot of people are saying we're in the dark?
Yeah, it's a really good point. Unfortunately, we're not going to be in the dark for a whole lot more extended period of time as the government has reopened. But if we're looking at the ADP as being the primary kind of gauge for employment, I think that's forcing a lot of investors, including us, to kind of build out more of a mosaic in terms of kind of where the labor market is today in the absence of the non-farm payrolls report. And look, if you're trying to gauge it today, it's more difficult. And I think if you are kind of using more survey-based data, that continues to point to a continued softening. Just look at what we've seen in the last couple of weeks. Things like the University of Michigan survey asking respondents, where do you see the labor markets over the next 12 months? And 71% of those, the highest since 1980, have said that the unemployment rate's moving higher. The labor differential from the Conference Board survey that has a pretty tight correlation with the unemployment rate continuing to point to the upward pressure there. So I would anticipate the ADP report that we're getting this morning is going to be more of a confirmation of those survey-based indicators. But certainly, we're going to welcome more of the official data coming back into our Bloomberg terminals in the coming weeks.
Is U.S. equity space, is that still the primary bet that you think is going to be the outperformer next year?
I think that we're embracing a broadening out theme in terms of portfolio construction. Certainly we like areas like U.S. small cap and U.S. mid cap, but we also like the international equity space as well. That's not to say that U.S. technology is overvalued or is not going to continue to do well, but it really has been the kind of more driving force of earnings the last couple of years as the Fed has tightened rates, and as that starts to change in 2026 with the Fed continuing to cut and kind of more of the cyclical areas coming back, it's not going to be the only source of earnings growth as we look ahead. And so, the valuation difference between things like small cap relative to U.S. large cap, we think is attractive. And the same goes for international equities, where you are seeing revisions moving higher, but you're also paying a smaller price for those, which is attractive for investors.
Matt Stuckey of Northwestern Mutual, thank you so much for being with us this morning. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. The Trump administration is planning to unveil a proposal to weaken Biden-era auto fuel efficiency standards, which it blames for driving up costs. CEOs from major automakers, including Ford, GM, and Stellantis, will attend the White House announcement later today. Easing mileage rules is unlikely to quickly lower prices as car makers plan their lineups years in advance. Meanwhile, Bitcoin is bouncing back. The largest cryptocurrency is extending a tentative rebound and even hit a 2-week high as it looks to recover from a multi-week sell-off. The digital assets market remains on shaky ground after more than $1 trillion in crypto market value was wiped out in less than 2 months. And Comcast is looking to merge its NBC Universal division with Warner Brothers Discovery after making a renewed offer for part of the company. Sources telling us here at Bloomberg that Comcast is aiming to create a larger entertainment entity by combining the NBC TV network, its film and TV studios, and theme parks with Warner Brothers. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Up next, the monthly ADP employment data set to cross. We'll get you the latest. This from Andrew Hollenhorst over at Citigroup, saying that the expectation for 10,000 new jobs is clearly weak, saying while ADP can diverge substantially from non-farm payrolls, the message from both data series will likely be weak hiring continued in October and November. That's next. Plus, the incoming CEO of Priceline, Bridget Zimmerman, on what AI means for the future of travel. This is Bloomberg Surveillance.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
I don't have a negative outlook, right? I mean, as we go into the next year, I think we do have a situation where you've got stimulus coming. You still do have what I think is a good storyline around AI and CapEx. I don't think it's going anywhere. There's a lot still there. I don't think we're ready to sort of back off on where the market can be in 2026, but I think we just want to see more breadth.
That was Dana Dioria of InvestNet Solutions, as we see markets continue to climb after yesterday eking out gains, particularly led by the big tech names. Today, it's pretty broad-based, in particular with Russell 2000 futures up 0.5%. A real question here, though, about the underlying economy. Right now, ADP employment data just crossing, and it is not a positive read on the U.S. economy. It was expected to come in with 10,000 jobs being created. Right now, we're seeing a decline of 32,000 jobs. Last week was revised upwards, so we saw 47,000 jobs created versus the 42,000 initially reported. This is the ADP employment change, and this doesn't always cohere with what we see from non-farm payrolls. However, in the absence of non-farm payrolls and in the consistency of this series, this has increasing weight. Enda Curran joins us now of Bloomberg. Enda, what do you see from these numbers?
Well, at face value, Lisa, as you're saying, it's clearly a negative read on the labour market, coming in much weaker than expected. Economists had expected maybe around a plus 10,000 jobs, but it actually came in, as you say, negative 30,000, and weakness by the looks of it across the board, jobs being lost in goods and services. Now, this does lean into what the kind of other sentiment or survey indicators have been telling us, that the labour market is softening, that we're moving from low hiring, low firing to something else. Of course, we've had headlines from big brand name companies, the likes of Verizon and Apple, cutting staff or announcing layoffs over recent weeks. So in the context, as you explained, where we don't have the official data from the BLS There's a lot of weight being put on this ADP set of numbers. It's the last read we'll have really on the jobs market before next week's Fed meeting. And as I say, at face value, this suggests that the employment market continues to soften at the very least.
Yeah, and what we're seeing right now is that decline of 32,000 jobs is now at the lowest level that we've seen in this ADP series going back to March 31st, 2023. And Karan, thank you so much for that. You are seeing yields fall in response to that. Just taking a look at 2s, 10s, and 30s. On the front end, very much increasing bets of a Fed rate cut, now down 3 basis points at the front end. Similar kind of move as the 10-year. What you are hearing in terms of some of the commentary from ADP, they said while November's slowdown was broad-based, it was led by a pullback among small businesses. We'll dive into that a little bit more coming up. Time now for the morning calls. First up, Stifel raising its price target on Marvel to $114, highlighting its accelerating strength in data center connectivity. Next up, Bank of America raising its target on ASML to $1,331, naming the chipmaker one of its 25 stocks for 2026. Those shares up 0.9%. And finally, Wells Fargo initiating coverage of Oracle with an overweight rating, calling it an emerging leader in the AI supercycle. Those shares up 1.9% in pre-market trade. Sticking with AI, companies across industries racing to utilize the emerging technology, with several travel firms integrating AI into their services. Joining us now for more is Bridget Zimmerman, the Chief Commercial Officer and incoming CEO of Priceline, a major online travel agency. Bridget, thank you so much for being with us. Before we get into AI and how it's transforming the business, I'd love your read on the consumer, because we're getting really mixed messages about the state of spending, the state of consumer spending in the United States. What's your read on just how much demand there is for discretionary spending like travel?
I mean, I think all you have to do is look at what happened over the Thanksgiving holiday. We saw a record level of travel hitting the U.S. over Thanksgiving, a record number of people passing through the TSA PreCheck on Sunday. So I think the consumer's telling us that they really value travel, that they have some money to spend, and they're going to spend it in the places that matter to them most. And travel is absolutely one of those places, particularly around the holidays.
Are you seeing this across consumer cohorts, though, or is it really just the upper-end consumer that is really able to spend when it comes to things like travel?
Yeah, absolutely. I mean, I think we've heard from a lot of our partners in the industry, our airline partners in particular, who have talked in their earnings calls about the premium customer, the premium cabin being full. But particularly, again, as we look back at Thanksgiving, we are seeing that across a broad cohort. I think our consumers in the U.S. are telling us that they do prioritize spending on travel, particularly around the holidays. If we go back and we look at prior holidays, Memorial Day, if we look at Labor Day, we are seeing the same type of trends. This is the moment that matters to the consumer, and they're going to put their dollar here.
Besides holiday travel, which we always know is usually a bit more robust, what kind of trends are you also seeing in the space?
Yeah, I mean, we are seeing a really great trend for consumers, particularly around the holidays, but even as we look into next year for new types of travel. We just released our new travel trends report for 2026, and we see the consumers shifting a little bit in terms of how they want to take trips. So some shorter travels, we call it little treat travel. So very short, last minute, spontaneous trips, particularly where consumers can find affordable travel. We're also seeing consumers take big trips or trips around tourism or around tailgating. So the tailgating tourism trend is a hot phenomenon. And as we head into the college football championship, I think it's a really great time for consumers to think about how they want to bundle their trip, particularly around sporting events.
Bridget, I think about Priceline going back to my earlier days when I was planning travels and I'd be looking for the best fares. It seems like the business model has been changing pretty dramatically, especially in the face of chatbots and additional search engines that can scrape from the web all sorts of different deals. How are you incorporating some of these tools in order to stay ahead of, say, Gemini from getting ahead and sort of disrupting the business model?
Absolutely. This has been a really hot topic, and I feel really fortunate because Priceline has innovation in its DNA. We've been doing this for the last 27 years and really reinventing how consumers interact and find and shop and book travel. So we were one of the early companies who really leaned into the use of generative AI. We've been using machine learning and AI for years, but this is kind of the next frontier, and we're actually really excited about it. We have a chatbot called Penny. She's your virtual travel assistant or your travel assistant. You can now speak to her as well as chat with her, but she can do everything from help you figure out where you want to go to help you understand what's happening in the neighborhood around you and in that destination that you might want to travel to, all the way to helping you service your trip if something goes wrong or if you need to ask a question. So no longer do you necessarily need to call in and talk to an agent for everything. You can interact with Penny, whether that's by voice or whether that's chatting with her by normal chat methods. And so it's been a really wonderful piece of technology for us. And besides just leveraging it for our consumer, we're also using it in all parts of how we think about our business. So how we arm our employees, how we arm our agents in speaking with consumers. So it's really running through the totality of our business.
One question has been, how much is it superseding the need to hire people? You're talking about phone agents and things of that nature. We have heard the Anthropic chief scientist was saying that artificial intelligence and chatbots could disrupt a lot of white-collar work, particularly when you get generative AI in the next 5 years. I just wonder how much it is superseding your need for humans to play those roles.
Listen, it's still early days. I think we're going to wait and see. Right now, we are just trying to leverage it everywhere that we can and try and make ourselves more efficient. There's a lot of innovation still to be done. So ultimately, we'll see where it goes over time, but really figuring out how to make ourselves more effective in everyday life.
Bridget, are you still using OpenAI for Penny, or are you willing to broaden out, maybe look at some others?
And we're still using OpenAI for Penny, but we are partnering with all of the big LLMs. We understand that how consumers shop may change over time, and we need to be partnering with every single one of them. So we've got a lot of great partnerships in the industry, and we're going to keep pursuing that to make sure that we stay on the forefront of the new technology and all of the changes that are coming through.
As you take on this role starting January of CEO, how much do you view the job changing in the realm of AI? How much of your time is spent on making sure you are keeping up with the AI competitive race that we do every single day around this table?
I mean, I think that's a big part of the job. As things change in the industry, as new technologies change, we have to stay up to speed on what's happening. And that's not only for me, that's something that I'm going to ask every single one of my employees to do at Priceline. We have to keep up with what's happening in this trend.
Bridget Zimmerman of Priceline, thank you so much for being with us this morning as we try to understand exactly how businesses are adapting and adjusting to artificial intelligence. If you are just joining, I do want to reiterate these ADP numbers because they are what we've got, and what they do portray is a negative picture of the employment backdrop in the United States. A decline of 32,000 jobs. This would be the lowest going back to 2023. Payrolls have now fallen 4 times in the last 6 months. This is not non-farm payrolls, but the commentary coming out of ADP with Neela Richardson, the chief economist there, saying that this is really stemming from small businesses, not necessarily this sort of one sector leading the declines lower.
And that's not what you want to hear, especially for this White House, which is try to put an emphasis on Main Street rather than Wall Street. The only good thing about this was the revisions, a few up for 47,000 instead of 42,000, but negative 32,000. Andrew Hollenhorst makes a great point before this. There is divergence in the past when it comes to non-farm payrolls and ADP, but the direction of travel right now is not looking good for the labor market. Even your question right there to the CEO of Priceline, they don't want to answer these questions about the impact that AI is going to have and what it is happening right now when it comes to hiring.
Yeah, and this is going to be a question increasingly with affordability. Coming up, Michael Green of Simplify Asset Management, as we do talk about affordability concerns in the United States, plus Danny Berger with your morning movers, Stellantis rising ahead of the CEO's visit to the White House. From New York, this is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning, welcome back. What we are seeing is a bit of a risk-on tone in equities, despite the fact that we just got some negative data coming out of ADP. We'll get to that in just 1 second, but across the board, led by gains on the Russell 2000, up 0.5%. And you are seeing the S&P up 0.3%. Why? Well, take a look at 2s, 10s, and 30s. In the bond space, yields lower on the heels of this ADP report, coming with private sector payrolls decreasing 32,000 in the most recent month. This is the lowest reading going back to May of 2023, which raises the question of the state of the consumer. When you bleed this through the currency space, what you do see is a more dollar weakness. Now the dollar the weakest versus the euro, going back to October. You're seeing the euro climb to 116.70. 1 hour away from the cash open. Here are your morning movers with Danny Berger. Danny.
Hey, Lisa, starting with some of the earnings. Macy's, to be specific, it is down quite a bit. When they first announced earnings, they were up. It was a beat, it was a raise, but down now 7.5%. That's because it's fourth quarter. The read on it has been that it is tepid. The range was at the high end, meeting expectations, but at the low end, not getting there. That's especially a problem if Macy's is touting how good this holiday season is going to be for the fourth quarter. So again, those shares moving lower. Elsewhere, some sell-side action. Oracle shares, those are leading the pack this morning, up 1.7%. An upgrade from Wells Fargo saying that they are in pole position, citing some of their contracts with customers like OpenAI. Of course, Oracle, especially their CDS swaps, have had some jitters around them. So those shares moving about 2% higher. Finally, Stellantis, that also getting some positive feedback from UBS this morning, who's citing a likely coming Trump administration change, or at least announcements, on vehicle emission standards. We're expecting that to happen today, and we're expecting the CEO of Stellantis to be there. We don't know exactly what it'll show, but the reporting suggests it'll be less onerous than what was planned by the Biden administration. So those shares up 3.33%, Lisa.
Thank you so much, Danny. We did just get ADP numbers, and they did see a pretty significant decline. Emery, you did point out that the revisions were actually to the upside in terms of the prior month reading. So how negative is this really? And I think that's what markets are going to try to suss out.
Right, and maybe the revisions for this report next time it comes out will be to the upside. But at the end of the day, negative 32, when the market already at a Bloomberg survey was looking for just 10,000, it couldn't even clear that hurdle. And when you hear from what Neela is talking about, Neela Richardson, of course, chief economist at ADP, hiring has been choppy of late. Employers are weathering cautious consumers and an uncertain macroeconomic environment. The trend seems to be that when it comes to hiring, it has been maybe not even anymore in this stasis. Maybe individuals are starting to actually look at, we might have to save some money somewhere. Maybe there's going to be more layoffs.
Well, let's get into that right now with Nancy Lazar, which we are so glad to have of Piper Sandler here in studio. Nancy, I'd love your take on what we just saw from ADP numbers, seemingly fairly negative, with not only this broad-based decline, but also a pullback led by small businesses.
Yeah, so the labor market has really been weak since 2022. That really needs to be put in perspective. It's a cyclical slowdown in the economy. It's not a secular shift down in employment. Fed tightened, you pulled back on COVID stimulus, profits declined in 22, then you had bifurcation in 23. Small businesses still got hit very, very hard. Small business employment, as you just said, has been on the softer side because earnings for small businesses, be it public or private businesses, have been struggling. Employment is a lagging indicator, and the ADP data with the revisions highlights, it's not reliable data. I think the most reliable data on jobs are unemployment claims and continuing claims. They do tell us companies aren't hiring with continuing claims very elevated, but you've not yet really seen a surge in firings. This to us is the last leg of the weakness in employment that could last through the first part of 2026, but you're starting to see green shoots supporting stronger employment. First and foremost, you need profits, and you have seen S&P 600 profits, Russell 2000 earnings start to improve, small businesses saying the job market. So I hear you on the data for November from ADP, small business employment was weak. It's been weakening, and now we actually would argue with an improvement in profits, which is a necessary condition before you get stronger employment. 26, you could see stronger jobs.
You're talking about the jobs market as though it's cyclical and not necessarily the structural impacts that are potentially affecting this. And I wonder how much we can still look at this as a cyclical market at a time of artificial intelligence and the fact that Anthropic's chief scientist came out and said that AI systems will be capable of doing most white-collar work in 2 to 3 years.
Yeah, creative destruction of jobs in this country has been going on for centuries, really, for over 150 years. It's a very dynamic labor market, which is actually very healthy. As we were talking about earlier, would you rather have Amazon or JCPenney, Sears, and Kmart? In my career, we fired the operators in the back office, the mailroom, and went obviously to Wi-Fi. And so this is a necessary part of an economy that allows innovation and that creates new jobs. What are the new jobs going to be? Palantir, how many jobs are they going to create? How about Elon Musk? So I'm excited about the new jobs that are going to be created over the next decade.
But you mentioned Elon Musk. All right, I have to bring this up. 2 weeks ago, I heard him say work is going to be optional. Sitting in an audience, he was talking to investors, U.S. Saudi investors, and he said work will be optional in 10 to 20 years.
Yeah. So I'm a huge Star Trek fan, and so maybe at some point that will indeed unfold. For right now, I'm not sure that's the right timeline, but I'm not going to argue with him. He's obviously brilliant.
What do you think the Fed does with this ADP number?
So the Fed always follows the jobs. And so if the labor markets are going to stay weak, you're going to see the Fed most likely continue to ease. I went back and looked at every slump. After every slump, employment is again a lagging indicator. Even if GDP picks up in the first part of the year, which we think it will, the Fed is likely to continue to cut rates simply because of the labor weakness in the labor market.
So right now, you've got a Fed that is likely to cut rates early next year and as well as next week. At the same time that the Macy's CEO is coming out saying that they've got robust demand when it comes to sales. And not only that, but they've been able to price along some of the price increases that they've been experiencing. How do you dovetail that kind of pressure? Do you just expect that inflation push to diminish as the year goes on next year?
Well, I do. I do think inflation slows next year. One, the labor markets will remain weak, and that will continue to slow wage inflation. We are bullish on productivity, have been bullish on productivity, so that's also a disinflationary event. And the tariff lift to prices next year will probably also start to fade, be it deals or IEEPA. And so net, that will also be a little bit making it easier for inflation to slow. But again, the labor market is overrated as the driver of consumer spending. Again, I went back and looked at every slump, and consumer spending turns up before employment picks up because they are sensitive to changes in interest rates, the stock market, the wealth effect, banks easing lending standards, refinancing debt. And so this actually isn't unusual to see 2% consumer spending in 2025 with a weak labor market. The key is what's going forward, and profits are improving, and that will lead to stronger jobs and a more sustained shift up in spending.
Nancy Lazar, thank you so much for being with us this morning. Nancy Lazar of Piper Sandler, as we do break down those ADP numbers, if you are just joining us now, we did get a negative read after an expectation of 10,000 jobs created. The actual ADP figure for the month of November, a decline of 32,000 private payrolls job. You are seeing an upward revision, however, to the October read to 47,000 versus the 42,000. The response in markets has been positive, partly because of expected Fed rate cuts led by the Russell 2000 up nearly 0.5%. If you take a look at the bond space, you do see yields falling across the board with a real decline at the front end of the yield curve, disproportionately so. You're seeing that yield curve steepening from the front end, going down about 3 basis points as people price in Fed rate cuts. Turning to D.C., President Donald Trump downplaying the affordability crisis.
There's this fake narrative that the Democrats talk about, affordability. They just say the word. It doesn't mean anything to anybody. The word affordability is a con job by the Democrats. The word affordability is a Democrat scam. They say it, and then they go on to the next subject.
Right now, the latest, Americans continuing to grapple with the cost of living and real questions around how serious it is. Michael Green of Simplify Asset Management saying even households earning six figures are struggling and the U.S. poverty line is far too low. He writes, the threshold where a family can afford housing, health care, child care, and transportation without relying on means-tested benefits isn't $31,200. It is $140,000. Michael joins us now. Michael, thank you so much for being here. I really appreciate it.
Thank you for having me.
You had this viral Substack, which I read with great interest, about the actual costs and how the cost of living was calculated in the early 1960s as really having a third of the overall income going toward food. How significantly has that changed in this current environment?
It's changed dramatically. So that third of the budget that was primarily tied to the USDA minimum food budget was largely food at home. That number has fallen to around 5%. So people really don't shop at the grocery store. They don't shop in the same way where they're buying necessities like rice and beans, et cetera. They tend to be buying prepared foods, luxuries, eating out, et cetera. We have absolutely become wealthier as a nation. But the reason why that 1/3 mattered was because we were trying to capture the entire budget. And so today, when we think about that number that has been increased by inflation, so we've used CPI to increase it, is dramatically lower than it would have been if we tried to do the exact same thing. Simply update the budget to what is actually necessary to have a degree of safety in the household where you're saving money. That's that 140,000 number. It's what I really refer to as the precarity line, where you stop feeling like you're barely holding on by your fingernails.
You talk about how benefits don't kick in unless you're making $30,000 because of this poverty line, and then there's sort of this pain zone where if you make more, you're essentially in a worse spot. I just wonder how structural this is, right? This isn't necessarily an issue of President Trump. It is a longstanding issue that has been developing over the past few decades. What would it take to change this, right? I mean, it would just take paying everybody more and having a sort of wage inflation significantly?
I think the real challenge is that there's multiple solutions to it. And so you're correct. This is a structural problem that has been created by an inability to adequately address the benefit cliffs, which is really what creates that valley of death. We've been trapped in political discussions around that. Should we pay people more? Should we pay people less at the benefit side, et cetera? I actually don't know what the right answer is. I'm just glad we're starting to have the conversation about what that level is and recognizing the challenges that are created by artificially putting that level way too low.
What do you make of what the Trump administration is teasing out right now, which is potentially $2,000 checks to the American public? It just seems like whether it's Biden administration, the Trump administration, since COVID, it's been just constant Band-Aids to try to help the consumer.
I think that's an exactly perfect description. It's been constant Band-Aids instead of addressing the structural problem. The reality is we have cardiac disease. We need to actually get ourselves on a full fitness program. People are willing to do that. That's the amazing thing about the response here. People know the answers to this involve some people making sacrifices. That's part of the reason that you're hearing such an extreme pushback. Those at the top end of the income spectrum, people like myself, candidly, have it far too good in this environment. It's the younger generation, the people that are trying to have families, trying to start their families, that are making that transition from an expense base of around $80,000, in which they feel things are largely fine as a married couple without children, to all of a sudden confronting this $50,000 to $70,000 leap in required income that's required, that doesn't magically appear when the kids show up, right? It's like not like suddenly you get paid more money because you have kids. So that's the reality of what we're facing as a society. We have to address it because this is our future generation of taxpayers. It's our future generation of builders. It's our future generation of workers and parents.
Do we need to hit rock bottom before we address it?
That's part of the reason why I'm raising my voice. I had actually thought that we were pretty close to rock bottom. But in all candor, everything I'm seeing is moving in the opposite direction. We're focused on telling people, using the term of this century, gaslighting, right? Everything's fine, it's just you. You're not making the right moral choices. I have far too many messages in my inbox at this point from families who are saying, oh my gosh, I actually feel heard. That was the real message of the Trump campaign in 2016. We stopped calling people deplorable and we told them that they mattered, right? Now we're ignoring them again.
Do you think that Fed rate cuts could solve this issue?
Absolutely not. I think Fed rate cuts are important, but I don't think that they actually have the impact that people think. If you're paying student loans for the first time again, if you're paying credit cards at 28%, a quarter point cut on the Fed funds rate is not going to make any difference whatsoever.
This is a reason why I think people have come on this show and they say, look, we're investing in risk assets because they're going to do better, and we're going to invest in higher-end companies that are catering to the upper class because they can keep spending. And ultimately, the sentiment surveys don't matter to us because it is a small proportion of the overall spending. How do you, and this is sort of a delicate question, but how do you advocate these things on one hand that are social policies while being an investor first and foremost that can benefit from these policies?
Yeah, it's one of the real challenges from a fiduciary standpoint, right? I have to invest in a manner that reflects how I think things are going to play out in the market. And I agree that K-shaped economy format, in which we've increasingly focused on servicing the needs of the upper income who have the discretionary income, which, by the way, is helped by the Fed maintaining interest rates at high levels, right? We're putting ourselves into a position in which we're saying the bottom half or the bottom 90% doesn't matter. The simple reality is we have a democratic republic, right? We vote, and those votes come at a value of a single per person. Ironically, the group that we disenfranchise in that, really the only remaining group, is children, right? They don't get a vote on it, even though they're the ones most impacted by what we do in the future.
I would love to hear your take. You mentioned children. 25 million U.S. children are going to get these Trump accounts. Michael Dell's putting up $6 billion. What do you make of that? Basically, these kids getting a chance to be a part of the growing assets in this country.
All else equal, I think it's a great thing. At the same time, the manner in which it's being implemented is largely directing those funds into what are called qualified default investment alternatives, which sends that money largely to U.S. multinationals who really don't need it. They're simply returning that cash to others through share repurchases.
So how many subscriptions have you gotten on your Substack since that post?
I have no idea. It's a lot.
Michael Green, thank you so much for being with us. Michael Green of Simplify Asset Management here in New York. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. We are seeing Delta Airlines shares in the green after a new filing this morning had the company saying it will take a $200 million hit from the government shutdown. Delta adding that demand remains healthy for the December quarter. Meanwhile, President Donald Trump says he plans to announce his pick for Fed chair early next year. During a cabinet meeting yesterday, the president teased White House National Economic Council Director Kevin Hassett as his possible choice. And AI startup Anthropic is joining the race to go public. According to the Financial Times, the maker of the cloud chatbot has picked a law firm to prepare for an IPO as soon as next year. The offering could be one of the largest ever, with a private funding round valuing the company at more than $300 billion. OpenAI is also believed to be preparing for an eventual IPO. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, setting you up for the day ahead, plus Mike Kontopoulos of RB Advisors. As AI bubble concerns continue percolating out in the distance, this is Bloomberg Surveillance.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
up in our zone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Whoever leads, if Kevin, how careful they are in terms of making their points, how they lead the system towards consensus, that is an art. And if he's good at it, they'll come to consensus. If not, you'll see this split continue. Because I think that the difference between inflationary goals and the employment goals will continue to haunt them going forward.
That was former Kansas City Fed President Thomas Honig. Right now, you are seeing a lift across the board, in part because of bets on the Fed cutting rates more aggressively on the heels of the ADP data of about 0.3% on the S&P. Dollar weakness broadening with the dollar the weakest versus the euro, going back to October 15th, I believe, and yields lower pretty much across the board. Meanwhile, a credit risk gauge on Oracle debt reaching its highest level since 2009. The surge in bond sales from tech giants raising concerns of an AI bubble. Mike Katopoulos of RB Advisors writing, AI debt issuance looks a lot like the fiber optic build-out of the 1990s and the shale build-out of the mid-2000s. Mike joins us now for more. Mike, thank you so much for being here.
Thanks for having me.
So a lot of people have drawn this parallel that the bond markets always finance industrial revolutions. How is this time any different?
I don't think it is. We've seen this time and time again. I think the biggest difference today is just in the equity valuations. You know, you look at how high the Mag 7 and tech stocks are right now in terms of their PE multiples. And the reason for getting there was really because of their fortress balance sheets, that they could finance all of this CapEx through cash flow. And I think the biggest issue here is that they're now transferring all of this spending to debt, and that could ultimately affect equity multiples down the line.
This is an interesting take. A lot of people have said this is a debt market problem. This will actually fuel equity gains because ultimately it's allowing them to rely on debt markets to ultimately hold the buck. Why do you see it the opposite?
I see it the opposite because, you know, there's a huge amount of promise around AI from an economic perspective, certainly, and what that could mean for how we live and how we socialize and everything else. But what a lot of people aren't realizing is that these huge build-outs of data centers that are massive, I mean, some are being built the size of Manhattan, as we all know, you know, there's a huge amount of assumption there that these data centers are ultimately going to be revenue generating to the extent that they can finance the debt. And we're talking about, you know, Meta issuing a 40-year bond. You know, the Apollo computer that got us on the moon is thousands of times weaker than an iPhone today. We used to have these data centers with servers to run, you know, a PC. What if, even if AI is great, what if all of a sudden in 10 years, you can run all of the data you need for AI on your laptop, and you don't need these huge data farms? Then who finances the debt? If you have to then finance the debt through cash flow, buy out that debt, whatever, refinance it, that needs to affect equity multiples ultimately because the growth isn't there.
So this is not going to end well.
I don't think it's going to end well. The question, of course, like everything, is around their earnings report where Zuckerberg had mentioned, you know, that maybe they're overspending, but they need to overspend on this build out. I think investors are starting to realize that this is starting to look a little bit too egregious in terms of the spend on CapEx.
Do you think that's a 2026 story?
I do think it's going to be a 2026 story, and I think it's going to be potentially led by what the Fed does. I think so much of what we've seen around AI and the promise around AI is really misplaced euphoria around liquidity, which has been largely driven by monetary policy, fiscal policy, and easy financial conditions. And if that were to start to tighten relative to expectations, I think a lot of the froth and excess and euphoria gets wrung out of markets.
If you really think that this is closer to the end than the beginning, then are you following in Michael Burry's footsteps and looking for ways to get short this market?
I wouldn't say that. You know, at RBA, we are long-only investors, so we're not really, shorting stocks and bonds. But we are underweight the entire tech complex at this point. We just think there's tremendous opportunity elsewhere in the world, not only in the United States, but throughout the globe. You look at European markets, you look at the European earnings cycle, we would argue that there are healthier signs in the European earnings cycle than there are in the U.S. earnings cycle. So international quality looks attractive to us, value looks attractive to us. Dividend payers, which no one talks about, are attractive. So
well, one of the big conundrums has been if you do get a blow off top or just a deflation of this bubble, can the rest of the equity universe and the economy withstand that, given the fact that this has been the pillar of strength?
That's a great question. We're prepared for a world where it can't for a period of time. And I do think there's a place for some of the biggest underperformers in a portfolio at the moment, primarily defensive. Staples have lagged pretty dramatically. Healthcare has done well in the last month, but Staples, healthcare, and even utilities, even though they've ridden a little bit of the AI wave, all three of those sectors will perform well in an environment where perhaps economic growth slows a little bit, the bubble deflates a little bit. And I think there's a lot of logic to being exposed there as well.
So do you just hold a lot of gold?
We do hold gold in the portfolio, actually,
go.
Lisa. I'm funny you mentioned that. I don't know about how much, but I do think gold will serve as a steady hand during a period of uncertainty for quite some time, and probably deserves an allocation within portfolios for sure.
Mike Contopoulos, thank you so much for being here
Thank
with
you.
us. Mike Contopoulos of RB Advisors here, and look out for his Financial Times, I believe, op-ed on this issue that will be coming out shortly. Honestly, a real varied view as we look out to the year ahead in 2026.
2026 is going to be really complicated, and the Fed's going to have to make some really difficult decisions while we have basically tectonic shifts when it comes to the technology space and what people are saying a next industrial revolution, and people are taking out a ton of debt to finance it.
Yeah, and is that sort of the tipping point to the next phase? Coming up tomorrow, Aaron Kennan of Clear Harbor Asset Management, Lisa Shallett of Morgan Stanley, Binky Chadha of Deutsche Bank, and Tom Becker of BlackRock. This was Bloomberg Surveillance. Good morning.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
In such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks happening everywhere, and that's what AI is most helpful in improving.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Good Wednesday morning. Slight gains again. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. You are watching Bloomberg Open Interest.
Coming up, Macy's delivers a beat, but profit forecast, the profit forecast it gave underwhelms, sending shares falling.
Marvel surges on a bullish AI chip order, adding fresh fuel to a big week of AI earnings.
And the White House is ready to tear up President Biden's fuel economy standards. Will tell you what it means for car makers and consumers.
First, I want to show you what Marvell is doing, the AI chip maker that I mentioned, because it's another company that has earnings and basically is like, yay, everything is great because AI is great for them. It is their technology used for AI data centers. They say that the revenue for that is expected to jump 25 next year. So shares are up 9% in the pre-market. It also announced an acquisition of Celestial AI for more than $3 billion. That does like something with photons instead of electricity. I'm sure Caroline Hyde can describe it to my puny little human brain.
She definitely knows. I want to check out some some retail movers here. Dollar Tree, I guess it's kind of a deal, raised its outlook as it expects to see more spending from stretched shoppers looking for discounts. Macy's shares are sharply lower despite earnings beating estimates in the trailing quarter and lifting its outlook for the future as the CEO says it is well positioned for the holiday season.
Let's get more on Macy's, Matt. We are joined by Bloomberg host Romaine Bostick, who spoke with the retailer CEO Tony Spring earlier this morning. Romaine, thanks for joining.
Yeah, Danny. Did you do any shopping?
I did, but not at Macy's. I got to be honest.
Yeah. Well, I mean, the interesting thing, I did ask him a lot about what foot traffic was. Was there an actual increase? He did say he was happy with foot traffic, but he also seemed to imply here that a lot of the revenue gains that they've seen in this most recent quarter was people buying more. So basically, bigger tickets, bigger receipts, if you will, rather than actually more people going in there. But this is also a company that is, he's doing the conference call now, and he's been asked a lot about how strong this holiday season is going to be. And one of the reasons why you see the shares down a little bit here is the comp sales growth, while certainly an improvement over previous years, is still kind of lagging what you would have seen at a company like Macy's in holiday seasons of past. Remember, this is going to be, or supposed to be, their best quarter of the year, their fiscal fourth quarter.
Going to a physical store seems like quaint idea, but a strange thing to do, right? I mean, most of us buy all of our stuff online. How are they doing with that?
Well, I mean, first of all, the average age of a Macy's shopper is over 40. It's like, late 40s, I think is the average age. So that gives you a sense of one of the challenge that they're going. I know, Matt, and you're still in your 30s. But it gets to this idea here that there is still a cohort of boomers out there that do want that physical experience. Macy's obviously is now trying to make sure that their younger generation of Gen Z and beyond, that they are actually engaged in the physical stores and trying to make them more experiential. That's the long-term story. you know, and that's what he's doing. He's basically taking 350 Macy's stores, basically going to revamp all of these stores to make them more experiential. He's only done about 125, 150 so far. They're going to get to the rest over the next year and a half, 2 years.
It feels like we're in this bizarre world where the retailers who do well, it's because you've got like Sydney Sweeney to do your campaign, or Cat's Eye, or some sort of celebrity.
Yeah.
I mean, Macy's isn't doing that, but it feels like we're in this weird era of collabs and influence.
Well, it's interesting. And you bring up, you know, obviously what we're seeing with American Eagle. Their shares on fire. I think when they open, they're going to be having their best day in a couple of months. But it gets to this idea, that's a singular brand, right? And Macy's is a multi-brand retailer in an era where a lot of us go directly to the brands themselves. We connect with those brands either because, you know, Matt salivates over Sydney Sweeney in that ad or something else. And the question is, how does Macy's sort of, you know, get that fire? They've had a lot of collabs with Wicked and other things like that do get people into the stores, but it's a much bigger challenge, Danny.
Material Girl.
Material Girl.
Apparently the fashion brand of Madonna sells exclusively at Macy's.
Ooh. Yeah, and they've been doing a lot more exclusive
Fingerless
deals.
gloves or that
their
kind of
own,
thing?
Their own private brands as well, trying to get people in there as well too, Matt.
Ryan Seacrest is working with them. Are there any of these celebrities hitting home with you?
I would never be like, I love Ryan Seacrest's look and I want to wear his clothes.
All right, Romaine, thanks very much. Looking forward to the close. Romaine Bostic, of course, anchors the close with Katie Greifeld at 3 o'clock every day. Number of AI movers this morning, as usual. Marvell climbing as data center revenue jumped more than 25%. Okta's results and forecast were seen as underwhelming. As a result, that stock is down, and CrowdStrike is wavering despite raising guidance thanks to momentum for its AI products. You can see those shares down in the pre-market as well. Joining us now is Bloomberg Tech co-host Caroline Hyde to talk about, I guess Marvell is really the focus, right, because of the big gains that we're seeing there.
You salivating over this $80 billion company, Matt?
Oh, yeah.
Only 80 billion.
Sexy.
The thing with Marvell is that actually its stock's been really hammered this year. It has been worried about macroeconomic uncertainty. It has been under pressure. It's up by 15%. But today we might push it if we cling on to some of these gains, at least make some headway to erasing that loss on the year. Marvell makes chips for other people, like Amazon. Look, we just heard all about Trainium 3 and the ASICs, those custom chips that all these hyperscalers want. That's where the enthusiasm is coming more broadly for Marvell. The fact that they are going to start to be important in your servers, in your AI accelerators, in storage. And the CEO sounded really buoyant about this. Remember, they're also splashing their cash to the tune of up to maybe $5 billion for Celestial AI. This is a startup in California built in 2020. This is about the edgy area of photonics. It's about using lasers instead of electronic signals to make all your data move faster within a data center. Lasers. Who doesn't love lasers? And this is a purchase that initially is going to be $3.25 billion. Part of that cash, part of that stock. But if they hit some certain revenue targets, then they could get as much as $5 billion. That's a nice, tidy upside from the raise that they did back in March that valued it at just over $2 billion.
It's not a profitable company, Caroline, and it speaks to this narrative shift that keeps happening so quick in this AI era. I'm looking at an information story that just came out that's hammering Microsoft shares. They've lowered their AI sales quota because customers have complained that they can't actually measure how much they're saving from using AI. How difficult is it to ascertain just how much value we're putting behind these companies and whether or not that's justified or not?
Look, this is why the healthcare sector is outperforming since the bottom of the market and why the tech sector is lagging, because still we want to understand the bang for the buck, the productivity that you're going to get. We spoke with Michael Dell yesterday after his big $6.25 billion contribution from a philanthropic perspective. But I asked him about AI bubble. He's still really certain that at the moment the market is going to go higher, that we are going to see real productivity gains. But it's hard to measure. You've got to believe in these things. And also you've got to train and reskill your own workforce to be able to adopt the latest Copilot that's being measured. But suddenly we've heard from the hyperscalers that the demand is bigger than supply. Issue for Microsoft is it needs to build more data centers to be able to really maximize that Azure growth. Same as we're hearing from all of the other key players.
Yeah, it's been a problem that they've talked about, probably a good problem to have. Caroline, thank you so much. That's Bloomberg Tech's Caroline Hyde. All right, let's turn to this morning's data where U.S. companies shed payrolls in November by the most since early 2023, according to ADP data. Joining us now is Bloomberg economist Stuart Paul. And Stuart, the numbers look even worse if you look at small businesses and small companies, whereas companies with more than 500 employees added to it. So what's more important, the fact that the big are thriving and adding people, or the fact that if you are a small company, you're in some serious trouble right now?
When small businesses are struggling, it speaks to a lack of economic dynamism, a lack of dynamism broadly in the labor market. So I do index more on what's going on with some of these small businesses. Regionally, it was also very concentrated. The layoffs were mostly in the Rust Belt states, Michigan, Wisconsin, and so on. And when we look at the industries, it's interesting, a lot of layoffs in manufacturing, and then to just build on the AI story we were just hearing about, how difficult it is to identify some of the cost efficiencies that come from AI, but we are seeing layoffs in things like the information industry and in professional and business services. So it might be difficult for firms to measure some of these productivity and efficiency gains, but they are making hiring decisions seemingly on the basis of possible efficiency gains in the industries most exposed to AI.
So the fact that they're not hiring as much, or companies that are doing layoffs, doesn't have anything to do with restrictive rates, does it?
I don't think so. I think that a lot of these changes are structural changes.
Because you get where I'm going, right? Rate cuts aren't necessarily then going to help.
Yeah, I think that a lot of the layoffs and the slow hiring that we're seeing are an adjustment to bigger structural forces, things like AI and a reshuffling of the global commercial order as a consequence of newly implemented tariffs. We also saw import prices earlier this morning. They're old, it's September data, but it does look as though in that report China is passing along more of the cost of tariffs and bearing less of the incidence of tariffs. So there is this reshuffling that's going on, and I think that it is a consequence of big structural changes, and so I don't expect rate cuts to matter much, but U.S. households and firms have been insulated from the effects of monetary policy since the hiking cycle began. So I think that that's just where we are. These are big structural forces.
By the way, the other structural force, along with the changes in technology, is immigration, too. And that's something that rate cuts aren't going to impact either. So what's the logical conclusion to this? If you have Fed governors coming in, and by the way, it seems more and more likely each day passing that Trump is hinting that Kevin Hassett might be the next Fed chair. So very dovish Fed chair. What happens if you get cuts when they don't impact this labor market?
Well, I think that we're just going to end up having more liquidity circulating. We already see that banks are loosening requirements. They're lowering the requirements for extending credit. We see that credit card balances are being turned over relatively quickly and that charge-off rates are relatively low. We see household bankruptcies are also, the flow of household bankruptcies, relatively low. And when that's the case and we have this cutting cycle, it's just going to support growth. But when we look at the economic fundamentals, when we look at inflation, I expect that we're going to have inflation that's running relatively hot, in part because of tariffs. And we're just going to have this tenuous balance in the labor market because you have this structural shift that's taking place at a time when we have such low immigration. So you have this tenuous balance. It's just going to be sort of a low 4.5% unemployment rate, I think, throughout 2026.
All right, Stuart, great to get some intel from you, and we're going to talk to you later on in the program as well. I will say that kind of a deep tease, right? I'm not so much salivating over Sydney Sweeney.
Can we please stop talking about salivating?
As much as I am over the Swiss National Bank and their inflation problem, which is something that I want to talk to you about. Atkinson and Kehoe, does deflation really mean a slowdown in growth? Let's check on what's going on in futures right now. You can see that we're looking now at losses. Right at the top of the show, we started to see a turnover in some of these big hyperscalers. Microsoft shares
I think it's the Microsoft
down,
story.
NVIDIA shares down on the information report that Microsoft was going to, I guess, reduce its quota on AI software sales.
Yeah, because customers don't want newer products. They say they can't fully realize or at least measure the productivity gains they're getting, and they're pushing back on just how expensive it is. Do we again flip the AI narrative on its head and say, hey, maybe some of the productivity gains, the money that they're going to be bringing in isn't as much?
All right, so that's what's going on in markets right now. A little bit of a turnaround. Let's look at some of the other individual movers on our radar. Stellantis shares in the pre-market were gaining more than 5%, now only 2.5%, after being upgraded by UBS on that report that the White House is going to announce new fuel efficiency standards, lower fuel efficiency standards, so you can buy more of those big gas-guzzling V8s. American Eagle also raised its guidance as the CEO says the summer marketing spree paid off.
Yeah, let's not talk about this one anymore. Yeah. And Astera Labs rising as Amazon Web Services' new AI chip is seen as positive for the semiconductor manufacturing company. Coming up on the show, Airbus was forced to revise its aircraft delivery target for the year due to supply and worker shortages and a quality issue. Meanwhile, Boeing is seeing strong momentum. We're going to talk about that next. This is Bloomberg Open Interest.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. It's a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi, but Peru use fresh fish, make the called the ceviche, cooked with the lemon juice. You never use the soy sauce. First time I eat this, kind of the wow. So then after this one, my open eye more, my cooking style that change, combined to Japanese style and another country food, then make novel style.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get now to high interest. Look what's making headlines around the world. The Kremlin says Vladimir Putin held nearly 5 hours of useful talks with U.S. envoys Steve Witkoff and Jared Kushner, but the sides failed to agree on a Ukraine peace plan. Moscow says a future Putin-Trump meeting depends on progress. Meanwhile, Zelensky says real results are urgently needed. The SEC has hit pause on a wave of new ultra-leveraged ETFs, sending warning letters to major issuers like ProShares and Tidal. Regulators say some proposed products may exceed risk limits and must be revised or withdrawn. It's a rare pause in a boom of complex funds as the SEC questions whether these products accurately capture the volatility they're built to amplify. And Airbus is facing a rough week as it cuts its deliveries target and orders urgent checks on over 600 A320 jets after software and fuselage panel issues surface. The setbacks highlight lingering supply chain stress and contrast with Boeing's recent stock and finance momentum. Danny?
Let's get more on this. Bloomberg Global Aviation reporter Benedict Campbell joins us now. Benny, the issues that we've seen at Airbus over the past week, can you just describe the scale that they are? Because you're seeing this flip where Matt was pointing out Boeing does well, Airbus isn't. Are they on the same sort of scale of woes we saw at Boeing in years prior?
Well, probably not is a short answer. Boeing has really come through a very, very rough patch over a number of years. And what we've seen here at Airbus is a slightly unusual sort of breakout moment for them in the negative sense. So it all started late last week on Friday. They came out with this announcement saying that their software on the A320 aircraft needed upgrading. That happened surprisingly swiftly, I will say. That happened over the weekend. When I saw the first numbers, 6,000 aircraft that needed the upgrade, I think most people thought this would be something that would take them well into sort of the rest of the month, maybe even next year. And by the end of the weekend, it was all done. But then problem number 2 arose out of nowhere, which was these panels that cover the aircraft. They have some of them that show some discrepancies versus the specs that are required. So what they're doing now is checking them all. And that's a sort of arduous process that will take a while. And that's essentially why you got sort of the hit this morning where they said, we won't be able to make our delivery targets for the year we're going to be a smidge lower. The original target was for 820 aircraft, and now it's 790. They did keep their financial targets in place, and that might explain why the stock didn't fall off a cliff again. It had a really epic meltdown early in the week, but today it managed to sort of hold its gains.
You know, I always look at the 5-year performance of Airbus versus Boeing, and when you zoom out that far, Airbus is just crushing it in terms of the stock, right? It's well over doubled, and meanwhile, Boeing is in the red. I've also heard you, Benny, talking about the A320 as, I believe, the world's most flown commercial aircraft, right? Are they completely dominant?
That is correct. I mean, dominant is probably too big a word, but they have certainly come from nowhere. I mean, a while back, admittedly, in the late 80s. But, you know, Boeing back then was sort of the only game in town, and the A320 has really sort of taken that position away from Boeing. Obviously, they're still sort of neck and neck, shall we say. Boeing still wins a fair portion of the business. But these days, the A320 and its derivatives, so the 321 and the XLR and all those types of planes, that's really where the action is right now, and it's put Boeing under considerable pressure, and that will explain that chart that you just showed, and a big part of the Airbus story is built around the A320, which would explain again why people are somewhat nervous about anything going wrong with that plane. Airbus does say we've got a handle on this, we have it under control, we'd rather slow things down and take the hit on the deliveries and make sure that everything is safe. But again, this is a plane that people look at very, very closely just because it's such a big money spinner for Airbus.
Yeah, and we also saw just how many airlines had to cancel or delay their flights because of that. Benny, thank you so much. Bloomberg's Benedict Campbell. Coming up, Truist Keith Lerner says this bull market deserves the benefit of the doubt as fundamentals remain strong. He's going to join us next on Bloomberg Open Interest.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
S&P 500 is still hovering near an all-time high, but this time around, big tech is not leading the rebound. Concerns around AI valuations are sending traders to other areas of the market, with RBC's Lori Calvasina saying, quote, leadership is ready to rotate. Jitters on the AI trade, the Mag 7, and market concentration have run high in our meetings with institutional investors over the past few months. Joining us now is Truist CIO and Chief Market Strategist Keith Lerner, who also says, Keith, you've written in your most recent note, it is time to take a pause and assess where we are in the cycle. So almost kind of a similar bend to Lori Calvasina. Are we reassessing not just where we are on the overall level, but perhaps leadership for this market?
Yeah, well, first, Danny, always great to be with you and Matt. We just released actually this morning our 2026 outlook called the seventh inning stretch. And to your point, it's a good time to assess where we are. I think the main takeaway, the punchline is we've come a long way. We still think there's upside. And to your point specifically, kind of with this baseball theme, we are still sticking in our view with the power hitters, which is AI and tech. I think it's actually good that we have some questions about it, but we have to remember, you know, the tech trade off the lows was up 70%. That was almost more than double the S&P as a whole. So I think it makes sense that you're seeing some breathers, a little bit of rotation, but the earnings momentum is still the strongest within tech. Over the last 3 months, the forward 12-month estimates for the technology sector are up about 12%. That's about more than double what the S&P 500 is.
So you think these questions that we have just give investors a buying opportunity because we don't see retail running in and buying every dip, or is there another reason that you think it's good to be questioning this AI bull market?
Well, I think in some ways, Matt, by questioning it, having some of those rotations, it actually helps it from becoming a bubble, and you can kind of, eventually start to reclimb that wall of worry. I mean, I would say back at the end of October, tech got to about a 32 PE. That was the high of this cycle, and now you've come back down again as earnings have moved up. So I just think that, as you have more and more questions of a bubble, it keeps things in check as opposed to this kind of straight up move like we had in the late 90s where valuations went to a 50 PE and we saw euphoria. We're just not seeing that today, and often euphoria coincides with market tops. Today, it's more divided, which I actually think is ultimately a good sign because, not everyone's in all at once.
Keith, though, narrative shifts are happening thick and fast. Today, it's concern on this information report that Microsoft is going to lower their AI quota because companies don't know how much it's adding to productivity. Just what kind of volatility quickly here are we seeing because of the difficulty in understanding the promise of AI?
Yeah, well, I think in some ways, AI, the way the benefit will work is almost like a J curve. Like companies and employees need to understand how to use it effectively first, and then you get the productivity gains. But it doesn't happen overnight, and typically you might even see a little bit of a dip first beforehand. So maybe that's what you're seeing today. But I think, in our view, we're still somewhat in the early adoption phases of AI, and we think that has a decent runway to go.
All right, well, we've definitely seen a turnaround today in terms of futures, and the opening bell is up next. Keith, you're going to stick with us more from Keith Lerner on the other side of this break as we see the S&P 500 futures drop now 14 points or 0.2%. This is Bloomberg.
Estava sitiada.
Nisso eu começo, eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida. Eu temo,
que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Moments away from the start of trading after a shift in sentiment in the last hour. This is Bloomberg Open Interest. I'm Matt Miller. You can see we are now looking at a down day. S&P futures off. It's only 0.2%, but we were up about that much before 9 o'clock. The NASDAQ down, futures down about 0.4%. The reason is the information reported that Microsoft is going to lower its AI software sales quota as it's harder to prove profitability from that. Here on the New York Stock Exchange, you may recognize Jenny Johnson there from Franklin Templeton. She's ringing the opening bell with her Senior Vice President of Muni Bonds, the FTMU, FTNY. They have a suite of muni bond ETFs. I'm sure Paul Sweeney over in radio is fully invested in. And then you've got a private company ringing the bell on the NASDAQ market site, Deep Energy, together with Daniel Energy Partners. I believe it's a water company out of Texas, and that commodity is getting more and more precious, especially in those sand states.
I'm surprised a private company is ringing the bell.
Maybe they have, they have bond issuance.
Got it,
that I saw on the Bloomberg terminal.
Okay, noted. Anyway, yeah. Matt, I am looking at Macy's this morning because shares are down pretty sharply despite the fact they raised guidance for the rest of the fiscal year, saying that, yeah, consumers are still strong despite some of the economic concerns. The issue is if that is so good, then why would your fourth quarter be in line on the high end of the range and missing on the low end of the range if you have really good holiday sales? So that in itself is maybe raising some alarm bells, or ringing alarm bells rather. So shares, they were down 4%, now down just 0.7%, Matt.
All right, so that's a look at retail right now. And then, of course, as Danny mentioned right before the break, Microsoft is down after a report that it is lowering its AI software sales quotas. Corporate customers have complained that it's hard to measure the savings from using AI technology. According to the information, that news sent the broader market lower, with the S&P 500 and the NASDAQ turning negative. You can also see Microsoft shares themselves down about 2.2%. I believe NVIDIA was down in the pre-market. Let's take a look at what NVIDIA is doing in the cash trade. It is also off about 0.8%. Let's bring back in Truist CIO and Chief Market Strategist Keith Lerner. Keith, you were just talking about Danny, with Danny about this, and we don't see huge moves in companies that have come so far so fast, certainly NVIDIA, but there is kind of a shift in leadership even within the Mag 7. What's your take on the TPU versus GPU discussion?
Well, I think, one, there's just a huge amount of demand in this space still, and there's going to be more competition. NVIDIA's had this big lead, and, other companies like Google are coming in, and, it's still obvious that I think NVIDIA has the lead, but they have these huge gross margins, and it makes sense that, these other companies with big balance sheets are going to try to come after that as a whole. So I think what you're also seeing as a result of that is you're just seeing, within tech, you're seeing this kind of big dispersion. So it's not monolithic trade anymore. And that's where, fundamental work does help. If you look at the Mag 7 this year, what's interesting, only 2 of the 7 stocks of the Mag 7 are actually outperforming in the S&P, but the ones that are outperforming this year are outperforming by a big margin, which is lifting the overall market. And I think that's what you have to keep in mind. Like, not everything's going to work, but the ones that work, if you can have big gains, it's almost like venture capital that they can often offset some of the losers.
Well, Keith, this feels like a key way that it's different from the dot-com bubble, because back then it was kind of, I guess, straightforward or easy to understand what the internet was, what a website was, maybe the promise going forward. But this time it's different. To Matt's point, it's trying to analyze what TPUs versus a GPU, what AI data centers are being built up and who has leases and who doesn't, and what the technology means and how you get revenue returns on it. It feels deeply, deeply complicated. If you want to have alpha and do better than just beat the overall market, do you all of a sudden need to have a knowledge base that is that of an engineer? How do you gain knowledge and gain edge when it is kind of confusing to the everyday person?
Yeah, no, it's a good point. And that's why we also have on our team, specialists in the technology sector to help us guide us through. A lot of us as strategists, we're more generalists, so we have to rely more on the analysts that are doing kind of, the deep work on that side. But the other thing, if I try to keep it simple too, if I kind of, zoom back from a macro picture, what we focus on, especially with tech at large, is their earning trends. And not just the earning trends on an absolute basis, but more on a relative basis. When we look back, let's say from 2022 to the current, tech underperformed in 2022, and that was a period where the earnings momentum was actually moving lower relative to the overall market. Since that period, over the last 3 years, tech earnings have been moving up at an accelerating rate relative to the overall market. That's gone hand in hand with outperformance. So right now, partly why we're still positive is that earnings momentum is continuing. I mentioned earlier, again, over the last 3 months, we're seeing the forward earning estimates for tech, even with all this uncertainty, up about 12%. The S&P is up around 5%. So what gets us more negative on the sector is if we start to see that earnings momentum really slow down in a meaningful way. Obviously, the news from Microsoft today is not great, but I think we have to be careful that we don't over-extrapolate each headline either. And at this point, in this kind of macro backdrop, which still has a lot of uncertainty, as we saw with the ADP report, I would say it's hard-pressed to find a sector that has stronger fundamentals.
You mentioned the ADP report, and that brings us to the consumer and to retail. If the labor market is getting weaker, do you worry about those earnings margins? Do you worry about the U.S. consumer? And could those things break before, tech dominance?
Yeah, as a portfolio manager, I'm also a risk manager, and I always have things to worry about. I would say that our base case is this. Our base case is we actually see a modest uptick next year, and that's really premised on 4 main factors. One, there should be some positive tax incentives that is positive for consumers and businesses that hit in the first quarter from the tax bill. We should have moderately lower interest rates, so that's not a game changer, but again, on the margin as well. We also should have, AI spending that continues. And then the other point I would bring up is employment matters as far as the monthly job numbers, but what's probably more important is the 160 million people that are working that they have wage growth above inflation, which is the case today. So we expect that likely continues, and this kind of muddle through continues, but with a little bit of an uptick, and we should have a little bit more clarity even on the tariffs as we move into next year. So again, not a robust environment, but we're looking for actually a slight uptick as we move into next year.
Is that uptick, Keith, enough to lift up consumer sectors? If I look at how the sectors have done year to date, real estate's the worst, but coming in second and third to worst are consumer staples and consumer discretionary. What kind of turn in the economy, or at least not downturn in the economy, do you need to see the more consumer-oriented sectors do well?
Yeah. So it's a great question, and going back to Matt's point, part of the overall market is still being driven by tech. We know that's the biggest allocation, and that's where the margins are really large. So I think for these other areas of the market to actually really pick up, we actually see this broadening trade, especially given how stretched these areas are to the downside. You do need to see that pick up. At the same time, you need to see the Fed cut rates and inflation to moderate. So you really need that kind of Goldilocks overall environment. In our work, instead of trying to guess that, hey, this is going to happen by the first quarter, we'll be looking for those relative price trends to change and the earnings momentum to shift. It hasn't happened yet. Some of these areas are, as I mentioned, like 2 standard deviation underperformance, so they are stretched. But we're just going to be patient to actually see it show up in our work and hopefully participate in the meat of the move, as opposed to trying to call the exact low of that shift.
Keith, we're seeing a bunch of headlines from Scott Bessent right now speaking about his plan, a plan for Fed governors, Fed presidents. I should say he wants them to live in their district for 3 years. And we've heard so much talk about, the potential for the Trump administration to throw out all of the regional Fed presidents and install its own suite of yes men and women. Is it too far divorced from the bottoms-up analyst of stocks or the top-down look at earnings to worry about the administration taking over the Fed and throwing away independence?
Well, what the Fed does do matters, and we see that because if we think about the previous peak for this market back in October, it happened on the same day Powell pushed back on a rate cut in December. So if we do have a situation, where term premiums start moving up, there's more, the inflation expectations start to move up because of, some uncertainty around the Fed and the organization moving forward. I mean, that is certainly, a risk to the market. So is that enough to offset, earnings? Probably to a certain extent, because what will happen in that environment is, you're likely to see valuations compress or not expand at minimum as well. So as we look into next year, I mean, it's a two-way risk, right? That could be one side of it, or the other side of it is you have more of a, some shifts on the margin where you see some more dovish folks come into the Fed and the market starts to price in lower interest rates, and that actually is a positive. But to your point, Matt, the uncertainty around Fed independence is certainly a risk as we look into next year.
Hey, Keith, thank you so much for joining us. Please come to set next time in New York, also because you owe Matt and me a pickleball game. That's truest. Keith Lerner, great to get your thoughts and your new outlook as we head into the new year. All right, a check on the stock market. We're actually not doing as bad as we were right at the open. We're down by just 0.1%, maybe what Keith was talking about, more dovish Fed presidents. We don't care about independence, we care about cuts, apparently. Looking at the gainers, Apple and Tesla doing well. Tesla doing well. Robotics companies in general are doing well, with reports that we could be looking at an executive order from the White House on robotics to promote them, and Tesla would be a beneficiary of that. Microsoft, the biggest loser, no surprise, after that information report story we've been talking about, that Microsoft is not, or at least lowering its quota for AI customers because people are pushing back just how productive, just how much money are they saving it from. Shares are down 2.6%. Looking at the sectors this morning, it's no surprise that tech is doing the worst. That is all Microsoft, down 1%. That's enough, despite the fact most of the other sectors are in the green, Matt. That is enough to drag the overall index down, but not by a whole lot at this point, just about 0.1%.
All right, coming up, we're going to talk about cars. Stellantis is seeing its shares gain after an upgrade from UBS as the White House gets ready to ease fuel economy regulations. We'll take a look at how that affects this industry and the consumer next. This is Bloomberg Open Interest.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
Not a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Let's look at the top calls this morning, the analyst action we're following. First up, Wells Fargo has initiated Oracle at overweight, saying it's become a major AI winner thanks to big customers like OpenAI and a rapidly growing backlog of AI projects. The firm expects Oracle Cloud Infrastructure to triple its market share by 2029 and close the gap or continue to with Amazon and Microsoft. Shares were higher in the pre-market, but with that Microsoft information story that has flipped, they're now slightly weaker. Next up, Arete says that autonomous vehicles will ultimately help major ride-hailing platforms rather than threaten them. The firm upgrades both Uber and Lyft on the view that most AV makers can't produce affordable self-driving cars at scale, keeping AV networks uncompetitive. The firm sees Uber as the clear leader thanks to its higher income riders and Uber One momentum. Finally, UBS, they've upgraded Stellantis to a buy. They're arguing that the automaker is positioned for North America turnaround next year. They say it's driven by recovering market share, a better product mix, under looser U.S. emission rules, and ongoing cost cuts. Matt?
Danny, stop trying to make AV a thing.
I know, I had a really hard time not saying EV.
Yeah, I don't think, that's not the kind of phrase you can just
Okay, no, but autonomous vehicles is like a mouthful. So if I could theoretically say AVs without tripping over it, it would be better, but apparently I can't.
All right, let's focus in on that story and really on the CAFE standard story. I'm most interested in that. Let's go out to Detroit right now and talk to the bureau chief there, David Welch, because David, it's not just Stellantis that would benefit from looser regulations as far as emissions are concerned. Ford and GM, I believe, already are reaping the rewards of this policy or lack thereof. I've read stories from you and Keith Naughton on how much money they're saving. What do we know that's really going to happen in terms of lower emissions regulations?
Trump administration hasn't put out specifics, but what they've talked about are wiping away the fines for anyone who misses their clean air and fuel economy targets. and what that would effectively do is, and by the way, they would also reduce the standards you have to meet. So somebody like Stellantis, they're uniquely impacted by these standards because they don't really sell many small vehicles that can offset their gas guzzlers. They don't sell a lot of EVs and hybrids that would generate credits for them. They were really in the worst position on this. But really, all of the companies, their stocks were under, let's call it the pressure of what one analyst at Morgan Stanley called the melting ice cube, ice for internal combustion engine. The thesis was that those businesses were just going to slowly melt away, and electric vehicle makers were going to be the ascendant purveyors of transportation. They were going to take all the market share. And And as the companies like GM, Ford, and Stellantis moved into electric vehicles, they would lose money on those, but their cash cows, SUVs and pickup trucks, would be melting away. Now, not only do we see that people aren't buying EVs that fast and that the Trump administration has taken away the incentives to do so, but the penalty for selling gas guzzlers is also, at a minimum, going to be really reduced. So these companies can continue to print cash with pickup trucks, large SUVs, luxury cars, all that stuff for the foreseeable future, as long as the Trump administration's policies stay in place. That's lifted all kinds of pressure off the stocks. That's why GM is trading above 70. That's why Stellantis is up today. And so it's really changed how investors look at the sector.
So no one expects prices to be cut for, you know, a new Hemi or Godzilla or GM 6.2-liter V8 stalwart, but maybe they won't raise prices as much over time if they don't have to pay these penalties. And maybe we have more big V8 options. Is that going to be the result?
Yeah, I think so, because the automakers aren't going to basically start removing fuel-efficient or clean air hardware from their vehicles. Because if a Democrat comes in office in 2028, you're going to see rules tighten up again. What they'll do is they'll just pull back production on electric vehicles, and they'll let loose production on their thirstiest and most profitable vehicles, because they're not worried about having to cap those sales because of paying any kind of penalties. And that is one thing that the Trump administration has talked about, is just wiping away any penalties that you have. You know, in the case of General Motors, look, they've said that the Chevy Bolt, their smallest EV, they're only going to make that for a year, and then they're going to look at a next generation Bolt at some point. Part of the business case for that was generating electric vehicle credits to offset the pickup trucks and SUVs that they sell. They now feel they don't need to do that based on their read in Washington, and I think you're going to see that across the industry, where anyone discounting their EVs just to generate credits, they're not going to be doing that.
It still does have the feeling of a White House that is squarely focused on affordability, whether or not it has that impact or not. David, thank you so much for joining us. That's Bloomberg's David Welch in Detroit. Coming up, shares of Eric Trump's American Bitcoin get rocked in a 26-minute plunge yesterday. That adds to the pain for the Trump family's crypto ventures. Details coming up next. This is Bloomberg Open Interest.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is Bloomberg Open Interest. Quick check on what's going on in stocks. We do see now red arrows after futures were higher until about 9 o'clock when an information story came out and said that Microsoft was going to reduce its AI software sales quotas because companies have been complaining that it's difficult to measure profitability and productivity from those products. As a result, you see these Mag 7 stocks down. I mean, NVIDIA had already turned down, and Microsoft is now down about 3%. We had sales, actually earnings that beat at Macy's and an outlook that was lifted, but investors expected more, and the stock is down 2%. Meanwhile, at Dollar Tree, you see the gains only 0.7%, but the consumer is increasingly shifting down to those kind of discounts. Bitcoin right now up more than 1%, so back to over 90,000 at 92.75. And then ABC, can I call it that? American Bitcoin Corporation right now. A big rebound, Danny, 14%, but that's after a huge plunge.
For what it's worth, I think you would say ABTC. That's its ticker. If we're just splitting hairs. Let's talk about that huge plunge, though. It has Eric Trump, of course, among its top leadership. So yesterday, we saw it plunge 20%, 30%, and then 50% in just a matter of minutes yesterday. All of that adds to the woes of the Trump family's crypto project. Bloomberg's Emily Nicole is here to explain. Emily, I was going to say, I feel like I saw a mat in the corner of my eye. Emily, what went wrong? Why did this thing plunge so much yesterday?
Well, it turns out that yesterday's stock was more of a reason because of the product itself. So for American Bitcoin, it was a company that is born out of a merger that happened with another crypto miner called Griffin Digital Mining earlier this year. So when that happened, there was obviously some stock that came with it that was locked up. Supposedly yesterday was the first day that was all released available for trading, and that is what the company says anyway caused the massive downturn.
So this drop, and to be clear, we're seeing a rebound today, and it's also still higher than it was at the start of the year, but it's become a symbol of the crypto market wipeout and also the Trump family problems with this massive empire that they've built on the coattails of, Eric Trump's father now is in the White House. How much money has the Trump family made on these developments?
I mean, I can't tell you off the top of my head. I know we were reporting somewhere between 500 million to $1 billion earlier this year. It's definitely changed over the course of that. It also kind of depends on what you would consider, made, because some of this is just paper wealth, right? Like if we think about the tokens, for example, that the Trump family have launched this year, we have Liberty Finance with their token. We have 2 meme coins from Trump and Melania themselves. Both of those are kind of very much struggling now with the broader crypto market. Liberty Finance is down about 50% from its peak when it launched in September, whereas the meme coins are down well over 90% from their peaks back at the time of Trump's inauguration. And so, if we think about whether or not they'd be able to sell any of these things, that kind of dictates how much they might have made. But in general, it probably isn't looking too good right now compared to what they might have had when crypto was up.
Right. Of course, the idea, though, is that you put these tokens out there with a huge stake, and then when they reach their peak, you sell quickly while everyone else gets on board, right? And then you've made the money, and the losses are for the suckers. Emily, thanks so much for joining us. Emily Nicole covers crypto for us out of London. Coming up in the next hour, Sarah Hunt is positive about the stock market going into 2026, but warns of the kind of volatility that we happen to be seeing this morning. So she's the perfect guest. Plus, Motorola Solutions CEO Greg Brown talks about his deal-making spree, the empire that he has built, the massive run-up in the stock, although it has underperformed in recent months. And Ford Philanthropy President Mary Culler joins us to talk about a $100 million milestone. This is Bloomberg.
such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Next up for the Trump administration's immigration crackdown, New Orleans. The Department of Homeland Security announced this morning Operation Catahoula Crunch is underway. CBS's Katie Weiss is in New Orleans.
Well, I saw a few federal agents throughout the city's popular tourist district called the French Quarter and along Canal Street, which is normally a very bustling tourist street with lots of shops and restaurants. The federal agents appeared to be kind of getting into position. They didn't appear to be making any arrests, at least from what I could tell.
The crackdown comes hours after the administration paused citizenship requests for hundreds of thousands of people from 19 different countries. Correspondent Camilo Montoya Galvez.
The guidance that we obtained shows that U.S. Citizenship and Immigration Services has ordered a complete and categorical stop to all legal immigration processing for cases filed by nationals of 19 countries.
Marissa Montez heads Loyola Law School's Immigrant Justice Clinic.
I just wish the public remembers that this is impacting not only individuals, but families and people who really make up our community and societies locally.
A Democratic senator is demanding the Trump administration give bonuses to all air traffic controllers who worked during the shutdown.
Transportation Secretary Sean Duffy announced last month the $10,000 bonuses would only go to the 776 controllers and technicians who didn't miss a shift during the shutdown.
They're patriots. We are grateful to them for the work that they've done.
But in a letter to Duffy first obtained by CBS News, Illinois Senator Tammy Duckworth says excluding 96% of the controllers who also worked without pay, but missed some shifts due to illness or childcare issues is an insult at a time when the government should be doing all it can to retain air traffic controllers. Michael Wallace, CBS News.
New Englanders are digging out after their first major storm of the season.
Driving around in the snow has been a little scary, a little slick out there. I would say that snow is a little heavier than I thought.
Jenna Chapelis in Nashua, New Hampshire, which got almost 5 inches. Next, for the Northeast and Midwest, wind chills 20 to 25 degrees below zero. The White House is pushing back after an admonishment from a pop star. A day after Sabrina Carpenter warned the Trump administration to stop using her hit Juno in X-Post showing ICE agents arresting Latinos, the White House is using her man-child lyrics to respond. caption, anyone who would defend these sick monsters must be stupid, or is it slow? No word from Carpenter on whether she'll pursue legal action. This is CBS News. A tennis great insists she's not making a professional comeback.
In 2022, it was a tearful goodbye for Serena Williams.
Everyone that's here that's been on
Her name has now shown up on the registry for the sports drug testing body. First step for someone coming out of retirement.
GLP-1s helped me lose 31 pounds.
Williams has been most recently seen in TV ads. She says on social media, quote, OMG, y'all, I'm not coming back. This wildfire is crazy, but it's not clear why she would possibly act to submit to random drug testing. Steve Kathan, CBS News.
A record year continues for a Puerto Rican reggaeton star. For the fourth time, Bad Bunny is Spotify's top artist in the world. It marks his return to #1 after he was bested by Taylor Swift in 2023 and 2024. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube as well, so check us out there. Coming up, we're going to get the latest. We get some ISM data coming in on the services side. We'll break that down. We're also going to talk about these markets here. Margie Patel is going to join us, Senior Portfolio Manager at Allspring Global Investments. Be joining us. Lily Meyer, a Bloomberg retail reporter on the Dollar Tree, came out with some earnings here today. Mary Ross Gilbert, Bloomberg Intelligence Senior Equity Analyst covering retail. She's going to join us on the Macy's stuff. Scarlett Fu is out today, but not to worry. Norma Linda sitting in for Scarlett for the next 2 hours. Thank you, Nora, for coming in here and chatting with us for the next couple of hours. Again, we had some ISM data came out here. Let's get right to that because, hey, we've got some data coming out. Well, the market likes that. ISM Services Index, 52.6. Consensus was for 52, so a little bit better there. Last month it was 52.4, so a little bit of improvement there. Let's break it down with Steve Miller, chair of the ISM Services PMI. Steve, thanks for joining us here. What do you make of the data today?
Good morning, Paul and Nora. It's great to be back. Really good news. So we're seeing a continued trend of improvement since May in the overall index. A couple things that stuck out to me this month. We saw 3 of the sub-indexes, the business activity, new orders, and supplier deliveries, both in expansion territory, as well as also being higher than their 12-month averages. And then on the prices paid side, we saw a nice drop month over month. Although we've had 12 months above 60, we're actually below the 12-month average in that reading as well.
How are you thinking about this more broadly in terms of the context of the economy? I mean, the potential impact on GDP growth?
So the 2 pieces there. We've seen this last 12 months is a very low average in our overall PMI, showing that continued slowdown in growth overall. But the last few months, we've seen good improvements. Tariffs and some of the impacts for the shutdown in the aviation industry certainly looks like they were impacting deliveries this month. But it could be, I mean, the numbers look today like we're seeing an ongoing trend of improvement from our lows in the summer where there was so much uncertainty around tariffs. It looks like a really good sign overall for GDP growth.
New services orders 52.9, last month 56.2. Do we take anything away from that?
So I didn't take anything too strong other than we're seeing continued expansion, which is a positive sign. When we look at backlog of orders, although it's still in contraction, we have seen some improvement in that number as well. So that's a good sign for stability and overall improvement and continued growth.
All right, Steve, thank you so much for joining us. Appreciate it. Steve Miller, chairman of the Institute for Supply Management, zooming in from Aledo, Texas. Why Aledo, Texas? It is the home of the TV show Landman. Set in
Your
Aledo,
favorite
Texas.
show at this point, Paul.
I tied it in there. See how I did that? All right, let's go to John Tucker right here. Get a Bloomberg Business Flash. John, what do you got for us?
All right, Billy Bob. This flash brought to you by IBKR. Will the U.S. economy enter a recession by the end of Q4 2025? At IBKR Forecast Trader, the yes was recently at 6%. Start predicting today at ibkr.com/forecast. Last trading day for this contract, March 26, 2026. Let me start off with Microsoft, among the most actively and also one of the worst performing stocks right now in the S&P 500. Weighing on the broader market as well, the information reported the company lowered expectations for how quickly they can get customers to spend money on newer AI products. So that'll do it. On the retail front, Macy's lower its profit forecast disappointing. Delta expects to take a $200 million profit hit from the government shutdown, but they also say demand remains healthy. So Delta shares, they were up almost 3%. Meantime, like a lot of investors, Lori Heinel at State Street Global focused on next week's Fed meeting.
We do think that the Fed should cut again here in December, and we think that they will. And we actually think that 2026 is going to see a few more cuts. And you have to look at this in the context of a sort of post-COVID recovery and then a slowing growth environment generally. We do think that those additional cuts are going to be necessary to propel the economy forward.
Right now, the S&P 500, down 2. The NASDAQ down 58. The Dow's up 105 points. I guess you saw this one coming. Automakers getting into the insurance business. Oh. So they have lots of data on how vehicles are driven. The car companies started creating their own insurance products. Tesla, for example, offering its own insurance in states like California. General Motors actually leverages information taken in through its OnStar service to offer data-driven pricing. I feel like it's kind of like spying on you. Do they have like
big data? It's all about big data.
Does Vespa collect any data on you?
Oh, I don't know.
Hopefully
I hope not. I hope not.
The way he drives?
Sure.
We're looking out for you, Paul.
Shore like a madman.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Norton Paul.
50 cc's of raw power on the Jersey Shore. It's actually, I put the Vespa to bed for the winter.
Did you?
So it's kind of...
You don't want to be riding that like sub-zero
Proud of
temperatures.
you.
So that's how I rolled there. All right, let's take a look at how some of the stocks on the move today. I'm Paul Sweeney alongside Norma Linda. We're joined by Bailey Lipschultz. Bailey, what do you got for us today?
Yeah, I want to start with Marvell Technology, ticker MRVL, right now up more than 7%, trading at the highest level, guys, since late February. This comes after some pretty strong guidance from the company CEO, kind of laying to bed some of the investor concerns about AI and AI consumption. They also announced plans to acquire startup Celestial AI for about $3.25 billion, looking through some of the analyst reaction, basically saying at the end of the day, the management team was very confident, not only for next year, but also looking beyond 2028, looking at that Celestial AI deal, according to Jeffrey, saying that helps provide a CPO story. Jury's still out, but basically, if they aren't giving revenue ramping from that deal until Q4 of 2028 fiscal year, has some time to work.
Seeing shares of Marvell down about 10% so far this year. You're also got your eyes on GitLab.
Yeah, GitLab, ticker GTLB. Talk about being down right now, down more than 16%.
Yikes.
Stocks trading at the lowest level since June 2023 on a trailing 12-month average, down about 43%. Today's weakness comes after earnings. Really not a bad report, all things considered, but when you look under the surface and kind of calling out some of the reaction from Bloomberg Intelligence's Sunil Raggopal, saying that basically concerns around AI headwinds for the company, for its seat-based revenue models, continuing to show up. Overall, consumer growth below consensus, reading through some of the trading notes that I get in the morning, kind of not much going on. In this market, you really want to see growth. You want to see kind of an ability to show that not only are you benefiting from AI at a minimum, that you're not potentially at risk of AI. GitLab not showing up in either regard.
Okay, I had no idea what GitLab does. Thankfully, Bloomberg has the DES function description. They're an application software company. So trying to get the AI wave there.
Yeah.
Okay.
Yeah.
What else we got? We got another one for us, microchip.
We'll cap off with microchip technology, semiconductor manufacturer. I'll get that off the top. Ticker MCHP, a $33.5 billion company right now. It's trading up almost 10%. Best day since mid-August. This came, again, we're still in the thick of tech earnings season. So the company beat expectations on the top and bottom line. Again, maybe getting a bit of a benefit from those Marvell numbers. But when you look at the analyst reactions, basically saying that strong booking showing up, management talking up its backlog, it does seem like things are going quite well, keeping in mind that the company did pre-announce booking strength back a little while ago. So really looking at some of the management commentary on the call does seem optimistic. Again, ticker MCHP on microchip up more than 8%.
Hey, talk to us about the new issue market. Where are we? Because we had a flurry right after Labor Day. And are we still seeing stuff, or are they kind of shut down for the season?
Well, we reported yesterday that Medline, which could raise $5 billion, would be the biggest deal of the year, expected to start that formal marketing process early next week. That's a Carlyle Blackstone H&F asset in the healthcare space. Going to be a big one. So that'll likely make some bankers' years. In an odd deal. You really don't see these deals at the end of the tail end of the year.
And a lot of action we've really been seeing in the healthcare space more broadly, so...
Yeah, it kind of, when you talk to investors and bankers, they're hoping that this can kind of open up private equity. There still is not the demand that we're seeing for biotech in particular, which is such a big deal for the new issue market, but Medline will be a good test.
Yeah, and that's, if it's owned by these big private equity companies, they've had an issue. Like, this is how private equity was first explained to me when I was a kid. It's easy to raise the money. It's really easy to deploy the money. It's really hard to monetize your investments. That's where the real skill comes in. That's been a challenge for private equity.
It's been a challenge for private equity. It's been a challenge particularly in the U.S. I go back to the middle of this year, sale point, a Thoma Bravo asset, pushed on price according to investors. They priced above range. They're down 17%.
Wow.
NIQ Global down 28%. So when you look at the pre-E deals, performance, you're buying IPOs for alpha generation. You want to outperform on an average basis the entire year here in the U.S., only up 7%. So you're trailing the S&P 500. You've got private equity leverage, the sell down overhang. So Medline's going to be a good test of kind of deal execution, just given that it's been in the hopper for some time.
What are you hearing in terms of expectations for next year? People think in your head yet?
Hopium reigns eternal. I mean, bankers are candid, right? Expectations were high for 2025. It was a fine year. Expectations are that we should at least match where we're at in 2026. The big question is, do private equity sponsors show up? Are they willing to get these deals out of the door? And if that doesn't happen, is there enough tech companies that can kind of carry the baton? There's a lot of debate around who would go public and how to fill some of that volume.
Yeah, I would think, and I've been proven wrong, that if I'm private equity, I actually want to get these things out the door. I need to monetize these things because I need to go out, return that capital to my LP so I can raise more capital and get more management fees. But I know they're just loath to do a down round like this, to IPO something at below where they're carrying it.
Well, that's the tough part, right? So if you are in the market or want to be in the market for another fund, well, people want to see where your IRR is. If I take you public at a discount to where we bought it, I'm not really delivering on those measurables.
Yep, great stuff. All right, Bailey Lipschultz, thanks so much. We appreciate it. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. What are you looking at today, Nora?
I mean, there's the data that we're kind of seeing right now, but it seems like the market's kind of saying, meh. We've got the S&P 500 just about flat right now. Dow Jones Industrial Average up about 0.2%. NASDAQ not doing too much right now.
Yeah, exactly.
Just a tad lower.
Yeah, again, we had the ADP numbers came in a little bit weaker than expected.
Right.
You know, the ISM numbers still showing growth in the services side, 52.6 versus a consensus of 52. So that's pretty decent. So that kind of goes along with the narrative, which is the economy's generally performing quite well. The retail spending pretty decent there as we see some of the early shopping seasons. So we'll keep an eye on all of that. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. While the overall S&P 500 right now unchanged, look under the hood shows 9 of the 11 major industry groups in the index, they are higher right now. And energy is in the lead. This as the price of crude oil climbs about 1%. Worst performing group, information technology, and that is home to Microsoft. Microsoft shares right now, they are down 2.5%. The information reported Microsoft lowered expectations for getting business customers to spend money on artificial intelligence products. Overall, the S&P 500, again, it's unchanged, 68.24 on the index. The Dow Jones Industrial Average, that's up 102 points right now. The NASDAQ 100 down 88 points. And let me give you crude oil, Brent, the international benchmark, up about 0.9%. NYMEX crude up over 1% right now at 59.25 a barrel. The 10-year yield 2 basis points lower, 4.06, and the 2-year right now 2 basis points lower. That is at 3.48. And then you have Macy's shares right now. They've actually turned higher. They had the profit forecast for the current quarter did disappoint investors. They also had a solid lead up to the holiday shopping season. Do they still have the wooden escalator at the Macy's in Herald Square?
They must have.
Have you been there?
I missed that one. Wooden?
Oh, yeah.
Oh, you don't remember that? I was going to say as a kid.
No, I was back in
When
Virginia.
I walk to Penn Station today, I'll walk in and take a look for you.
Please report back to us tomorrow.
Survey the land.
And we check the markets for you and other stuff right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Yeah, I was always fascinated by that as a kid. Like,
well, we've got the circular escalator here at the Bloomberg
which
headquarters.
We're the cool guys.
The only one in the world?
Yes, something like that. It's
Special.
very cool. And they keep
But
it
it's
in good
not
shape.
wooden.
No, but it's very cool, though, by the way.
But it
All right,
curves.
it works. JT, thank you so much. We appreciate that. We have Norma Linda sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube as well, so check us out there. S&P 500 year-to-date, folks, pretty darn solid, up 15%. Can't beat that. S&P up 21%, I'd say. Fixed income market, you're getting a high single-digit total returns across most of fixed income, so solid 2025. All right, now we flip the page, 2026. Now what do we do? Margie Patel, maybe she has some thoughts here. She's the Senior Portfolio Manager, Allspring Global Investment. She's up there in Boston here. Margie, how are you thinking about 2022 opportunities here in these markets?
Well, I think looking out to next year, right now we're in a little bit of a lull in the fourth quarter. It looks as if economic activity has slowed down, but I think we'll see a pickup next year because of particularly the tax bill. There'll be lower withholding, there'll be higher refunds, and also the favorable treatment of capital expenditures. So I think we'll see a little acceleration next year, pretty much across the board.
In what sectors are you really keeping an eye on as we head into 2026? Of course, we've really seen big tech as the main driver for this year and most recent years.
Yeah, I think tech is still going to be one of the strongest growing sectors, but the issue is to be balanced. As we've seen over the last, say, 3-4 months, that the price earnings ratios of a lot of the tech names have eroded, so they haven't really performed in line with their earnings growth. So that's something to watch, but still a strong sector. I think industrials pretty much across the board, anything connected with data centers, with rebuilding the electrical grid and power plants, I think will do well. And I think energy may do better than people are expecting. It's a small sector, but it can be very volatile. And I think if economic activity picks up, we might see that sector also picking up.
Margie, really, really solid third quarter earnings, very solid second quarter earnings. Do we have an earnings outlook that is good enough to support this market?
Well, I think it's funny, we've had a surprise because the economic growth has been low single digit, yet corporate earnings have been 10, 12, 15%, 15% for this third quarter just finished. So I think it shows you that the economy is not the same as, say, the Standard & Poor's and the NASDAQ put together. And companies, if they can maintain their profit margins, what they have, can generate earnings much, much higher. So I think we'll see low single digit corporate GDP growth of, say, 1 to 3%, but profits up 10, 12, 15%. So that should be another year where I think the equity market will outperform not only fixed income, but also the risk-free alternatives. So I think it'll be another decent year looking out into 26 because the activity is going to pick up.
Margie, what about the view for fixed income as we head into the end of the year and looking ahead to 2026?
I think the treasuries are really just sort of trapped in a trading range because although inflation is above where the Fed would like to see, they're reluctant certainly to raise rates because they see the economy slowing down. So I think we'll see a cut in the funds rate and actually a passive Fed because they really haven't been effective. Their moves in rates and their pronouncements haven't had much effect in the real economy. And if the Fed is passive, I think that'll be very good for the underlying economy. They've been a source of uncertainty and volatility. So basically the 10-year is about 4%. If you could say 3.5 to 4.5 for a range next year, certainly that's low enough to be positive for economic activity, but really probably not competitive with returns for equity over the balance of 26.
Margie, how do you think about valuation in this market? A lot of folks are feeling like it's kind of stretched out there. How do you think about it?
Well, they are, especially for the high growers, and we've actually seen some correction in the tech space since around, say, July, where we had the PE slightly decline. And really, I think that's just a feature of the market. And when earnings look sustainable, there don't look to be any big problems on the horizon. I think we should expect to see the price-earnings ratios stay higher than what we think of. Say, 27 times, say, for the average kind of company, but a lot higher in the tech space because they have the growth. So it looks high to me, but the growth is there, the sustainability is there. So I think that's why they're at such a PE premium, you might say.
Margie, thank you so much. Really appreciate it. Margie Patel,
Thanks.
Senior Portfolio Manager, Allspring Global Investments. She's up there in Boston joining us via Zoom. We appreciate that. We continue to get some earnings from the retailers today. Dollar Tree came out with some numbers, pretty good numbers. The street likes it. The stock's up 3.4% today. Dollar Tree is up 50% year to date, so a great move for that company, that stock. Let's turn to Lily Meyer here, Bloomberg Deals reporter for Bloomberg News. She covers all the retail companies out there. Talk to us about Dollar Tree. What did they say here in the latest earnings?
Yeah, so Dollar Tree did well this quarter. It met expectations on revenue and same-store sales, and it raised its profit outlook for the year. I think they really have hit a niche in being able to capture consumers, both lower-end consumers who need cheaper goods and then high-income consumers who are looking to trade down.
So, I mean, what do we think about elasticity of the lower end consumer right now? Because, I mean, if you think about Walmart, I used to think of this as a company that, was a cheaper place to shop, but it seems as though it's appealing to multiple consumer types. But it seems as though Dollar Tree really is a great place for the lower end consumer.
Yeah, and actually recently Dollar Tree has been looking to kind of break into that higher income shopper as well. So it has this pricing strategy. So it has some products that are still cheaper, but then it's getting more products that are more expensive.
What is Dollar Tree saying about its core consumer out there? Who is that core consumer and how are they behaving?
Yeah, so I think its core consumer is still a lower income shopper. 85% of their products are $2 and under. So they really still have a lot of value. So they're seeing those shoppers continue to go in, but this quarter they saw traffic down and they attributed that to tariff increases.
See, I miss when things were actually $1 at Dollar Tree and Dollar General. She said, what did you say, $2 and below?
Exactly.
John and I remember.
Should we change the name?
Well, John and I remember the 5 and dime.
Oh, yeah. And penny candy.
Yep, exactly.
We're dating ourselves.
Dating ourselves. All right.
So what's the takeaway in terms of the outlook? I mean, you talked about tariffs still being a drag here.
Yeah, so tariffs were really dragged this quarter. They said that's going to lessen. So I think this was the quarter where we're really seeing the biggest tariff impact. It'll be really interesting to see what they predict for consumers next year. I'm interested to hear about that and also what they see for holiday, if they continue to see higher income shoppers trading down for gifts.
Do dollar stores, do they see a surge in sales, a seasonal surge in sales from holiday sales? Do they see that like a department store would?
Yeah, I don't know if it's the same surge, but, they sell a lot of gift wrapping and gift bags and some of those smaller gifts, stocking stuffers. So I think they see a lot of that around the holidays.
So what are we seeing in terms of just the broader read on the retail space? This kind of gives us a picture of the lower end consumer, but what are you seeing across the board?
So broadly, we're really still seeing consumers spend. So there hasn't been that massive pullback that I think some of us were imagining might happen. We're still seeing consumers spend, but they're really value driven. So they're looking for the best deals they can get. They're trading down when they need to. They're stocking up on essentials.
How promotional are retailers right now? Because, I mean, I know talking to Poonam Goyal, the retail analyst at Bloomberg Intelligence, she says, the more promotions you see out there, that goes right to the margins, the profit margins of some of these retailers. What are we seeing this season?
That's a good question. So this season, we've actually seen some retailers pull back on deals to protect their margin. So some companies are doing that as part of a broader strategy, and then some are having to do that because of tariffs. So, you know, for Black Friday, typically they'd offer big discounts, and some are pulling back or not offering discounts at all.
So consumers have still been broadly spending in the retail space. What are they spending on? Is it, you know, are we spending money on essentials right now, skipping the splurging?
Yeah, that's exactly it. So this Black Friday, we talked to a lot of folks who were saying they're gonna just get essentials this Black Friday. So instead of buying, you know, a Le Creuset Dutch oven, we talked to someone who instead was gonna buy like 3 bags of 40-pound dog food.
Oh,
that sounds exciting.
Okay, yeah.
They don't have a dog.
It's for them, right?
Yeah. So
Chewy.com.
Chewy.com. So really using, you know, deals to get things that they need for themselves rather than getting that big ticket item they waited for.
What I learned from talking to retail folks is omni-channel retail, which is you use both the online and the bricks and mortar. Maybe you look at something online, but then you want to go touch and feel it, or maybe you order it, then you pick it up at the store. Omni-channel, is that still a thing?
Yeah. So we were out there on Black Friday in some of the stores, and you know, while a lot of people have switched their holiday shopping to be online, we still saw a ton of people in stores, especially at stores with really good deals and stores that appealed to young shoppers. So brands like Addicted and Princess Polly that are in malls were really flooded with young people who wanted to see product in person.
And they're all standing in the aisle, but they're looking at their phone.
On their phones.
Yes.
Trying to see if there's any coupons they can get, maybe.
Yes, exactly. So that's how the kids roll today. Lily, thank you so much for joining us. Lily Meyer. She's a retail reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. The retailers, you know, you never underestimate the American consumer. I mean, that's something I was told early in my career, like never fight the Fed. Don't underestimate the American consumer.
Right, they're going to find some money somewhere for what they need.
I think that's
if they can.
I think that's the case here. And again, Dollar Tree. This thing just flew under my radar in terms of the stock price performance.
I know.
I mean, this is a $22 billion company, market cap company. And stock's up 50% year to date, so and up 3% today. So some good results out of Dollar Tree, taking their guidance up a little bit, talking about some decent margins despite some of the tariff issues and other retailers.
Dollar General up about 46% year to date.
Exactly. So I mean, it's just been a great part of the retail space here. S&P 500 up 8 points. The Dow up 200. The Nasdaq pretty much flat here. 10-year Treasury yields 4.07%, coming in a couple of basis points here, and the VIX for TK 16.4. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Let me start with the data because certainly the Fed's thinking about it as they prepare to their policy meeting next week. The private sector payrolls decreasing by 32,000 last month. This is according to ADP. That would be the most in almost 2 years. Not a lot of movement in the major averages today. Microsoft was setting the tone for tech with questions about AI-related products, but they've now paired some of the earlier losses because this is a tweet from Zero Hedge. Microsoft responding to a report in Information, which apparently was wrong, reading directly from this tweet, from this posting. They did not lower their sales quotas, end quote there. So take that for what it's worth. Microsoft shares right now, again, pairing some of their earlier losses down 1.4%. Meantime, Dana Dioria of Invest Solutions says investor pessimism may be warranted, even healthy.
Hey, there's a lot of concentration here. This whole CapEx AI, cycle is sort of a little bit circuitous, and maybe we should back off a little. I think is normal and kind of to be expected, and maybe probably even a little under what it could be.
And as we prepare for the Fed meeting next week, we have this story crossing from Bloomberg. Treasury Secretary Scott Bessent says he's going to push for a new rule that candidates for regional Federal Reserve presidents must have lived in that district for at least 3 years. So this idea is the latest push by the Treasury Secretary for kind of a sweeping shakeup of the Federal Reserve. Right now, the S&P 500 up 7 at 6836. The Dow Jones Industrial Average up 153. And the NASDAQ Composite Index down right now 5 points. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Nora and Paul.
All right, John Tucker, thank you so much. We appreciate that. Norma Linda sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Just going to read headline crossing the Bloomberg terminal. U.S. natural gas futures reach $5 for the first time since 2022. So
wow.
There you go. Nat gas, natty, as some of the people in the industries call it.
Chew on that.
Yeah, there you go. I'm looking at WTI crude oil. A little bit higher here, today up a little over 1%. But
do you heat your house with natural gas?
Yeah.
Yeah, me too.
Yep.
So
twins.
Yeah, that's all right. I also converted one of the fireplaces to gas. Love it.
Yep, we had that. We had
the
that
remote
too
control starting a fire.
We had that too back in the day. All right, let's talk a little retail. Macy's out with some numbers. I thought the numbers were pretty good. Stock's off 1.7%, so what do I know? Mary Ross Gilbert, senior equity analyst, she covers the retailers. She's the expert for Bloomberg Intelligence. She's based out there in L.A. Mary, talk to us about Macy's. What did we hear from them today with their results?
So, Paul, we saw actually, I think, great results coming out of Macy's this morning.
See?
And so when you think about it, the stock is off, but that's because the company put out conservative fourth quarter guidance. And that's really what they always do. They seek to beat their numbers. And so that guidance came in very close. At the high end, it's right around where analysts are because they already saw strong results come in from other retailers. But when we think about it, we think there's upside here. So we really view the results as, look, Macy's nameplate, because of all the changes that they're making, and what that means is they're bringing in more relevant brands that are resonating with their consumer. Not only that, but the stores look brighter. There's really kind of exciting music in the stores. The store associates are more engaged with the customer. We've noticed that on our channel checks, particularly on Black Friday. We saw more traffic in the store than we've seen in years past.
Really?
So we think that the changes that CEO Tony Spring is making, and he's really taking his cues from what he's done at Bloomingdale's, it's resonating. It's working. And so we think this momentum is building, and we certainly saw it in the third quarter numbers with comp sales up 2.7% for the go-forward stores. And so with that, I mean, that's a big improvement sequentially. And so we think that's building, going into the fourth quarter, and just with, the constant improvement that we're seeing there.
So when most people think about the retail space right now, a lot of people think about the transition to e-commerce, but it sounds as though from what you're explaining, a lot of people are going there in person. I mean, I'm looking at Kohl's, I'm looking at Dillard's. All of these stocks are up pretty substantially on the year alongside Macy's. What are they doing in particular that's really attracting customers to come through the doors? Is it also collaborations with celebrities by chance?
Yes, you raised a valid point, and it does include collaborations. So, for example, Aqua, they're under their Bloomingdale's brand, currently has a collab going out with a designer out of Milan. And so, yes, these collaborations also even, they'll have some events, but all of that is certainly drawing in new customers. And I think Macy's nameplate could certainly do more on that end. They had their first collab with their On 34th brand this year, but we think we're going to see more next year, because if you look at what Dillard's has been doing over the last few years, and they have a different business model than Macy's does, they're not really promotional. For example, for Black Friday, they just had clearance sales, and it was pretty comparable to last year. So that didn't mean that the rest of the merchandise was on sale. Macy's is far more promotional, but by doing collaborations, by getting celebrities involved. So, for example, for the holiday, they have Jennifer Hudson that's, fronting their campaign for the holiday. And they're also engaging with social influencers. So, yes, all of that is resonating. We're seeing it with other brands, like, for example, with American Eagle, which just tapped Martha Stewart, and that's appealing to Gen Z.
Oh, wow.
So,
I missed that one.
yeah. So these bold campaigns that these brands are doing, Macy's is also getting involved there, and they're dipping I would say they're dipping their toe in the water, but I think we're going to see that increase, and build as we get into 2026. And when you talk about the digital business, because of course you're always hearing, let's say, stronger growth on digital. For example, when we looked at Black Friday, over the weekend through Cyber Monday, the sales strength was really led by digital. Digital was up double digits versus, low to mid single digits for in-store. So I think that's really positive there. But so when you look at Macy's, a third of their sales come from digital. So still in-store is very big, but it's also omni-channel.
Well,
the ability to buy online, take back in store, or buy online, pick up in store.
Well, when I walk to Penn Station today, I'm going to walk past Macy's as I always do, but today I'm going to go in.
Okay.
I'm going to do a store walk, is what the retail analysts call it, a store walk. And I'm going to check if John Tucker's wooden escalator is still there.
We're counting on you.
Okay, I'll report back. Mary, just real quick, 30 seconds. What's Macy's saying about the consumer out there?
Yeah, so they're saying that the lower end consumer is really feeling pinched. And that's where they're seeing some challenges on some of the price increases on their lower price point items. But the higher middle income and the higher income consumer is resilient, and they haven't flashed or batted an eye with higher prices that they took to offset tariffs, and they're still buying.
All right, Mary, thank you so much. Appreciate that. Mary Ross Gilbert, Senior Equity Analyst, covering all the retail stuff for Bloomberg Intelligence. She's based out there in L.A. Again, Macy's reported some numbers, as Mary said, were very good. The stock is down about 2.8%, but I must point out it is up 30% year to date, so maybe giving a little bit back there. And the guidance Mary was suggesting is probably on the cautious side. Keep the bar kind of low and then beat expectations. That's kind of the model for a lot of companies.
Which a lot of companies see as the right idea.
Yep, absolutely. So, all right, I'll take my walk through Macy's, but if it's like crazy crowded,
then I won't blame you. I won't blame you.
I'll give it a shot, though.
Have you started your Christmas shopping?
I don't Christmas shop for anybody. I mean, I got to, if you want something.
He only receives gifts.
I mean, if you want something, send me an email and I'll see what I can do. That's kind of how we play.
He'll make something shake.
Yeah. So, I mean, I gave them a life. That's how I kind of figure it. So, we'll see. All right, get the latest news coming up here whenever you want it with the Bloomberg News Now. Top stories from our global team of reporters at the click of a button. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcast. Looking at the markets here. We got some green on the screen now. S&P's up, the Dow's up, NASDAQ's up. How about that? So we got green on the screen. Well, more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Norma Linda sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. A lot of tech stories out there, including the one here, Microsoft. Here, the question is, I guess the information was out earlier that multiple Microsoft divisions lowered how much salespeople are supposed to grow their sales of certain AI products after many missed sales goals in the fiscal year ended June. That's what the information reported earlier today. Microsoft, though, has not lowered sales quotas and targets for its salespeople. That's according to CNBC. They reported that on air, citing an emailed statement from Microsoft. So I don't know what's going on out there. Microsoft stock's down a little bit here. Anurag Rana, technology analyst at Bloomberg Intelligence, joins us here. Anurag, just kind of put that information reporting, the CNBC kind of rebutting it. I mean, just give us a sense of kind of AI sales, how this thing is kind of progressing, because I can't imagine there's any material slowdown in AI from what I've heard.
Yeah, Paul, so when you look at, there are two different elements of it. One is the AI infrastructure piece of it. Well, there is no slowdown in Microsoft at that point. In fact, that Microsoft is capacity constraints right now. But to be honest, that's not the sales quota somebody is looking at it. That just comes in because you're hosting somebody's model or you're trying to get, you're hosting ChatGPT. The sales quotas would be for products such as, Microsoft Copilot, Office Copilot, GitHub Copilot, all those products. And, that's not same for everything. There are certain products that sell better than the others because of the use case of it. GitHub Copilot, for example, because it's a coding software platform. The Microsoft Office Copilot is a good piece of software or Copilot, but it's very expensive. It's, I think, $30 per user per month. So it's not an apples to apples comparison throughout the board. One of the things that we've been talking about is even when you look at the broader tech spending, there is a big slowdown when you exclude AI. So that could be one reason that enterprise are not comfortable spending that level of money right now on those individual software pieces. The second piece could be the implementation part of it, because you're buying sometimes these data products that you have to include in your core software or your core applications, and that may take time. So there is a lot to be digest. From a macro piece, I don't think there is any slowdown.
Anurag, how is Microsoft tracking against its competitors in terms of AI software?
It is doing much better than everybody else. But again, with the caveat, because they host ChatGPT. This is when they invested in ChatGPT, I don't know, 6-7 years ago. That is part of that thing was when you're running that application, it runs on their cloud. So when you see that, within a 3-year period, you have 500-600 million users out there. When we use ChatGPT, a large portion of that revenue flows into Microsoft Cloud. So when they are the ones that have seen the first phase of the big benefit of AI. But as we have said, many times before, all the other vendors will see that down the road when adoption grows in other areas of the ecosystem.
Salesforce reports after the close here. What should we expect from them?
Yeah, it goes back to the first piece of what I said was enterprise spending is weak. When you're looking at Fortune 2000 companies, they're not hiring at that same pace that they used to. And we will exclude AI companies from it. And that weighs on the sales of somebody like a Salesforce, somebody like a Workday, because they bill on a per head basis. So when these companies are not hiring at that same rate, Salesforce has a tough time to grow their subscription base. And we think it is going to be very much in line with what they had last time, somewhere around 9-10%, which is not bad, but it's not very exciting as well.
I mean, is that enough for the stock to be down as much as it is here to date? I mean, it just seems like
30% down.
Exactly, down 30% for this is a company that just has been such a great growth story.
Yeah. So, Paul, when you look at last year, there was a lot of excitement when they launched a product called Agentforce, which was their answer or the AI answer to the rest of the universe. But what happened was the adoption rate has not been as strong as the initial, you could say, the demo was. So if you look at the stock price, kind of went quite a bit up when they first launched that particular product. Now this year, it's not showing up in the numbers, and this is one of the reasons you're not seeing the stock recovering from that.
What about Oracle? It seems like there's some worries around artificial intelligence there as well. We're looking at a credit risk gauge reaching its highest since 2009.
Yeah, and that is, I think, a very, very valid question is what happens to Oracle? When you look at this entire AI bubble narrative or the framework, you have the big cloud providers that are spending the most amount of money. We say when you look at somebody like an Amazon, Microsoft, and Google, they are spending quite a bit, but they have real, awesome cash flow that's coming in, plus they have businesses. So even if they overbuild, they will have capacity to use it. The bigger question is what happens to OpenAI Oracle relationship? OpenAI has said that they have given Oracle, you could say, a contract of about $300 billion to bleed in terms of sales over the next several years. They're going to first build some massive data centers, and then they're going to use Oracle as a cloud provider. The big question is, where is OpenAI going to get money from? And that's really what's weighing on that particular part of the equation. And to be very honest, there is genuine reason to figure out like how is OpenAI is going to raise that money and how are they going to spend. So there is some reason to be concerned, but not so much on the credit default side of it, but so much more as the estimates that are out there for the out years.
Anurag, thanks so much for joining us. Always appreciate getting some of your time there. Anurag Rana, technology analyst, Bloomberg Intelligence out there in the booming technology hub of Chicago. It's not just a meat town anymore. It's tech is the name of the game. Yeah. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius Channel XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just moments with the S&P up 8 points, the Dow up 190 points, and the NASDAQ down 8 points. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, we have Norma Linda sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up, we're going to check in with Mike McGlone, Bloomberg's commodity strategist. Talk to him about pretty much anything we want to on the commodity side, anything from pork bellies to Bitcoin. I'm going to talk about Bitcoin. We got a little bit of a lift here. The Bitcoin is now $92,000 per token. Remember, we were down around 84, 85,000. So a little bit of stabilization there. George Ferguson, Bloomberg Intelligence, Aerospace and Airlines analyst. Call out Delta. Delta sees a $200 million profit hit from the shutdown. So we'll break that down and also see what's going on over there at Airbus. Geetha Ranganathan is going to join us. She is the media analyst at Bloomberg Intelligence. We got to get a Warner Brothers Discovery deal at some point down the road. We got Comcast bidding. We got Skydance, Paramount bidding. We've got Netflix bidding. So we'll see where we are when that whole deal thing is happening. But right now, let's kick off this hour with John Tucker and a Bloomberg Business Flash. John.
Okay, let me revisit Microsoft, because that was kind of setting the tone for tech today. After the information reported, the company lowered expectations for how quickly it can get the customers to spend money on newer AI products. But Microsoft is pushing back against that, so they have paired some of the earlier declines today. Shares of Microsoft right now down 1.7%. It was among the worst performing stocks in the S&P 500. Another call to shake up the Federal Reserve. Treasury Secretary Scott Bessent says he's going to push for a new rule that candidates for regional Fed presidents have lived in that district for at least 3 years. Meantime, Christina Hooper, the chief market strategist at Man Group, is looking to next year with some degree of pessimism.
I feel very confident about the themes that I think we'll see play out. Some are continuations of 2025. And I also feel very confident that, unfortunately, the U.S. will see a mild recession in 2026.
Yeah, so a recession call there from Christina Hooper. S&P 500 right now up just 11 points, 68.41 on the index. The Dow Jones Industrial Average up 214. And the NASDAQ Composite Index, that has turned positive right now, up 12 points. Worth mentioning again, Spotify. The Spotify Wrapped has launched for this year. So it shows music fans the most listened to artists, songs, albums, and more.
Yeah, what do you got?
And provides global trends for music listening. It has revealed that Bad Bunny has broken Taylor Swift's 2-year winning streak as the most streamed global artist.
Isn't Bad Bunny going to be on the Super Bowl halftime show?
Well, let's put it this way. He was scheduled to. It's like some other people, they want to push back against that.
All right.
It's like when the New York Times does a story about somebody, on second reference, they always say Mr. Did they say Mr. Bunny?
Mr. Bunny? I don't know.
Mr. Bunny? I'm going to have to look.
Please.
Bunny, comma, that's the alternative.
I think about that when riding the escalator at Macy's.
Questions that need answers.
We check the markets all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Nora and Paul.
All right, John Tucker, thank you so much. We appreciate that. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Nora Melinda, and we're joined by Bloomberg's Denitsa Sokova. Denitsa, what are you looking at today?
Let's start with Microsoft. It's been the big story of the morning. Shares were sliding after the information reported that the software maker has lowered expectation for getting business customers to spend money on AI. Now, just recently, we have Microsoft's response. The company says it has not lowered sales quotas or targets for salespeople. Yet, the stock is still down about 1.7%. It fell as much as 3% in earlier trading. So definitely seeing some relief there. The ticker, of course, is MSFT. The report says that several divisions of Microsoft have lowered the quotas. There was one very interesting number. For example, for their product called Foundry, salespeople had increased customer spending about 50% in the last fiscal quarter, but fewer than 1/5 of the salespeople actually met those targets. So now that goal is about 25% growth. So they slashed it in half. Obviously, we don't have much information about how this is working on all the divisions, and Microsoft at the moment is saying it's not true. But it speaks to that question everyone has been asking, especially since October, about the price of all those deals that are happening all the time. And companies have been spending massively on chips, servers, other expenses. And investors are starting to punish some of that spending, or at least to look at it with a more cautious eye.
Yep, that's absolutely the case. What else we got?
We have CrowdStrike. Shares are down about 2%. It's interesting because the software company had a pretty strong third quarter results. Analysts were pretty excited about their annual recurring revenue number. That said, they're debating the outlook, so potentially we're seeing some of the downside from there. The ticker is CRWD. The company raised its fiscal 2026 guidance, signaling resilient demand for the company's expanding portfolio of artificial intelligence. Of course, this has been a big year for cybersecurity. Corporations have been facing so much threat. And another thing with the growth of AI is that those campaigns are getting more sophisticated, so companies are spending more and more. That said, Evercore said the results were solid and broadly consistent with last quarter narrative. But there is no meaningful upside surprise. So perhaps with the whole AI climate, that's why investors are not being too euphoric about the stock.
Yeah, but shares of that company up about 47% so far year to date. You've also got your eyes on Macy's. What's going on?
It's an interesting case. The company soared in earlier trading, and now it's actually down. The ticker is M. Shares declined after its profit forecast for the current quarter disappointed investors, overshadowing a solid lead up to the holiday seasons. Despite posting better than expected results, the company pointed to potential for soft demand. We're seeing this kind of a K-shaped recovery. Again, they're seeing not so much demand from low-income shoppers, but then the mid and upper income are stepping in. They've snapped up fashionable styles despite higher prices. That's what the company is saying. Macy's has been increasing prices on some items because of obviously higher tariffs has been one big thing. And the company is up about 34% this year before the earnings results. So it's been doing well, but today definitely some caution from investors.
All right, very good stuff. Denitsa Sokova, thank you so much. Denitsa covers all the equity markets for Bloomberg News. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Bitcoin has found a bid and then some. It's up about 500 points, $500 today. That's about half of 1%, 92,100 on the token. Boy, it's been all over the place. I'm looking at some of the American Bitcoin, which was Eric Trump's company he's involved in. That was down big yesterday, bouncing back a little bit today. Mike McGlone joins us here. He's the senior commodity strategist for Bloomberg Intelligence. Mike, anything new in the world of crypto today, or is it just another day of some pretty big swings in that business?
Well, the key thing that's new, Paul, is Bitcoin's trying to bump up on the year, and that's around 94,000. And then above that, it's got $100,000 resistance. So it's got walls of resistance. So it might be doing okay, but it's reminding me of how human nature and markets will never change, like you mentioned with some other companies that just, they get way too extended in bull markets. They expect it's never going to stop. And then when the music stops playing, the tide goes out, and to me, it's just getting started. So one thing that's really got way oversold is strategy. MicroStrategy was a great leading indicator. It got up to about 50% below its 200-day moving average. That was way oversold. It needs to bounce. Bear markets bounce. But by the end of the year, there's key things that need for Bitcoin to go higher. Number one, the stock market has to go up. It's so highly correlated, and that's getting a little dicey. Volatility has to stay low. 120-day volatility around 11%, and the stock market's the lowest if it ends there since 2017. And the VIX has to go down. The VIX volatility index right around 16. The 200-day average is almost closer to 20. So all that stuff has to line up, and I think cryptos are leading the way lower. And hey, I'll end with this. The Bloomberg Galaxy Crypto Index is down about 15% this year. So to me, we get lucky if Bitcoin does not become the Grinch for Christmas. I'm still sticking with it's going to be the Grinch.
So what's going on over at American Bitcoin? Of course, to start the week, we've been seeing really brutal declines, down about 16% on Monday, almost 40% of a decline yesterday. Now we're seeing it a bit in the green. But what was going on?
Well, one key thing I'll point out about, to me, in the macro is what's happening in space. My colleague, Andrew Silverman, penned an article recently, and his headline was, we have a resting president who's now a Bitcoin billionaire. That's never happened in history, and that's what's really shifted into space. This is all related to the Trump administration, and Trump administration officials, and that's what really pissed everybody, got a lot of crypto people upset. In the past, they're getting away from the system. Now they're dependent on it, and if they're buying it, they're supporting prices, they're supporting the Trump administration. So that's what's shifted, and all that stuff is mean reverting. Strategies in one example. The problem is there's probably a lot more room on the downside. There's still plenty of these millions of cryptos that are worth billions of dollars that track nothing. Yet we do have things like stable coins. There's about 300 billion of those. Those are pretty good. But to me, this is just getting started. And again, the bottom line is they're a great leading indicator for risk assets going up, and they're heading lower.
Mike, step back here in your global commodities coverage here. What's your 2026 theme? What are you asking people to pay attention to?
I'm really worried about the no man's land we reached in gold and silver. I mean, they're major bull markets, but there's only a few times in history we've got this stretch versus most moving averages. And this is when I turn off my fundamental hat and put my risk management hat. You have to be very careful here. And to me, the indication for commodities, by crude oil going down and gold going up, is we may be setting up for another deflationary cycle after inflation. That means stock market potentially getting in a kind of an indication from gold that it's going to head lower next year, which is what makes me worried about all commodities, particularly the economic sensitive one like copper and crude oil. And crude oil is a bear market.
I mean, what's your read on copper prices?
Well, it's having a good bounce now. We have some major supply constraints. Demand from China, is it there? And we also have U.S. tariffs. So right now, about $5.40 a pound in the U.S. I'm really afraid. Sure, number one key thing, just like Bitcoin, the stock market has to go up for copper to stay resilient. If we get it just to drop back to its 200-day moving average in stock market, that's going to be a pressure factor on copper. So to me, the key thing is this industrial metal is going up with gold and all metals, but the risk is next year it reverts a little bit lower, as indicated by very low stock market volatility that has only one way, and that is to go up, which means pressure on copper.
Mike, thanks so much for joining us. Appreciate it as always. We'll get to pork bellies next time. Mike McGlone covers the global commodity space for Bloomberg Intelligence down there in Miami. Let's switch gears a little bit. Talked about the aerospace business, the airline business here. Delta saying that the government shutdown is going to cost them like $200 million in pre-tax profitability. I didn't see that one coming. Maybe our next guest did. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence, joins us here. Delta Airlines, does that seem like a reasonable argument there? I mean, government shutdown costing them that much revenue? George, talk to me, Goose. He's frozen. Okay. So we have some problems down there. It's a long way from New York City down to Princeton.
I mean, so I was over at Newark Liberty Airport, right? When the whole government shutdown situation was happening. And it was just interesting to see how all of these airlines were really struggling to grapple with the situation. You were seeing all that we saw from the TSA agents. So it's really, I guess, not too surprising to me that we are seeing some sort of eat in on terms of the profits here for Delta, but I think this is such a massive number.
Yeah, it is.
You were there because you had a flight, or you just hanging out?
I was there for
reporting.
I was there reporting.
Wow.
Yeah.
She was in the field on assignment.
13 hours.
In Newark.
13 hours and 15 TV appearances.
This is nice. How was that?
It was great.
Well, they have
lots of coffee involved.
Well, they have good food over there now in
Newark.
Yeah, but did you get into the terminal, or you're just outside?
We were right outside of where you go into security. Your favorite area, right outside of United, where they enter.
Yes.
Yes.
Exactly. That's where I spent half
Good
my
times.
life back in the day. So we'll see. So Delta's out with some numbers here. Let's see if we can get George Ferguson here. He's an aerospace airline analyst. He's not so good on the audio stuff here down there in Princeton, but we'll see what we can do here. George, talk to us about Delta here. Was that a surprise to the marketplace that they were quantifying a $200 million pre-tax hit?
I mean, it looked a little bit larger to us than we initially expected. We were kind of thinking 150 million or so, so it looked a little bit higher to us, but I mean, I think it's roughly in line with at least our expectations. I mean, I don't think, we think it took 100 basis points off of margins. It's not, I mean, we're not talking a lot of change here, so I think it was in line.
I mean, so are there any other lingering effects that we're seeing in terms of the airline industry more broadly due to the government shutdown?
I don't think so. I think, going forward, the big issue, still is we're going to need, better airspace for the U.S. We need more controllers. We need more technology so they can handle more flights. We're growing, right? The pandemic kind of proved that people want a certain amount of travel. Even when you tell them it might be risky to fly, they seem to still want to get in airplanes. And so we got to build a U.S. airspace for the future. We'll get above GDP growth, I think, this year out of U.S. airlines. I'd expect maybe something around GDP next year, a couple percent. So the pressure continues to build on this system, and I think we're going to need, again, more resources so that things run smoothly.
So what is the solution? Has this administration or Congress articulated a solution like we're going to hire 10,000 more controllers, or we're going to invest this many gajillion dollars in technology? Are there solutions that are being proposed?
There are, and the solutions are twofold. Again, it's technology. It's the computing technology that they put in those, control rooms, and it's people. And this administration has pushed to hire more people, and they do want to upgrade the technology. Technology always takes a little bit longer. Everything seems to take longer to build out infrastructure right now. It costs a lot of money, right? You're going down and you're looking for a lot of computing technology. And so that'll take a little bit longer. I think, people will come sooner, but we'll need both.
What's the latest in terms of Airbus and Boeing? How are these plane makers operating right now?
So, I mean, I think what we've got here is Airbus went into the end of the year with really ambitious goals to deliver a heck of a lot of airplanes in 4Q. And, during the course of the year, the engine makers have been a drag on the ability to build airplanes. They're busy sort of feeding airlines with spare parts that they're making a lot of money on as airlines, run these fairly robust schedules. And at the same time, the airframers are saying, give us engines so we can put them on airplanes and deliver them because we have these really big backlogs. But the engine makers don't make as much money on that, right? The supply chain isn't robust enough to sort of feed both. So Airbus kind of goes into the last quarter of the year always looking to deliver a lot of airplanes. This year, I think, we had some problems with one of their suppliers on not plate, but on sheet,
right?
Aluminum sheet. But I mean, honestly, we were already discounting the idea that Airbus was going to get this 820 target. We were already at 778. They came down to 790 today. Sounds about right to us. Yeah, we think they can make EBIT here. Boeing.
Right. George, we just have to leave it there. We'll get back to you because there's always news in your space. George Ferguson covers the aerospace and the airlines for Bloomberg Intelligence. All right, folks, Bloomberg is now coming up. We're going to check in with Shanna Sissel. She's the founder and CEO of Banrion Capital Management, get her thoughts on these markets. And then Geetha Ranganathan, I'm going to hold her feet to the fire here. She's got to get a deal done here. I mean, Warner Brothers Discovery here. We've got, I guess, second-round bids in from some big media companies. I guess the next step is they select a winner or maybe ask for a third round. Not sure, but we'll check in with Geetha.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we're being brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k, tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Well, ahead of next week's Fed meeting, major stock averages mixed, a little change right now. You have 7 of the 11 major industry groups in the S&P 500. They are higher, and you have energy in the lead. This is oil continues to climb. Right now, West Texas, American crude, we'll call it, that is up over 1% in today's trading. It's still information technology being the biggest drag, and that's where you're going to find shares of Microsoft. Those shares right now, they are down just over 2%. American Eagle has grabbed the spotlight with flashy advertising. They had that campaign featuring Sydney Sweeney. Generated lots of controversy. Seems to be working. A retailer raising its financial forecast for the year. American Eagle has also recently revamped its product offerings. That is one of the standouts in today's trading. Those shares right now 15% higher. Overall, the S&P 500 up just 68.35 at the index. The Dow up 229 points, and the NASDAQ Composite Index is down right now 23 points. Cadillac, I didn't know they were into Formula One. Their new Formula One team, they plan to debut their new car during a Super Bowl TV spot. Cadillac's timing the revival, the reveal that is, in a bid to build a fan base ahead of the inaugural race. That's going to be in Melbourne, Australia in March. Or do they say Melbourne?
Melbourne.
This is going to be the second Super Bowl ad in a row with an F1 theme. Last year was the teaser for that Apple film. What was it? F1 with Brad Pitt.
I have it downloaded. I haven't watched it yet.
Yeah,
I'll let you
that's not on my list. I'll wait for the book to come out. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Norm Paul.
All right, John Tucker, thank you so much. We appreciate that. Norm Melinda sitting in for Scarlett Fu. I'm Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. As John Tucker's just reporting, kind of got red and green on the screen out there. A little bit of a sideways move to this market over the last couple of weeks here, maybe just kind of taking in the year's gains. It's been a solid year for the index. S&P up 15%, the NASDAQ up 21%. Let's check in with somebody who does this stuff for a living. Shana Sissel, founder and CEO of Banrion Capital Management. What's the discussion you're having these days, Shana, with your clients about, hey, maybe what to do as we think about 2026?
First, let's have a discussion about the fact that neither one of you have seen the movie F1. It is phenomenal.
I know.
It is one of my favorite movies that have come out in a long time. It is very much in the same vein as Top Gun Maverick.
Okay.
And you should see it because it is that good. Or
wow.
At least
That's a
at
good
this point,
take there.
I have now watched it about 25 times because I have enjoyed it that much.
Brad Pitt fan, I guess.
Not really a Brad Pitt fan, but I actually liked it better than Top Gun Maverick, which probably is going to get me some hate in the comments.
Wow,
but,
interesting. Those are good takes, though, Shannon.
Really enjoyed the movie, and you should really watch it
There we
because
go.
it is that good.
Train ride today.
Anyways, back to markets. So in terms of what we're telling clients, obviously Banrion is a firm that focuses more on the alternative space. So markets like this are advantageous for kind of the gospel that we preach. We really discuss using alternative investment strategies as risk management tools. And we believe that the market's going to be volatile through the end of the year and into the beginning of next year, which means that thoughtful investors should be considering opportunities to buy on weakness, but also looking for ways to diversify risk in their portfolios to things that fall into the spectrum of alternatives. So that's really the conversations we're having.
So we've got basically all but priced in a 25 basis point cut for the Federal Reserve next week. In the assumption that this does happen, how are you thinking about investment opportunities as we head into 2026?
So I think that there will be a cut next week. I wasn't as certain about it prior, but today's ADP numbers have given me pause and made me think that perhaps this is the data that will kind of push any naysayers that were reluctant to cut in October to get on board for a December cut. In terms of how that impacts my positioning, I'm just going to repeat what I kind of started off saying. I do believe that this is going to lead to volatility. I do think there's weakness in the economy. And so, again, we're suggesting that investors, advisors talk to their clients about ways to diversify risk in portfolios and also look at opportunities in the market that we think are long-term trends that are seeing some softness today, things like AI, crypto and things of that nature, I think are areas where, nibbling and beginning to build a position makes sense.
So you mentioned crypto here. That's certainly, it's always in the news, I guess, but the volatility and the sharp price down from the recent high of about $126,000 really caught people's attention. How do you kind of put that into context?
Well, I don't know why it is only now catching people's attention. This is not an unusual type of event in crypto. We see these kind of sell-offs often. My thoughts on the current environment for crypto is it's different than when we saw these types of events in the past, largely because there's broader institutional adoption and greater access through the spot ETFs. So I am inclined to think that this is a good entry point for crypto. It certainly helped a lot of buffer funds in the crypto space, which launched with a vengeance this year. I don't know that those are great products if you really want true diversification that's offered by crypto or the potential for the long-term upside of crypto. But I do think that seeing a 32% downturn over mere months is certainly an entry point. If you look back historically, anytime we've seen big sell-offs like this, it was an excellent entry point for the next leg up.
What's your take on small caps?
So small caps are experiencing obviously a rebound, but one of the reasons why it's been an interesting category to watch has been related to just structural changes within the markets that have had a more significant impact on small caps. Broadly speaking, I'm talking about IPO activity and the privatization of a lot of companies. There's less public companies today than there were a decade ago, 2 decades ago, and so on. And that typically impacts the small cap space more than anything. Typically, IPOs come to the market sooner. They start as small caps and then move up. And so you have this whole rising stars, falling knives scenario, but it's been a lot more falling knives than rising stars in the last 5 to 10 years. And so structurally, there's been changes going on in small caps. That said, I think that there's a lot to like about small caps, fundamentally speaking. And more importantly, to do well in small caps, historically, the research shows that active management is the way to go. And we've seen that kind of be the case in the last year.
All right, Shana, thank you so much for joining us. We always appreciate getting a few minutes of your time. Shana Sissel, founder and CEO of Banrigon Capital Management. She's there in Chicago. Let's get back to the deal space here. One of the big M&A trades that's really teed up to be announced almost any day now is Warner Brothers Discovery. We've got bids from Netflix, from Comcast, and from Skydance, Paramount. P-Sky is a great symbol. So we'll see how that plays out. But again, got stock at $24. The company wants something like 30 or something like that. I don't know. Geetha Ranganathan, she's been following this closely. She is the media analyst for Bloomberg Intelligence here. Geetha, do you think there's any front runner here as the second round of bids were submitted on Monday? Do you think there's a front runner?
Yeah, Paul, it looks like Netflix is actually the front runner.
Really?
If you look at the stock today, it's down about 5-6%. There was actually reporting earlier from Bloomberg that suggested that Netflix's bid this time around was almost a complete cash or majority cash offer. And then some reporting overnight which seemed to suggest that they are the front runners in this 3-horse race, with Paramount, Skydance, and Comcast being the other bidders. And they are actually willing to go up to $30 a share, which is exactly what David Zaslav is looking for.
Wow. I mean, so what are they doing right? And I mean, as you're mentioning, $30 a share is what they're looking for. Any other non-negotiables?
So we're not sure of all the other, details. If this sale didn't actually go through, Warner Brothers Discovery does have a plan B. So they would go ahead and they would split the company into the TV networks and the streaming and studio business. But what's interesting over the past few days is Netflix seems to be emerging as more and more of a serious bidder. So obviously you have that, majority cash component. We have them now there seems to be this whole campaign that they seem to have kind of launched to be placating the regulators. So there is obviously a lot of antitrust concerns with Netflix potentially buying HBO, that gives them almost close to 450 million global subscribers. That is not something that would sit well with regulators and with, the DOJ. But Netflix basically going around saying things like, this would be good this would actually be good for consumers because you can now bundle the two, services, and it would, mean a much cheaper price point. So they're kind of just trying to flip the whole argument on its head, and we'll see where it lands. But they definitely have, what has changed dramatically over the past few days is they seem to be really, really serious right now.
Wow. Because, I would think, Ethan, that with Comcast or with Paramount Skydance, there would be a lot of synergies, a lot of cost synergies that maybe could justify a higher price or could maybe suggest a better total returns on the deal. Does Netflix have synergies with this company?
Not a whole lot, Paul, because, there's no studio operations. There's no linear network business. Yeah, you do have two streaming platforms, but Netflix already runs a pretty tight ship.
Yep.
So, yeah, they could, kind of combining the two tech stacks, yes, they could get some efficiencies out of it. Not a whole lot, but I really think what's happening here is Netflix is playing the long game. I think they're looking to kind of build a business very similar to Disney. So just over this past weekend, the Thanksgiving holiday, I actually went to the Netflix House, which is kind of this entertainment venue in the Philadelphia area.
Really? Cool.
And it's basically all of these different characters from, from their big franchises. So you have like a whole Stranger Things attraction. You have a Squid Game attraction. They're having all of these virtual reality things going on there. And so you kind of think about it and the amount of potential that they have with the Warner Brother properties. Think of a Harry Potter, think of a Lord of the Rings, think of, DC Comics. There's just so much of mining and monetization opportunity, and they could very much build a business, that could rival Disney down the road.
Interesting. All right, Geetha, we'll keep our eyes peeled here. We expect something here. Certainly before the holidays, I would think they do want to get this stuff wrapped up. Geetha Ranganathan, she covers all the media stocks for Bloomberg Intelligence. She's headquartered down there in our Princeton office. Again, Warner Brothers Discovery. Just to give you an order of magnitude, this has an enterprise value, stock and debt of $90 billion, maybe $91, $92 billion. So this is a big, big M&A ticket for Wall Street. So I don't know, they're going to need some equity somewhere. I guess you go to the Middle East and look for it there. S&P 500 up 17. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start off with shares of Microsoft. They're paring their losses. CNBC reported the company has not lowered sales quotas for its salespeople. Earlier, you'll recall the shares, they sank as much as 3% after the information said Microsoft had cut expectations of getting business customers to spend money on new AI products. Well, still, information technology, that is the worst performing major industry group in the S&P 500. S&P 500 right now up 16 points, up about 0.2%, 68.45 on the index. The Dow Jones Industrial Average is up 278 points, and right now the NASDAQ is 30 points higher. That is up 0.1% right now. Ahead of next week's Fed meeting, Rayanne Mitrione of the Callan Family Office sees a probable rate cut.
Based on where we are, it is probably likely that we'll get one next week, barring anything crazy coming out in the data between now and then. But I do think there really is no certainty.
And oil, or energy, the best performing industry group in the S&P 500 right now. This is crude oil rises. NYMEX crude, we'll call it American crude, that is up right now 0.9%, 59.19 a barrel. I was kind of debating whether or not to do this story because it has nothing to do with business. But, you know, I probably won't see it for a while. This is from USA Today. Authorities responding to a break-in at a Virginia liquor store apprehended a drunk raccoon. The raccoon broke into the Virginia ABC store in Ashland, Virginia. In the early morning hours, it ransacked the shelves and then passed out intoxicated in the bathroom. This is according to the statement from the Hanover County Animal Protection and Shelter. So there you go.
I saw this story yesterday. I was like,
did you see the video? Because it's just
I didn't see the video.
It's great. I highly recommend it. Anyway, we check the markets and other crazy stuff for you right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Those state-run liquor stores are such a bummer. I don't know why those states do that.
Oh, I mean, ABC, yeah.
Yeah, ABC, it's filled up. I mean, Pennsylvania does it.
When I moved, that's all I knew. When I moved here, that's what I was expecting.
It just takes away the whole vibe. It's a whole... Anyway, but they
the raccoons like it.
The raccoons like it, so there you go. Let's talk a little luxury here. That's right down John Tucker's alley here. Deb Aitken, she's the expert luxury goods analyst at Bloomberg Intelligence. She's based in London there. Deb, just give us kind of a post-mortem. How was 2025 for the luxury companies, and maybe what's the outlook for 26?
Hi. Yeah, so we started out 2025 with an expectation that we'd move back to growth, and that certainly didn't materialize through the first half of the year. But we seem to be ending at around 3 to 4% growth as we exit 2025. Now, the US has been robust, Middle East doing very well, but particularly in the first half of the year, it was China which was the drag. And what we've noticed as we end the year, we've actually just heard on a fireside chat over the last few days from L'Oreal, where they're mentioning high-end beauty doing very well out of the US, but also in China too. So they're adding to what we've heard from the luxury companies, where we've seen 2/3 of luxury companies and most of the top 10 switching to growth in China in Q3 from a low base, from negatives a year ago, but actually that we're calling green shoots into the end of year.
How are these companies holding up as it relates to tariff overhangs?
Yeah, so we did a lot of work around May time and again through July and August with the different tariff rates moving around. And what we've actually seen, it was less detrimental overall in our numbers. We probably think that EPS won't be pulled as much as was expected because there have been some cost savings, and the biggest companies and those that were where brands were really in favor have managed to pass on price. And generally, because these companies operate on high gross margin, the cost into the US, they've moved around 2 to 4% on additional price into the US, as well as 2 to 3% from the beginning of the year. So some of those brands have absorbed passing through 6-7% pricing to the US consumer. And we think into 2026, that moves nearer to 2 to 3% overall. So it should be less intimidating for the consumer overall 2026. So it's one of our drivers for the year ahead.
Deb, talk to us about the Chinese consumer. We don't see the Chinese consumer here. I'm going to walk to Penn Station today, walk down Fifth Avenue, Madison Avenue. I'll see a lot of Europeans. I'll see a lot of American tourists. I won't see many from Asia. Are they not traveling? So is that an impact for New York and London and Paris and things like that?
We actually have a survey out of our Asia office that we've just incorporated into a travel document, which we'll be producing, but this piece of work is already produced. And actually, on October versus May, the China consumer is looking to travel more into Europe to start with. So that's the first big positive. I think part of that is just on the way the tariff situation has gone, maybe. So that will be the first time that we're looking for them to come back. So versus 3 months ago, they're looking at traveling outside of Asia. But overall, what we call the China cohort, that's actually really operating more avidly across the Asia region. We're not seeing so much travel from Chinese into Japan. And of course, we know that there's some political commentary there as well. So we wouldn't expect that to pick up next year, but we are seeing Korea, Singapore, Australia and others being positive. And the first move to Europe should hopefully indicate that towards the end of the year and as tariffs settle more in 2026, that we see some of that return to the US as well.
And sticking with China, how are we thinking about supply chain operations as it relates to a lot of these luxury firms, especially stemming from China?
Yeah, so if we think about maybe if we look at it from some of the aspirational entry-level luxury companies, then they will have some production moving around the Asia region. But if we think about the heritage, traditional, higher-end luxury companies, then most of their production is France, Italy, some Portugal, some parts of southern Spain, not so much going on in the Asia region. And so they've been able to manage on the 20% tariff from made in Europe over to the US more so than some of the peer group. For example, one of our entry level that we call branded affordable jewelry, Pandora, produces out of Thailand. It's really suffered in terms of share price this year versus some of the Asian retail jewelers who've done very, very well on the price of gold.
So you got to explain this whole handbag thing to me, Deb. I was in Italy in September. We toured some factories and artisan shops where they make these handbags, and they sell them for tens of thousands of dollars and euros. What is going on there? Who buys that?
It has. I always say, if you bought a Hermes, you have a just as good or a better correlation than if you'd have held gold. So I think that these bags, particularly for sought-after material, the craftsmanship, and the fact that they have continued value, are seen as investment pieces. And so we have the middle ground. If we look over the last year, and one of the things that we think for 2026, bags from Tapestry, from Coach, Ralph Lauren, others, as well as ready-to-wear, have done very, very well, resonated with the consumer who's been a little bit more skeptical on the consumer sentiment side and maybe shopped around $1,000 or so. But at the very high end, there hasn't been much of a move. So we've seen Hermes, Brunello Cucinelli and others doing very, very well at that high end.
Wow, just amazing. But I learned how to stitch some leather. That was pretty cool. Deborah Aitken, thanks so much for joining us. Deborah Aitken, she's a luxury goods analyst for Bloomberg Intelligence. She is based in London, and her job is basically just to walk around and look at all the luxury stores all the time.
I love that.
It's a nice gig, and she's very, very good at it. But I was shocked. I also, next time we talk to her, I want to talk to her about watches. Apparently, those things are going crazy.
Yeah, what a market.
I mean, you can't get them a lot of times. You walk in, you put an order in for one of these high-end watches, and you're like, okay, we'll have it for you in a year or two. So I don't know what's going on with that market. I'm happy with my Omega. I got like 20 years ago. All right, looking at the market here, we've got some green out there. S&P up 14, the Dow up 280. That's about 0.6%. And the Nasdaq's up 18 points there. 10-year Treasury yields 4.07%, off about 1 basis point. We're going to have more coming up. This is Bloomberg. Good morning.
Listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, we got Norma Linda sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, and we're coming to you live on that interweb thing. So go to YouTube, and that's where you'll find us there. Real estate investment trusts. They say real estate in New York it just come ripping back, like on the commercial side. So
what do I know? Yesterday.
Interest rates are coming down. That's got to be good, I would think. But let's talk a little real estate here. We'll do that with Jeff Langbaum. He's the senior U.S. REIT analyst for Bloomberg News, joining us from Princeton, New Jersey. Jeff, how have REITs performed in 2025, and what's the outlook for 2026?
They haven't performed well in 2025, that's for sure. I mean, basically, kind of flat to slightly down on a aggregate basis, but relative to the S&P, underperformed significantly, and that's going on 3 years now. Obviously, you had the rising rate cycle that was pretty damaging. You had some difficulties, especially in the office sector. But as we sit here looking ahead to 2026, the fundamental backdrop looks okay, and especially if you get rates falling, if that 10-year yield starts to drop, and that has cascading effects on valuations, it has cascading effects on cost of capital, and really would be a boost for the sector going forward.
Where are you seeing to be some bright spots right now in the REIT sector, Jeff?
Senior housing. That is the...
Why are you looking at me?
I didn't look at you.
I'm looking at you, Paul. I mean, that's the clear winner right now. The fundamental backdrop, driven by demographics, is huge and growing. There's an incredible coming need for housing for the aging baby boomers, and there's nothing being built. So the supply-demand dynamics in that space are incredible, and there's a couple of REITs that play in that space. Welltower is the biggest one. They're growing like crazy, and the stock is reflecting it.
All right, so Jeff, what's the aside from folks, old folks housing, which is I'm going to say because I'm there, I'm there, I'm in the demo. What else is working here? What is it? Is there a replay on all this AI data center stuff?
So there's a couple of different ways to answer that. The direct impact of AI on REITs is the two big data center REITs, Equinix and Digital Realty, and they are playing in that space. Right now, it's kind of unclear exactly where they fit. There should be a significant amount of demand for their space, especially for the stuff that they're looking to build. But they have to raise a ton of capital in order to fund that development. And you see CapEx numbers coming out from all the hyperscalers that are astronomical. And REITs, investors in REITs don't necessarily love the concept of raising a ton of money to deploy it in kind of risky assets that you need to then go lease up. So the demand should clearly be there, but it's going to be interesting to see how it plays out over the next couple of years as that demand filters through. The other issue with AI, though, is there is a kind of a concern that AI is going to impact demand for office space. And, as companies get more efficient, they need less headcount, they need less office space. Haven't really started to see that play out yet, but it's definitely a sentiment that is out there and is impacting the stocks to a degree. Just as we got past the whole work from home thing and concern over whether offices were ever going to have people back in them, now we have concern that the robots are going to replace the people.
So, of course, we do have the incoming New York City mayor saying that he wants to freeze rents on rent-stabilized apartments in New York City. What's the latest in terms of the apartment REIT space right now?
Yeah, I mean, it's unclear exactly what he's going to be able to do on rent stabilization, freezing, capping rents. But the REITs that own residential in New York City, names like Avalon Bay, Equity Residential, they own stuff that's not subject to those caps. It's largely newer market rate stuff. And so they're not going to be directly impacted. And so, at the end of the day, if there is less new... The net result of caps like that is less stuff getting renovated, less stuff getting built, and that just keeps supply down. And as long as demand stays elevated, then that should flow through to the ability to keep buildings full and keep rents rising to a degree. So I think that in the near term, that should be fine for names like those that play in the city. Those that own the kind of the lower tier space that maybe are a little bit more exposed.
All right, Jeff, thanks so much. Really appreciate it. Jeff Langbaum, he is senior U.S. REIT analyst for Bloomberg News. He's based down there in Princeton. So you covered real estate and REITs, right?
Yeah.
When you were in Bloomberg News.
About 3-4 years on the print side.
So this was the biggest scam I've ever heard. Funds flow from operations.
Oh, I know you hate.
FFO. The first time I heard this, I was sitting in our research meeting, and we had a new REIT analyst. And I was about to give my pitch on Disney or Time Warner or something to the sales force. He comes in talking about funds flow from operations.
Speaking a different language.
Salespeople were like, what?
They were probably a little bit stumped.
Yeah, but it works. That's the measurement for real estate and REITs and things like that.
Absolutely.
And that's kind of the way they go there. But
An acronym I'll never forget.
Boy, I thought EBITDA was bad, but then this guy throws out funds flow from operations.
Throwing more letters in there.
Exactly. All right, folks, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. That's coming up in just a moment. Nora, thanks for sitting in for Scarlett. Scarlett, I understand, is going to be out again on assignment tomorrow, but back in on Friday, so that is a good thing. Stocks Kind of mixed here. The S&P up 6 points, the Dow up 200, the NASDAQ off 22 points. So that's kind of where you are. We're going to have more coming up for you in just a moment. Stay tuned. Bloomberg Radio continues. This is Bloomberg.
This is CBS News on the Hour, sponsored by Steel.
I'm Steve Kathan. New federal immigration enforcement efforts getting underway in Minnesota's Twin Cities and already unfolding in New Orleans, where we find CBS's Katie Weiss.
Customs and Border Patrol says that their goal is to arrest people who have been allowed back on the streets after getting arrested previously for some kind of crime. However, we know from seeing in Charlotte that that's not always the case, that sometimes other people who have not or convicted of any crimes have been caught in the middle.
From Washington, CBS's Scott McFarland reports President Trump says he's granted a full pardon to a Democrat, Congressman Henry Cuellar of Texas, and his wife. They were charged with bribery and conspiracy. Trump says they were punished for being critics of Biden border policy.
Pardons are typically for people who've already been convicted in their cases, made some restitution, acknowledged their guilt, tried to make atonement for it. Henry Cuellar hadn't even gone on trial yet. I mean, typically that's for a jury to decide whether somebody should be absolved or found guilty. In this case, the president has pardoned Henry Cuellar before the case even went to a jury.
The admiral involved in the controversial second strike attack in the Caribbean is due to face lawmakers tomorrow. CBS's Nancy Cordes says the president and defense secretary have defended him.
There are members of Congress from both sides who say that they are skeptical of the administration's shifting storyline on these strikes. Remember that on Sunday, President Trump said there wasn't a second strike as far as he knew, and then less than 24 hours later, the White House was saying actually that there was. You had the Pentagon spokesperson saying that the entire narrative here, first reported by the Washington Post, was false, but then the White House confirmed a great deal of that narrative.
Overseas, Russia says talks will continue on ending the war in Ukraine. NATO foreign ministers are meeting in Brussels. Secretary General Mark Rutte.
We cannot waver in our commitment to Ukraine. Every single day, Russian missiles and drones cause death and destruction, leaving civilians without heat, light, and water as winter approaches.
On the Health Watch, CBS's Michael Wallace tells us the FDA is investigating whether some glucose monitor errors contributed to 7 deaths and hundreds of injuries.
Abbott Diabetes Care says it found malfunctioning sensors in some of its Freestyle Libre 3 and 3 Plus monitors, which may have given incorrect low glucose readings. Those low readings could have led users to skip or delay their insulin doses, posing serious health risks. Abbott says about 3 million monitors may have the faulty sensors. Half of those devices have likely expired or been used.
And checking Wall Street, right now the Dow is up 230 points. The NASDAQ is 8 points lower. This is CBS News. New research looks at loneliness.
A report released by AARP shows an increasing number of middle-aged to older adults are lonely, even when they're not actually alone. Among the loneliest, 49% of 45 to 49-year-olds, as well as 62% of people who've never married, and more than half who aren't working. Experts say many people transitioning from caregiving careers and changing social networks are particularly vulnerable. This year, 42% of men report being lonely, compared to 37% of women. Deborah Rodriguez, CBS News.
A rare Fabergé egg crafted for Russia's ruling family before the revolution is sold for more than $30 million. The egg is one of 7 still in private hands. It's made from rock crystal with a snowflake motif of platinum and 4,500 diamonds. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The Secretary of Defense distances himself from the boat strike, just as the first complaint is filed. Welcome to the Wednesday edition, as Pete Hegseth tells reporters he left the room before a second strike was ordered on an alleged drug boat. And now the family of a Venezuelan fisherman is accusing the U.S. of an extrajudicial killing. We talked about it with Republican Senator Rand Paul, who is not a fan of any of this. We'll have that conversation ahead. And still waiting for the White House readout on the big meeting with Vladimir Putin. The Russians are talking, though, and we'll get into it with our political panel. All after a look at Wall Street. We start there right now with Alexis Christoforous at World Headquarters in New York. A mostly up session so far. Alexis, what do you see?
Mostly up, Joe. That's right. We just turned mixed a few minutes ago. Traders here betting the Federal Reserve will cut interest rates at its final policy meeting of the year. Of course, that takes place December 10th. We've got industrials, energy, and healthcare, the top performing industries today. Here's a look at the action. Dow Industrials now up 232 points, led higher by shares of United Healthcare and Nike. We've got the S&P 500 up about 9. The NASDAQ Composite, though, down about 7. And the Bitcoin bounce continues, up nearly 0.7%, above 92,200. All right, the numbers are in, and more than 202 million Americans shopped from Thanksgiving Day through Cyber Monday. That's the highest number on record since the National Retail Federation began tracking in 2017. In our retail roundup, Macy's posting its strongest growth in more than 3 years last quarter, but despite those results, shares of Macy's down about 1% after the retailer was cautious about the holiday quarter, citing consumer spending concerns and pressure from tariffs. But shares of Dollar Tree climbing more than 2% after delivering stronger than expected quarterly results and healthy sales growth as consumers continue to look for bargains. Dollar Tree highlighted momentum from its multi-price strategy and a record Halloween season, while tightening its outlook and lifting profit guidance. And shares of American Eagle Outfitters soaring nearly 15%. The apparel company posting better than expected earnings, providing upbeat guidance for the fourth quarter. American Eagle said its ad campaigns with actress Sydney Sweeney and NFL star Travis Kelce are attracting more customers, but they've yet to be a major revenue driver. To recap, stocks are mixed. Dow is up 217 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Joe Matthew and Balance of Power.
All right, Alexis, great to see you. Thanks for being here on the Wednesday edition of Balance of Power on Bloomberg Radio. On your satellite radio, channel 121, streaming live always on YouTube. Search Bloomberg Business News Live. If you've got the YouTube TV, you can watch us there too. Just dial up Bloomberg Originals. We'll welcome our global television audience to the conversation in our second hour with much to cover today. So thank you for being here. The 3rd of December. Not a lot of time left, I should say, for Christmas shopping. We'll talk later this hour about the headlines from the AI space that are moving stocks. Microsoft lower right now. NVIDIA is lower right now following this report from Microsoft earlier today, and a bit of a warning on AI demand. We'll have more on this coming up as we make our way through the hour here. The story surrounding the situation in Venezuela is a very interesting one, and it's an interesting day here, if I can use that word again, to be the Secretary of Defense, Pete Hegseth. Incidentally, 4:45 p.m. Eastern Time, the Pentagon's inaugural Christmas tree lighting ceremony gets underway. What will be going through his mind on this eve of the testimony from Admiral Frank Bradley, as well as the Inspector General report on Signalgate? That has been delivered to Hegseth and is now due to be made public, albeit in redacted form. But all this following the situation in Venezuela that took on a whole new look yesterday in the president's cabinet meeting, with Pete Hegseth saying that he left the room, watching this on a live feed, left the room after the initial strike on the boat. He invoked the fog of war to the reporters who were in the room there. Said he did not personally see the survivors after the first missile strike and, quote, moved on to my next meeting before the second one took place. There are tandem investigations underway right now on Capitol Hill, House side, Senate side. And these interviews, including the testimony tomorrow from the Admiral, could lead to a bigger mess for Pete Hegseth. Listen to the Republican senator from Kentucky, Rand Paul. We spent some time talking with him about this, remembering that he signed on to a War Powers Act to try to push back on the administration's efforts in the waters off of Venezuela. We started by asking him, as we spent some time here with myself and Amara Amokwe, talking with the senator about the legality here and also the drive. What's the end game, if not anything less than regime change? Are we on the march to war? Here's what the senator said.
I'm very fearful that these boat strikes and the positioning of our ships and our troops right off the coast of Venezuela is a prelude to war. I think that there is a real question of legality. Under the military justice, under the Code of Military Justice, it says that when someone has been incapacitated or shipwrecked, or they're clinging to the wreckage of a boat, that they're out of combat and they're no longer subject to be killed. And so there is a real question, who gave the order and why would they give the order to kill someone who is out of combat? Now, over the weekend, the Secretary of Defense was saying, well, I don't know anything about it. I don't know anything about a second attack. But today, when he was interviewed, he said, well, yes, I left the room for a while. The second attack occurred, and I learned about it when he came back. But why was he telling us this weekend he didn't know anything about a second attack and he had never authorized it? But now that it's come to light, he says, oh, I didn't do it. Somebody else did it. The Admiral did it. So they're all pinning blame on the military guy. But I'm one who tends to give a lot of leeway to the military guy and not so much leeway to the person who gave him the orders. These orders came from the Secretary of Defense, and ultimately he's going to have to accept responsibility. But to my mind, there's a question about whether or not killing people in the first place, who you have no proof that they're armed, you have presented no proof that they're carrying drugs, and that you simply kill them. I think that's outrageous. But now, not only do we kill them, our government is following up by killing them when they're wounded and stranded and of no threat whatsoever, which is, according to our own laws, illegal.
Well, you've illustrated that carefully, Senator. It's Admiral Frank Bradley we're talking about. He's been named by the administration. I don't know if you think it's appropriate that his name is made public before he testifies before the Armed Services Committee on Thursday. But I guess the question now is raised, where does the buck stop? Is it with the Admiral, the Defense Secretary, or the Commander-in-Chief?
I think it's, to me, amazing that anybody in the public accepts this. The idea that we would make an accusation. We will simply accuse someone, and then they are found guilty without any kind of process. We asked the Coast Guard for specific statistics off the coast of Venezuela, and they said of boats that have been intercepted off of the coast before we came up with this blow them to smithereens policy, we used to interdict them. And of the boats that we interdicted off the coast of Venezuela, about 1 in 4, 21% to be exact, were not carrying drugs. That would mean if you're going to blow up all of the boats off the coast that look like drug boats or that you're suspicious for, 21% of the time you'd be killing innocent people. So I think it's outrageous that anybody would countenance this kind of activity, and I'm surprised that I seem to be one of the few people who seem to be alarmed at this. But I think it's unconscionable, it's wrong on any level to kill people with no proof that they are engaged in combat at all with your country.
Well, so should Pete Hegseth be fired?
There has to be an investigation, and I am glad that for a change there is a bipartisan push from the Armed Services Committee to get to the bottom of this. So there'll be an investigation. I think he needs to be asked under oath, did you give the order to kill any survivors? And if you didn't give the order, what was the order? Why did the Admiral think that he was supposed to kill people clinging to wreckage? And the idea that these people were still a threat, It's a debate whether they were ever a threat. They're on a motorboat 2,000 miles from our coast. If you want to take that motorboat to the closest point of entry in Miami, you'd probably have to fill it up 20 times. These motorboats can't go 2,000 miles on a tank of gas. If there was drugs on board, they may be going to other countries, but probably not to the U.S. So the whole thing is just remarkable that in our country we would allow this to happen.
Senator Schumer has asked for footage of these strikes to be released. Is that something that you would support?
Yes. We need to see the footage. We need to hear the audio. The Secretary of Defense has now said that he left the room. That's fine. But the whole idea is the Admiral's not just making these decisions without an order. The order came from the Secretary of Defense. And then I hear some of my colleagues in the hallway just saying, oh, no big deal, we do this all the time. Whenever we bomb people, we just do a second tap on them, man. If they're moving, we go back and hit them again. Well, if it's soldiers with guns shooting our soldiers, I'm fine with that. But this is a pretense of a war. They've just said, oh, we call these people in these boats narco-terrorists so we can kill them without any kind of proof, without any kind of justification, because we say so, because we say it's a war. This is insane. This isn't a war. These people we don't even know if they're armed. Or we've killed 80 people. Are any of them armed? What are their names? What is it they're transporting? All these people going off saying, oh, fentanyl's killing people. I know people who died of fentanyl. I have a great deal of sympathy. I know a family lost 2 sons to fentanyl. I have sympathy for that. There's no evidence there's any fentanyl on this boat. There's no evidence that any fentanyl comes from Venezuela. Zero. There is fentanyl come out of Mexico, but since we're blowing these boats up, maybe we're taking our eye off the border in Mexico. So the whole thing is a pretense and a prelude to war in Venezuela, and I hope it doesn't happen.
Senator, you've said previously that you've received not one briefing on Venezuela. In your eyes, does the administration have a coherent strategy on this issue? And how does it square with the president and the administration's America First posture, this idea that they were going to keep America out of ever-increasing foreign entanglements?
The one thing I've always liked about Donald Trump, and the reason I've supported him and still do support him, is that I think his instincts towards less intervention and less foreign war have been sincere. He's been against the Iraq War for several decades, before it happened and after it happened. He was against the war in Libya that Obama took us into. So those were legitimate ideas. They're a legitimate part of America First. But this idea of invading Venezuela, I think, comes from the Secretary of State, who's long wanted regime change there. Now, if you could wave a wand and have regime change where there's adversaries we don't like, we would do it for China. We would do it for Colombia. We would do it for all the countries that have tin-pot socialist dictators. But we don't do that because the end result of regime change often is more chaos, or chaos worse even than the authoritarianism they live under.
The take from Senator Rand Paul, Republican from Kentucky, talking with us here late yesterday on Balance of Power. We should note the family of a Colombian man killed in a U.S. strike on one of these alleged drug boats has filed a complaint with the Inter-American Commission on Human Rights. Alejandro Andres Carranza Medina, a 42-year-old fisherman, killed September 15th. His lawyer said in a phone interview with the Washington Post, the family has been left without their chief breadwinner. We'll have more ahead, only on Bloomberg.
U.S. companies shed payrolls in November by the most since early 2023. According to ADP research data, private sector payrolls decreased by 32,000 last month. Payrolls have now fallen 4 times in the last 6 months. That weaker than expected jobs data bolstering hopes for a Federal Reserve rate cut later this month. We've got the Dow Jones Industrial Average now at its best level of the session, up 325 points. The broader market also higher, but more modestly. The S&P 500 up about 19, the NASDAQ composite up 35. Delta back in the news. It expects to take a $200 million hit to profits from the reduced flight schedules prompted by the recent government shutdown. The carrier said the hit is equal to about 25 cents a share. And Boeing giving back some of yesterday's big rally. It was its best day since April. Shares of Boeing now down more than 2.5%. The plane maker said yesterday it expects higher deliveries of its 737 and 787 jets next year. Delayed certification for the 737-10 model could come later next year. Boeing CFO said the higher deliveries will be a big driver for cash flow. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's your Bloomberg Business Flash.
Alexis, thank you so much. Watching Wall Street for us as we talk politics in Washington here on Balance of Power. It's great to see you. Welcome to the early edition on this Wednesday as we turn our attention to the AI race. Talk of a bubble being renewed today, or at least maybe a little bit of a slowdown. We're going to get to this report about Microsoft in a moment when we spend some time with Caroline Hyde, but I want to start with something called Gain AI. This is not a new AI company. It's not a new mining company. It's actually a piece of legislation that would limit foreign exports of high-tech chips. Look no further, of course, than NVIDIA, which is trading a bit lower today, along with Microsoft. These two stories collide in a tough way for high-tech in today's market. Of course, NVIDIA is pretty close to the White House. Jensen Huang calls Donald Trump a friend. The president says the same about him. And the White House is not too sure about Gain AI or its inclusion in the annual defense authorization bill that's making its way through Congress right now. Jensen Huang has made his way back to Washington today. He's actually in the Capitol, meeting with members of the Senate Banking Committee who are looking at this legislation right now. This is not a full-blown hearing. You're not going to watch it on C-SPAN, and I'll be very curious to hear if he does any public-facing interviews or anything else around this, because he's trying to make a point here, of course, with the idea of export controls already in the background when it comes to China. This is where we start with Caroline Hyde, the co-host of Bloomberg Tech, is with us from World Headquarters in New York. Caroline, it's always my great pleasure to see you, and I'm wondering how persuasive Jensen Huang can be in this room today. What do you think?
He's a persuasive guy, isn't he? And we've seen him really try to persuade before that to win the AI race, the answer is not to ban the most sophisticated technology from China. It's in fact to allow him to export his sophisticated chips, because then China becomes ever more dependent on his infrastructure rather than being pushed to build that of Huawei, for example. There's a real tussle at the top within the administration and who's got the ear of the president as to which side are you? Are you hawkish? Are you saying more broadly that no, none of our US technology should be allowed in the hands of the Chinese, and you should fulfill the demand of homegrown cloud data infrastructure first? That's why you've seen some of the big hyperscalers actually say, we kind of like this Gain AI Act. We kind of want to have first dibs on NVIDIA's most sophisticated chips before you start exporting them out to China. Now, remember, at the moment, NVIDIA CEO has said that they get one big fat 0% of any revenue from China thus far. So he hasn't been able to export, even with the idea that that 15% revenue share could be going to the government for him and AMD to be able to export those dumbed down chips that aren't Blackwell architecture, but previous architecture. He couldn't even get that to be interesting to the Chinese government. He hoped his Blackwell architecture, if indeed just restricted to fit current export limitations, maybe he could then get China to buy in, because the big tech giants do want his chips, but the government doesn't. So thus far, he's got a lot of persuading to do, not only of lawmakers, and as you say, it's the banking committee that signs off on these export controls. Can he persuade them that it's better to win the AI race with his chips, and what sort of limitations that he would put in place to allow US demand to be satisfied, but also to gain access to what was once his most important market in many ways?
Well, you bring up a great point. The stock has already priced in no China business, right? Yeah. So a pretty muted response here. It's down about 0.5%. right now. Why is Jensen Huang so concerned about this legislation when Donald Trump is probably going to have the final say on this anyway, right? The White House wants to be able to dictate this, not Congress.
I'm sure that they would like to be able to dictate many things. And I think that really for the White House, they have time and time again shown their focus on AI infrastructure, on the build out. Look, just this week we had the news that they're helping have $150 million being allocated towards Pat Gelsinger's new startup, which is all about taking on ASML, the European chip equipment manufacturer. And with LightX, it's all about lasers we're seeing at the moment more broadly, Joe, whether that would be a part of the supply chain here in the United States. But we know that they've wanted to put money into rare earths. We know they want to put money into quantum. They know that they want to win what they see are national security real races upon their hands. They would like to ensure that really Jensen Huang and NVIDIA remain the #1 talk of the town. And it really is a tussle between the hawks and those that do feel that maybe to have access to China is important in this overall AI race.
You have to understand how fun it is for a political wonk like me in Washington to talk lasers with Caroline Hyde. So let's talk about this Microsoft report. You know, everyone's looking for an excuse to bail on the whole narrative here, right? That's been the story for the past couple of weeks. So in this case, the information shows up and everybody freaks out here. Microsoft has lowered expectations for getting business customers to spend money on the Cloud Units marketplace for AI models and agents. You frame that as you want. We've got a little bit of a warning here, and you know, anyone tied to OpenAI right now, and there's no bigger name really than Microsoft there, seems to be getting a second look. Does this simply confirm the worries that were already out there? How should we be looking at this?
I really think that on any other given day, when we're not in perhaps lower liquidity, holiday trading, and if AI anxiety wasn't still looming, we'd kind of have batted this report off. But at the moment, as you say, everyone's looking for breadcrumbs that feed into the thesis that AI productivity isn't there. We've got this whole bubble narrative and circular financing narrative continuing that are we spending too much on AI infrastructure if people don't want to use it and they don't want to spend to use it? This report coming from The Information is really putting a highlight on, say, Carlyle Group, big private equity player that has a deal, we understand, with Microsoft to use Copilot within its offerings to be able to scrape data from all of its other software and be able to build and churn out Microsoft Excel reports that much easier. The problem is, it's hard to access the data. Maybe you've got some of it in Salesforce, and you've got it in some of your other pockets. How are we seeing these companies managing to walk companies through, handhold them as to how to make productivity gains? Carlyle basically just said, look, we want to cut our costs on AI, and we're perhaps going to move away a little bit from what have been some of our overall spending. This then feeds out writ large. How much are we seeing sales members in Microsoft trying to sell GitHub or Copilot? Are they having to curtail what they thought was going to be enormous demand? We just had Okta CEO on. Now, Okta CEO builds basically a way in which your agents will be known by the company to be the right agent, accessing the right data at the right time. Now, he's saying, look, he's never seen scale like it, adoption like it, interest like it. But at the moment, they're stuck because you are getting these pools of data in different places and everyone needs to work together. So is it a question that you just need more help for your clients? Or is it actually that people aren't willing to spend? We'll get Salesforce after the bell today. Big question mark. Is their agent force actually able to drive revenue? Are people willing to spend a lot more for it, Joe? I think that's the key question, and it becomes a key question on whether you still want to be building out AI infrastructure at quite the clip you are.
Well, so you're pointing us to use cases here, right? And this comes just days after Gemini jumped off the page here and became the greatest thing. You're talking about Salesforce, the Benioff tweet that went around the world. And it's coming at the expense of OpenAI, which just yesterday saw Chief Executive Officer Sam Altman declare a code red. When you see Altman, after all these deals, and what I'm assuming are hundreds of billions now in announced investments, declare a code red, are we getting over our skis?
I think it just shows you how competitive this whole space is, Joe, because this is a company that has 800 million weekly users of ChatGPT, and it's worried about Gemini 3. It's worried about the latest innovations. Remember, we've just had Runway, which is a New York-based generative AI video company, come out, and it's top of the leaderboard with its own AI video generator in the latest iteration of models. Their argument is that Davids can beat Goliaths out here at the moment. People are going to want ever more specific, unique types of models. Are we going to, A, become commoditized when it comes to our large language model providers, or is there really winner takes all here? We see Sam Altman realizing that he needs to stop being perhaps distracted by subscription focus or advertising models that might substantiate his revenue growth and actually get the product right. And I think that's why he's calling this so-called code red, reassign some of the resources that he has to stop going into different directions and come back to what is their key core product, ChatGPT, that needs to work effectively and win out versus Gemini or indeed Anthropic's Claude or whoever else that you might lean on. With Perplexity as well, there really is quite a fierce competition out there.
Well, with apologies to Jack Nicholson, is the code red about simply making a better product to better compete with Gemini and the others? Or is it about taking a different look at this and favoring maybe business to business, the industrial applications over the consumer-facing ones?
I think they've really been trying to talk up about the adoption in companies. 1 million companies that are currently using ChatGPT and OpenAI's large language models. There is really, that's where the enterprise and the growth and the money is likely to be coming from. And that's really where Anthropic's been winning. Claude has always been much more focused on the business sales, particularly on coding and its prowess there. And that's managed to keep investors, VCs and others very interested. Can we see OpenAI now being put into Amazon Bedrock? Will that give it the scale that it needs to go into more B2B offerings? Will it be able to work with partnerships? Are companies adopting it at the scale that they'd like to see? I think you're really right that this is a code red of just trying to understand for now, how does the core product work? How does it compete? And will they end up winning versus some of the other competition? From a revenue perspective, it looks as though in a way, Sam Altman's kind of putting that debate on ice by saying, look, let's not focus on advertising, but let's focus on making the core competency that is ChatGPT just insurmountable, just unbeatable. And I think that's why he's really doubling down there.
Wow. Are we in a world now then it's Microsoft and OpenAI versus Google and Broadcom and NVIDIA just takes money from everybody? How do we look at these alliances?
Frenemies. I think this is one big game of frenemies because remember, we've just had that, as you say, the jolt with Alphabet suddenly showing its prowess from its vertically integrated company. It not only has great models, but it trains them on its own in-house chips and is then able to give it to you and I via Gemini or whether even we're using a Pixel phone. That suddenly becomes music to other people's ears. Maybe it's a Meta who suddenly wants a TPU because it's slightly cheaper than an NVIDIA. But remember, Alphabet's quick to say, we still want NVIDIA chips. We still want to be able to use that in our Google Cloud offering. So I do think there's an element that all can win, and we'll get more specific for what chips we want, in which scenario, which model we want, in which scenario, and eventually that will give us the productivity gains we all keep wittering on about. But for now, it is a question of Marvell doing well today. Look, earnings came out yesterday. This is a company that makes chips for application-specific uses. They make Trainium 3 with Amazon, for example. There are going to be many winners in this, but we're still going to question quite the size of the winning.
God, we didn't even get to Amazon. Can you come on every day? Can I ask producer James to make that happen? I would appreciate it if we could do this. I'm sure. Caroline, it's great to see you. Thank you for your readout on this. Fascinating moment in time when we keep our eyes on the AI space. Caroline Hyde only on...
6:40 on Wall Street. I'm Alexis Christoforous. We're getting a last major look at the labor market before the Fed's final rate decision of the year, and it's not good. Private payroll provider ADP says companies lost 32,000 jobs in November. Economists surveyed by Bloomberg were looking for a gain of 10,000. Bloomberg's Enda Curran has more from Washington.
It's clearly a negative read on the labour market, coming in much weaker than expected. Economists had expected maybe around a plus 10,000 jobs, but it actually came in, as you say, negative 30-odd thousand, and weakness by the looks of it across the board, jobs being lost in goods and services.
Bloomberg's Enda Curran in Washington. Following that report, traders now pricing in a 98% chance the Fed will cut rates next week. The Dow Jones Industrial Average up 345 points at 47,819. The S&P 500 up about 20. We've got the NASDAQ Composite climbing 34 points. And shares of Marvell Technology rallying after reassuring investors that its custom chip design unit is winning repeat orders. Marvell also plans to acquire the startup Celestial AI for at least $3.25 billion. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Now back over to Joe Matthew and Balance of Power.
All right, Alexis, thank you so much. Great to have you along the Wednesday edition of Balance of Power here on Bloomberg Radio. Nice to see you on YouTube. If you're not already watching the radio on TV, just search Bloomberg Business News Live. Catch this program and the rest of our lineup from Washington, D.C. and world headquarters in New York throughout the day. It's one of the coolest things we've got going. You can pause it, you can back it up. If you've got YouTube TV, by the way, the full package, dial up Bloomberg Originals. They carry the program all 2 hours every day. We've got breaking news that will not make the defense secretary probably a lot more comfortable as he prepares to light the inaugural Pentagon Christmas tree this evening, just before 5 p.m. CNN gets first grab here at the Signal Gate report. If this wasn't on your radar, it should be. The Inspector General report into the Signal Gate scandal, due to be made public here, having already been delivered to the Senate Armed Services Committee, according to Axios, which means the whole thing will be leaked at some point very soon. We'll get a redacted version publicly, but CNN is talking to sources about what's inside. The headlines just crossing the terminal. Hegseth endangered troops by using Signal. Watchdog finds, citing 4 sources on Watchdog report of Hegseth Signal use. So we'll just park that right there, and we'll talk about it a little bit more when we learn more. We're also waiting to learn a lot more when we consider the ability of the administration to control the narrative over Signalgate or anything else going on. So far, Russia is the only one to describe what went on inside the meeting yesterday with Vladimir Putin. Remember, Steve Witkoff and Jared Kushner went to the other side of the world to talk with Putin in Moscow. They spoke for the better part of 5 hours. And if you're with us on YouTube, there's a little peek inside the room. Always with the white table, huh? Big, long, white table. No readout, however, from the White House, or I guess more specifically, from Truth Social. That's where we tend to get them now. In administrations past, you'd get a formal document with the White House seal on it and a readout. That typically was pretty sketchy. These days, the president himself usually writes what he thinks about it in a long missive on Truth Social. We've received neither. As far as the Russians are concerned, during yesterday's negotiations, something was accepted, something was noted as unacceptable, and this is a normal working process of seeking compromise, according to the Kremlin spokesman Dmitry Peskov. That's more than we've gotten from the Americans. He was quoted to say, the more quietly these negotiations are conducted, the more productive they will be. That might be what's happening. Let's see what the panel thinks. Rick Davis is with us, Bloomberg Politics contributor, Republican strategist, and partner at Stone Court Capital, joined today by Democratic strategist Caitlin Legacki, senior fellow at Third Way, and it's great to see both of you here. Rick, we talked yesterday as this meeting was getting underway and we started to see the initial headlines from Russia. Almost 24 hours later, what do we make of the fact that the White House has said nothing?
Yeah, I do think it's unusual. Normally there's a bit of a battle of the bands, right, where the Russians, Peskov is very good about getting out and setting the tone. I think we've been beat to the microphone almost every time there's been a major meeting with Trump or Putin or, U.S. negotiators. So that shouldn't surprise us. But the fact that we haven't followed up with thing to put into the pipeline of information is extraordinary, and maybe it's because there was nothing accomplished, and this is not something that the administration wants to point out. Indications are that there's on the same problem that they've had since day one, and that is a territorial dispute. Russia wants the territories not only that they've fought on the ground to obtain, but also additional territories that they believe Ukraine owes them. And of course, Ukraine disagrees with all that. My understanding is yesterday's 5 hours of negotiation barely even touched on it, and therefore no resolution. Peshkov's funny, though. I mean, like, he will disagree with himself when he's talking to the press out of the Kremlin. He's like, I'm the first one to talk to you about what happened, but like maybe a quiet diplomacy is the best way to go. Well, which is it, Peshkov? I mean, what side are you going to take? So we'll continue to watch this space, but I'm shocked we haven't heard anything from the White House.
Well, maybe he thinks it's best if the U.S. keeps things quiet. Caitlin, I'm looking at the Truth Social feed. There have been no shortage of posts over the last 24 hours. In fact, more than I can even fit on a terminal page here because we have all the sources coming in the Bloomberg. You know that. He's been very busy, though. We've got a post about the election results in Tennessee, a pardon for Democrat Henry Cuellar, but no attempt to frame what took place yesterday. How come?
Well, because I think they don't have anything to brag about. I mean, based on what we have read recently in news reports from the Wall Street Journal, a lot of these negotiations have really been geared toward giving Russia exactly what they want. And I think that if there was any sort of progress that was made that showed that this deal is either in Ukraine's interest or in the interest of the United States, they'd be talking about it. But I think, posture really tells you a lot. And the fact that Russia is really eager to set the tone here indicates that they think that they are kind of winning this negotiation. And I think, frankly, the more the American people hear about these negotiations, the more they know what's in these proposals, the harder it gets for the Trump administration to continue going through with them. And so it doesn't surprise me that they're trying to keep it all under wraps. And frankly, I think that should give everybody some pause.
Yuri Ushakov, an aide to Vladimir Putin, who was recorded in a conversation on the phone. Remember, it was Steve Witkoff. It was a Bloomberg exclusive last week as Witkoff told him how to approach President Trump and get good results from a meeting. He said, we could agree on some things. Other things provoked criticism. The president is referring to Putin here. Also, this is a direct quote, Rick, made no secret of our critical and even negative attitude toward a number of proposals, unquote. This doesn't sound like it's getting any easier, and Putin is very busy launching missiles into residential neighborhoods in Kyiv and other cities across Ukraine. Is the president being played right now?
Well, I think it's fair to say Putin's been playing every president that has served in office since he became head of the state of Russia. I mean, this is standard operating procedure for the Russian leader. He plays everyone, and it's his training as a KGB agent. He never shows you what he really is thinking. Every time he opens up his mouth is a lie. It's propaganda. It's what he does, and he's really good at it. And we're lousy at it. We tend to say what's on our mind, and it falls right into his trap. And so every Russian expert I've talked to since these negotiations began, even during the Biden administration, I would say are totally convinced that he has a waiting game, incremental gains on the ground, through the slaughter of young Russian men, and wait out the West till they just get tired of having a war in Europe. And so far, advantage Putin. That seems to be working for him. The best thing I heard today was the White House may be considering changing their strategy, that the negotiations aren't working, and maybe we ought to do something different. Like maybe they should think about sanctions. Maybe they should think about tomahawks. The Defense Department's already approved them. Why doesn't the White House send them?
Well, my God, of course, that sanctions bill has been sitting on the shelf up in the Senate for months now. Just ask Lindsey Graham. NATO foreign ministers are gathering today in Brussels, Caitlin, to talk about Ukraine. The Secretary of State will not be there First time that's happened for the Secretary of State to skip a NATO ministerial since the last century. What's going on here, Caitlin? If the administration is considering a different strategy, will Europe be involved?
It's not clear. I mean, what I have found remarkable about this entire negotiation process is we have allies in Europe like Poland who are not liberal bastions. Like the Polish government is pretty conservative, and they are really scared about the way this is going because the one thing that all of Europe agrees on is that Russia is a threat to them. And so the fact that the U.S. is not participating in this NATO meeting, I think, is a really troubling sign. We know that Donald Trump historically has been hostile to the idea of NATO. He thinks that the European countries don't carry their weight when it comes to defense spending. And so I think there is good reason for them to be nervous about the U.S. not being there to support NATO and the rest of Europe. And I think, frankly, it's a troubling sign.
Well, I don't know if we're going to get any meetings in the near future here, Rick. The administration has a lot to juggle, including what's going on in Venezuela. And now apparently this Signalgate report that just dropped a short time ago on someone at CNN, at least. This is going to be made public. As we mentioned, it's already been released on Capitol Hill. This is the Inspector General report into Signalgate that's been months in the making. The Armed Services Committee in the Senate has the documents, Rick. The headline on CNN is, Hegseth endangered troops by using Signal, watchdog finds. If this is in the hands of the committee, how quick before this is made public?
Well, I mean, just the fact that we now know that the conclusion was that he put troops in harm's way is going to be the punchline, right? How he did it, we also pretty much know, right? I mean, he was texting on Signal what the war plans were. And no matter how you spin it, that's a de facto risk for those troops executing those war plans. So I don't think there's going to be a lot of mystery here. I think what's amazing is there's still a watchdog at DOD. Amazing. That guy shows up at the most interesting moments. Kind of thought that they had put a cap on him. And so this just is another bad day in the Secretary of War's office where they got to talk about things other than what he wants to talk about. And at some point in time, we've seen this play before. Trump will get bored with this idea of playing defense, and the only way he can get back on offense is make a change at the top.
Wow. Well, so is that where we're going, Caitlin? This report finds Hegseth should not have used Signal, and that senior Defense Department officials need better training on protocols. Will he be around for that?
I don't know. I agree with Rick completely. I think there is actually, this is the worst possible timing for Hegseth, given the dialogue right now about the double tap strike on the Venezuelan fishing boats and whether or not those were illegal orders. I think it feeds into the same narrative that Hegseth is more concerned about being macho than about running the department efficiently. He's not concerned about the safety of our troops or ensuring that we're upholding standards. And I think it just feeds into a larger picture of recklessness and carelessness that ultimately Trump is going to get tired of. And it's a question of whether he cuts bait with Hegseth now or he waits until after Christmas. But it does feel like Trump is getting tired of it.
Well, the Admiral is going to be testifying tomorrow, as you know, Rick, before the Senate Armed Services Committee about the second strike, or the double tap, as everyone keeps calling it. I sort of get a kick out of everyone using the jargon at this point. Will it be the Admiral's testimony or the results of Signalgate that end Pete Hegseth's career?
You know, look, I don't think there's going to be any one thing that pulls that trigger potentially from the White House. I mean, like, remember, a month ago we were talking about that crazy meeting in Quantico where, you know, Hegseth calls all the general staff to talk to them about what they wear and how fat they are. I mean, like, that began people scratching their head going, what in the world is going on in the secretary's office? So this has been kind of a routine exercise of inconsistency by this secretary. And I think that it's the cumulative weight of all this stuff that ultimately will, I think, sink this boat without a double tap.
Well done. Who's bought DoubleTap.com? James, is that available? I think I know a guy who's buying. Great panel today. Rick Davis, Caitlin Legacki. They'll be back in hour 2 here. Double Tap, hour 2. I'm Joe Matthew in Washington. Jane Harmon will be with us ahead. Stay right here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
The walls close in on the defense secretary. Welcome to the Wednesday edition of Balance of Power. As a new Inspector General report into Signalgate drops, just a day before the admiral who ordered the second strike on the alleged Venezuelan drug boat testifies on Capitol Hill. We're going to get the latest ahead from Bloomberg's national security expert, Nick Wadhams. And we'll have insights coming up from former Democratic Congresswoman Jane Harmon, former ranking member on the Intelligence Committee. Republicans pull out a win in Tennessee, but Democrats still declare a moral victory, and we'll get into that with our political panel, all after a look at Wall Street. Let's start there right now with Alexis Christoforous at World Headquarters in New York. An update so far, Alexis.
Thanks, Joe. And more proof today that the labor market is weakening. Private companies cut 32,000 workers in November, with small businesses hit the hardest. That's according to payrolls processing firm ADP. That report, of course, the last monthly jobs picture the Federal Reserve will see before its meeting next week. Now the odds of a Fed rate cut this month have surged to 98%. That is helping to fuel a rally on Wall Street. The Dow Industrial is up 355 points. The S&P 500 adding about 23, and the NASDAQ Composite up now about 50. Yields are mostly lower. We've got the 10-year yield at 4.06%, the 2-year yield at 3.49%. Taking a look at gold, up fractionally at $42,009. West Texas Intermediate up 1% now to $59.23 the barrel, and Bitcoin up about 1.5%, now above $93,000. In stock news, shares of Microsoft down more than 1% after a report that the company has lowered expectations for business customers to spend money on its cloud units marketplace for artificial intelligence models and agents. Microsoft's denying that report, stating that aggregate sales quotas for AI products have not been lowered, and that the story inaccurately combines the concepts of growth and sales quotas. And Spotify Wrapped is here, and it looks like Bad Bunny has been named its most played artist, dethroning Taylor Swift. Bad Bunny earned more than 19.8 billion streams globally this year, followed by Swift, The Weeknd, Drake, and Billie Eilish. Once again, stocks higher across the board, with the Dow now up 362 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Alexis Christoforous. That's your Bloomberg Business Flash.
Alexis, thank you so much. I'm Joe Matthew in Washington. Great to have you with us here on the Wednesday edition of Balance of Power on Bloomberg TV and radio, with breaking news from Washington. Multiple reports now about a Pentagon watchdog report into the Signalgate scandal, finding that Defense Secretary Pete Hegseth violated some of the department's regulations when he shared sensitive information from his cell phone on Signal, and in fact may have endangered troops in the process. We're going to have a lot more on this when we spend some time with Nick Wadhams, and coming up as well, Jane Harmon will join us in studio with our eyes on tomorrow's testimony from the admiral that ordered the second strike on the alleged drug boat coming out of Venezuela. This was, of course, a big topic of conversation as President Trump held his final cabinet meeting of the year yesterday. And sitting right next to him was the Defense Secretary, Pete Hegseth, who made clear that he was not, in fact, the one who ordered that second strike. And while he was watching the attack live on a live video feed, he had left the room before it was clear that there were survivors in the water who were then killed by the second strike. President Trump was asked about this before Hegseth even got into details, and clearly not concerned about the way this all unfolded. Here's what the commander-in-chief had to say.
I would say this, they had a strike. I hear the gentleman that was in charge of that is extraordinary. He's an extraordinary person. I'll let Pete speak about him, but Pete was satisfied. Pete didn't know about second attack having to do with two people, and I guess Pete would have to speak to it. I can say this, I want those boats taken out, and if we have to, we'll attack on land also, just like we attack on sea.
Hegseth said we're just beginning attacks like these. Tomorrow, as I mentioned, Admiral Frank Bradley, who ordered that second strike, will testify before the Senate Armed Services Committee as members of Congress try to get answers that were not delivered yesterday in the cabinet meeting. Nick Wadhams, who runs our national security coverage here in Washington, is with us in studio with more on this. Nick, when you add everything up here, the questions about Venezuela, the testimony tomorrow, this Signalgate IG report that just dropped, this is probably not a fun day for Pete Hegseth. By the way, he's lighting the Pentagon Christmas tree a few hours from now.
Right, and we will be watching that one. I mean, listen, there are a couple of things going on here. One, it is undeniable that he has had a series of controversies and mishaps dating back to even before the administration took office. His confirmation hearing was fraught. He cleared by a single vote. There were a lot of reports about alcohol use, allegations of assault, all sorts of unsavory things in there, and that's been followed by a repeated string of things, the Signal situation, and then this argument that he essentially was not there to see the second strike on this vessel that killed some survivors in what some legal experts are saying is a war crime. Yeah. At the same time, president continues, at least publicly, to say he remains satisfied with Pete Hegseth. And what you have, what the president has in his defense secretary is an official who has been unstintingly loyal, has really pushed the MAGA agenda, has gone after DEI and woke, what he sees as woke policies, has been on board with the president's push to revamp procurement, budgeting, all sorts of stuff within the Pentagon. So, so far, at least, it appears that President Trump believes that the positives outweigh the negatives when it comes to Secretary Hegseth.
Wow. Will we see a clarified policy when it comes to Venezuela following these investigations? You've got armed services committees in both chambers looking into this. Once they get the admiral's take on this, I assume there'll be some sort of report. What follows?
Well, you know, I think you actually have seen a more clear policy in the sense of what hasn't happened, because after that initial strike, that was the first strike that the U.S. did on September 2nd. And the reporting we have gleaned since then, and what officials have confirmed, is that there were at least two hits, maybe even more on that boat. One to take it out of action, and then a second to fully destroy the boat and also kill survivors. What we do know since then is that they have not done secondary or tertiary strikes to kill survivors. So you had the case some weeks ago where they actually then went in and collected people who had survived the initial strike and sent them home. So
that was based on the findings from the first strike.
We don't know what happened there exactly, but putting together those two events, the experts we have spoken to suggest that would indicate a change in policy, that there may have been a recognition that the initial version got them into very, very thorny legal trouble, moral trouble. Geneva Conventions explicitly say you cannot do this, that is a violation of international law. So just based on the actions that they have taken, we have not seen a pattern that was repeated, at least publicly, that we know of, based on what happened on that September 2nd.
Just to be clear, it's important what you just said, and everyone is a little bit too cool for school walking around Washington talking about this double tap strike. Right. You've got survivors in the water. That a double tap violates the Geneva Convention.
Yes, I mean, so what's happened is and there is an argument that any strike whatsoever on these boats is a violation of international law, because there's a real challenge of the president's argument that these pose an imminent threat to the United States. And for years, the U.S. has interdicted these boats, arrested the people on them, seized the drugs. Now the president says they pose a mortal threat to the United States, and he has the right to, he calls the people on the boats narco-terrorists. So there's the broad umbrella of the fact that there are a lot of very serious questions about whether these strikes are illegal in the first place, but there is very little doubt that if you take out the boat, it is no longer a threat, and you have survivors clinging to the boat.
Yes.
It would be the same thing as you would see in war, where the laws of war prevent you from going around and executing the people who have been wounded in your attacks. You can't do that.
Right.
So that's how we now find ourselves in this situation.
Admiral Halsey is going to have some interesting things to say as well.
He is, and it'll be really interesting to see the line he walks, because you've seen this from the president and also from Pete Hegseth in his repeated commentary, where he says, hey, I wasn't there.
Yeah,
I didn't see that happen. So sort of distancing himself, but also saying, I support the guy who made the order. He did the right thing. So he's walking a very fine line. So, Bradley, it'll be really interesting to see what he says tomorrow in terms of, hey, I was just following orders. Will he say, I believe this order may have been legally questionable? We just don't know.
Will that be made public, or we don't know that testimony?
I am not sure at this point. We don't know. I don't think there will be a public hearing.
Everything leaks out.
It may have to open up.
Yeah. Thank you, Nick.
My
Great
pleasure.
to see you, as always. Nick Wadham's got his hands full these days running our national security team here in Washington. With much more to consider here, we're going to bring Jane Harmon in on this conversation coming up next. But there's an important story in the Washington Post today that I'll point you to. It might get some eye rolls from folks who support what's going on in the Caribbean right now. But the family of a Colombian man who was killed in a strike September 15th has filed a complaint with the Inter-American Commission on Human Rights, alleging the U.S. committed human rights violations in an extrajudicial killing. I just mention this because it's the first time a name has been attached to any of this. Alejandro Andres Carrana Medina, 42-year-old, a fisherman, killed, as I mentioned, in the strike off the Colombian coast on September 15th. He's got a family, turns out, and they've got a lawyer. The grieving family left without their chief breadwinner, as we read here. Carranza's family seeking compensation. I guess he had kids. Very unclear to see if they have the power to enforce any recommendations that are made. I told you Jane Harman was coming, and she's with us in studio today. Former Democratic Congresswoman from California, importantly, former ranking member of the Intelligence Committee, and it's great to see you in the flesh.
You too, Joe.
So if you were running the Intel Committee right now, either as chair or ranking member, what questions would you be asking about what is happening in the waters off Venezuela? And would you even get a briefing? Because as the Democrat on that panel, from what I understand now, you still would not have heard from the administration.
Well, I think Mark Warner has said they got very unsatisfying briefings. Yeah. He was the chair. He's now the ranking member on the Senate side. I'm not sure what's happened on the House side. But what would I be doing? I would be raising hell. I think Congress not only has a right to be briefed, but I think Congress is abdicating its role. That I would give good marks to 3 Republicans, at least that I can think of. Rand Paul, I guess he's a libertarian. Yeah. Roger Wicker, chair of the Senate Armed Services Committee, and Mike Rogers, who chairs the House Armed Services Committee. And they have been pushing back. But where's the rest of Congress? Congress is on trial here, and Congress is really on trial with respect to Ukraine. That's why I wore my scarf carried back from Kyiv.
Yeah, well, I'd like to get into that in a moment because these are both evolving, both of these stories before our eyes here.
The IG report, I'm just...
Well, there's another one for you. But in terms of the admiral who ordered this second strike, based on what you understand, what's he going to tell these committees when he goes to testify tomorrow? How damaging could that be for the administration?
I think he should have followed the advice of the 6 Democrats who said never follow an illegal order.
You believe that was an illegal order?
I believe it was, and I believe he should have known that. I'm not sure what he did. Let's be sure we know what the timeline is. It's a little bit, to me, eye-scratching to believe that Hegseth didn't give the order and was too busy to see it executed in a case like this.
Yeah.
Surprise, surprise.
What did you make of that yesterday? Well, Pentagon's a busy place. I had to get to a meeting, he said.
Yeah, it is a busy place. And maybe he needs to get a little busier about being on top of the workload there. Wow. Just saying that rumors are rampant. It doesn't mean they're true, that his days are numbered. Yeah. And that Trump maybe doesn't want to do the deal personally and wants it somehow to evolve. But I think he's not well liked in the building. He's not well respected. And I think former military, and I talked to lots of them, are really pretty worried about the civilian leadership at the Pentagon.
A lot of folks pointed out the fact that he was not sent to Kyiv or Russia, for that matter. The Army Secretary was in Kyiv, Dan Driscoll, talking with Ukrainians. But we're still waiting, Jane, for a readout on this meeting with Vladimir Putin. And I want everyone to hear first what Marco Rubio, the Secretary of State, had to say about this negotiation in the president's cabinet meeting yesterday. Let's listen.
Every day is a challenge, but it's been driven personally by the president. It's the reason why we're involved in this whole Ukraine-Russia conflict. That's not our war. It's not the president's war. This war started. It never would have happened if you'd been president. Even as we speak to you now, Steve Witkoff is in Moscow trying to find a way to end this war, to save lives of 9,000 people, Mr. President, as you well know, are dying every week. More people are dying a week in that war than have died in the entirety of the U.S.'s involvement in Afghanistan or Iraq. Just think about that, how bloody and destructive it is.
But here's what we've not heard from the White House. Anything about the meeting. The Russians have said a lot, but there's no readout from the administration, which is extremely unusual. How do you read into it?
Well, a couple of comments. First about Rubio. I was in Halifax at the Halifax Security Forum a couple of weekends ago when the CODEL, led by Jeanne Shaheen, but also having Republican members, got a call that evening, the evening that the 28-point plan surfaced, from Rubio saying, well, it's just a draft. It's not cooked yet. Yep. He wasn't in the room. He had nothing to do with it, or probably had nothing to do with it. And I think it's dead on arrival. I mean, I brought some props. I don't want to surprise you. But this was from Senator Mitch McConnell when that plan was released. Quote, Putin has spent the entire year trying to play President Trump for a fool.
This is a tweet, right? This
is a tweet from Mitch McConnell on X.
Yeah.
And this one was from Roger Wicker, whom I just mentioned as chair of the Senate Armed Services Committee. Quote, any suggestion that we can pursue arms control with a serial liar and killer like Putin should be treated with great skepticism, unquote. So I think that Rubio's trying to make his best case. He is the Secretary of State. He is the one who should be leading the negotiations. This other team, I'm not saying they're terrible people. I'm sure they're trying to make a deal, and wouldn't it be nice for the war to end? But let's remind everybody that Russia was the aggressor and Ukraine is the victim.
Yes.
And rewarding Russia and punishing Ukraine is the wrong outcome.
Well, everything in that plan looks like it would be a reward, right?
Well,
so do you trust Steve Witkoff and Jared Kushner running this conversation?
Well, I don't want to talk about trust, but the plan as explained to me looked like there was some oops in there. There was some bad translation from the Russian. Looks like exactly what Mitch McConnell said, that Putin is playing Trump. And if we're not talking about it, then I'm betting nothing very much good came today, except for Russia blasting Europe. Right. And threatening, some action against Europe. The sadness is NATO's meeting today. Rubio has for the first time in this century or something.
Right. What do you make of this?
Blown off.
He sent a deputy.
I think it's a message to NATO.
Yeah.
And it's
that means Russia or Europe will have no input on how this ends.
It's
with Russia.
a very bad. Well, let's see.
Yeah.
It's a very bad message to NATO. We're a member of NATO. We're not a bystander here. We're a leader of NATO. And I think that's a terrible message. And one more point. I said Congress is on trial. Congress is on trial. There is a Graham Blumenthal bill to impose secondary sanctions on all countries, all.
Isn't Lindsey Graham talking to Trump about this on the golf course?
That deal with Russia.
Yeah.
It has 85 plus co-sponsors in the Senate. That is a veto-proof majority, which means if Lindsey Graham, I'm sure Blumenthal would like to do this, calls up that bill, that bill passes. And it will, I'm guessing, pass the House too. And then that is real pressure on Putin. Is Congress for Ukraine, or is Congress just, again, hiding and out of the game, the Republicans in Congress?
Well, let's see if the president feels like he's being strung along by Putin enough to greenlight that sanctions bill. Jane Harmon, I love that you printed out the X posts. I'm picturing you back in Congress with the easels set up in the hearing.
You got to read this one. George
I wish
Will.
we had time to do that. Oh, no, I saw that column this morning. A moral slum. That's conservative George Will. She's made for television and radio. There's only one Jane Harmon, former Democratic Congresswoman from California. Thank you, Jane, for the insights. I'm Joe Matthew. This is...
7:21 on Wall Street. I'm Alexis Christoforous. A new report showing continued weakness in the job market is boosting hopes for a Fed rate cut next week. According to the payroll company ADP, U.S. companies cut 32,000 jobs in November. That was more than expected. Wall Street now putting the odds of a rate cut next week at 98%. It would be the third cut of the year. The Dow Jones Industrial Average up 363 points, led higher by shares of United Healthcare, American Express, and Goldman Sachs. The S&P 500 up about 21, and the NASDAQ Composite gaining 40 points. We've got robotics companies in the spotlight today on a report that the Trump administration is considering issuing an executive order on the technology next year. According to Politico, Commerce Secretary Howard Lutnick has been meeting with CEOs in the industry, and that the Department of Transportation is preparing to announce a robotics working group. Among the movers today, shares of iRobot up 64%. We've got shares of Rich Tech up about 10%, and Teradyne gaining more than 1%. Again, stocks higher, with the Dow up 365 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash.
All right, Alexis Christoforous will have more on the markets in just about 20 minutes' time here on Balance of Power. Thanks for being with us on Bloomberg TV and radio. Unless you're dialed up on YouTube, either way, your satellite radio, we're always glad to spend time here. This is the Wednesday edition with much to talk about. We're going to get into the Tennessee election results here, the special last evening with our political panel, but want to just give you a heads up on a special conversation coming up later this hour as we consider the looming renegotiation of the USMCA. You haven't heard me use those letters together in a while here. With trade in mind, we're going to be joined here at the table in studio for a rare conversation with the two former negotiators of the USMCA. From Mexico, from Canada. They're going to be with us here at the table about their view here moving forward and what a renegotiated agreement might look like. With them today, Kevin Brady, the former Republican congressman, former chair of the House Ways and Means Committee, who's been working overtime trying to push this renegotiation effort. That's all coming up after the bottom of the hour here. With our eyes on Tennessee and Republican Matt Van Epps, he had the endorsement of Donald Trump and had the full weight and thrust of the Republican Party behind him. The Speaker of the House was there stumping, and the Republican Party put a lot of money into this race. Congratulations on Truth Social to Matt Van Epps in his big congressional win in the great state of Tennessee, President Trump last evening. But if you talk to a Democrat, they see this a lot differently because he won by single digits, and this was a district that Donald Trump won by 22 points. You wouldn't know it by listening to Mr. Van Epps, who addressed supporters after the race was called last night. Listen.
Tonight, you've sent a message loud and clear. The people of Middle Tennessee stand with President Donald J. Trump. To President Donald J. Trump, thank you, sir. Tonight we showed running from Trump is how you lose. Running with Trump is how you win. President Trump was all in with us, and it made the difference. In Congress, I'll be all in with him.
All right, so there you go. +1 for Mike Johnson. But if you're a Democrat looking at the road to the midterms here, you're looking at this very differently because the fact of the matter is Democrats cut the margin here. I already told you, do the math. Cut the margin by 15 percentage points, right? Trump won by 22, Van Epps won by 9. Is this a problem? Is it even a bellwether? Because you're going to hear a lot of national Democrats and Republicans talk about this today. How about our panel right now? Rick and Caitlin are back with us. Bloomberg Politics contributor Rick Davis, Republican strategist, partner at Stone Court Capital, alongside Democratic strategist Caitlin Legacki, senior fellow at Third Way. How you looking at this, Caitlin? Is it a moral victory for Democrats?
I don't believe in moral victories. I do think that it's a very positive sign for the party that the district swung as much as it did. There are currently about 40 other Republicans that are sitting in House seats that they won by less than the 8-point margin that we saw last night. So all of those seats should now be considered gettable. But I do think as well that, you know, the candidate in this race on the Democratic side did not benefit from nationalizing this race. And it really underscored the importance of Democrats nominating candidates who are aligned with the views and the beliefs of the districts they're running in. and to really focusing on the local issues that matter rather than trying to turn everything into, cable TV fodder or what's going to play best with the Twitter audience.
Interesting. Rick, I'm curious if you're going as far down the road as some political strategists are after last evening. I was struck by the quote from Matt Whitlock, Republican in Politico this morning. Quote, if every House district in the country shifted left by this same amount, we would be looking at a blue wave far worse than 2018. Is he right?
I think he's close to being right. I think Caitlin nailed it. You'd rather win than anything. So kudos to the Republicans for pulling out a victory here. With the margins they have in the House, it's really important. Two, the only way to calculate this midterm is looking at what Trump vote doesn't show up consistently, both in the elections, this last November, and then in this election. I mean, solidly a minimum of 10% of the Republican Party doesn't show up unless Donald Trump's on the ballot, and Donald Trump won't be on the ballot in 26. So I would actually even expand the margin. It's not just 8%, where if the district was plus Republican 8, you got a horse race. I'd say it's 10 to 15, because there are now plenty of precedents to show that there is half the Republicans in these districts will only show up when Donald Trump's on the ballot. So, buddy, in the House, you're on your own. And I would say that her advice, Caitlin's advice to the Democrats, is exactly right. Don't get candidates who are just going to run against Donald Trump. His vote's not showing up anyway. Get candidates who can actually make a case in their district, and then you got something to work with.
President Trump said she despises country music. Caitlin, it could have been as simple as that. But enter political strategist Ron DeSantis, the governor of Florida, on X. Producer James just put this in front of me. This is remarkable. Ron DeSantis writes, special off-year and midterm elections historically benefit the party out of power because its voters are motivated to vote, while voters of the incumbent party become more complacent. He goes on to write, this is more glaring for today's GOP because a chunk of voters who put them in power in 2024 are Trump-specific voters. They will vote GOP down ballot when Trump is running, but won't turn out to vote for a typical congressman in a midterm when Trump isn't running. Caitlin, it's like Ron DeSantis was channeling Rick Davis. What do Republicans then do in the midterms?
I mean, their goal is, if they're in a state or a district that favors Trump, is to bear hug him and do everything they can to nationalize this race, to make it about Donald Trump, to turn out his voters. But I think the reality of the situation is that Trump's approval ratings keep going down. That's becoming an even riskier proposition. And it's going to just be harder for a lot of members to fight those waves. And so the question for Democrats then becomes, how do you actually leverage that and put forward candidates who are in a position to win and represent these districts?
Well, I'll tell you what, Rick, when it comes to strategy, if you were launching a campaign, and granted, a lot of them are waiting to find out what the maps are going to be for the midterms, how would you take last night's lessons in Tennessee and try to exploit them next November?
Yeah, so I think, Republicans need to take the same advice Caitlin was giving to Democrats. You can't rely on the Donald Trump vote to turn out. You've got to be very granular on the issues. You really, in this case, want to localize the election as much as possible. You don't have much to run on. The big, beautiful bill, which is your signature legislative accomplishment, is not popular. And as Caitlin said, Trump's approval rating isn't going to get better between now and next November. There's just nothing on the horizon that shows that he's going to have a big win somewhere. So the reality of it is you're on your own, buddy, and you better find votes the old-fashioned way. I'd go to the ground, knock on doors. I would find issues locally, education, health, things that are not typical Trump-related issues that you can find common cause with, especially suburban voters. The rural voters will likely be there for you, just not in the same margins as a presidential election year.
Interesting. This really does make me look forward to campaign season. Talking this out with you guys is always fascinating to me. But let's talk about the immediate impact, Caitlin. Mike Johnson now has 220 House Republicans again, so it's like we're starting the year all over. And obviously, we've got a long time before we're talking about actual midterm races. So this brings us immediately to the congressional agenda. And it might have just gotten a little more difficult for Democrats in the House to pass any extension of Obamacare subsidies. What do you think?
I think that you're increasingly going to see a number of Republicans who are looking for ways to show their independence from both House leadership and Donald Trump as part of an effort to kind of stanch the bleeding in the midterms. So I actually think that last night's results actually may give Democrats a couple of spots to work with Republicans who are in these suburban districts where ACA is very popular to get some of these key provisions across the finish line, simply because I think a lot of members in these frontline districts, they're either going to retire or they're going to look for ways to separate themselves from the national party. And this is a really easy way to do it.
Interesting. What do you think about that, Rick? Does this additional seat matter for Mike Johnson?
Look, everything matters with these slim margins, and it's just more leverage that he gets. It's incremental, but it's a good thing, right? I think Republicans really have to figure out how to get out of this trap, because the trap is they look like they are stopping healthcare from reaching Americans without a plan to replace it with anything. And as much as I like Senator Cassidy, the idea that we're going to just, give people another health account is not going to cover it with the voters. So if I were Republican strategist, I'd be finding an exit door fast to get this done before the end of the year, so that you can look at next year without having to talk about this all day long.
Well, that sounds like an opportunity for Democrats, Caitlin. What do you think?
I agree. I think Rick should take over all strategy for the Republican Party these days.
That didn't work out.
I don't
so
think
well
that's an endorsement, Rick. Yeah, he had that job.
I agree
before.
with everything.
Let's not go too far. In our remaining moment, Caitlin, the point that you made with regard to Tennessee about nationalizing the race, the fact is, the Democrat in this case, Afton Bain, was called the AOC of Tennessee. President Trump said she hated country music and she despised Christians. Isn't that national politics?
Yeah. And I think, part of what's challenging is that when you look at the Senate map and you look at some of these frontline districts, you have, either primaries or candidates where you're choosing between somebody with local roots and local experience where the people know them, they know what they stand for, and candidates that are more popular online, and we should be opting for the former.
Well, this is a great conversation, and I appreciate both of your insights. Caitlin Legacki and Rick Davis together as our great panel today for the Wednesday edition. Thank you. Coming up, we're going to talk to former Republican Congressman Kevin Brady and the two gentlemen who helped to negotiate the USMCA. It's time to renegotiate. We'll get into it next right here on Bloomberg.
6:40 on Wall Street. I'm Alexis Christoforous. U.S. companies shed payrolls in November by the most since early 2023. Private sector payrolls decreased by 32,000, according to ADP research data. And while that report may be discouraging for people looking for work, it also keeps alive hopes for the Federal Reserve handing us the third interest rate cut of the year next week. The Dow Jones Industrial Average up now nearly 400 points at 47,872. The S&P 500 now up about 26. You've got the NASDAQ Composite gaining 55 points. And Bitcoin continuing to bounce back, up 1.6% above $93,000. More than 202 million Americans shopped from Thanksgiving through Cyber Monday. That is the highest number on record since the National Retail Federation began tracking in 2017. As for some retailers, Macy's posting its strongest growth in more than 3 years last quarter. Shares of Macy's up 1.5%. And Dollar Tree stock also climbing after delivering stronger than expected quarterly results and healthy sales growth. Dollar Tree saw record sales for Halloween while tightening its outlook and lifting profit guidance. We've got shares of Dollar Tree up nearly 3.5%, and shares of American Eagle Outfitters surging 15% after the apparel company posted better than expected earnings and provided upbeat guidance for fourth quarter. American Eagle said its ad campaigns with actress Sydney Sweeney and NFL star Travis Kelce are attracting more customers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash.
All right, Alexis, thank you so much. I'm Joe Matthew in Washington. Thank you for being with us on the Wednesday edition of Balance of Power, a program where we are allowed to do things you just can't do anywhere else. And we're going to try something right now on what is a very important day for trade here in Washington and throughout the hemisphere, if you actually look at this closely. 3 days of hearings kicking off today by the U.S. Trade Representative to examine the future of the USMCA, right? The U.S.-Mexico Trade Agreement. And the agenda is pretty ambitious. I've been looking at this. More than 100 witnesses testifying to their vision for the future of the USMCA, which will be under review in the months ahead. Coming up, we're going to be joined by the two men who negotiated the original agreement. They're with us in studio here, alongside former Republican Congressman Kevin Brady, who, of course, chaired the House Ways and Means Committee, who's been helping to push this effort here in Washington, where there are so many plates spinning in the air. You need someone like Kevin Brady to keep your focus on things. And we're going to start with the chairman right now. Kevin Brady, welcome back to Bloomberg TV and radio. It's great to see you as well. Before we get into the trade matter, I have to tap you as a congressional expert and a man who was known as a negotiator, because we're coming up on a difficult deadline here when it comes to healthcare subsidies, and the argument over those subsidies led to the longest shutdown in American history, of course. What would be your advice for the Republican leadership, knowing that John Thune promised Democrats a floor vote? The House is in question.
Yeah. So I think Senator Thune, Leader Thune, is certainly going to fulfill that commitment. I think we know that agreement, which is just a major extension of it, won't go forward. In the House, I think they're frustrated because those 8 weeks of the shutdown wasted the time to be able to do the negotiations. So the clock's ticking, it's moving very quickly. I'm not so sure they're going to hit that number. There's a lot of work being done about how do we address this. Clearly, the COVID pandemic is over. It's time to really go back to some normalcy here. That health care within the Affordable Care Act is just broken. It is expensive. It's not necessarily good health care. It is going up to people making $500,000 a year. There's a lot of imaginary accounts. 40% have never filed a claim. There's a lot of problems. So they're trying to figure out. So what are the key asks? In trying to reform this in a better way. And try to do it in that timetable, Joe. I think it's going to be hard.
It's going to be tough. We've got funding running out potentially January 30. Do you worry that this leads to another shutdown?
That one I don't. I think they can get it done by the 30th. But there's similar dynamics to what we just went through will be occurring at the end of January.
Yeah, nothing's really changed, actually. Right?
Yeah, really. It is Groundhog Day, just 2 months later. But I don't know anyone, certainly on the Republican side, who thinks it's smart to shut down the government. They're working hard.
Well, in your view, just lastly on this, before we open our conversation to trade, should this be a reform of Obamacare or a replace of Obamacare?
No, it's going to be a reform.
Yeah.
But this is a program that's really ingratiated itself.
The roots run deep.
Yeah, absolutely. But there's a huge prospecting for making it dramatically better, and certainly for taxpayers and the people getting the health care.
Well, we're going to talk about the USMCA here. Your involvement has been deliberate as you're actually working to promote the renegotiation of this deal here. It's a mandatory review. How much of this needs to, in fact, be renegotiated versus renewed?
I think the original premise, having worked with President Trump and negotiators, I led the House effort to secure passage. It really was sort of a check-in. How we doing? Is it being implemented? Is it being enforced? Where do we strengthen? To where the president, as you know, likes to bring other projects and other ideas into these conversations. But at the end of the day, for the president, this is the gold standard of trade agreements for America. Certainly the most consequential we have. It's already proven to make America, because of the relationship with Canada and Mexico, in a really smart design. Zero tariffs, near zero barriers, all integrated. That has made the U.S. more secure, economically much more stronger. And as we look to China, allows us to be far more competitive in the future against that threat. So, this is an important, the review in the beginning of it, very important step to preserving this agreement.
All right, so you set the stage. Now let's do something no one else would do. We bring in the two gentlemen, as we mentioned, who negotiated the original USMCA. They're with us in studio right now. Ken Smith-Ramos, Office of the Secretariat of the Economy Partner at Aegon, former Mexican chief negotiator. It's great to have you with us. And Steve Verhoeven, Special Advisor for Trade Policy to Canada's Deputy Minister of Finance, when you negotiated this originally. It's great to meet both of you, and thank you for being part of our conversation. Steve, I'm going to start with you here. When will we have a pathway, a timeline for negotiations?
Well, that's a good question. I'm not sure that we necessarily will.
Yeah.
I think that there's certainly a timeline in the agreement about how the review should conclude by July 1st. All three countries have to commit in writing that they want the agreement to continue. But the process before that is not spelled out, and I think we'll be waiting to see how the U.S. wants to move and how quickly, because I think it'll be in their corner just to get the ball rolling.
Interesting. With that said, do you worry that the administration is not focused on this?
Well, thank you very much, Joe, for the invitation. Well, we know that for Mexico, for Canada, hopefully for the United States, there's a realization of the value that USMCA brings to the economies of all three countries. This is an agreement that is worth $2 trillion for the three North American countries. Just between Mexico and the U.S., we're talking about $900 billion in trade. Wow. And the U.S. is the #1 investor in Mexico. Canada is #3. And so this is a priority, a very strong priority for President Sheinbaum to preserve the trade agreement. So part of the objective in this context that we're living through right now with the tariffs that Mexico and Canada are also facing, the Mexican government has been trying to negotiate its way out of these tariffs that we're facing, clearing the deck and making sure that we can have a constructive review of the agreement so that it gets extended for another 16 years as is established in the USMCA. Hopefully that, the U.S., Mexico, and Canada will come together to maintain a trilateral agreement. That is certainly the hope of the Mexican government and certainly the Mexican private sector as well.
You use the word preserve, which I'm going to believe is intentional. Do we worry that there will be no renewal or no renegotiation? Is there a possibility that the USMCA goes away?
It's possible. The U.S. could withdraw from the agreement. There is a provision for that, as there is in most trade agreements. I think it'll be more likely that we'll do something with the review, but if the U.S. does not sign on for an extension on July 1st, then we're into annual reviews, but the agreement itself continues for another 10 years. So we may be in a continuing uncertain environment.
Is that a strategy for this administration? You guys have been through this before. You withdraw only to gain leverage by coming back in. how do you frame the administration's ambitions here?
Well, in the original negotiation, we had several instances when President Trump threatened to pull out of the NAFTA. However, this time around, what we see is a situation where perhaps the U.S. will use the leverage of the tariffs that are being imposed on Mexico and Canada during the USMCA discussions. As was mentioned, this is not an automatic renegotiation. It can be at the level of an administrative review where the three countries analyze how to improve the implementation of an agreement which is clearly successful. It's promoting investment and trade in North America. And at the end of the day, the best way for North America to compete successfully with the rest of the world, especially with China, is to eliminate as much as we can any of the trade barriers between the three countries. So yes, there will be tough moments during the review. I'm sure strategies that are used to generate pressure on Mexico and Canada. But at the end of the day, I think that cooler heads will prevail and that we'll have not only the preservation of the agreement, but the opportunity to lay the groundwork to continue strengthening North American economic integration. That should be the goal of the three countries.
A lot has evolved since the original agreement was made. When you think about digital technologies, artificial intelligence, even more specifically, and some of these have come into play with talks between the administration and Canada directly. How much will that be something to figure out in these negotiations that might not have been addressed in the first version?
Yes, I think that's certainly an area where we could spend a fair amount of time on. And I think that puts us in the right kind of orientation. Where can we improve the agreement and modernize it to some degree? And I think there are other areas we could do that with as well, particularly the economic security questions, relations with China, all of that. And I think that puts us on a much better path than trying to have differences between us. We should be looking at the outside pressures we face.
Let's bring Kevin Brady back into the conversation here. Congressman, there's been a lot of noise around trade with this administration, and I think we could agree that there's been some bad blood created, maybe more when it comes to Canada than Mexico. I just wonder, do these two nations have similar or different approaches to dealing with this based on what we've learned in the last year?
You know, I'd say a little different. Mainly because President Trump tends to have relationships based on personal relationships with other world leaders, and that tends to be different from country to country. But I'll tell you that the most fascinating fact about this agreement that most Americans don't think about is because of this agreement, Mexico and Canada are now Americas together. They are our largest investor, our largest customer, and our most important supplier. And they have made a commitment to the U.S. and frankly, President Trump's goals that no other nation, no other region can hope to approach. So it's going to be critical, I think, to preserve the agreement, to strengthen it, and we want that long-term certainty because we've got those outside risks from China, other foreign competitors. Mexico and Canada can help us meet and win, those economic challenges.
Common ground here. Let's talk about this with each of you specifically. Ken, Claudia Sheinbaum is coming to Washington. It's been noted that she has been a bit of a Trump whisperer, if you will, has managed to figure out how to use this relationship to the benefit of Mexico and maybe head off some issues. Is she coming here specifically for USMCA?
Well, the reason specifically has to do with the World Cup draw that's coming up. It's a wonderful opportunity next year to bring the three countries together and the world together.
So she'll be at the FIFA draw on Friday.
So hopefully, we haven't heard the confirmation as of yet, but we believe that's what will happen. But it's also a great opportunity, if possible, perhaps to meet with President Trump. I think that the Mexican government's approach to finding spaces for dialogue and negotiation with President Trump have worked well so far. The efforts to try to eliminate the tariffs that we have against Mexico have not been successful so far, but I think that it has laid the groundwork for possible agreements on that end. To the degree that we're able to get rid of these tariffs that we have in front of us and to set up a conversation around the USMCA based on future free trade without managed trade, tariffs, non-tariff barriers, etc., the region will be better served. So I think that's part of the objective. I think there is a good relationship between both heads of state, and hopefully that can lead to actual concrete results of getting rid of the tariffs and strengthening our agreement as we go forward.
Steve, we only have about a minute left, and I don't want to cut you off, but I'd love to hear from you more on how this negotiation might solve the tension between our two countries?
Well, I think the tension comes and goes. I think actually Prime Minister Carney seems to get along quite well with President Trump, but that hasn't translated into anything more concrete beyond good conversations. So we're hoping that we'll find a way to get on a better track and make some progress from here.
Well, we'd love to stay in touch with both of you with the help of Kevin Brady. Thank you so much for a unique conversation. Ken Smith Ramos, Steve Verhoeven, and of course, former Congressman and former Chairman Kevin Brady with us here in a special conversation on Balance of Power. I'll meet you back here on the late edition, 5 p.m. Eastern, only on Bloomberg TV and radio.
is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Welcome to Bloomberg Business Week Daily. Yes, indeed, it is Wednesday, December 3rd, 2025. 1 week from now.
I was wondering where you're going with this. Okay, now I know where you're going.
You know what we'll be all talking about.
Yeah, we actually will not even be in here.
No.
Exactly 1 week from
The
now
whole
because
big surveillance
Fed Chair Jay Powell will be speaking at 2:30.
Yeah, exactly.
Press
But
conference.
we'll have the last Fed decision of the year, and I do.
What do you think's going to happen?
I think we're going to get a rate cut.
Okay. Yeah.
You think so?
I think so too.
Don't the markets think that?
StartupPal's going to tell us in just a minute.
Yes.
But it seems like, that's what's going to happen.
No pressure,
Unless anything crazy happens between now and then.
Which, it's not like anything crazy has happened at all this year.
We're fine.
All right, folks. So we have stocks. We're pretty much at near our best levels of the session. We've got more individual names gaining ground, more than 330 in the S&P 500. We've got Treasury yields dipping back, so we are going to talk with Stu all about that.
Yeah, we're going to have more on the trade, too, in just a moment with Alexis Christoforous. First, though, we're going to get a read on the economy thanks to a data drop and more earnings from commentary from retailers, including Macy's and Dollar Tree.
They keep trickling out, right? And they're telling us a lot about the consumer. Hey, also, nothing like a peek into consumer credit and lending for another great take on the U.S. economy. We'll get that from Lending Club CEO Scott Sanborn. He'll be along in just a moment. Looking forward to that one.
Also, have you done your gainers yet?
I have.
Okay, auto stocks. Check out what they're doing.
You know, I knew you were going to say that.
Yeah, they're rallying. Expected news out of the White House. So we're going to bring you that news when we do get it.
All right. Tim mentioned a check on the markets with Alexis Christoforous. So let's go over there. She is in for Charlie Fella. Hey, Alexis.
Let's do it, guys. Wall Street is betting the Fed will cut rates for the third time this year at next week's meeting, especially after a new report from ADP Research today found that private companies shed 32,000 jobs last month. That was more than expected. So here's how the markets are shaping up. The Dow Industrials, best level of the day, up 428 points. The S&P 500 rallying 25, and the NASDAQ Composite now up 53 points. In stock news, we've got shares of Netflix hitting their lowest level since April, following reports that the company has submitted a mostly cash bid for Warner Brothers Discovery's studios and streaming division. Shares of Netflix down 5.5%. Warner Brothers, though, up just fractionally. Shares of GitLab sinking 17% to a more than 2-year low after the software company's results and forecasts were seen as underwhelming. Bloomberg Intelligence wrote that the report reinforces concerns about AI. And Microsoft is pushing back on a report that the company lowered growth targets for AI products after salespeople missed goals. A Microsoft spokesperson says the company has not lowered sales quotas or targets for its salespeople. Nevertheless, shares of Microsoft down now about 2%. Once again, stocks are rallying across the board with the Dow up 445 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's your Bloomberg Business Flash. Carol and Tim?
All right, so appreciate it. We just want to mention some headlines just crossing the Bloomberg terminal. This coming from Jensen Huang of NVIDIA. He just met with President Trump. He discussed export controls generally in that meeting and said that we support export controls. So just keeping an eye on some of those headlines. Obviously, he is his company, the king of AI tech bellwethers, certainly.
Yeah, headlines continue to cross as he continues to make comments. We'll keep bringing you headlines. Another one coming. We can't degrade chips that we sell to China. And Carol, NVIDIA shares, they're just right now still at about down about 0.4%, so little changed.
All right, we'll continue to monitor for you. Hey, listen, speaking of things that have been crossing the Bloomberg terminal, we did get some economic data earlier today. A slew of economic data, in fact, did little to alter bets that the Fed will cut interest rates in its final policy meeting of 2025. That will happen just 1 week from today. And we have seen stocks, U.S. stocks higher while bond yields dropping, Tim, alongside the dollar.
Well, for more with us on how the U.S. economy is doing, we've got Bloomberg Economics U.S. and Canada economist StartupPal. He joins us here in the Bloomberg Business Week studio. So, Stuart, we are 1 week out from the last FOMC decision by the Fed this year. The data that we're getting now, the data that we get between now and then, will it do anything to change the thinking about an expected 25 basis point rate cut?
I don't think that it'll do anything to change whether or not we will get a cut. I think that the only thing that it can change is what the coalition of voters looks like. Basically, all of the data that we got today was pretty bad. We had layoffs, as reported by ADP in the month of November. We saw ISM services. Yes, it's a surprise to the upside, but it's a surprise because of slowing supply chains, like a very peculiar reason for ISM to surprise to the upside. We saw new orders that were weakening, employment that continued to decline in the ISM services report. We saw import prices that were flat, basically, so that gives a little bit of room for the Fed to consider cuts because tariff pass-through is slow. And the final thing that we saw was September's industrial production numbers, with manufacturing output basically flat. And so all of it just sort of points to this final Fed decision for the year, looking like it's going to be made by a pretty robust coalition. In my view, when we get the summary of economic projections in December, that's where I expect to see a lot of dissent and a lot of division among the committee.
You know, we've been talking to Joe Matthew on Balance of Power about USMCA, the trade deal that replaced NAFTA. You obviously follow the Canadian economy. I mean, in the past, this has been an important economy for the U.S. U.S. has been an important economy for Canada, excuse me. So how are you thinking also, too, about where trade is kind of settling between what has been really important trading partners for the United States?
Well, I think that the thing that's most important to remember from the Canadians' perspective in the context of USMCA is that Canadian negotiators are basically going to be waiting for the U.S. and Mexico to sort out trade and border disputes, trade and border deals. For example, how much security Mexico should be deploying to the U.S. southern border, before Canada actually gets to come to the table to discuss its own trade relationship. Right now, the average effective tariff rate on Canadian exports to the U.S. is in the low single digits, 3 to 4%.
So not really, yeah.
Because of how many carve-outs there are, and because of the importance of the U.S. as an energy export market for Canada. All the energy just flows through the United States. Canada is right now relatively content just to wait. The bigger issue for Canada right now is dealing with pretty lackluster domestic output and domestic demand. The labor market has softened materially over the summer. It looks like there's a little bit of a glimmer of hope there. Right now, it seems as though, trade is sort of normalizing. Of course, the second quarter was really, really rough.
Yeah.
And so we saw an outperformance in the third quarter, but trade balances are starting to normalize, and any sort of negotiation is just going to be on hold until the U.S. and Mexico can sort out their differences.
Okay, so just a realistic timeline for what that could be?
I think that in earnest, we're going to start seeing some important talking points rolled out in the second quarter of 2026. Of course, any sort of negotiation can be sped up by, let's say, Prime Minister Carney visiting the White House. He's already been to the U.S. now, I think, twice so far since he took the leadership role. But right now, I'm expecting to see some more definitive deal points getting rolled out in the second quarter of next year.
It's just kind of wild. I thought we're not done with trade. I know we're not done with trade, but it just kind of keeps, creeping back. One of the other things that we've been talking a lot about are retail earnings this week and over the last couple of weeks. Nation's retail companies continuing to report out earnings amid the holiday shopping season now underway. Stuart's going to stay with us. Want to get to, though, Tim, some of the earnings we got today.
Yeah, let's bring in Emily Cohen. She's Bloomberg News Consumer Team Leader. She joins us here in studio. So I'm a little confused about what's going on with Macy's because shares initially fell after the company reported earnings forecasts that disappointed investors, but now we're seeing them up 2%. What's going on with Macy's? What did we learn?
I mean, Macy's basically had a good report, solid lead up to the holiday season. I think the shares are volatile. I think the thing that brought shares down initially this morning was a disappointing profit forecast. And I think that speaks to, we had the CEO tell us this morning, a cautious consumer. So they're being, a little bit conservative with their forecast. I think that initially disappointed investors, but all in all, it is a pretty good report for the company. I think their stock's up 34% this year. So I think anything a little bit disappointing might pare back.
But an 8% swing from high to low is a lot.
It's a lot.
It's like a confusing investor or a confused investor, right?
Yeah, a little bit. Yeah. But I do think it comes on the backdrop of really strong performance this year.
Just throw Dollar Tree. They reported better than expected profit. They also raised their full year earnings outlook, and we saw that stock rallying in today's session. So a good report. And what does it say about what type of consumer?
Yeah, for sure. I mean, this is the kind of store that does well in this kind of economy, right? They said on their earnings call they're seeing middle to high income shoppers trading down to Dollar Tree. That's good news for a store like this. And it continues to paint this picture that we saw last week and the week before, which is this split screen picture of how the consumer is doing. consumers are still spending, but they're looking for value and they're looking for places where the price is right. And Dollar Tree definitely fits in that better category.
So Stuart, come on back in here and just give us your take on how the U.S. consumer is doing in the context of the retail earnings that we continue to hear about. To Emily's point, consumers trading down, higher-end consumers trading down, that's good news in an environment such as this for a company like Dollar Tree. We had Dana Telsey in earlier this week, and she basically said, listen, if you're offering something unique to the consumer, like if you're a Levi's, for example, if you have a marketing campaign that is unique, you're still able to bring in consumers. How do you characterize the environment?
It's interesting when I read, so of course, I think about the economy mostly from the top down, and I enjoy when I get to participate in a roundtable with somebody like Emily, who provides some insight about the broader economy from the bottom up. And what's interesting is when I see rotation to a lower end retailer like Dollar Tree, it speaks to the price sensitivity of consumers. And then when we look at some of the more macroeconomic data, we see that firms are struggling to pass through some of the costs of tariffs. A lot of firms are reporting that they're getting squeezed in terms of profitability. Again, this is when I zoom out to the macroeconomic level. We're seeing squeezed profits in the aggregate data because a lot of the cost of tariffs are sitting with those producers. When you have consumers that are especially price sensitive, it's just sort of a tenuous balance that you're walking in the economy. Now, it's no wonder why policymakers are going to be pushing for a rate cut, because you're hoping that looser credit conditions will help to alleviate some of the pressure that consumers are feeling so that you can continue to have that expansion. But right now, it's just characteristic of a sort of tenuous balance in the broader macroeconomy.
Yeah, I also feel like characteristic, and Emily, come on back in here, is that we are constantly hearing, even from retailers that do well, right? I think even Walmart, that there's like a cautious consumer out there. I mean, cautious consumers. So they're spending, but they're being careful, they're being cautious, they're making choices, they're trading down. Is that a fair narrative takeaway?
I think that's exactly right, and I think that's what we heard from Tony Spring this morning, where, Macy's generally, it's a middle to high income shopper, but around the holidays, they have more aspirational shoppers come in. Those are the people who they're seeing pull back, be extra cautious, and I think that's right.
So, before we wrap up, just kind of on the specifics, Emily, just real quickly, who else are we done from the retailers? And didn't we just have like a pretty impressive Black Friday and Cyber Monday?
We did. We had an interesting Black Friday, Cyber Monday. We don't really know the full results yet, and I think we'll see that. We have some more retailers reporting the rest of the week. We have Kroger tomorrow, Five Below, more
Ulta,
dollars.
right? Too, I think.
Ulta, exactly. PVH.
Today, yeah.
So we're still, the retail earnings season really never stops.
Yeah, all right. And then we'll get into the holiday results. Yeah. Emily, thank you so much. Really appreciate it. Bloomberg News consumer team leader Emily Cohn with the latest on retailers. Stuart Paul still with us talking about economics. I mean, there's a lot going on, and I guess we are just so focused about the Fed meeting next week. Is it all but done, another quarter point cut? And is it all then about what kind of color we get on 2026, and does it really matter because Fed Chair Jay Powell, we assume, will be on his way out?
Yeah, I think that the 25 basis point cut in December is a done deal. When I think back to October, we only had one dissent in favor of holding rates steady, and that was from Kansas City Fed President Jeffrey Schmid. So when, of course, the Beige Book came out, I was particularly interested to know what's going on in Kansas City. Is it possible that he would join the coalition of voters come December who would favor a 25 basis point cut? And Kansas City conditions looked quite a bit worse in the last Fed Beige Book. So I expect that there is this broader coalition forming for a December cut. You know that Governor Myron is going to vote in favor of more than 25 basis points in December. What's going to be a little bit peculiar, and we've seen this, we saw this last year in particular, is that when the Summary of Economic Projections comes out with the dot plot, I would not be surprised to see other FOMC participants keeping their dots a quarter point higher than where we end the year. That's to say there are sort of shadow dissents among FOMC participants who are not voting, who would have preferred rates to not be lowered in December, even though the actual voters decide to lower by 25.
Explain why.
Yeah.
Because we have other FOMC participants who are not voters, and among those people are Cleveland Fed President Beth Hammack, Dallas Fed President Lori Logan, folks like that who are going to be voters next year, who were more hawkish in all of their public comments. They don't get a vote this time, but we expect that they would try to send a signal to the rest of the world, hey, we're not going to be moving at the same pace next year. And so when we see dots for 2026, I expect there's going to be a pretty wide distribution. I expect that the incoming cohort of FOMC voters from the regional banks are actually going to be quite a bit more hawkish in 2026 than they have been this year.
Are we nuts to be thinking, or for traders and investors to be assuming that Kevin Hassett is the next Fed chair? Because it does seem like all Fed roads are leading to him at this point.
It looks like that's going to be the case. It looks like it's going to be a Hassett nomination. President Trump was alluding to Kevin Hassett being the nominee when he had a press conference, I guess, just yesterday. There was a story from the Financial Times today that apparently in one-on-one conversations between bond market investors and the White House, some folks expressed concern, but then you look at the price action when the trial balloon was floated last week with Kevin Hassett's name, and he passed the financial markets test with flying colors. And so I'm less concerned about what folks are saying to the White House than what the market is saying to the White House. And the market is giving a clear go-ahead.
I don't want to put the cart before the horse, but if you're saying the market is giving the clear go-ahead, then what does the Senate confirmation process look like?
I think that what's different between, let's say, the Senate confirmation process for Trump's nominees this time versus in his first term is that I guess you could say the MAGA movement has coalesced, and there is a broader coalition that is in support of President Trump's agenda. And so the division between the Senate Republicans, for example, and the White House is pretty narrow. There is not a lot of dissent among Senate Republicans in the White House. Every now and then you see somebody pop up like Mitch McConnell, who has their own voice. But I expect that somebody like Kevin Hassett should make it through the confirmation process in the Senate Banking Committee pretty easily. And then it'll be mostly a party lines vote when it actually gets to the Senate itself, to the Senate floor. So I don't think that it's going to be an easy process. I think that it's going to be one where you're going to have some pretty dramatic headlines when he gets questions from, let's say, Senator Warren from Massachusetts. It's going to be a pretty ugly back and forth. But when it comes time to actually counting the votes, I think you just get party lines votes and he gets his shot, if that's what the White House ultimately decides to do.
And speaking of Senator, she's been outspoken. She wants lower rates.
Yeah.
That's right. This is always what's tricky, is that sometimes political partisans find a way to make sort of funny bedfellows. And yes, she does want lower rates, but does it come at a cost of politicizing the Fed as an institution? I think she's going to try to make it more difficult for him, even though they both might want the same thing when it comes to policy.
It's just the Fed, all of it around the Fed. I mean, you had Treasury Secretary Scott Bessent today saying he's going to push for this new rule that regional Fed presidents must have lived in that district for the last 3 years. I just feel like there's just so many things going on. You're going to come back. We will continue the Fed conversation, but keep in mind, 1 week from today, we will have the last decision of 2025. Stuart Paul, Bloomberg Economics U.S. and Canada economist. When we come back, another read on the consumer with the CEO of Lending Club.
6:21 on Wall Street. I'm Alexis Christoforous, and stocks are rallying after a weaker than expected ADP jobs report sparked hopes for a rate cut next week from the Fed. Wall Street now betting there's a 98% chance the Fed cut rates by a quarter point at its meeting December 10th. The Dow Industrials up 452 points at 47,926, closing in on 48,000. The S&P 500 adding about 27 points. You've got the NASDAQ Composite up 58. Delta says the government shutdown cost it $200 million, but the carrier is forecasting strong travel demand into 2026. We've got shares of Delta up better than 4%. Sports merchandiser Fanatics is launching Fanatics Markets, its own prediction market in 24 states this week, including California, Texas, Florida, and Washington. The platform will allow people to trade on events in sports, finance, and culture, and then early next year, Fanatics will expand into contracts for crypto, stocks, tech, music, and more. And speaking of music, Spotify Wrapped is here, and Bad Bunny has been named its most played artist, dethroning Taylor Swift. Bad Bunny earning more than 19.8 billion streams globally this year, followed by Swift, The Weeknd, Drake, and Billie Eilish. And that's your Bloomberg Business Flash. I'm Alexis Christoforous. Carol and Tim, you like Bad Bunny?
It's all the downloads from Tim, man. I mean, I've told him to like roll back a little bit.
You know, you should not come to me for anything regarding music. I'm still in like the 90s.
Are you?
Yeah, it's not good.
What's
I was
that-
talking about the
what's that
90s.
group? What's that group
This
that-
morning that I was talking about on Bloomberg Surveillance?
What?
Yeah, Toad the Wet Sprocket. Big in the 90s. Thanks for laughing, Herman. Appreciate it.
All right, we're going to switch gears. We promised you that we were going to continue on the U.S. economy and really the U.S. consumer. The online lending marketplace and platform for loans, credit cards, deposit accounts, insurance, and more. We're talking about Lending Club. They announced a $100 million share buyback just about 1 month ago. It was about nearly 5% of the company's market value on the day of the announcement. Now, analysts have been raising their price targets on the stock this year, most recently, again, raising them since the company reported earnings late October. The company posted third quarter results that beat estimates. They provided a guidance range for new fourth quarter originations with a midpoint above estimates, and the stock, it's actually up this year.
Yeah, it is. Shares of the $2.1 billion market cap company about 14%, up more than 12% since reporting those earnings back on October 22nd. Delighted to have with us Scott Sanborn, CEO of Lending Club, also CEO for close to a decade at Lending Club for 15 years now. Also with us here in the Bloomberg Business Week studio, Herman Chan, Bloomberg Intelligence Senior Analyst for U.S. Regional Banks. He helped bring all of this together. Scott, I want to start with you and just give us some size and scope of the business, the consumers that you're working with, who's interacting with the platform.
Yeah, so we serve a customer base we call the middle majority. They are, if you think about credit, which we are a credit-centric bank, if you've got a lot of money, you don't need a lot of access to credit. You pay cash for a car, you save up to send your kids to college. If you're on the other end of the spectrum, you can't really access credit. So there's this middle group that are high-income, heavy users of credit. So they can afford a car, they can afford to send their kids to school, but they need to use credit to do it. That's who we serve. It's a really big customer base. It represents about a third of the U.S. population, but it's close to half of the credit wallet. So they are more likely than average to have every form of credit, and that credit is, with the exception of mortgages, also larger than average. That's who we serve.
How much do these people usually make?
Our average, and obviously misleading, averages can be misleading, but average is about $125,000. But you can think of it of ranging between, call it $80,000 in individual income to about $200,000 is where we really over-index.
Great. One of the real highlights of your recent Investor Day last month was the panel discussion with marketplace investors, and we talked about this earlier before your appearance here on radio. One of the panelists talked about aligning performance expectations, partnering with better operators. Are you seeing that with the private credit space?
Yeah, we do. So, we were born as a marketplace. Initially, everything we originated, we sold. When we acquired the bank in 21, we started to hold a portion of our loans on our balance sheet. That both gives us a stronger and more resilient earnings profile, also allows us to do other things, innovate using our balance sheet. And what we found is just by aligning our interest with our loan buyers, we're the largest eater of our own cooking. We're the largest holder of Lending Club loans. We care very deeply about the performance of the credit. And, credit is always evolving. It's very dynamic. Because we have a balance sheet, what we can do is when we want to test something new, we test it on our balance sheet. Let's try longer duration. Let's try a larger loan size. Let's try a new marketing channel. We hold that first.
You own it.
We own it. We make sure it performs the way we expect, and then we release that to the marketplace. If you don't have a balance sheet, you can't really do that. And so that's visible in our results across every aspect of underwriting. So lower delinquencies than the rest of the industry, 30 or 40% below, lower roll rates, higher recovery rates, lower prepayments, lower fraud. Literally every aspect that you can measure of credit, we're outperforming on.
Has that remained consistent this year, in recent months, in recent weeks? Like, you have a great real-time view of the consumer in the form of how well they are doing in terms of paying back their loans.
That's right.
Still looking good?
Yeah, so that's been consistent for, we release 4 years of data and we put out there, and so it's remained consistent, but, it's kind of like a duck on a pond. It's remained consistent because we're doing a lot of work underneath the cover. So, something that we shared at Investor Day is at any given time, we have more than 200 tests in the market where we're evaluating price points, changes to the credit. So we're constantly adjusting to reflect what's happening with the consumer. And that's what's giving us the consistent results.
Well, so that to me says you're very picky about who you lend to.
That's true. We are.
So in terms of your test, so tell me what it is. I mean, and how many of people who apply or want to access your platform, you're like, I'm out.
Yeah, so we're pretty good at selecting who we want to have in our portfolio and reaching out to those people.
Yeah.
And then both delivering the price and product experience, but also, let's call it the user experience that gets them all the way through. So we look for areas where, for example, we can control the use of the fund proceeds. If you come to me and say, I want $20,000 because I'm going to do whatever, my kid needs braces or I'm moving cross country, great. But unless I'm paying the orthodontist, I don't actually know that that's what you're using it for.
Yeah.
So we try to, set ourselves up so that we are in some ways controlling the use of proceeds and then making the experience such that it makes it really easy. So our largest use case is for people who already have debt, credit card debt, most notably, which at this point, more than half of all Americans are carrying. They're carrying it at really high rates, 23% interest rate. It's the highest they've ever been in history. And we say, great, you should do this instead. It takes less than 5 minutes. We're going to save you 700 basis points. Oh, and by the way, check all the credit cards that you have that you want us to pay off. Like we see you have Chase or a Cap One. Great, check those, and we're going to pay them directly. So we know you are paying off your credit card debt. You're not just saying you're going to pay off your credit card debt and taking out more money. We are paying it off for you. Benefit for you is, you've consolidated everything into one bill. Other benefit is your FICO score usually goes up by 30, 35 points because you've lowered, your utilization.
How much can you lower? Like, I got to tell you, credit card rates just blow my mind about how high they are. And I'm just curious, why are they so high? Are people so bad? Is it to cover? No, I'm curious.
Yeah, no, it's a great question.
I mean, it just seems like it's out of control. And I think it prevents people from becoming financially solvent or creating, kind of getting ahead of the game, if you will.
Yeah, there's a lot to unpack in that.
Sorry.
It is, no, it's a great question. And there's a number of questions underneath, but I'd say the biggest thing is, if you think about how people choose credit cards, it is not based on the interest rate.
Yeah.
Right? It's my Sky Miles card or my retail store card. I'm going to get rewards for this. They don't even know what the interest rate is, or it's a promotional rate that resets. So that's one. They don't choose based on that. Half of the people don't revolve on the card. They're collecting these rewards, but they're not carrying a balance. Well, guess who's paying for that? All the people that are carrying a balance. Those people don't know what their rates are. The research we've done is half of all customers say they don't know the interest rate on their credit cards. And the half that say they do, more than half of them are wrong. Right? Wow. They think they know their rate, but they don't.
Right.
And so cards have been able, and one of the big resets with the cards was driven by the Card Act, which limited how much cards could increase rates, so they factored in higher rates.
I just want to jump in real quick. We are speaking with Scott Sanborn, CEO of Lending Club. He's been CEO for close to a decade. We're also just getting some breaking news, too, on Apple. Apple's design executive, Alan Dye, poached by Meta in a major coup. This is the most prominent design executive at Apple. This underscores a push by the social networking giant into AI-equipped consumer devices. We also have here with us Herman Chan. He's Bloomberg Intelligence Senior Analyst for U.S. Regional Banks.
Thanks. I wanted to follow up with you, Scott, on some of the medium-term expectations you laid out in Investor Day. You talked about doubling loan originations. We're talking about $18 to $20 billion a year. What are some of the levers to get you to that level? You mentioned use cases. Maybe talk about home improvement as a use case, and how do you maintain solid credit quality as you ramp up that
And
volume?
home improvement is something you're getting into, right?
That's right. Yep. First and foremost is, as I mentioned, credit card, refining people out of their credit card debt into a fixed rate, lower rate loan is number one use case. It's about 80% of what we do. That market is the largest it's ever been. There's 1.3 trillion in credit.
80% of what you do is that. Wow.
Yeah.
Go ahead. Sorry.
So that is, 1.3 trillion in balances priced at really, really high rates. We, when the rate environment shifted and the inflationary pressure shifted, we pulled back on a lot of our marketing. So we're currently running today at sort of below our historical volumes. So we're just going back into that market, turning back on marketing channels that we had turned off. And then the other area is, personal loans can be used literally for anything, right? And before credit cards came around and came to be, they were the dominant way consumers accessed, credit for everyday needs. So we have a major purchase finance business that's growing today, call it 50+% year on year, that's allowing things like elective medical procedures, LASIKs, braces for your kid, all kinds of fertility treatments, teeth implants. So things that insurance doesn't pay for, but you want to do and you want to do right away. Private school education, that's another one. So home improvement is sort of a next adjacency. People right now are staying in their homes longer. 75% of Americans, their mortgage rate is under 5%. They're not going anywhere.
Right.
And the homes are getting older, so the homes need to be invested in. They need to be improved. So effectively enabling home improvement through an unsecured loan where, again, we are controlling the use of proceeds. We can pay the supplier. We can pay the contractor. We've got the capability through an acquisition we announced to, disperse this in phases to multiple parties. So we're really excited to kick that off.
We've only got like 30 seconds left here. Consumer doing okay?
I'd say the consumer we serve is demonstrating themselves to be remarkably resilient. Despite,
I hear that a lot. It's a drinking game now.
But we'll acknowledge the sentiment isn't great.
Okay. Yeah. Come back soon. I have to tell you that I think we're all like, I want to go. I want to go. Please come back late because I think you have a great vantage and view into what's going on in the economy.
We'd love to.
Okay, we would too. Scott Sanborn, Chief Executive Officer of Lending Club, our amazing Herman Chan, Bloomberg Intelligence Senior Analyst for U.S. Regional Banks. We're going to talk automakers, some stuff coming from the White House. That's next.
8:40 on Wall Street. I'm Alexis Christoforous, and stocks are higher on the belief the Federal Reserve will hand consumers and businesses the third interest rate cut of the year at next week's meeting. The Dow Jones Industrial Average climbing 453 points, closing in on 48,000. The S&P 500 up 27. We've got the NASDAQ Composite gaining 57. More than 202 million Americans shopped from Thanksgiving through Cyber Monday. That's the highest number on record since the National Retail Federation began tracking in 2017. As for retail news, Macy's posting its strongest growth in more than 3 years last quarter, also raised its sales forecast for the year as higher income consumers continue to spend freely. Shares of Macy's now up more than 1.5%. We've got shares of Dollar Tree climbing nearly 4% after delivering stronger than expected quarterly results and healthy sales growth last quarter. And we've got shares of American Eagle Outfitters soaring more than 15%. The apparel company posted better than expected earnings, also provided upbeat guidance for the fourth quarter. American Eagle said its ad campaigns with actress Sydney Sweeney and NFL star Travis Kelce are attracting more customers, though they have not yet been a major revenue driver. Once again, stocks rallying across the board. We've got the Dow up 456 points. I'm Alexis Christoforous. That's your Bloomberg Business Flash.
All right, Alexis, thank you so much. Hey, folks, we've been keeping a watch on, you actually asked me, you're like, did you do the automakers as your gainers? I'm not.
You know, as Stuart Paul was sitting here talking about what's happening in Canada, he's U.S. and Canadian economist.
Yeah.
I'm thinking about automakers.
I know.
Because of those complicated supply chains that go through Mexico, the United States, and Canada, and how long it takes them to change up a supply chain, to change auto parts suppliers, if at all, if that's even possible.
And if there's a design change, right? Like this is where you think about it. Having said that, we are seeing Stellantis, formerly, you know, the Chrysler brand, that stock's up about 4.6%. You've got GM up about 1%, Tim, and Ford was up more than 1% earlier today, still up about 0.8%.
This as executives from Stellantis, Ford, and GM plan to be at the White House today for an anticipated unveiling of new fuel efficiency standards. Let's head to Detroit. That's where we find Bloomberg News auto reporter Keith Naughton. Keith, we were talking about this on our planning call this morning, the kind of the history of fuel economy requirements, the way that states like California over the years have weighed in on this, the federal government's role. Just contextualize for us, like what we know what direction they've moved in, but what automakers' responses have been.
Well, I mean, it's a bit of a whipsaw effect, Tim, because automakers during the Biden administration, when they really toughened standards, spent billions creating infrastructure for EV factories and battery factories. And all of that is losing the money now because President Trump has done away with the EV, what he called the EV mandate, right? He took away the $7,500 consumer tax credit for buying an electric vehicle. But more importantly, he also zeroed out the penalties for not meeting fuel economy standards or emission standards, which is saving the automakers billions because now they can build whatever they want with no penalty.
So does that mean automakers are going to be like, woohoo, like, let's go ahead and like change everything that we've done over the last how many years or decades? Or are they going to say, wait a minute, you know, that horse has left the barn, if you will, and we're not going to change anything. We sell globally. There are restrictions maybe in other markets. Like, how does this play out? Because design changes cost an automaker something, right?
It does. But so far, the reaction, particularly to zeroing out the penalties, is they're overjoyed because now they can sell their most gas guzzling and most profitable vehicles, large SUVs, big pickup trucks, and make more money. So that's good news to them. In fact, today, GM's CFO, Paul Jacobson, was speaking at a UBS conference, and he compared the loss of the $7,500 tax credit to the gain they get from zeroing out penalties for not meeting those standards. And he referred to that $7,500 tax credit as a drop in the bucket compared to the cost of the penalties they've faced. GM alone had set aside $2 billion last year to buy credits from companies like Tesla to remain compliant with those standards.
Carbon credits, right? Is that what we're talking about, or?
They are fuel economy and emission credits. Okay. You have to buy them. If you want to sell a big SUV, You have to either sell an equivalent EV, or if you can't do that, you buy credits from companies that are selling EVs, and that's how you balance it out and meet the regulation.
Okay, so help us keep track of all the numbers here, because we're talking about fuel economy credits. We're talking about these companies saving money as a result of these penalties not being in place. But how much have they allotted and allocated for tariffs here?
Right, so it is a changing dynamic. Initially, they thought the tariff bite would be worse, but it is still in the billions, Tim. It's not chump change, but the promise they see of not having to meet regulatory credit financial obligations is balancing that out for them. I mean, at today's White House announcement, you're getting big automotive executives. Ford CEO Jim Farley is there, supporting these latest moves by the Trump administration.
So net, if we're just thinking about the cost that these automakers have this year and next year, as a result of tariffs, as a result of this penalty being removed, are they kind of in the same place they were in before the tariffs were announced?
No, not immediately, because they have to now dismantle or scale back this massive EV infrastructure they built. They don't need all these factories. Again, wow. Paul Jacobson today saying they geared up to build 1 million EVs and they're selling about 150,000. So they have to take, as GM already did in the third quarter, they have to take these big charges to write off the billions in investment and not go forward with some programs or some plans.
Keith, forgive me, we only have a couple minutes, but Carol and I were talking about this. It's like, you described it as whiplash. What happens if the next president gets into office and says, wait a second, the Biden administration had it right? Guys, are they going to have to go and rebuild all this infrastructure?
Well, I think a lot of the brick and mortar is up and standing there, so they would have to crank it up again. But, they're cutting programs, too. There's models that are going away or that will never hit the market, and they'd have to get those going again. So this is the problem with the industry being led by regulation, is you can go back and forth like this.
So what's better for consumers? Because I know initially, and I'm looking at the reporting that you and the team have done on all of this, that apparently the standards that are being targeted by President Trump were predicted to have cut gasoline consumption by almost 70 billion gallons through 2050. And according to the Biden administration, would have saved U.S. consumers more than $23 billion in fuel costs. That would translate to about $600 in savings over an individual vehicle's lifetime. So I don't know, will the vehicles cost a lot less now? Are they going to spend, will gas prices maybe go, I don't know. How do you unpack that?
Well, the Trump administration in their press release today is saying this will lower the cost of a car by $1,000 for the average family, taking billions out of the cost, because they feel prices will go down now. Since EVs are more expensive than traditional internal combustion engine cars, the average price of a car should come down. Critics are saying, now because the auto industry will sell more gas guzzlers, that means consumers will be paying more at the pump, not just paying a higher price at the pump, but buying more gas because they don't have the option of going EV.
So I don't know what insight you have on this, and I know you guys have a ton, but I am curious, when Ford and GM and Stellantis, their heads are going and meeting with the president, I mean, what do they care more about? Is it these standards or like the tariff situation? And just got about 30, 40 seconds.
Yeah, I mean, they don't love tariffs, but they're figuring out how to bake them into their cost structure. So, almost a year in, they're getting used to that. They really like less regulation. That's an evergreen, I think, with industry in general. So if the fuel economy standards are lowered, they're happy with that.
God, it's just wild.
State of California not going to come and say you got to do certain things?
Yeah, like what about California?
Just 30 seconds.
Yeah, California is sort of in the balance here, and right now, they're trying to continue to be the leader in this, but they're kind of losing the battle at the moment.
All right, interesting stuff as always. Keith Naughton, thank you so much for explaining it all, laying it out for all of us so we understand exactly what's going on. Bloomberg News auto reporter out there in Detroit. All right, folks, we've got a market where we are pretty much at our best levels of the session. What does that mean? We're up about 0.4% on the S&P 500, NASDAQ 100, a gain of just shy of 0.25%. But what are we going to do when we come back?
Well, I'm going to talk a little bit about Apple in the next 5 seconds. That design chief, Alan Dye, has been poached by Meta Platforms in a major coup. We're going to have more on that in just a minute. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, some little critters walking around us. I kind of love that when everybody brings their kids in. Tis the season. Maybe some kids off from school.
I just found out about another school break that my son has, so maybe he'll be by for a week.
Please bring him in.
Okay.
I love him. All right, folks, we've got stocks pretty much near their highs of this session. We're just up about 31 points on the S&P 500, up about just shy of 0.5%. And then you've got the NASDAQ 100, Tim, just up about 25%, about 0.25%.
I'm Tim Stenovec along with Carol Masser. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Emily Griffeo, and there's some breaking news.
Yes, there is breaking news. So I'm watching shares of Apple right now, ticker AAPL. The stock was up as much as 0.85%, and it's lower right now, down about 0.5% on exclusive Bloomberg News coming from Bloomberg's Mark Gurman that Meta has poached Apple's most prominent design executive in a major coup that underscores a push by the social networking giant into AI-equipped consumer devices. This has been a pretty big story this year of Mark Zuckerberg trying to get anyone to come and work for him and paying up for it. And so this is the latest news. So Meta is going to be hiring Alan Dye, who was head of Apple's user interface design team since 2015.
Yeah, according to people with knowledge of the matter. So Apple apparently already replacing Dye with longtime designer Stephen LeMay, according to those in the know, who asked not to be identified. Man, That's a significant shift in Silicon Valley, or so Mark reports.
Yeah, Dimos recently oversaw the interface of the Vision Pro headset, a sweeping redesign of Apple's OS. He was central to designing the company's apps, the Apple Watch, the iPhone 10. His team has been helping develop a slate of new smart home devices as well, Bloomberg News has reported.
Yeah, I'm just going to pull up real quickly Meta, because it feels like it's as much an Apple story as it is a Meta story. Stock's little changed here, so it's just down a little bit. But Meta's been aggressive, right, in lining up various high-level talent, if you will.
The checkbook, the power of the checkbook, right? The salaries that they're, and I don't know the details obviously of this one, but
you're
I
right.
mean, in terms of the
AI stuff?
Yeah, we're talking, tens of millions of dollars.
Like paying up big time. All right, keeping an eye on that one. You've got another one of the Mag 7 that you want to talk about, Microsoft?
Yeah, Microsoft. So this was a big story on the Bloomberg terminal today. Shares of Microsoft, ticker MSFT. The stock was down as much as 3%. Now it's only down about 1.5% on... So there was a report from the information that Microsoft had lowered expectations for getting some of its enterprise customers to spend money on their cloud units marketplace for AI models and agents. The company responded. Microsoft said that the information's story inaccurately combines the concepts of growth and sales quota. So Microsoft coming out and saying that this was not accurate, but nevertheless, it was definitely weighing on the stock, and the stock is still lower today. I won't claim to be an expert in, what part is correct and what part isn't, but we are seeing the stock lower after that report from the information came out.
But not as low as it was before.
Not as low as it was, yeah. So pairing losses, but this is a big move for a company as large as Microsoft.
Yeah, it adds up real quickly. Another tech name reported, I think, results last night.
Yes.
We were breaking it down. You're talking about Marvell Tech.
Marvell Tech. So this is a chip maker. And I was going to say, the move in Microsoft maybe shows that AI fear and kind of how fragile the AI trade is right now. Even a hint of something going wrong, people want to sell the stock. But here's a chip maker that's up about 7% right now. They reported EPS and sales above estimates yesterday. They got an upgrade on the stock from Morningstar. And then the company said during its conference call, it expects data center revenue to grow by more than 25% next fiscal year. And then they also announced plans to acquire startup Celestial AI for about $3.25 billion. So clearly that tech trade is still hot, at least in some of these individual names and the broader indexes today.
And I'm trying to remember when they reported late last night, didn't it bounce around? I think it dropped at one point initially or something, maybe on the news of the day. I don't know. It was just kind of bouncing around, but you're right. Investors are all in today.
Okay, so from high tech to a major industrial player.
Yes.
What's going on?
Okay, so last stock, Boeing, ticker BA. It's down 2% on some M&A, well, I guess we'll call it deal news. So the FTC said that the plane maker should divest significant Spirit AeroSystems assets to resolve antitrust concerns surrounding this merger deal. We saw Spirit actually rising as much as 3.6%. But yeah, this weighing on the stock that they'll have to divest. But the divestitures, according to Bloomberg News, will resolve FTC allegations that Boeing's acquisition of Spirit would give it the ability and incentive to raise the cost of Airbus's access to inputs for its competing aircraft. So a lot of moving parts here, literally and figuratively, but that stock is lower today.
I thought they wanted Spirit under the umbrella. You're the plane boy.
I thought they did too.
Right, because it made it like safe, like keeping
everything
everything
it was spun
under.
off years ago, and then they wanted to bring it back in for quality issues. So.
Right? So confusing.
George Ferguson's the guy to talk to.
All right, George, give us a call.
Yeah, get on.
Emily Griffeo, Bloomberg News cross-asset reporter. For more conversations, check out our Stock Movers podcast. 5-minute episodes of the biggest winners and losers. Find it on Apple, Spotify, or anywhere you get your podcasts.
Hey, coming up next on Bloomberg Business Week Daily, it's one of the most read stories on the Bloomberg terminal. It's about the secretive and huge firm that's plotting a flashy pivot to private markets. That's next on Bloomberg Business Week Daily.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The Pentagon's watchdog has sent its review of Signalgate to Congress. Stacey Lynn reports.
According to sources, the report found that Defense Secretary Pete Hegseth put U.S. personnel and their mission at risk when he texted sensitive information about a military strike in Yemen on the Signal messaging app. Trump administration officials have long downplayed the severity of the breach and have insisted that the information wasn't classified. The Pentagon Inspector General tells CBS News its report will be publicly available online tomorrow.
The news comes a day before the Admiral, Hegseth says, ordered a second strike on a drug boat in September, briefs lawmakers on what happened. Nancy Cortez reports Democrats and Republicans have a lot of questions.
Quite unusual to have even the leader of the Senate, John Thune, saying that senators want to know more about exactly what happened here.
The chairman of the House Judiciary Committee has issued a subpoena to former special counsel Jack Smith as part of the committee's probe into the federal prosecutions of President Trump. A lawyer for Smith has indicated he will comply. Trump is expected to announce a proposal to weaken the vehicle mileage rules for the auto industry, significantly reducing fuel economy requirements through the 2031 models. CBS's Ed O'Keefe.
The general principle behind all this is they're trying to find ways to lower costs, and they believe by not changing fuel standards the way they were seeking to do so under the Biden administration, you're potentially cutting costs on the automaker, therefore cutting costs on what you purchase a vehicle for.
Katie Weiss reports the administration's immigration crackdown is underway in the New Orleans area.
We've started to get some reports of sightings from community members and local activist organizations of those federal agents already in the Big Easy arresting non-documented citizens. But so far, we're still working to confirm those sightings and those reports. Meanwhile, the Louisiana governor welcomes this operation that is being dubbed Catahoula Crunch.
The Trump administration's pausing all immigration applications. Greg Chen of the American Immigration Lawyers Association.
We have already heard from our member attorney practitioners across the country in many different cities that people who have been lined up waiting for their interviews or for citizenship, for green cards, for oath ceremonies that are scheduled for this week or next week have simply had them canceled.
On Wall Street at this hour, stocks are higher. This is CBS News. Officials in one California county have voted to ban wood on the outside of new homes because of the wildfire danger.
Marin County is trying to get more homes hardened against wildfire.
And by hardening, I mean looking at the materials that we use for roofs, windows, and siding.
Building Supervisor Erica Freeman says starting January 1st, it will be illegal to use wood siding on homes in unincorporated areas. Many residents are on board with the board ban. Sue is already taking steps to make her home more fire resistant.
We have also put in metal fencing in 2 areas where wooden fencing touched the house.
The wood siding ban only applies to new construction, not remodels. Matt Bigler for CBS News, San Francisco.
It's not getting any easier to own a home, with many at near record values and mortgage rates parked well above 6%. The tide could turn next year. Property prices are forecast to dip in 22 of the largest U.S. cities. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just about 55 minutes away from the closing bell on this Wednesday, December 3rd. Carol Masser, Tim Stenovec, right here in our Bloomberg Interactive Broker Studio. And we've got a little bit of a rally underway. 1 week from now, we will have had the last Fed decision of 2025. And I think safe to say, kind of baked in the cake, or whatever they say, the expectation is we will indeed get another quarter point cut, and that has certainly given a lift to the equity.
Did you say baked in a cake because we're talking chocolate in the 4 o'clock hour?
Maybe.
Are you thinking about that?
I'm not that smart, but yeah, okay, I'll take it.
Look, it's on the brain. Hey, I do want to let everybody know we are keeping an eye on what's happening in Washington, D.C. The president was expected in the last half hour to make an announcement from the Oval Office. It's expected to be